numbers I've heard.
Yeah, but Lata,
no, to be fair, Kaushik,
get 50 billion, even if you get 50 billion,
you are square.
Care of.
That I take your point entirely. Now, I have to take a break, but before that, I want the key question that our viewers are watching out for. Up to September, or if you are willing to take the bet, take the question up to December, what is the rupee range you are looking at? What is the best the rupee can rise to? Kaushik, give me only one number because I want a rapid fire.
So we have 93. I mean, rupee can easily fall 2 rupees from where we are.
Okay. Mithul?
Well, our current forecast stands at 96.8. So we've not revised that forecast, but clearly, obviously, these measures are substantial. So, I think we were at risk of being much weaker than that. At least now that's more likely to be met than before.
Okay. And Neeraj?
Well, I don't see it appreciating beyond 94, even if we get a lot of positive news, because I think Reserve Bank will be on the buying side to cover up their reserve fall.
Okay. My guess is that a shy at 93 or 92 is possible, and then it comes back. That's what happened last time. We went all the way from 68, 69 to 65, 64. This is the 2013 period. Anyway, have to take a break, but lots more questions on bond inclusion. Also, when all this money comes in, what does it mean for growth? Those questions as well to our bankers in a minute after the break. Welcome back to this very special Indianomics, where we are discussing the bunch of measures announced by the Reserve Bank, almost all of them to prop up the currency from falling from the rapid fall that it has seen over the last 2 years. The RBI is going to pick up the entire hedging cost for FCNR, foreign currency non-resident deposits, up until September 30th. It is also going to allow banks and PSUs to raise external commercial borrowings. 1.5% of the swap cost will be borne by RBI. And then, of course, the debt market also is getting some sops given by the government. The withholding tax and the capital gains tax are off. I've been speaking with Neeraj Gambhir of Axis, Mithul Kotecha of Barclays, and Kaushik Das of Deutsche Bank. Gentlemen, thank you very much for your patience. Neeraj, the money is coming in. Okay. Both FCNR deposits as well as some bit of overseas foreign currency borrowing. What does this do to funding cost, margins of banks?
So I think in the short run, we will see the pressure on the domestic money market, for example, CDs and bulk deposits, go off a little bit. As you very well know, that these rates have been quite elevated. Usually in this part of the year, first quarter of the year, we see these rates cool off from where they were in March. This time around, actually, the rates are higher than where they were in March. So I do see that, as this money flows in over the next 3 months, it will cool off both the CD rates and the bulk deposit rates.
Okay.
I don't see this impacting the retail savings rate, because I think that's something that all banks are chasing, and that's...
morning. You're tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. With me is my colleague Rachna Dhanrajani as well. Good morning, Rachna. But let's get started with the top headlines for today. And first up, talking about US President Donald Trump, he's expressing displeasure with the Israel's actions in terms of Lebanon after Netanyahu violates ceasefire deal. Iran's foreign minister reiterates any agreement with the United States must include Israel's withdrawal from Lebanon and the release of frozen Iranian assets and sanction relief.
Stocks on Wall Street closed mixed, with the Nasdaq and S&P 500 posting losses as investors rotate out of chip and tech names. Meanwhile, the Dow notches another record high. Investors are also looking ahead to the Federal Reserve's interest rate decision later today, the first with Kevin Walsh as the chair.
And the markets in Asia-Pacific region also open mixed. The GIFT Nifty is indicating a muted start with a positive bias for the Indian market.
Brent crude prices trade at a 3-month low, going below $80 a barrel, pressured by expectations of increased supply following the anticipated peace agreement between US and Iran. Gold trades above $4,300 an ounce on the same news.
Prime Minister Narendra Modi and President Trump shake hands ahead of the bilateral talks today on the sidelines of the G7 summit. This will be the first meeting in 16 months. Both sides will attempt to reset the relation, which has been strained due to Trump's tariffs and visa restrictions. Those are the top headlines for today, but today is Wednesday. Midday, we're seeing a bit of a mixed opening that's coming in for the Asian markets, right? We're seeing the Australian index, Nikkei, which is open with gains. Hang Seng is very muted right now. But what are we seeing on Taiwan index front? That's down 0.6%. We're seeing Shanghai, that's down 1/10 to 0.2% as well. So mixed opening is what we're watching out for. Obviously, it's going to be an exciting week. We're watching out for the Federal Reserve's rate decision as well. Kevin Walsh's first decision. Look at the Nikkei Kospi. That has opened up with gains. Now, putting up the Nifty implied open. What's the indication there? Yesterday also we had seen a muted indication that came in, right, for Nifty implied open. We managed to end the day with some bit of a gain in the trading session as well. But today it's just a 10-point uptick as of now. Now, where are we going to be headed in the trading session? That will be key to watch out for. Yesterday we closed at around 23,989 levels. Today, do we manage to cross the 24,000 level? Will be something that is important in today's trading session.
Well, on to updates from West Asia then. US President Donald Trump says he's not happy with Israel's Prime Minister Benjamin Netanyahu's actions in Lebanon and says the Israeli leader has to be more responsible. His comments come after Israeli killed at least 4 people in southern Lebanon. Listen in.
I didn't like where 2 hours before we're signing the agreement that there was an attack in Lebanon, in Beirut. It was right in, it wasn't like in the southern side, and it was in Beirut. I did not like that. I let them know that. I didn't like it. I've had a great relationship with Bibi, but now Bibi has to be more responsible with respect to Lebanon.
Now, Iran's Foreign Minister Abbas Araghchi has reiterated that any agreement with the United States must include Israel's withdrawal from Lebanon, the release of frozen Iranian assets and sanction reliefs. All of this has to be included. Now, Iran's military says that Israel has violated the ceasefire in southern Lebanon 84 times in the past 2 days and has threatened for a harsh response if attacks continue. So that uncertainty still continues. We're waiting out for that signing of the MOU on Friday, but this is something that is key. But what's happening in the world of commodities? Let's go across to Manisha Gupta, who's here to take us through that. Manisha, over to you.
Thank you so much for that, Vinny. The knee-jerk reaction has already happened into the market in the last couple of days, and what the street is now looking at is an actual formal execution of the details that would be signed on 19th. In the meanwhile, you have the Brent crude oil prices continue to hold at around 3-month lows. Not just crude, you have heating oil, gasoline prices also trading at a 3-month lows. Expectations of increased supply post the peace agreement is what is leading the markets on the lower side. There's an expectation that you could be looking at higher exports, not just from OPEC Plus, but from Iran as well. And then the US inventories have declined quite sharply. The US SPR stocks are at the lower levels as well. So markets feel that while there's a possibility that the crude oil prices can go to 75, they already are trading at around 78 to 79, but a broad range between 75 to 95 is what we can be looking at, depending on the details of the deal, and then of course on how soon supplies can resume from Strait of Hormuz. In the meanwhile, you're also looking at gains continuing for the metal prices. Gold is up 2% this week, silver is up 3%, strong gains coming in for copper as well. Aluminum, of course, continues to decline with the crude oil prices, but most of the metals, the other metals ahead of the FOMC meeting, are trading in the positive.
All right, FOMC meeting tonight and the peace agreement on Friday. Two big cues to watch out for this week. But for now, let's slip into a short break. Next, we tell you how these overnight cues are likely to impact our own markets today. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now, how will overnight cues impact the Indian market today? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in news. First up is Hormaz. Hormaz, tell us all the market cues that we need to watch out for today.
Morning, Rashna. And well, as of now, the GIFT Nifty is indicating a subdued start, yes, but then that also comes on the back of the fact that the Nifty has recovered almost 800 points from the last week low. So there's been 3 days of very strong gains for the index, even though now that it is facing a barrier at 24,000, there are a lot of other things that are falling into place. Oil prices are down, they are now at 3-month lows. They've almost given up everything that they had gained during the war. So that's a positive for our markets, yes. By yesterday, we had asked this question, right? If the banks take a breather, who will put their hand up for the Nifty outperformance performance. And it was done by Reliance Industries, the IT names and the FMCG stocks. All of them put their hand up yesterday. Reliance Industries saw good buying interest. IT stocks, after days of underperformance, finally did well, as did the FMCG stocks led by Hindustan Unilever. All of them contributed to the Nifty gains in yesterday's trading session. Wednesdays, of course, the session between the two expiries are generally trending days for the market. The bulls would definitely be hoping that the trend is towards the upside, and decisively so. Well, today are other important things to track as well. Prime Minister Modi meets President Trump later in the day. There's a Fed decision later tonight that we need to track, and of course the supply of paper that continues. Lock-ins are ending today, block deals are happening, QIPs are getting launched, so all of that will also have to be watched out for. Well, 24,000, we tested that intraday again yesterday, but we are very close to that on a closing basis. So it will be interesting to see if that holds today, if we do manage to cross that intraday. It has not closed, the Nifty has not closed above 24,000 since the 25th of May. You need to keep that in mind as well. And of course, the good bit is that the support has now shifted higher, and that is 23,800. So that 23,800 to 24,000 range is where the Nifty is working with. For the Nifty Bank, they're taking a break after a rally, right? 2,000 points in 2 days. They're taking a bit of a break. They're still holding on to 57,000 on the downside. So that 1,000-point range for the Nifty Bank remains between 57,000 and 58,000. But for now, the Qs are absolutely subdued. The GIFT Nifty is indicating an absolutely flat start. It will be interesting to see which way the market goes today, because there are plenty of news flow developments that we need to track, and the supply of paper is continuing as well.
Absolutely, Urmas. Thanks so much for that. We'll keep an eye on those Nifty levels, specifically in 24,000 if we manage to cross that. But let's go over to Ria, who's here to tell us which are the important stocks to watch out for in the trading session. Good morning, Ria.
Well, good morning. Starting off with the realty players today, which will be in focus, the likes of Oberoi Realty, Suntec Realty, Godrej Properties and all other realty players. These will be in focus as the BMC has announced that it will suspend water supply on a temporary basis to construction sites in light of the delayed monsoon as well as the depleting water levels. And they further said that there's also a temporary suspension of approval for new water connections for construction sites. So near term, this will definitely be a negative for realty players. But moving on to Coforge, which will be in focus on the back of comments from its management in its investor conference yesterday. The company has said that they are targeting a revenue of $5 billion by 2030. The revenue from healthcare is expected to go to $750 million by 2030 from the current $402 million level. And the banking and financial service revenue is also expected to touch around $1 billion by the year 2030. So positive outlook for Coforge coming in there. But moving on to DOMS, this will be in focus on the back of a block deal wherein Phyla is expected to sell up to 7% equity for 900 crore rupees in the company at a floor price of 2,100 rupees per share, which is a 9% discount to yesterday's closing price. KIMS will also be in focus as the company has launched a QIP for 4.7% of its equity with the floor price at 771 nearly per share, and the total size of the QIP here is 1,500 crore rupees. GIC has decided to exercise the oversubscription option of around 3% of equity after a 3.7 times subscription seen on day one of its OFS. So this stock also in focus today.
Okay. Thank you so much for that, Ria. But let's move on and go across to Sudarshan, who's here to tell us which are the important cues in the world of F&O. And Sudarshan, 24,000 surely is a key level, but what else are we watching out for?
Good morning, Vinny. So it's been the interesting last few days for the market. Nifty has gained 700 to 800 points from recent lows. And now, yes, 24,000 has become very important level, because now what has happened? Two things. First, base for Nifty has moved higher from the recent base of around 23,300. Now it's moved higher to 23,700 to 23,800. But when Nifty tries to cross 24,000, major supply comes in. That's the reason it's facing major resistance around 24,000 to 24,100. If you take a look at the options data too, the major range for Nifty has now become 23,650 to 24,500. So in all probability, even if GIFT Nifty at this point is suggesting a choppy start or a flattish start, we might see Nifty moving higher. And today, in all probability, Nifty is likely to close above the level of 24,000. Why I'm saying so? Two biggest indicators for market at this point is the crude has now erased entire gains that it had seen during the war. Ahead of the war on 27th of February, it was around Brent was around $72 per barrel. Now we are around at $79 per barrel. Rupee continues to strengthen. It's gaining against the US dollar. Now it's holding to the levels around 93, 95, 90. 94.60 levels. So these two are the biggest indicators. Now coming to the options data on the put side, 24,000, 23,900 and 23,650 are the most active options. So support 23,750. Resistance would be first resistance 24,000. Next resistance comes around 24,200. One stock is in the band, that is Keynes Technology. Some of the stocks, crude derivatives, will keep an eye on that because it will be reacting to the sharp fall in the crude prices, and Reliance too is seeing short covering.
Okay, thanks so much for that, Sudarshan.
All right, let's look at the US market. Well, Dow definitely notched a fresh record, but Wall Street saw mixed trading session on a Tuesday as tech sell-off dragged the S&P 500 and Nasdaq. Intraday high above 52,100 for Dow Jones, but shifting focus, Kevin Warsh kicks off the first meeting as the Federal Reserve Chair. The probability of recession and the outlook for unemployment remain front and center. A group of respondents to a CNBC Fed survey see the US economy maintaining resilience and expect no rate change at any meeting through 2027. CNBC Steve Leisman brings us all the highlights.
Respondents to the CNBC Fed survey see the U.S. economy remaining, the words you just used, remarkably resilient to the oil price shock, revising up their growth outlooks. Take a look at GDP. Was 193 in the April survey, now up to 220, a little bit more for 227. Think of these as growth a bit above potential. And the downgrade that we had from the war has now been largely, but not entirely, restored. Recession probability also sinking back down to 25%, a little bit elevated, but not too bad. You can see it was higher right in the wake of the beginning of hostilities. The unemployment rate, meanwhile, seen remaining mostly unchanged, 4.3%, an improvement from the prior forecast in April, but really no progress at a good rate. Now, Guy Labat, chief fixed income strategist for Janney Montgomery Scott, writing in with a survey, the period of short-term labor market fragility has passed, leaving the central bank's mandate more clearly short on one side than the other. Well, what is that side? That would be the inflation side. Take a look at what's happened here to these numbers. Up a pretty good chunk there for the CPI outlook for this year, but seen coming back down maybe towards target, maybe a little bit above target in 2027 to 267. The expected response from the Warsh Fed as of now, nothing. The average respondent sees the Fed leaving rates virtually unchanged through 2027, right around the current level of 363. That 352 reflects a couple folks in there looking for the potential for a cut, but largely unchanged. The recent potential, though, for an Iran deal and the chance that it keeps bringing down oil prices and core inflation along with it, that could offer Warsh some flexibility to move. But for now, the collective thinking is that the Fed removes the easing bias in the statement and coasts in neutral for at least the first several months of Warsh's new tenure.
Thanks so much for that. But on that note, we're going to zip into a very short break. After the break, we'll get you updates from the world of AI and tech. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now getting you the latest updates from the world of tech and AI in a special segment, AI Pulse. Rachna is here to take us through all the details. Rachna, over to you.
Well, SpaceX has made its first big move since going public, and it's a $60 billion one. The rocket maker confirmed Tuesday that it will buy Anysphere, the company behind the AI coding tool Cursor, in an all-stock deal. The acquisition was disclosed in an 8K filing and is expected to close in the third quarter pending regulatory approval. The deal converts an option SpaceX secured back in April. On the news, SpaceX stock rose around 16%, pushing it past Amazon and Microsoft to become the fourth most valuable US company. Staying with AI money then, and China's DeepSeek has closed its first outside funding round, raising more than $7.4 billion at a valuation of above $50 billion. That's according to the information. The structure is the story here though. Investors have put their capital into a limited partnership managed by founder Liang Wenfeng rather than into DeepSeek itself, keeping him firmly in control. They face a 5-year lockup and no voting rights. Tencent and battery giant CATL are reported to be weighing the largest external checks. To chips now, Intel has begun early production of 18AP, its most advanced node, and it brings the company a step closer to a possible deal to make chips for Apple again. Intel says 18AP delivers 9% higher performance or uses 18% less power than 18A node. The stock is up more than 200% this year on hopes its foundry business is finally turning around. Then there's Snap that has finally launched its consumer AR glasses, Specs, and they do not come in cheap. At about $2,200, pre-orders are now open with shipping later this year in the US, UK and France. Now, all the computing happens on the device with no tether, and there's a contextual AI feature that lets you look at the object and ask about it. The price sits above Meta's Ray-Bans, but well below Apple's Vision Pro. And finally, ChatGPT's global market share has slipped below 50% for the first time, falling to 46.4% by the end of May. That's per Sensor Tower. Gemini now sits at 27.7% and Claude at 10.3%. ChatGPT still leads by far on more than 1.1 billion monthly users. One to watch for this market is that Asia saw its first download decline this year, dragged partly by dips in India and China. So we'll keep an eye out for more news and updates from the world of AI, but that's it for now.
Okay, Rachna, thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Nifty implied open indicating a muted start for the Indian markets. Stay tuned in to what happens in the markets. Your Bazaar morning call up next to take you through all of that.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Wednesday morning, middle of the week, oil prices are down another big leg. And I think that is the unambiguous positive for the India macro picture. Otherwise, at the margin, some worries around rains, etc., which we will tackle as we go forward. I'm Prashant. With me, my colleagues Mangalam and Nigel. Guys, hi, morning.
Hi, morning. Good morning, guys. So, yesterday we went close to that 24,000 mark, closer to 24,000 than the previous trading session. Oil lower is great, but right now the Indian, population is saying that maybe water is a little more precious than oil, despite oil falling the way it has. So that's something that we will be tracking very closely here in Mumbai as well. There have been severe water cuts which have been announced. So all eyes on the sky, I guess.
Well, that's right. All eyes on the sky. And I think that's the most crucial trigger from a macro perspective as well as from a market perspective. And hopefully the rain gods, they arrive soon and they shower us with some rain.
Well, absolutely. Lots of rain, right?
Lots of rain.
Over the next few days. I mean, I think as SkyMet told us, next 15 days to the first 15 days of July, important for sowing, etc. But even, without that, just important for pretty much everything else. Well, I'll just start from the top. Oil, of course, is down. As I said, a big move lower, 4.5% to about 79.5. I mean, we're at about 79 now. So it's a big fall. 16% is how much we've fallen in the last 5 days. If you take the high 5 days back, which was about $95 a barrel. The news is, there is new news. And the news is that Iran, and these are details which, of course, emerged from the, the memorandum of understanding between US and Iran. Iranian oil, perhaps in a legit way, will hit global markets. So Iran will get the right to sell its oil immediately. So far there were dark fleets, shadow fleets from China and other countries which were operating, taking the oil out. Obviously, not the full output perhaps got out, never. But if Iranian oil is allowed to be sold in a legitimate way, sort of as the sanctions from the US and our allies, etc., goes away, I think you're talking about a large bump up as far as available oil is concerned. So prices reacting, responding to it. Now, US equities were down. Any day nowadays, US is down. You've got to sort of look back at the previous few days when the change has been so fast, the rate of rise has been so rapid. So 1.15% lower on the Nasdaq. So it's just basically a pullback. Not too much in terms of single stocks, but FOMC meeting tonight, and this is the first under the new chairman, Kevin Walsh. And I think how he sounds, what he says. By the way, market expectation is that he will leave it unchanged. There's no rate change expected, but will he sound more dovish as opposed to what the dots indicate? I think those are the things. That's a nuance that markets will be focused on, and I think those will be the headlines tomorrow morning as we come back and report on this. Of course, we'll react to Asia will react to all of this tomorrow morning. Now, the monsoon watch, and this is something we've highlighted for the last few days now. The SkyMet, the private weather forecaster, we spoke to them yesterday, essentially flat out saying the monsoon situation is worrying, but of course at the same time saying June is only 15% of the whole monsoon rainfall. And in that 15%, there is a 32% deficit so far. Hopefully things pick up. But, we'll see. But SkyMet saying the situation is worrying. Well, BMC here in Mumbai is responding. There's already, by the way, a 10% water cut overall. And they are temporarily discontinuing water supply to construction sites. They're also imposing a 20% water cut in industrial and commercial water usage, which is coming through as well. So, water to residential households, etc., of course, will be prioritized in any situation like this. We've seen this in the past as well. Industrial, commercial, real estate, that kind of usage, of course, will be curtailed. We're seeing signs of it. Now, I just highlight one more thing. I put out that Coforge is having its analyst meet today, something we highlighted yesterday. Stock was up 4.5%. It's, by the way, it's up $100 since last Friday, Coforge. The management basically said in that investor meet that it happened in Noida that the aspiration is to reach $5 billion in revenues in FY30, which, by the way, will be like a 16, 17 odd % kind of CAGR from where we are right now, which is, of course, better than what you can say for most. Nifty has been up for 3 days in a row, but yesterday, day before yesterday as well, from the highs, the market fizzled out, and yesterday was an inside day, which basically means that we spent Tuesday within a Monday's bar. I mean, there was no real big breakout or anything of that sort, although we did end higher by the end of it. The support remains 23,800, and targets are 24,088 first, which is, of course, very, very close by. Actually, both the support, the 23,800 and 24,088 are close by. And beyond 24,088, we're looking at 24,482, 24,600 kind of levels. So, while generally, the trajectory, etc., has been more positive, but near term, because of what we've seen over the last 3 sessions, etc., a bit of a pause may not be such a bad thing. Well, we'll just look at the GIFT Nifty, gives you a quick sense of how we're likely to start, and then we'll pick it up from there. It's absolutely unchanged from where it was. 2-point change, so flattish open this morning. Nigel has walked across to the wall with the F&O positioning and the data. Nigel, over to you.
Well, a flat start is not so bad, right? After the kind of run that we have seen, some kind of consolidation would not be bad. But I think the risk to the downside, they have actually receded because now the market appears that it wants to test higher levels. Crude prices are down, the rupee has stabilized. And the FIs, they are selling relatively less. So I'm feeling pretty good about the markets. Well, if you look at the FI flows, yesterday they sold close to around 750 crores. The DI number was more or less as flat as can be. So they're selling, but not as much as what we've seen in the past. But the short covering is evident from a broader market perspective. You just take a look at it. On the Nifty, well, the open interest was down by 4%. The Nifty Bank as well was down close to around 4%. And the shorts are really scampering for cover. And that's what's aiding the up move. If you look at what the FIs have done, well, yesterday's trading session as well, they covered close to around 14,000 contracts. The FI short positions continue at around 87% or thereabouts. And I'll just, jog your memory back a little bit to the last few trading sessions. Since the 9th of June, the FI short positions, they have come down by close to around 48,000 contracts. Just take a look at that. That's the kind of covering that we have seen on the short side. While the clients that were net long, well, their long positions have come down as well by close to around 48,000 long contracts. And as I always mentioned, this combination is good. FIs being aggressively net short and the clients being aggressively net long. And that's the way it's played out as well. So for the time being, the shorts, they're scampering for cover. Moving to the options data, then, at around the 24,000 call mark, you're seeing some writing. That was evident yesterday. The premium's around 150 rupees approximately. And there was a good amount of open interest build up. But some bulls believe maybe this market wants to go ahead and test higher levels. I think the monsoon is going to be that crucial factor out there. So it appears there was some out of the money call buying. You're taking a bit of a punt, putting in 20, 25 rupees. If the markets rally 500-600 points from here, well, you'll be happy and you'll make some money. But this appears as a bit of a punt. On the downside as well, 24,000 put, good amount of open interest build up. And there was writing being seen at that level. So looking at the option setup and look at the technical levels, well, I've got a broad zone. On the downside, the 20 DMA, which is around 23,550, that shouldn't get breached. I think the bulls will bank on this level actually holding out. And on the upside, the 100 DMA, that becomes the next resistance mark, which is at around 24,250. The options data as well as suggesting this could be a bit of a resistance zone. The Nifty Bank took a break yesterday, but the trend is up. It still continues to defend and trade above that 20 as well as 50 DMA. It's trading above all its averages. So the Nifty Bank should return back to its form because that's the one that's led the way. But your portfolio feels good when the number of stocks advance are more than the number of stocks declining. And yesterday and today, these lines came very close to each other. But the end of it, you had more number of stocks advancing than declining. And with the falling crude oil prices and, some of those macro risks receding, you'll be feeling good about the broader markets. But the key monitorable from here on is going to be the monsoons. And hopefully the rain gods are upon us sooner rather than later.
Monsoons high on the sky and flows coming in from both the sky and the FIIs. Two things that we will be tracking very closely. But let's tell you a little about the equity expert call that we have for you this morning. Herald van der Lind of HSBC says that most investors remain underweight and are not showing much appetite to add from here. Valuations in India have come off recent highs, but the risk reward is still less compelling, particularly versus the tech stories in the other parts of the region. He says that energy prices are likely to remain elevated despite any immediate deal between US and Iran, and this, along with El Nino, is likely to keep pressure on growth across sectors. HSBC, however, finds selective opportunities among financials, hospitals, pharma, commodities, and the utility space. They have an underweight stance on India. Let's speak about the updates coming in from West Asia then. US President Donald Trump says he's not happy with Israel's Prime Minister Benjamin Netanyahu's actions in Lebanon and says the Israeli leader has to be more responsible. His comments come after Israeli attacks killed at least 4 people in southern Lebanon. Listen in.
I didn't like where 2 hours before we're signing the agreement that there was an attack in Lebanon, in Beirut. It wasn't like in the southern side, and it was in Beirut. I did not like that. I let them know that. I didn't like it. I've had a great relationship with Bibi, but now Bibi has to be more responsible with respect to Lebanon.
And that's not all. We also heard from Iran's Foreign Minister Abbas Araghchi, who did reiterate that any agreement with the US must include Israel's withdrawal from Lebanon, the release of frozen Iranian assets, and sanctions relief. Iran's military says that Israel has violated the ceasefire in southern Lebanon 84 times in the past 2 days and has threatened for a harsh response if attacks continue. Right, with that, let's go across to William Lee, who's the Chief Economist and Managing Director at Global Economic Advisors. William, good morning. The big thing that everyone will be eyeing tonight would be comments coming in from the new Fed Chair, Kevin Warsh. What are you pinning your hopes on? Will the commentary be dovish or will it be more realistic given the sort of increase that we've seen in prices since his announcement and his appointment?
There's been so much anticipation of the new Warsh view of the economy, the new Warsh monetary procedures, the new Warsh Fed. Let's face it, the guy's one guy, and he has yet to convince the rest of the Federal Open Market Committee about how he views the economy. So I would give him some time. But let's remember the kind of economy he is facing. The latest job number, which everyone says, oh my God, the job market is so strong, 100 plus 180 some odd thousand people are new jobs he created. That's a head fake. And I think I want to warn everyone that if you strip away some of the World Cup hiring and the unsustainable pace of local government hiring, we're back to maybe a world of maybe 65, 70,000 jobs being created per month. And that's the world that we really do live in. And when we talk about, oh my God, the headline inflations are so high, remember, these are war supply shocks, so war-induced supply shocks, not excess demand that's causing underlying inflation to get carried away. And these are the conditions I think that Warsh wants to convince people that we are facing temporary distortions in the economy, but the underlying economy itself is one of very slow employment growth and underlying inflation that is starting to cool, partly driven by a lot of the high productivity gains that we've had. So the economic setting is something that he's going to spend a lot of time trying to convince the markets and the other FOMC members that things are not as good as they appear on the labor market front and not as bad as they appear on the inflation front. And I think that's going to frame the outlook for what Warsh is going to do. I think most people are expecting him to do nothing in this first meeting because he just got there. And as I said, he's going to require some time to convince everyone else of how he views the economy going forward. And I think that will take some time, and probably will not see a rate cut until end of this year or early next year. And I do think the next move on the part of the Fed is going to be a cut rather than a rate increase that a lot of the know-nothing people are claiming.
That's a nice poke. William, morning. Good to speak to you as always. Just a quick word on, at that same point, right? As this war winds down, oil's down 16% in the last 5 sessions, and details emerging that Iran is now going to be able to legitimately sell its oil in world markets. So that's a lot more oil. I mean, it's anyway there's abundance of oil, but it was just this choke point, which hopefully this Friday gets resolved. So will, in India, for example, right, till about 5-6 days back, expectations were that we will see about 200 basis points of rate increases. That's now cut down to 100. I mean, and this should be true across emerging markets as well, right? I mean, central banks will now start to factor all of this in pretty quickly. And that should reflect in underlying asset markets.
What you're saying that's absolutely true is that no central bank should be raising rates in the face of supply shocks that are not causing underlying inflation expectations to go up. And right now, there's no reason why underlying inflation expectations should be going up because, as you say, the oil price shock has been reversed. But I am a little bit less optimistic than perhaps you are and many of the commentators about how quickly we can return to normal. I find it very difficult to believe that if you can't convince Iran to guarantee that they will not pursue more nuclear weapons and more ballistic missiles at the point of a gun, you're really going to achieve that over a bargaining table? I have my doubts as to whether or not Iran will be as compliant over the bargaining table as they would have been at the point at the end of a gun. So I am less optimistic about how the peace talks will proceed. I anticipate a lot of back and forth. I anticipate a lot of changing of minds, especially on the part of the Iranian government, because the Iranian Guard, the more radical factions of the government, are really trying to assert themselves. I think the more moderate sides are desperately, as President Trump says, desperately looking for ways of rebuilding the economy. And the West is ready to pour in tons of money into Iran to rebuild that economy. But they won't be putting in the money unless we can be assured that there's a government there that's going to be cooperative. And I don't think that's going to be in place for quite a while.
You don't think Friday we will get a deal? I mean, the general expectation is that yes, they will be. In terms of the Strait of Hormuz will be open, and I mean, there will be hiccups along the way. That's just how it's going to be. But the core of what has been agreed to will stay, which means the Strait of Hormuz will be open. That's the core of it. You don't think that's true?
It'll be open for 60 days. What happens after that depends upon whether the Iranian Guard or more moderate factions are really in charge. If the Guard itself is in charge and they reassert themselves, I think we could see a lot more missiles being thrown at the neighboring countries and Lebanon blowing up, much more likely than it is that the strait will stay open. So for me, I am not as calm as oil markets are pricing that oil flow will resume fairly quickly. I really do have my doubts about that, and I would really look at alternative sources like energy from the United States as a buffer.
William, since you briefly mentioned the World Cup, Messi has scored a hat-trick. This morning I was watching the Cup with my son. It took me back to the days when I was watching the Cup with my dad, and the last time Maradona played in 1994. But good performance by Messi. That said, getting back to the economics then, what about capital flows? In the past, I think you mentioned that United States would continue to enjoy a large part of these flows. Do you think with this, war receding, gradually, emerging markets, some of them could look better, maybe the Indian markets as well? Do you think capital flows come back to India in terms of flows? And also, I recall in January, if I'm not mistaken, you had said that maybe gold is getting into a bubble territory. And you were bang on. You were in minority at that point of time. Any view on gold as an asset class?
I still view gold as a very speculative asset class. And as I said earlier with you, I'd rather buy shares in India rather than buy ounces of gold. But it's unfortunate for India and many emerging markets that you have the kind of judgment that you just led your show with, which is HSBC advising people to underweight India. I think India, among all emerging markets, stands a better chance of developing into a China alternative than any other market. And that really is what a lot of the supply chain people want to see in terms of wanting to have a more strong and reliable supply chain. But I think, as I've often said on this show, I am without unashamedly a big supporter of investing in where capital does best and where it's most efficient, and I think that's the United States. And for me, it's a cold day in hell that I'm going to be putting money into emerging markets more than I would the United States. But if I am going to diversify into emerging markets, of all the ones that I have to select from, India would be much higher on my list than what your previous announcement would have suggested.
And this is despite the underperformance that we've seen, or because of the underperformance that we've seen lately?
In fact, the underperformance really gives you buying opportunity, because I think where the climate's headed in India, between India and the United States, the transfer of technology in terms of the GE fighter engine technology, and more importantly for India, I think, the small modular reactors that allow India to really supplement its grid and be able to withstand the kind of power outages that you're experiencing because of the shortages from oil from the Hormuz. That shows you that it's very important, I think, going forward to have these structural investments in India, and a lot of the groundwork is being laid right now.
Well, William, we'll leave it there. Thank you very much for joining us. Good speaking with you. It's always a pleasure having you here on CNBC TV 18. Thank you. All right, well, let's just quickly run you through what's coming up in terms of interactions on the program. At 8:35, we have the management of Pearl Global to talk about demand trends in the textile space. 9 o'clock, Prabal Sen of ICICI Securities puts the spotlight on the oil and gas sector. 9:20, Anand Shah of ICICI Prudential AMC was a market master of the day. 9:35, Niranjan Hiranandani and Debin Moser of Knight Frank with us on, of course, the impact on real estate with what we're seeing the BMC do. The management of Uno Minda speaks to us at 9:45. And towards the end of the program, Lata speaks with 4 analysts on how the crash in oil to below 80 changes India's macro math. Stay tuned.
Time to slip in a quick break. You've got a lot of stock specific action to track for us. Well, we're going to be looking at the top 10 segment in just a bit. Coforge, JIC, Sona BLW, Precision, Prime Focus, OMC, City Gas Distribution Companies, and chemical stocks. They'll all be reacting to positive news flow. Mumbai Realtors, DOMS, as well as Skims will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. You're watching us here on Bazaar Morning Call. GIFT Nifty indicating a flattish start. A lot of cues to track today and a lot of stocks that we will be watching out for. Most importantly, some of the Mumbai realtors will be in focus as well. So to put a spotlight on all those stocks which will be on our radar, an entire team is with us here on our special list of top stocks to track. And let's talk about Mumbai realtors. BMC has announced some water cuts. How would that impact it? Let's go across to Sonal.
Good morning. BMC, which is the municipal corporation in the city, has temporarily discontinued water supply to construction sites. They are also not allowing approval for new water connections for construction sites, and that also has been temporarily suspended. Additionally, they are discontinuing water supply to all swimming pools. There's a 20% water cut in industrial and commercial water usage as well. So, of course, we are seeing Mumbai seeing big buildings being constructed by these builders, and that is where we could see some impact for a while since it is temporary. Still the time we do get some rains. Also remember Q2, that is from July, we do see some halt in construction activities because of rainfall. So that could continue and could continue to impact construction. So all these stocks, the likes of Oberoi Realty, Mahindra Life Spaces, AB Realty could be in focus today.
Got it. Okay. All right. Thanks a lot for that, Sonal. Let's go across to Vinny. She's here to tell us about the Investor Day takeaways from Coforge. Hi, Vinny. Good morning.
Hi, good morning. So for Coforge, obviously we'll see some green today. The commentary that's come in is quite positive, right? The management has reiterated of aspiring and reaching that $2.6 billion revenue and $400 million EBIT by FY27. Obviously, this they'd spoken about when they came with their Q4 numbers as well. But FY30 target, they're targeting a $5 billion revenue as well as $800 million EBIT, including acquisitions for the company. So almost doubling in terms of revenues. That's a 15% CAGR growth. As well as for organic CAGR growth and 20% overall growth over the next 3 to 4 years. 100 basis point EBITDA expansion is what they're talking about in FY27. Margin expansion, they said that would be mainly driven by AI-led cost efficiencies that will come in, and obviously they're focusing more on exiting this low-margin business. So margin will see an improvement there. Management is expecting those large deal momentums to continue and accelerate further in FY27, especially in the healthcare and public sectors where they expect more deals coming in from. BFSI segment, travel, that will remain the core growth engines for the company. Management is saying that AI will be a net positive for overall IT services as well. So these are some of the key highlights from the Coforge, from the meet that they had yesterday.
All right. Well, as I said, Vinny, thanks very much for that. Of course, amongst the listed entities, Coforge, one of the, in terms of ambition, one of the fastest growth companies out there. Stocks up 100 rupees over the last 2 or 3 days now. Well, Hormuz is here with a bunch of stocks in news. Hormuz, good morning.
Morning, Prashant. And just before, a couple of weeks before we close out the quarter, there is this rush of paper that's coming into the market, whether it be in the form of block deals or QIPs. Your block deals today in the form of Domes Industries, where Fila is likely to be the seller here. 5.2% being the base size and upsize option of another 1.8%. So the deal size is likely to be around 900 crore rupees. The floor price is around 2100 rupees a share, which is a 9% discount to yesterday's close. And Fila, of course, is the likely seller. As of the March quarter, it had around 26% stake in the company, classified as a promoter entity as well. So the possibility of further stake sales go with red on Domes Industries might just recover in case the response is a strong one. For GIC, of course, the OFS is opening for retail investors today. The non-retail portion received a healthy response, around about 3.7 times the total shares on offer. So the government is going to exercise the green shoe option, and in case they do manage to sell that entire 5% stake, it will fetch them well over 3,000 crore rupees through this OFS. The retail OFS opens today, and the non-retail clearing price was 352.2. So we're going with green, considering majority of the selling was done in yesterday's session itself. The stock was down around 7.5%. And another QIP being launched, this time by Krishna Institute, KIMS. The indicative issue size around 1,500 crore rupees. The issue price is set to be around 755, and the total dilution is set to be around 4.7% of the outstanding equity. And the company said that they are planning to use those funds to repay debt and to invest in their subsidiaries and to repay some of the subsidiary debt as well. So going with red for KIMS, more paper coming into the market.
More paper coming into the market. Thanks a lot for that, Hormaz. And let's go across to Sudarshan now to wrap it up with a lot of other stocks and news as well.
So we'll start with Sona BLW. Company has approved the capex for new line of business. Will be investing around rupees 63 crore for manufacturing of components for robotics industry, including advanced robotics. Now, what the benefits that company will have? First, it will get an access to new end markets that would be beyond the auto industry, and the product portfolio will broaden. Now, for the same, in 2025, company had announced partnership with Germany's Neura Robotics to develop advanced robotics in India. Next one is prime focus. Relief has come in from regulator SEBI. SEBI has disposed of adjudication proceedings against prime focus that was started in 2023. Now, SEBI is saying that allegations with respect to false, misleading financial statements have not been established against prime focus. I'm going with green for both the names.
Got it. Okay. All right. Thanks a lot for that, Sud. I think we could also go across to Manisha, who's joining in to tell us about some crude sensitives. Morning, Manisha.
Morning, and thank you for that, Nigel. Well, with the knee-jerk reaction now done, the markets are trading range-bound, but trading below $80 a barrel as well, as we await a formal execution detailed and the signing text on the 19th of June. The Brent crude prices, in the meanwhile, are trading at a 3-month lows. When you look at the prices, well, they have declined 15% in last 6 trading sessions itself. And it's not just about the crude oil prices. Heating oil, gasoline, all of that is trading at a 3-month lows. The coal prices have come off as well. Markets also are anticipating that as the Strait of Hormuz opens and as there is a peace agreement, you would be looking at higher OPEC plus export quotas coming in. Iran is going to be allowed to export immediately. There is going to be increased production from UAE, which is not adhering to any quota from OPEC right now. So all of that seems to be weighing on to the markets. But the street also believes that 75 perhaps is going to be a strong support because the U.S. crude inventories have continued to decline for 8 weeks now, and the U.S. strategic petroleum reserves are the lowest since 1983. So those few factors would support prices.
All right. Manisha, thank you very much for that. Thank you very much for that update. More comes up, in a bit. Here's a quick recap of the top stocks with news. So on the positive side, in green are Cofor, GIC, Sona BLW, Prime Focus, OMC, City Gas Distribution Companies. There are chemical names out there as well. But stocks on the other side, of course, are the real estate developers in Mumbai. DOMS and Kims are some of the others. So, as we told you, lots of supply of paper, on tap every day. We'll take a break. We're back with the management of Pearl Global Industries, and we talk about the trends in the textile space. Pallab Banerjee will speak with us on the other side.
Welcome back. Well, let's hop across to Hormuz. He joins us to tell us some of the big movers yesterday. Some backed with delivery. Hey, Hormuz, morning.
Good morning, Nigel. And delivery buying, yes, the volumes on the trading front may be at par or subpar, but there's definite delivery buying interest that you're seeing, particularly so in Reliance Industries. The top Nifty gainer on Tuesday contributed to the Nifty gains, in fact, as the premiums on the 1330 call option 2 went up by around 25%. Volumes, again, almost similar to what we saw on Monday. Close to 2 crore shares were traded. In fact, the delivery volumes on Tuesday were a little lower compared to Monday, almost 57% on Monday, 47% on Tuesday. So the 20-day average too is around quarter to 2 crore shares as well. And yesterday, 87 lakh shares were marked for delivery, almost at par with the 20-day average, which is 90 lakh shares. And it was, in fact, the most traded stock on the Nifty 500 in yesterday's session. HCL Tech, of course, the news flow driven move seen yesterday, the second best single day gain that the stock saw since November of last year. It snapped an 8-day losing streak on Monday, and then yesterday was the second day of gains. The 1150 call option for the stock was the second most traded option yesterday. The premiums went up by almost 83%. Volumes yesterday were the highest in the month of June, and 83.5 lakh shares were traded. The 20-day average is around 33 lakh, and a third of those shares were marked for delivery. So close to 25 lakh shares for delivery. The 20-day average is 16 lakh shares, and still a beaten down name are down around 30% for the year so far. And lastly, Bajaj Finance is continuing to move higher at 10% now in the last 3 trading sessions. The volumes yesterday, though, highest in June so far on the delivery front. The delivery volumes were the highest, and they have been above 50% now for 7 consecutive trading sessions. Even in yesterday's trade, 63% of the shares traded were marked for delivery. So around about close to 90 lakh shares were traded yesterday. 60 lakh of those were marked for delivery. The 20-day average is also around about the same, and the stock from its 52-week low, which was 787, has recovered almost 22% from those levels.
All right, Hormaz, thanks a lot for that. So those are a bunch of stocks that did extremely well in yesterday's trading session, backed by delivery volumes as well. Let's turn our focus now to the textile sector. With the possibility of a peace deal emerging in the coming days, the industry could see some relief, particularly through easing input cost pressures and improving demand sentiment. That's the word. Let's see whether there is a potential impact or not. We do have Pallab Banerjee, who's the MD and Group President at Pearl Global Industries. Pallab, before we get to what is likely to happen, let's discuss what has happened so far in the first quarter. There has been a fair amount of uncertainty, but amidst all of this, there was unprecedented rupee depreciation as well, which would have probably helped your cause. And at the same time, the export data does suggest that there was a fair amount of exports that went from India. They were at a multi-year high, if not an all-time high. So was that something that you experienced as well? How has growth been in the first quarter so far? And then, if you could give us a look ahead into what lies ahead.
Yeah, thank you. Thank you for having me on this session. So definitely we are seeing a positive trend, market all over, not only like US, but US, Europe, UK, Japan, Australia. I think what we are seeing is that at this point of time, all the markets, we are seeing a fair amount of demand. And of course, that's putting pressure on the raw materials. But I think overall, the market is good at this point of time. So that's something we at Pearl Global also is experiencing, as well as what we are seeing in the country's export data is also showing the same thing.
And this is despite the tariff uncertainty, or has there been any sort of relief that has come by?
So tariff is something I think most of the US importers and the retailers, they have now, they know how to navigate through it. So at this point of time, the 301 10% is applicable, and there are talks that it might become 12.5%. And at the same time, the bilateral trade agreement that has been, I think, quite advanced discussion both with India and Bangladesh, if I look at it, are at 18 or 19%. So I think it will be somewhere either 12.5 or 18%. And of course, bilateral trade agreement, if it happens, we have to see what happens to the MFN. So I think it should take precedence over the MFN, but that all these things are up in the air at this point of time, cannot speculate on those.
All right, Pallab, hi, morning. So much has happened, right? At such a frenzied pace on tariffs, and we've had so many discussions on what will be the tariff, and just crazy. But how much is US is still the single largest market for you, right?
US still constitutes about 50% of my sales at a group level.
Yeah.
So that
is that market, by all accounts, I mean, the pace at which millionaires and billionaires are being minted in the US. I mean, looks like it's doing pretty well. I mean, all economic data, everything. And so I'm just saying, is demand very strong in terms of ordering from some of the top brands, etc., who you work with?
Absolutely. I think this market, definitely the market sentiment has not dampened. What we saw in 2022 when the Ukraine war happened, that's the time we saw that most of these markets, especially the European market as well as US market, really slowed down. On the contrary, this time when Iran war happened, that was one of the biggest fear factor that we had. But that did not happen. We haven't seen that kind of slowness either of this market. So that's a very positive sign, at least for our industry.
So what does that mean then for the full year? You're, I think, also expanding capacity, right? So just talk to us about both. What should we expect for the full year?
As of now, as I speak, like Pearl Global, we have 100 million pieces of capacity, 100 million plus. So that will continue to expand. What we are seeing is the demand at this point of time is quite good. What had dampened last year because of all the tariff discussion that was going on, and most of the retailers are on the back foot. So that something, the confidence is back in the market. They have seen that the consumer sentiment has not changed. So that's definitely a huge positive sign. And with that thing, at least we have been growing. Even last year also, we did some kind of capex so that we can take the benefit as soon as the market bounces back. So this year so far, if I look at my order books also, they're quite healthy, like, a significant jump compared to year on year on this particular date, if you have to speak about. So that's something which gives a good positive sign. And we are having that capacity to ramp it up quickly as the business comes in. So that way, it's overall, so far, this year has been looking good. Although, like when you hear most of the big financial institutions of US, they feel that the second half of the year, there could be a little bit of pressure of inflation. But in fact, 4.2% of May, the number that came in from US market. So that's little, we should focus on that a little bit. But so far in the retail situation, in terms of the consumer behavior, we have not seen change. In fact, I'm from US at this point of time, and most of the customers that I've spoken to in this trip also, I don't see that worry at this point of time in their mind.
You're joining from the United States?
Yeah, so it's night out here.
Appreciate you staying up for us here at CNBC TV 18, Pallab. A quick word then with regard to input cost. Because of this war, some input costs would have gone up. For you, did you experience anything on that front? Point number one. And point number two, the markets and most industry participants are quite happy that the rupee has stabilized. But for you, that could have been a tailwind, right? When the rupee was depreciating, you would earn more. Or what kind of a level of rupee are you comfortable at?
So you see, like, I'll answer the second part of the question first. So rupee, when it gets depreciated, or basically like we get a better return per dollar. So definitely for a smaller portion of the time, it looks good on our numbers. But then, today everybody can see that. So even the next season or the next quarter, when the negotiations are happening with the customers, they want that advantage. So it's not a long-lasting advantage in one's favor. But if you see, like, what happens is a little bit of the wage increase that happens in the market. What we have seen, especially in the Asian countries, every year there is a wage increase. About 5 to 7% growth is quite normal. Although India, a couple of states this time has been much higher. But that increase that happens 5 to 7%, and the dollar also appreciates against most of these Asian countries. What we have been noticing for the last decade or so, it would inch up in that proportion. So that takes care of that. In terms of long-term benefit, definitely the negotiation starts happening because the customer gets the same visibility, what's the rate, exchange rates. And also the raw material prices also get passed on to the customers by that next season or the next quarter. So if you talk of US, Japan, Europe does buys about bi-monthly or monthly, but other markets do about quarterly buying. So this within a quarter it gets adjusted. So that's how it operates. Now the question about what's happening to these raw material prices. What I was talking about, post-pandemic, what we saw, Australia, Japan, those kind of markets took a couple of years to come to the speed. And Europe, as it came up to the speed, but then suddenly after the Ukraine war, it has really dampened. So by 2024, all these three markets were running at a good speed. 25, I'm talking about 25, yes. But that's the time, US was having this tariff uncertainty, so it was little cautious. If I look at it now in today's world, most of these markets are buying steadily. Most of the retailers are putting healthy numbers. They are showing growth, and the better ones are definitely gaining market share. So that's happening now at this point of time. I would say it's a normal phase if you have to speak in today's world. So in that case, the demand from all the markets are there for the raw material. So that puts the pressure on the raw material prices, definitely. And when this war happened, when the energy cost and the fuel costs are up, it was not helpful, definitely, to win against.
Got it, Pallab. Quick question. All work on this US trip, or you're going to catch one of the football matches as well?
Yes, it happened simultaneously. So in fact, I got good amount of fun in New York.
Yeah.
But yeah, it goes.
Have a good trip. Thanks a lot for joining in and giving us a brief analysis in terms of how you see things pan out from here on. Have a good night in the United States. Well, time to slip into a quick break. On the other side, we have DR Choksi's Devin Choksi, who will be joining us for some fundamental stock talk. Stay tuned. Welcome back. Hope you're having a good morning. Well, time for some fundamental analysis then. We have Deven Choksi who joins us on the show. Hi, Deven. Good morning. Good to see you, Ben. Deven, yesterday the tech stocks made a bit of a comeback. Now you have Coforge that had their investor meet yesterday, and as my colleague Vinny told us, that they're laying out very, very large aspirations. And the street is penciling in now at least a mid-teens growth for the next few years. What's your view on tech? And which stock do you like out there? HCL Tech went to there. They did a strategic acquisition in an AI company. The street rewarded it. Your view?
Yes, Nigel. Good morning. Well, I think the validation is happening now with some of the larger companies straight away moving into adoption of AI. And that's what I think we have been talking of all this while. TCS has, in the quarterly numbers, reported a significantly large amount of AI pipeline of new orders. And they have confirmed it subsequently during the AGM as well, that this particular order book could probably go up along with in this particular first quarter and second quarter as well. So frankly, the noteworthy part here is that not only they are adapting to the AI way of working, thereby delivering the solution faster to their customers, but significantly changing the billing pattern from those time and effort based billing processes, I think has now started becoming the outcome based processes in the AI. So that is giving a good amount of confidence for many of the IT companies. HCL Tech's move to invest, I think, further into the LLMs is again suggesting that they are basically wanting to adapt the entire environment much faster than before. And that's where, again, we get the validation and confidence. As far as our subject liking is concerned, we believe that some of the mid-tier IT companies which are working on a dedicated programs with their OEMs, they are some of them which are likely to flourish better compared to the larger ones. Larger ones will definitely have business, but it will be a single-digit growth or close to double-digit growth. But some of the mid-tier IT companies may continue to operate between 15 to 20, or in some cases about 20% rate of growth as well. So we really like them, I think, from the perspective of seeing the consistent growth for next 3 years or so.
All right, so consistent growth for next 3 years, and that I presume makes you positive on a lot of these mid-cap IT names. Coforge actually has done well over the last few trading sessions already. I wanted to understand your thoughts on the real estate space. So now, it was a little suppressed because of the crisis, and after having seen a big rally in the previous few years, it had gone in for a bit of consolidation. It was just the last 2 or 3 trading sessions that it had started to show some signs of life. And now we have a headwind that, water supply for construction will be cut. Do you think this is just a temporary blip? And maybe if there is any correction on account of that, we should go ahead and enter?
Yes, Mangaram. I believe that I think some of the larger companies, particularly I think they are into the luxury and ultra luxury segment. They would be relatively better off compared to the mass market real estate company, as I see it. The compulsion to basically deliver the project in time is definitely there because of the RERA. But the most important part is the realization that you get in the luxury and ultra luxury segment, where the selling pressure is comparatively less and at the same time realization is better. So from that perspective, we like this particular space. We are very selective. We don't want to put all the stocks in the same basket. We believe that I think some of the Mumbai specific companies which are comparatively better in generating higher amount of revenue per square feet would be relatively better in this space.
Got it. All right. Deven, what about EMS stocks? After a while yesterday, these stocks made a comeback. And made a comeback in style, actually. Though they're still, I think some of them are down 20, 25, 30, even 40% from the top. Anything comes on your radar? You had big movers yesterday. Amber was a big mover. PG Electroplast did pretty well. Keynes as well was up and about. And Keynes will be interesting because it's in the F&O ban. So we'll have to see whether or not this short squeeze out or they pile on. Your take?
Well, the fundamentals of these companies haven't changed overnight and neither likely to change in hurry. Most of these companies have been in the expansion spree because of their OEM customers have actually put in larger amount of orders into them. So from that perspective, the business continuity is being seen. What is going to be relatively little bit challenging out here is the valuation at which they are quoting. The current move in the market on the upside is also due to the fact that I think many of the traders have been sitting on sidelines due to these war-related concerns. Now, with these concerns going out of the way, probably I think these traders have once again jumped into the market, and that's where you are seeing the actions happening in some of these counters. I would be careful about putting money across into this space, maybe selective one or two companies where the valuations are justified at around 40-45 times price earning ratio. They may be slightly better off compared to the overall basket of EMS stocks.
Right, so those are a bunch of them. Meanwhile, just monitor this. A near 800 crore block trade has happened in Corona Remedies. It's a near 10,000 crore market cap company. I'm just looking at some more details here. 800 crore is the deal which is taking place, and it's in the block deal window. So we'll monitor that. In fact, over the last 6 months or so, the stock has seen a decent jump of almost 35 odd percent. The last 1 month as well, it's prone to seeing a lot of volume-led trades on a few occasions, but we'll monitor who the participants of that deal would be. Just wanted to know, Devin, is there any way you track Corona Remedies?
Not yet, Mangalam. Have not seen it in detail.
Just a quick word with regard to this Corona Remedies, since Mangalam briefly spoke about it. I'm looking at the shareholding. The promoter entity has around 69% stake. And Cipla, I think that's Chris Capital's affiliate. They have close to around 20% stake in the company. So, between both of them, there's close to around 90% of the equity. And Invesco has the other 4.5% odd. So, 3 entities, that's the promoter, Chris Capital affiliate, as well as Invesco. They have 95%. Probably, has to be
probably one of them is what it has
part
to
of
be.
this particular deal. We'll try to get you further details on that front. For the time being, I think we have Sudarshan who's joining in to tell us some brokerage calls of the day. Hey, Sud, good morning.
Good morning, Nigel. So first one is that UBS has written on internet companies. It says that Indian internet stocks have had a difficult 2026 and the stock prices are down in the range of 10 to 30% YTD. And those concerns are related to weak macro, rising competition and potential disruption from AI that these companies might face. But now channel checks suggest that GMV, NOV and billing growth across segments is stabilizing after a slowdown that these companies had seen in H2 FY26. Even competition in QC segment is also showing signs of moderation. Now it prefers Eternal with a buy call target here is 305 rupees per share. For Misho, buy call target is 210 rupees per share. It has upgraded Info Edge or Naukri to buy and target is 1280 rupees per share. For Nykaa, neutral call target is 290 and Swiggy buy call target is 335. Next one is CLS on LG Electronics. It has initiated coverage with an outperform call and target here is 1830 rupees per share. It says company is positioning as a key beneficiary of India's durable consumption upcycle and expects large appliance segment to deliver double-digit CAGR. And operating leverage coupled with an increasing backward integration will support the margin expansion going forward. Last one, the note on Jefferies on PV FinTech. Interesting note amid the concerns related to pending IRDAI's regulation with respect to commission. Jefferies maintains call and target is 1950 rupees per share. It says stock price fell 20% over last 6 months due to concerns around commission regulations and founder exit. But estimated price is already factoring a 10% commission cut and business model is unlikely to change with renewal profitability being unchanged. Risk from founder stake sale may be overdone. It trades at a 53 times FY27 EV to adjusted EBITDA, with EBITDA is expected to double over the period of FY27 to 29. So these notes will be in the focus and these stocks can be on the back of brokerage road.
All right. Thanks very much. So for that, we'll keep an eye on both those names as we begin today's session. We'll take a break. We are back with the pre-open rates. Prabal Sen of ICICI Securities will also be with us. We've seen a very large fall in oil prices, 16% in 5 trading sessions. Oil marketing companies, have they reacted enough? Is there more left? We'll ask Prabal. We'll also get you technical trading ideas with Mitesh and Sudarshan on the other side. All right, well, 13 minutes to go, actually 14 almost to go for the market open. Pre-open is kicked off, rupee is open, and it's another 10 paisa appreciation on the rupee compared to the close yesterday. So 94.56, 94.46 is where we are at this point. So 94.43 now, so it's a bit more in terms of strength that we are seeing. So this is, of course, the big 4.5% drop in oil will reflect in terms of rupee strength here as well. So I mean, it completely changes the macro math. And all of that has happened in the last 5 sessions or so. Mitesh is with us, and so is Sudarshan with what they'd want you to do as far as trades go. Gentlemen, good to have both of you here. Thanks for joining in. Mitesh, you go first. How is it looking? What's the setup and how to approach things? 3 days up. Yesterday, though, spent, within Tuesday, spent within Monday's range, though, on the Nifty.
I think, it's purely that the movement which happened on Monday, was kind of a pullback, and Tuesday again resumed the trend on the upside. We talked about 24,100 thereabouts as the first target. So we're kind of there. And I think once we cross that, 24,350, 400 is my near-term target, with a possibility of us continuing the move to about 24,600. So the setup remains on the positive side. I think we will clearly recommend trading with the long bias.
All right, Sudarshan, your thoughts?
Yeah, good morning. Well, the Nifty normally goes into a consolidation or a huddle after a big move, and that's exactly what's happening now. The trend is up, the short-term trend is up, so any decline or dip in Nifty should be taken as a buying opportunity. I would not go and buy at the market. There's no need to rush into it. The Nifty will pause and will give us a 100-point dip. Same view as yesterday. If you get at least a 100-point dip below the opening price, go long and then stay long.
Yeah. Okay, so buy on decent dips, right? Which, slightly deeper pullbacks in that sense when you get them. Sudarshan, what would you trade? Individual stocks?
Oh, individual stocks are all on the long side. CG Power is a buy with a stop under 920. ICICI Prudential Life is a buy with a stop under 480. RVNL is a buy with a stop under 235. And finally, MFSL Max is a buy with a stop under 1580. Mid-cap stocks should do well.
Okay, all right. Enough action there. Mitesh, what about you?
I have all buys as well, and on the list is Coforge, which after about 8-9 days, 10 days of pullback is restarting in a move. Buy here with a stop at about 1440 for targets of 1510. Then a buy on Aditya Birla Capital made a fresh swing high. Buy with a stop at 367 for targets of 385. AU Bank is something that's also given a lot of positive crossovers, so that's a buy with a stop at 1004 for targets of 1065, and hence that's a buy with a stop at 774. Look at targets of around 830.
And
yeah, got that. Thanks very much for that, Mitesh and Sudarshan. Appreciate you joining in with those trading ideas. Coforge, by the way, is opening up with another 2.25% kind of gains right now. Well, let's talk about the oil and gas space, and we're talking about the 16% fall in oil prices. Prabal Zain is senior research analyst. The oil and gas space, he also tracks Agrichem at ICICI Securities. Prabal, good to have you with us here. Thanks very much for your time. So, it's a pretty consequential fall, right? Are oil stocks reflecting it fully yet, or there is a lot more to go in terms of repricing?
No, I think, there is some way to go for repricing. There's a lot of things that can happen, as we have seen multiple times, between the actual signing and the pronouncements, or the digital signing, or, whatever terms are being used by both the sides. There are some gaps that still exist in terms of interpretation of what the framework actually covers, and, what terms will actually be negotiated. So maybe that is the reason why the markets are still holding off in terms of, building in this momentum in the stocks. So I think there is a fair way to go. There are some details that need to be probably ironed out. So we're going to probably see a gradual re-rating that happens in all the stocks, as in when we go along, and the formal 60-day negotiation period actually starts post the signing on Friday.
saying the hesitant kind of move, if I can call it that, and the oil marketing companies is because of these doubts, Prabal. So once you actually see all this signed and delivered and the Strait open and ships moving, then perhaps you will see some, some larger moves coming through for the OMCs.
We would expect so. I mean, if I look at a very simple sensitivity, I think a $10 movement downwards in terms of actual product prices, that alone can actually shift the EBITDA for each of these three companies by more than 200 billion on an annualized basis. As of now, we were fairly bearish on the state of the conflict and the kind of margin profile in our updates post the Q4 results. But obviously, in the current situation, if we look at our rough cut calculations, that can completely turn around. And, at least IOCL and BPCL can actually straight away see a positive, EBITDA to a big extent. And that same goes for the gas companies as well. If LNG prices actually were to compress with the higher supply coming through and Qatar Energy also normalizing, then, your margin profile can actually shift. And lastly, the improvement of LPG supplies is the other big delta for the OMCs. If you look at the loss per cylinder that was shared by these companies in the Q4 briefing, it was upwards of 650 rupees, 650 rupees a cylinder in the beginning of May, which would have translated into a 30,000 crore quarterly loss. So that also there is a fair chance can start to moderate. So there's a whole lot of positives. Obviously, the agreement has to sort of play out and the state has to reopen. But as of now, the trend looks very positive.
Right. So, on the gas bit itself, there is Qatar talking about resuming some of the supply. I mean, will that be an immediate positive or will it be gradual like the others as well? And we've already started diversifying supply. Will it take time to fill in from Qatar? And what does this do to the overall space?
No, I think the supplies that are being backfilled are mostly on short-term arrangements or even from spot cargoes. So if the term LNG actually comes back to the market, I think there would obviously be an immediate shift as and when the Qatar volumes are actually available. Because the pricing terms in the current crude price environment, the crude also softens because these pricings are always on a Brent-linked contract. Those pricing terms are also likely to be more favorable than spot cargoes. So there's no question that once Qatar's 8.5 million tons or so is available, that will be completely, whatever sourcing has been done from elsewhere could shift back to these sources. Having said that, how soon they normalize it, how soon do the flows, start to come back? Because it's not just about the volumes available from Qatar. The shipping and vessels also have to be sort of available. What has happened in the crisis is that there has been obviously a shift away from LNG tankers as much as possible to other destinations. And, there has to be a realignment of freight and insurance and, shipping routes and so on. So we're going to see how this plays out. As I said, directionally, it's a massive positive because LNG supplies globally are anyways going to be running in surplus for the next 3 to 5 years based on the assessment of cargoes and whatever we read about, the liquefaction capacity being added everywhere. So Qatar also coming back on top of everything else, I think means that pricing can actually moderate from the current levels by a material level. So that's what we're looking forward to.
Prabal, very quickly, I think your Reliance is something that you track as well. What kind of valuation are you giving Jio in the SOTP?
Reliance is on our restricted list as of now because of the imminent IPO of Jio. Unfortunately, we can't speak about it.
All right,
so I'll refrain from commenting on it.
Right. Prabal, just you have the agrichem space as well as something you track?
We have started coverage. We currently have coverage on Godrej Agrovet and Sumitomo. So it's a space that has recently come under our coverage. So we are slowly picking it up. So, that's where we are right now.
I see. So not exactly the chemicals and fertilizers kind of space, right? I mean, that's...
There could be some names that would come through in each of those spaces. But
so it's a broader question, not so much about this company or that company. With monsoons looking a little tricky, hopefully things will all it'll be better. How do yesterday, for example, fertilizer companies, etc., were all sharply higher. Is this environment of a tepid monsoon season over the 4 months Does it hurt these companies, in the agri space, or how does it work out historically, if you have a view?
So historically, of course, I think any company involved in the agri input space will obviously be vulnerable to fluctuations in monsoon. Most importantly, in terms of the application window, particularly when it comes to agrochem, if your planting is not happening at the correct time, the application window basically goes away in different. I mean, whether it's the Rabi season or the Kharif season. So depending on when the monsoon is actually sort of getting disrupted, if your application window gets away, then obviously that spoils that half of the year for the agri input companies. So as of now, what we understand is that there is still some sliver of hope that there would be monsoon coming through in time for the planting season to sort of happen. But obviously, it's a vulnerability for specifically for agrichem if the application window gets disrupted because of weaker monsoons.
I see. But yeah, on the other hand, I think input prices have all come off very sharply because we get a lot of this stuff from the Middle East, petrochem derivatives, etc. So yeah.
Yes.
Thank you very much, Prabal. Good speaking with you always. Appreciate your time here on CNBC TV 18. Well, I think there's 3 minutes to go for market open. Sudarshan is back with us. 9:10 call. Sudarshan, what do you have?
It's ICICI Prudential, buy ICICI Prudential with a stop under 480.
Mitesh, what about you?
I think I'll go with a buy on CAMS for targets of, I think, around 830.
Okay, there's iPru and there is CAMS. iPru from Sudarshan and CAMS from Mitesh. We've got Coforge in focus, and I just want to put the spotlight on it back again. Stocks up about 2.25% in the pre-open. Vinny's got, the details from the investor day yesterday. Vinny, take it away.
Hi. So first up, obviously, in terms of the guidance that they're given for FY27, they've spoken about this before as well. They expect revenues in the range of around $2.6 billion, $400 million in terms of EBIT for FY27. FY30 target that they've highlighted, they expect $5 billion in terms of revenues, what they're targeting, and EBIT of around $800 million. This includes the acquisitions that they've made as well. So 15% organic CAGR growth over FY26 to FY30, and 20% overall CAGR growth is what the company is highlighting. 100 basis point EBIT expansion expected in FY27. Margins, obviously, what they said that would lead to the expansion. Why? Because of the AI cost savings that you would see and cost efficiencies that you would see coming in, as well as the deliberate exit that they're making from those low margin side of businesses. Management is expecting large deals to continue. FY27, they expect especially large deals coming in from healthcare, as well as the PSU and public sector side. BFSI and travel, they expect that to be the growth engines for the company, and AI, they believe, will be net positive for IT services company. And that is why brokerages like HSBC continue to maintain the buy rating target price of 1,710. Nomura also maintaining the buy. Jefferies maintaining the buy. UBS is maintaining their neutral rating as well. So that's the update coming in from Coforge.
All right. Vinny, thanks very much for that. We've got market open coming up in just a couple of seconds. So we'll look at that before we move forward. What do we have on the indices? There we go. And it is 0.1%. I mean, it's a flat to slightly higher start, but nothing. 24,000, nothing on the index in terms of any moves, at least to the word go. Maybe things pick up. Nifty Bank is up 0.25%, 57,400. We've got the mid-cap index up 0.33%. The small-cap index will come up, I think, with the first rates as well. So across the board, it's a more muted start after the last 3 days, which have been pretty good, especially for the broader space. It's still very early, just out of the gates, but 3:1 advanced decline ratio. Dixon is starting about 2% higher. Dixon went up 2%. There were all these reports that they're going to get that Vivo JV approval. So it continues to react to it in increments. Coforge comes up, I think, another 2% after the gains it's seen going into the investor day. Okay, it's paired. As I said, it's already up $100 from last Friday. So 1479 on Coforge right now. Let's just quickly look at the Nifty heat map, and then we will talk more individual names here. So it is Wipro and Indigo, Tech Mahindra, etc. on one side. It's iShares, Axis, and Tata Consumer on the other side. It's more evenly balanced as we begin today's session. 20 points on the Nifty. Mangalam.
But if you look at the broader markets, at the index level, it is mild outperformance, but some of the supply of paper is impacting a few stocks. So DOMS, for one, where FILA is likely to sell about 7% stake. That's down about 3% at the open itself. A lot of the Mumbai-based real estate companies, because of the lack of water supply, now have been seeing some profit taking. So we have Lodha, which is down by about 3%. Oberoi Realty opens about 2% lower. Godrej Properties also 2% lower, and alongside that we have Prestige, which has a few projects in Mumbai. That one down by about 1.5%. Apollo Tyres is up around 2.5%. We are seeing some traction in Keynes Tech for the second or third straight session right now. The heat and the lack of monsoon does well for a couple of these cooling players. So we have Voltas, which is up 2%. Blue Star continues to do well, up around 2% for that stock as well. Lower oil and gas prices means good news for a couple of these city gas players as well. So we have IGL, Mahanagar Gas, all of them doing fairly well. Sudarshan did allude to the SEBI relief coming in for something like Prime Focus. That stock is locked in 5% upper circuit. That's the circuit limit for them. But it's the IT pack which continues to do well in today's trading session as well, even as the Nifty Bank is higher by about 80 points in line with the frontline index. The IT index has outsized gains. So the IT index has opened about 1% higher, led by Infosys, which is up by 1.5%. We're seeing some traction in Tech Mahindra, Wipro, as well as TCS that continues. So the second straight day, we have the IT stocks which are doing well. And just a word on Reliance. Okay, that stock was doing well in yesterday's trading session, has opened marginally lower ahead of the annual general meeting. Let's see whether it finds some traction.
Well, that's right, Mangalam. Just keep an eye out on a few of these Vedanta-listed companies. Vedanta Iron and Steel, well, it has been moving circuit to circuit. That's up 4.5%, but there is some supply that's coming in on high levels. So just keep an eye out on that one. On the flip side, Vedanta Aluminium, it listed at 522. Now, those that are playing it specially for just the demerger, well, they have been selling, and in the first minute itself, you have massive number of shares. Close to around 50 lakh shares are already got traded. It's on a heavy lower circuit. But at around this 420, 450 odd range, maybe we could see some demand because then the valuations are more realistic. At around 520 odd, it was a steal for those that played it purely for this particular event. So keep an eye out on that name as well. In terms of other stocks that are moving around, Corona Remedies, Mangalam has spotted that, large trade that took place. We'll wait by to see who exactly was part of it. But that stock has opened gap up, I think so. It's up close to around 4%. So keep an eye out on that one. Prime Focus green signal coming in. So that one is well trading in the green. And Idea Forge as well is up close to around 3% in today's trading session. So good move out there. NIT, I think that's a stock Mangalam was talking about a few sessions ago. That's up 60% in this month. So big move is what we're seeing on that particular name. Bombastic move actually. 60% in a single month. Let's see how that goes. And CLSA have initiated coverage on LG Electronics. So that one's holding with a gain of around 1.5%. Net, a flattish start on the Nifty. The mid-cap index, though, doing a relative outperformance, guys.
No, absolutely right. And that has been the story which has played out. So 23,975 is a little sideways this morning to begin. But maybe things pick up from there. Anand Shah is with us, CIO, PMS and AIF at ICICI Pru AMC. Anand, good morning. Great to have you back on the program. Thanks for joining in. I just had a quick question. Same time at 9:30 yesterday, we were talking to the private weather forecaster SkyMet, and they were telling us that, well, they're worried. As an investor, Anand, how much will you pay attention to this? Of course, we'll all keep track, but is this a big determinant because it's got implications for so many things, right? Not just, agriculture, but even industry, as we've seen, BMC undertake some measures, etc. Is it a worry?
Indeed, and unfortunately for us, it's coming at the worst time. So what been happening on the background is that inflation, even notwithstanding the West Asia crisis, was expected to go up for multiple reasons, be it deglobalization, be it tariffs, be it anti-involution in China. So we were, as it is, in some way dealing with larger inflation. On top of it, we have a energy inflation, which then seeps into fertilizer, food, plastics, chemicals. So that was compounding the issue of inflation. Now, if this is the time when actually food inflation also becomes a challenge, unfortunate, but that would be a year when consumer will have to take too much inflation, and that's sort of a problem for a country like India, where consumption is actually leading the growth and the economy.
Yeah, fair enough. Got that. We've climbed the so-called proverbial wall of worries, Anand, right? At least the non-FII stocks have climbed that wall. And they're at new highs, and of course FIs have sold what they own, banks and so much else, but mid and small and micro caps, that part of the market has continued to do very well, and you are a big one for that space in that sense, Anand. Bottom up investing has been your style, so give us a sense of what you've been doing despite all of this back and forth noise, war, no war. Oil's now, of course, come off very sharply, which is, of course, a tailwind. So give us a sense of what you've been doing.
Yeah, so I think sticking to the basics, looking at the earnings growth rate, and rightly so, that you have the slowest earnings growth rate in Nifty 50 and a very rapid earnings growth rate in mid cap, and also even small cap is doing much better than Nifty 50. So I think the outperformance on that area is also dependent on the earnings growth rate. And the earnings growth rate goes back to my initial point that if the country is going to face inflation, and you add to that rupee depreciation, a lot of people are worried about rupee depreciation. I'm actually quite sanguine or quite comfortable with the rupee depreciation because it's a part of a solution. So both rupee depreciation and a higher inflation means that consumer should slow down. The consumption in some segments slow down, but it will be a big boost for manufacturing. For a country like India, which is at such a low per capita income, and for any other, even current developed nations or the developing nations, that our per capita income used to produce a lot more than they used to consume. India was unique that we were consuming a lot more than we were producing, and to that extent we had actually trade deficits, and that needs to be corrected. So to me, I'm quite comfortable and quite optimistic on the profitability growth rate in the manufacturing, which sits more in mid and small cap. There is very little manufacturing in the Nifty 50. It's filled with consumer services, consumer products, and so on and so forth. But a lot more manufacturing sits in mid and small cap, and that's reflected in the higher earnings growth rate. They would both benefit from rupee depreciation as well as higher inflation.
You said you are overweight select private banks, asset managers and insurance. So that takes care of the BFSI space. If you could give us some more clarity or color on what in that is something that you particularly like. Is it large banks? Is it smaller private banks? In the asset managers as well? And, even select exposure to consumer services. Could you give us a sense on what particularly in those consumer services that you like?
So if you see, India's demographics is clearly moving from pyramid to a diamond, which means that you have a lot more of affluent, high, ultra high net worth individuals, and a lot more middle class and upper middle class. And to that extent, if you see, they would have maxed out on the consumption of goods, and their incremental spending generally moves towards services. They're consuming financial services, they're consuming travel, they're consuming restaurants, they're consuming entertainment. Even the way the India's upper middle class and above are consuming goods, they're consuming differently, from kirana stores to now more Blinkit. So to me, within the consumption space, services is growing a lot faster than the products consumption, and that's where we are overweight, be it telecom, be it airlines, travel, and so on and so forth. So that's something, and you can see for yourself how the acceptance and the penetration of financial services is also improving as we see more and more wealth managers come up. There's a lot more private equity coming through for creating wealth management firms, which in turn will eventually acquire customers and give them financial services. So we believe that's the space which will grow faster than consumer products. So we are in a way underweight consumer products, overweight consumer services within the consumption space in India.
Hi Anand, good to see you. When you mentioned telecom, how would you play that? The third player, the core player, or the one that's going to get listed?
So I think, look, any industry that goes through consolidation is beneficiary to the service provider. Obviously, as a consumers, we've been paying more, and my take is we will be paying a lot more in years to come, given that the competition intensity is reduced. And obviously, we are today beneficiary of one of the world's cheapest telecom services possible, consuming more than 19 to 20 GB a month with unlimited voice. So I think it will benefit all the three companies in a different way. And to that extent, overall, the profit pool for the telecom industry should go up compared to what it is today, as consumers pay more for these services.
Right. What kind of modeling or expectation have you done on a price hike in telecom, tariff hike? Because most analysts are expecting anywhere between 5 to 10% this year. But given the sort of inflationary pressure that consumers might face from other areas because of the geopolitical uncertainty, do you think that these companies will have to postpone them?
Indeed, I think that's very much a possibility. And to that extent, it's as you also agree that the telecom tariffs have to go up. So it's not a question of whether the tariff should go up, but it's a question of when. And I completely agree with you that this might not be the ideal time, given that there are multiple headwinds to the consumer today, where from fuel to food to even textiles and everything will become that much more expensive, as there is a general inflation in the petrochemical supply chain, the energy supply chain. To that extent, yeah, I mean, nobody knows when that would come, but we are playing structurally that at some point of time, the telecom services in India can't remain so cheap. It should be, as a percentage of GDP, much higher as it is in the other countries. And also in terms of per capita income-wise also, there is a room for it to gradually go up. So it's not sudden, but gradually it can go up.
Got that. You know, the question around banks, financial services has been much. I think it's been consensus overweight, and even when over the last couple of years, at least large private banks, when they've not been performing, they've always been pointed to and said, well, valuations are very attractive. Now we're at a moment where there was a big gap between credit and deposit growth till last year. Credit growth was doing pretty well. Deposit growth was lagging far behind, 500-600 basis points below credit growth. Perhaps all of that will start to ease out now, and we will see still see a rate hike or two from the Reserve Bank later this year. But what's your sense? How is this pack set up? And do you think? I mean, NBFCs are also always more sensitive to any incremental change in cost of deposits, etc. But so what's the positioning? You think private banks will do much better as compared to the NBFCs, which people have bet on? It's worked sometimes it's not. But here are 3-4 very large private bank institutions which stand to benefit, not just because of the sort of local environment, credit growth, etc., but also because they'll be the ones to get in all this FCNR money.
I think the key difference between large banks and the NBFCs, and especially not all the NBFCs, but the NBFCs which been relatively doing better, is growth. And NBFCs have actually gone out, invested heavily, and have all said and done delivered a lot more growth than what banks have been able to deliver. Banks been constrained by the deposit growth rate, as we all are aware of. So I think both the private sector capex is something which is growing, but it's actually subpar. The profitability and the cash flows for the overall private sector is fairly strong, and at some point of time, they should start investing. That would be a big boost in terms of credit growth rate for the banks. On top of it, the availability of deposits, especially this FCNR window, should also help in the short term. But structurally, the private sector capex, the areas where the banks can lend but NBFCs cannot lend, those areas have been not growing that rapidly. The corporate capex and the corporate credit growth rate has been much slower than expected, given that they have very strong cash flows and they have incremental capex requirement. As and when that environment changes, when the large business houses decide to invest heavily is when the banks outperform the NBFCs.
Okay, well, it takes a lot to move the needle there because of the size itself, right? Thanks very much, Anand. Good speaking with you. Appreciate you joining us here on CNBC TV 18. It's always a pleasure. Thank you. Well, let's just talk about the monsoon situation. We asked, the private weather forecaster SkyMet yesterday about their forecast, and they said, well, the situation is worrying. Later today, yesterday evening, we got the BMC here in Mumbai imposing more restrictions, especially with regards to supply to real estate, commercial, industrial usage, etc. We have Niranjan Hiranandani, chairman of Hiranandani Group, joining us. We also have Debin Moza, international partner, senior executive director, head of project management at Knight Frank India. Gentlemen, good morning. Good to have both of you here. Thanks for joining in. Prashant this side. Mr. Hiranandani, first question to you, sir. What do you make of these restrictions from the BMC? And what will it mean for real estate projects being constructed in the city?
I think, Prashant, it was overdue. The water table is already down to 10%, and with the El Nino effect having taken place, and that is being broadcast by the meteorology department, I think the time was there. I think it should have come up maybe a couple of weeks, days before. So I think it is important to actually take up this action very quickly, because you can't have a zero supply of drinking water in the city of Mumbai. So I think it is well taken. What we really want to use this challenge is to look at a long-term solution for Mumbai. And I think that is what has been suggested many times over, but has not happened. So I would rather look at it as a good thing. Of course, it affects my construction. Of course, it affects the metro and the other projects. Of course, it affects all the sites which are working on and require water, especially drinking water for the construction labor and other things over there. And of course, there'll be a postponement of the construction buildings, which will be there for various people that we are constructing. Having said this, I would rather speak about what we need to use this crisis as an opportunity to relook at what Mumbai water supply. What are we talking about? We always talk about putting more dams to create more water supply. While 100% of my water, sewage water, goes partially untreated into the sea outside, we are now going to provide recycling of water. But what we need actually is to use recycled water for our own purposes. Golf courses, they are using pure water. Your race course uses water from our regular system of water supply. All these aspects of it we do. Second, flushing. Flushing doesn't require to have fresh water. We can use recycled water for that. Industrial processes. Nagpur has a system by which recycled water is sold to industry, and the municipal corporation of Nagpur makes a profit on these things. Air conditioning, road washing, reserves for the port and logistics ideas, all the ideas that has been submitting. All this requires to have a long-term perspective for recycled water. Water is always going to be short. As we have more and more construction, we need to do it. Just to give you an example, our company now recycles 7 million liters of water between 3 of our projects. Powai, Hiranandani Gardens, in Thane, Hiranandani Estate, and of course in Panvel, Fortune City. So we do 7 million liters of recycled water for the last 30 years. So all our gardens, waters and other things will never have a shortage, irrespective of what the restrictions will be. So we need to have long-term solution for Mumbai in terms of water, recycling and reuse, especially for gardens, for other things and all that. It's about time. We have suggested this 10 years ago, 15 years ago, 20 years ago. This is the right time to raise the topic again. Thank you for raising the topic on your TV today. All
right. No, absolutely. Mr. Hiranandani, just one quick question. You did say, and all points are well taken, and I think you being, of course, one of the groups at the forefront in terms of recycling at your projects, as you said. But when you said these measures will now mean postponement of construction activity, this will be across the board, right? And I just want to ask you, what is the water intensity at a typical real estate project? I mean, and second, during the rain season, point is monsoons are delayed, but in these 4 months, June, July, August, September, I'm assuming because of rains, construction activity in any case goes a little slower. So, or no? So I'm just asking you that. Yes, please go on.
That was in the good old days, yes.
Okay.
Not anymore. Most of the thing is now mechanized, and we continue to construct as fast into the monsoon period as you would do otherwise. We have entire equipment which gives that. Of course, there is a slowdown on the heaviest raised rain, because we are not able to get the labor on the sites or other things, especially in the downtown areas where we need to get the labor from outside. They do not actually stay on the sites. So a couple of days in the year, yes, they do have it. That's when the heaviest rains come into Mumbai and, of course, causes waterlogging, etc. But I'm not talking about that. We need to now rethink of how we need to do. Do we need to make more dams in Mumbai? Or do we need to have more recycled water? I think an investment into recycling in a much bigger way is imperative. Nagpur has shown the led the way. I heard I heard Mr. Nitin Gadkari talking about it the other day in a program, and he said we sell recycled water to industry and business, etc. So what I'm looking forward to is to treat this challenge as an opportunity. If you don't do it, then again, you'll have the same problem again and again, and we'll be investing in dams faster than we invest into recycled water, and we use not proper water going into the sea and then the rivers and other things. I think we need to rethink this part of it quickly.
Right, we take that point. Let's go across to Deben Moza now. Deben, will this delay project completion timelines, and as a result of which, if you could give us a sense, basis your analysis, which are the ones which are most vulnerable? Are there any new launches, redevelopment projects, or affordable housing? Which segment of the real estate space does this impact the most?
See, as Mr. Hiranandani said, it's there's a lot of dependency on water when it comes to construction. Whether it's curing, whether it's concreting, whether it's bricklaying, interior finishes. The most impact would be on affordable housing, because the margins are very thin for the developers. So they have to source the water from either the private tankers or the recycling facilities, and spend a lot of money on transportation. So there would be impact. And also in terms of, as Mr. Hiranandani mentioned, that for large developments, you have labor camps. If there's a water shortage, then it would also impact the efficiency in term, and the water shortage would lead to delays. And if it prolongs further, there would be impact on the construction cost for the projects which are ongoing, especially the large ones, affordable housing, infrastructure projects. So it's high time we realize that we need to conserve water, use recycled water. We don't need potable water to be used in all the activities we do. So I believe that it's high time we think about water harvesting, make it mandatory for all kind of developments to use the recycled water, you do the water harvesting, and save water. This is an alarm right now for us. And if we don't wake up right now, I think it would have more significant impact on construction industry.
All right, Mr. Hiranandani, coming back to you, talking about alternative sources of water and recycling as well. Who bears the cost? Will it be a mix of the government as well as the developers? Just want to know, because everything comes at a cost, right? I mean, it's always good to talk about these things, but how do you see things pan out? Please go ahead, sir.
It's profitable to recycle water. It is the cheapest way to get water. Right. Because today we actually build dams at huge cost, and we subsidize clean water coming to the city. So in reality, government, municipal corporations subsidizes, takes over the costs of dams and does it. While we put dirty water into the sea, and we push water into the sea, we need to put zero water into the sea. Singapore puts zero water into the sea. They recycle 100% of the water and reuse it for themselves in all the systems that are there. We need to discover this for our country, for our city, and for our entire state. Unless we don't conserve water and say that there is a war, there has to be a kranti, there has to be a revolution in use of water, and they have to make water more expensive, especially because we are subsidizing it. So there is a lot of waste of water. I'll give you two bad examples. There is a housing society in one of our projects which has recycled water system. They have shut the system because it costs money to run that system, and they use cheaper water available from the municipal corporation. So though they have a separate recycling system, they've decided to use the fresh water coming from municipal corporation, even though they have the system which is operational. Now, because of this situation, they cannot immediately put the system back into operation because it takes time, and if you have not used the system, it's a problem. So unless we don't educate our people, until the government at the macro level doesn't do recycling and supply, unless this education is not put, just plantation of trees is not enough. We need to conserve water. Water should be the next target to take up, both at the government, the corporation, townships, builders, industry, and other people need to look at this very, very seriously. I must tell you, and I'll repeat third time, Nagpur is a good example of using recycled water for this purpose.
No, absolutely. And, we're carrying some of what you're saying on the screen as you speak, sir. Mr. Hiranandani, just one quick point, sir. Is water harvesting, is that something which can make a difference?
Of course it can. But it can, but it has its limitations. So while you can do while you can save 30% of the water by recycling, by doing rainwater harvesting, we'll improve the water table by 2 to 3% if we did the whole of Mumbai rewasting. So what we need to do is to make big wins to be done, and this can be done very, very quickly. So there's no problem, because as it is, municipal corporation has started putting sewage water to be recycled at their outer plants because of some Supreme Court directive. But what we need to do is to see that water which is treated now, which was actually going untreated in the sea, is actually recycled and reused for purposes. Look at the place at the golf course, at the race course in Mumbai. We have an outlet where sewage water goes into the sea. Only if you put up a small plant, the entire racecourse will not need a drop of water. So, small things like this can give. The Azad Maidan, the Cross Maidan, all the Maidans that we have, all that can be used conveniently. In fact, the treated water is considered better for the plants than the raw water. So, because the raw water contains chlorinated water. So for the plants, the recycled water is much better and grows the plants much better. So you have a win-win-win. But you know what has happened? Because government subsidizes the cost of dams and gives water cheap, we haven't had an economic valuation for water which has taken place. But I'm hoping that this crisis will actually wake up all of us in order to find solutions quickly.
Well, I certainly hope so, sir. Because it's a fundamental thing, right? Otherwise, everything else...
And the problem is, Prashant, look at it. We already have examples where it is done so profitably.
As you said, in Nagpur.
Yeah, yes. And the cost-benefit ratio is easy, and you're economic program. You're the kind of persons who can put the cost-benefit to the people much better than what other channels can do. So I'm glad that you've raised this topic. Thank you for that.
I can tell you our reporting team is working on a few stories, focusing on this topic in a pretty comprehensive way, and we'll reach out to you as well to take your help. Thank you very much for joining us, Mr. Hiranandani. Debin, thank you very much for being here as well. Appreciate it very much. We'll take a quick commercial break here. We'll come back and we will we'll be speaking with the management of Uno Minda on the impact of easing geopolitical tensions on their business and the outlook going forward. Stay tuned, coming up.
Welcome back. Well, the Indian markets have taken out the highs that we saw on Monday at least. We're holding at around 24,070, which is good news. The bigger traction, though, is in the broader markets because the breadth of the market is actually extremely positive, which is good news for the portfolio perspective. And a couple of stocks actually are bucking the trend. IDBI Bank, massive volumes on that one. The stock has spiked to the high point of the day. And Lloyd Engineering, as we mentioned yesterday as well, they're scheduled to meet, I think, today to consider fundraising options. So we'll have to keep an eye on that stock. Yesterday, the stock was at 71 rupees. Today, it's at around 84 rupees. Waiting by to hear what exactly is on their mind. But with the possibility of a peace deal emerging in the coming days, let's turn the spotlight to the auto space. Commodity prices have cooled off from the highs, easing input cost pressures as well. They could provide a bit of a boost to the auto and the auto ancillary margins. To discuss this and the way ahead, we're joined by Mr. Sunil Bora, the Group CFO at Uno Minda. Hi, Mr. Bora. Good morning. Always good, sir, to see you in. Nice, colorful jacket as well you have got today. So hopefully things are looking up for the company. Let's focus on this aspect first. Exports you have mentioned in the past, there is a big scope of improvement. With this war fear receding, how do you see things pan out in terms of exports? If you could help us out on that front, where is exports as a percentage of a mix headed to, say, in the next 2-3 years? And also, input costs have cooled off in the near term. That could be a bit of a relief for margins, right?
Yeah, so first of all, definitely in terms of exports, we have been aggressively working in terms of how do we put more of our products into the global markets. We have also last assembly lines of the manufacturing plants in Indonesia. We have set up a new plant in there recently. We have put our plant in Vietnam a couple of years back. So we are increasing our footprint in terms of local manufacturing as well. And in terms of physical exports, if you see our total revenue pie, the global revenue is roughly around 10% of our total revenues. And in the last quarter, we are really happy that we have gained almost 400 crores of incremental exports to the EU and the Americas, which is the annualized peak revenue we call. So export as a segment is doing pretty well. We have been aggressively working towards export. We have set up a marketing team a couple of years back in the developed world. And with this new FTAs coming out, be it with EU or UK, or I'm sure US will be close soon. So that also opens up a lot of export opportunities for the country per se, and we are trying to capture a large part of that in terms of putting more products into the global market. So we have been also working in terms of putting some of the new facilities, which will also look towards the export market. Recently, we have, as you know, announced setting up of a new greenfield alloy wheel plant in Chhatrapati Sambhajinagar. So there, large part of our production, we expect it to go towards the export market. So all in all, export looks pretty promising, and with geopolitical things easing, that I'm sure opens up more frontiers. In terms of costs, while there may be some short-term impact, but what we have done in terms of past few years, there has been a big commodity spike post-COVID as well. So what we have been trying to do is with our customers, and thankfully to them, that large part of our commodity price movements, whether it be upside or even downside, they are sort of passed through to our customers, maybe with a lag of a quarter or a half year. But on a full year basis, everything is sort of passed through. Yes, short term, these cycles does impact, but over a full year, all these things we sort of pass on to our customers largely in terms of commodity price fluctuations.
Okay. Sunil, just stay with us. Morning, Prashant here. I just want to make a quick mention of the big news at the bottom of the screen. Looks like, and this is exclusive information, sources tell us that NSE is likely to file for its IPO DRHP with the regulator SEBI later today at some point. And this is going to be one of the largest IPOs. And the size, and there's been so much speculation of etc. about whether it'll be 5 lakh, whether it'll be upwards of 5 lakh crores in terms of total market value. But the detail we have is that the amount of stock which is going to be offered in the IPO as part of the IPO is about 6%. And I reckon this is slightly higher than what the street was expecting. I think the street was somewhere between 4% to 5%. But what we understand is that around 6% is the stock which is going to be offered. I don't know if we have Yash with us. If we have Yash, maybe after the Uno Minda conversation, we can just sort of, bring him in if he has more details. And just one more thing, the 6% is going to come to the market with LIC not selling any stake. So that is the other bit, right, which is interesting. And so it'll be interesting to see the selling shareholders, the list of it. We've, of course, reported on it over the last many weeks and actually the last couple of months, really. But that is the big news which is coming through. NSE DRHP IPO filing today. That's the big news coming through.
And I think that will be the largest ever Indian IPO, right? The largest is Hyundai. That was at around 27,870 crores odd, which was followed by LIC at around 21,000 crores. So back of the envelope calculation suggests that this will be in the vicinity of around 30,000 crores, which will be the largest ever IPO issue. And the stock that's been running because of the indirect holding has been IFCI. But I'll tell you what, in this run-up to this filing, the stock was 70 bucks. It already became 90 rupees yesterday. And we're seeing some kind of very large volumes even today. So IFCI, that's the one that has indirect holding in NSE. And that's where the stock, it's up today. It's up close to 1.5%. But the real story is the last 7 days. It's up 25%. So the street has been sniffing it.
You know, I just maybe a quick mention of this BSE as well, right? Maybe take a look at, because the point is most likely the listing of NSE is going to be on BSE. And again, the BSE stock has done phenomenally well, itself, right? I mean, I think this year has been outstanding. Actually, last few years has been just absolutely outstanding for BSE as well. But this is a marquee, large, perhaps the largest so far. In terms of IPOs.
What will be interesting is that if LIC is unlikely to sell any of its stake, will the 6% come in from the existing shareholders, or will there be any sort of fresh issue that will come by as well or not, that we will be monitoring fairly closely? But 27 to 30,000 crores for the NSE will be quite a landmark moment, though we'll get talking to Yash shortly. Perhaps in the meanwhile, we'll continue our conversation.
Uno Minda, Mangalam, go on.
Uno Minda, well, Sunil, sorry for that detour that we had taken, but it is a momentous occasion for the capital markets of the country. But, you know, I just wanted to understand a couple of things from you with regards to the input costs as well as freight availability. Have things eased out? And on the input cost front, with the kind of surge that we've seen in metal prices because of the war, do you think that may now begin to cool off? And how have your customers reacted to this?
Well, that's the general belief, and we have seen headline numbers in terms of commodities. They have already started softening, starting with crude. Definitely, it's a big relief for the whole country. I would say for a lot of countries who are importing crude, and this will have a lot of impact in terms of the inflationary pressures. So this is definitely a welcome news, because all the oil and gas and all related components, be it polymers, they will see some sort of softening because of the base prices of the crude, and also some of the commodities. Definitely, this is a welcome for the industry in terms of softening, because it does overall impact the industry. But if I see in terms of, as I said, Uno Minda, for us, this is largely pass through. Yes, quarter to quarter, there is normally some impact, because there is always a lag of something in terms of pass through to your customers. So yes, there will be some positivity overall, but sort of to see these things pan out in the actual numbers, I'm sure there will be some time, because it takes almost like 2 to 4 weeks for things to get started trickling into your numbers, because you always tend to carry some inventory in your supply chain. So, but overall, in the medium to short term, definitely this is a good relief for the entire industry, I would say, sir.
But Mr. Bora, in the past you've said margin should be 11%, plus or minus 50 basis points. Do you think as things stand, we'll be leaning more towards the plus 50 basis points rather than the minus 50 basis points for the year on an average?
Yeah, so we have been very, very transparent in terms of our guidance, and I don't want to change at this point in time. We have been clear that 11% plus minus 50 basis points. Okay. Maybe once we have a couple of quarters behind us, that might be a right time to sort of give any increment or change any incremental guidance, whether it will be on the plus side or the minus side. But as of now, we do hope that our margin should be at least in line with our last year, which was around 11.1%.
Okay, all right. Let's talk about the EV penetration then. You know, post this oil scare that we have had in the last few months, and the geopolitical situation has put additional focus on EV. So penetration is increasing out there. I'm looking at the Vahan data as well. Some of them, you know, the numbers are looking very, very good, and it's been gradually improving over the last few months. Could you tell us what is your contribution coming in from EV vertical? If you could help us out on that. And also in terms of, realization per vehicle, what was it and how do you see that move up?
Absolutely. So in terms of, first of all, starting with the penetration for two-wheeler, it has, EV has gone to almost like 8%, roughly around 8%, which used to be much lower last year. And if we see from the same segment, our revenues are north of 13%. So there is a clear delta which we have been able to establish in terms of our ability to serve the EV segment, and also with the additional EV specific products, we have been able to outperform the EV in terms of our revenues. And same goes in terms of the PAS car as well. We are the first one to sort of launch some of the high-end products in terms of the electric drive unit for the PAS car segment, while we are currently in the process of setting up our facilities in Khed City. The board also has approved setting up another plant in CSN for the EV and the DST segment. So we are definitely very, very optimistic in terms of the EV penetration. The industry has actually picked up a good momentum, and we do hope that this momentum to continue. But what we are trying to do is we are trying to keep some flexibility in our capacity, so that we are not sitting idle with our idle capacity. So what we are doing is we are putting maybe land, building, utilities, etc. But in terms of plant and machinery, we are trying to put in a modular way, so that as volumes increase, we keep on expanding our capacities. And
Mr.
also
Bora,
in technology uptake, we are able to absorb any technological changes as well.
Give us a few numbers. How much of your current exposure, how much of revenues you get from the EV part of business, if you could help us out with that, and content per vehicle, has it moved up?
Yeah. So in terms of revenue, as I said, for a two-wheeler segment, which is primarily our play as of now, which is around 12 to 30% of the two-wheeler segment is coming from the EV segment. And in terms of content, is a significant jump up. If you see our components from the two-wheeler perspective, which are agnostic to ICE or EV, our kit value ranges between 11,000 to 12,000 rupees. But if you add all the EV components, that jumps to almost 35,000 to 36,000 rupees. And if you see the PAS car segment, goes from A segment to D segment, kit value ranges from 1.5 lakh to almost 2.5 lakh rupees. And if you add the EV specific components, that's another 1 to 1.5 lakh rupees. So at the top end, the kit value, potential kit value for a PAS car D segment is almost like 3.5 to 4 lakh rupees.
And is the EV growing faster than your, how much faster is it growing than your non-EV portfolio?
So as I said, EV penetration has improved in the, say, PV segment. Last year was roughly 2.6%, and this year it is around 3.8, 3.9% and consistently growing. So in terms of two-wheeler, the penetration has gone from 6% to 8%. So as of now, while I said in terms of two-wheeler, our revenue is 12%. For PV, we have just started the EV specific components. So as of now, we are primarily into four-wheeler segment, which are components agnostic to ICE, which goes into ICE also, or EV also, or hybrid also. Right. But
just
EV
a one word,
you will see impact coming in from the current fiscal year.
Right. Just a one word answer before we let you go. Last year you did 17% revenue growth. You said that momentum will continue. This year, 15 to 17% growth likely to happen?
So we normally don't guide in terms of top line, you know very well. So because our destiny is linked to our end customer volumes, and we don't sort of guess those volumes. So whatever is the industry growth, our expectation or target has been at least grow 1.5 times of the industry growth. So if industry grows 10-12%, our endeavor will be to grow at least 15 to 18%. And that's what our guidance has been.
All right. Sunil, lovely chat. Thanks very much for joining us. Good speaking with you, and appreciate you coming on here, as always. Well, we'll take a quick commercial break here. Manisha joins in with a focus on the commodities space. Stay tuned. That's coming up.
Welcome back. 65 points higher on the Nifty, 24,055 thereabouts is where we are. A smidge of a decline from the top, and that's largely because of the Nifty Bank, which is marginally in the red right now, but a lot of support coming in from, you have the IT Bank doing well and Reliance as well. The intraday of Reliance comes up for you. It opened about 0.6% lower, and from there, it's seen a recovery of almost 1%, and now currently sitting with a gain, a mild gain of about 2 rupees odd. But remember, from the lows, it's seen a bit of an up move, and this explains why the Nifty is high by 60 points, despite the Nifty Bank being lower. Perfect time to get in Nagaraj Chetty, who's a senior technical research analyst at HDFC Securities. Nagaraj, your call on the indices and individual stocks.
Hi, good morning, Mangalam. Nifty has witnessed a significant breakout from the lower levels, from 23,100 levels. The gap which was found on Monday is still open after 3 days of formation. Overall chart pattern is looking positive. Currently, Nifty is showing consolidation around 24,100, 24,000 levels. I'm not expecting any bigger worry at this point of time. Easily, we can see Nifty sailing through the 24,100 hurdle and could reach up to 24,500, which is going to be the next resistance and the next target for the Nifty in the near term. And I have two stocks from the long side. First one is Engineers India Limited. Chartically, Engineers India Limited has been in a consolidation phase. Higher tops and bottoms were seen on the daily chart, currently placed at the edge of breakout of 240, 41 levels. Overall chart pattern is looking positive. One can look to buy at this point of time. Immediate target would be around 255. One can place a stop loss at 232. Second one, PG Electroplast. This stock has been in a consolidation phase over the last previous few weeks. Witnessed breakout so far this week, currently placed at the edge of moving above the crucial hurdle, somewhere around 235 to 40 levels. The chart pattern is looking positive. Currently trading around 538. One can look to buy at this current market. The immediate target would be around 570. One can place a stop loss at 520.
All right, take that point. Thanks a lot for joining in, Nagaraj, and giving us your views on the indices and individual stocks right now, but also be mindful of the fact that tomorrow is Sensex weekly options expiry. Yesterday was the Nifty weekly options expiry. Today is a Wednesday. So we are seeing some traction out there. And if you look at, the way the market has moved, at least the Sensex up around 200 points, a large part of the contribution has come in from the BSE IT index, which is up around 0.2%. And that explains why, we've seen this up move out here. And in doing so, the Sensex over the last few trading sessions with the up move that we've seen has crossed the 50-day moving average. It's crossed the 20-day moving average. Obviously, the next two levels are around 78,000 and, closer to 79,000 or 80,000 around the 100 and the 200-day moving averages. So those are levels that we will be monitoring from here on, though they're about 1,000 to 1,000 points away from here for the Sensex. For options that are active tomorrow, remember, 77,000 is a fulcrum. So we have the 77,000 call, which has a premium for almost 250, 300 rupees. So 77,250 to 77,300, there could be some sort of supply coming in. And the 77,000 put as well is fairly active. And for those who are writing this straddle, they are actually playing for a 500 rupee premium and a 1,000-point range on either side of 77,000. So 76,500 to 77,500 is the broad range for expiry tomorrow as per current positioning. And obviously, all these volumes pick up more in tomorrow's trading session ahead of expiry. The 77,200 call writers also fairly active, telling you around 77,500 to 77,600 is where we are likely to see some sort of supply come by for the Sensex. So that's about the Sensex weekly expiry tomorrow and the FNO setup as we speak right now. 77,000 is the fulcrum. Now, swiftly, let's move away from the equity space to the commodities market. Manisha joins in with what she's tracking today. Manisha.
Well, I'm looking at crude oil prices. There's nothing swift about that one because we're looking at very, very volatile moves onto this. If you look at the prices overall, we have seen nearly 15% of a decline in the crude oil prices in the matter of last 6 trading sessions itself. Today as well on your screen, we're trading in the negative $78 a barrel, just about holding. And that is a 3-month lows coming in for the Brent and the WTI crude prices. It's not just about the crude oil, it's about the crude products as well. So whether it is about heating oil, gasoline, all of those prices have declined as well. So good news clearly for consumers and consuming countries as well. When you look at the overall markets, well, it is about the interim deal that the street is looking at. Now, what this deal would do, it would extend temporary ceasefire by 60 days. And within the 60 days, it can be a choppy ride, really, because there would be conversations, statements, agreements, disagreements from both the sides. And the final deal, of course, would come in after all of those negotiations. But this also does permit Iran to immediately resume oil exports, also shipping and banking operations. So it's a big positive coming in from Iran Iran, for Iran rather, when this deal goes through. There also is an expectation of increase in sense of supply, the post-peace agreement between US and Iran. So this 15-week US-Iran conflict near end is what has led to a lot of decline in case of prices there. The higher OPEC plus export quotas, remember OPEC has been increasing production export quotas in the last 3 months. Of course, they have been doing it on paper, but this now could be happening on ground as well. It's not just about OPEC plus. Iran itself could be coming back into the markets in a very big way. Remember, UAE is now out of OPEC. So UAE does not have to adhere to any quota now. So the UAE production also is expected to increase and come into the market. So we're looking at increased production and supplies coming back into the global markets there. So much so that the Middle Eastern grades, which is Dubai and Murban, have shifted into contango from backwardation. So the near term is higher and the forward months have now started to gain as well. So markets are looking at a bit of a physical ease coming back into the space there. But the markets also believe that the crude prices will see support going forward, and that is on the back of the fact that the US crude inventories have continued to decline for an 8th straight week, and this time around by 8.3 million barrels. The US Strategic Petroleum Reserve also has declined quite sharply, and that trades at the lowest since 1983. Not just that, remember, IEA also has led to a lot of oil into the market. So those inventories, the global crude inventories also are at multi-year lows therein. It also is about the price moves that have been very, very volatile. Remember, this year started with $60 a barrel on 1st of January. Just as the war started, we were at 78. Before the war, on 28th of Feb, we were trading at around 74, 75. So that $4 to $5 of a jump up came in on the 1st of March. All high, the highest point in this year was in the month of May at $120 a barrel. So from those kind of highs, we have seen a considerable decline, and we're exactly back to the level of 1st of March where we were before the war really escalated. And we did see 15 weeks of that continuing into the markets there. The street believes that there could be a further decline that you could see into the prices. This is knee-jerk reaction after all. But $75 a barrel is where you could be looking at some support. It really is going to take some time before you see shipping lines open, that mines are taken off, the insurance premiums come back, the shipping companies start going to Strait of Hormuz. Until that happens, it's going to be a big range of $75 to $95 a barrel that the crude prices could be trading within in the next couple of months.
All right. Thanks very much, Manisha, for that. That is important to watch as well. We'll take a quick commercial break. Our special segment, Indianomics. Lata speaks with 4 analysts on how the crash in oil prices, and it really is a crash. 16% from the highs of 95 5 days back to below 80 now, and how all of it changes India's macro math. Stay tuned, coming up.
Hello and welcome to a very special edition of Indianomics occasioned by the changed geopolitics. Crude price this morning are back to their March 1st level of $78 per barrel after remaining over $100 for over 60 days, 2 months. Now, how does this price fall impact the Indian economy and policy making? The Reserve Bank had brought down the GDP forecast for the current year from 6.9 to 6.6% on the assumption of $95 for crude average for the year. For the same reason, it had raised its inflation forecast from 4.6 to 5.1, 50 basis points higher for the current year. Now the crude has cooled and a $1.95 average looks extremely unlikely. Should we upgrade our GDP forecast and lower our inflation fears? And therefore, how will this impact RBI policies and policy expectations? How will it impact yields and, above all, the rupee? Joining me are 4 top-notch economists, Kaushik Das of Deutsche Bank, Upasana Bharadwaj of Kotak Mahindra Bank, Indranil Pan of Yes Bank, and in the studio, thank you very much, Dheeraj Nim of ANZ Research. Gentlemen and Upasana, thank you very much indeed for your time. Let me start with the policy question first, because that's more impacting yields. Kaushik, your inflation forecast because of the likely lower average crude and therefore your RBI expectation.
Lata, good morning. We always had inflation at 4.9%, even when RBI was at 4.6%. So RBI, as you said, increased it to 5.1. There is this couple of things which I want to highlight. One is obviously the El Nino risk and, whether all this abnormal monsoon or subnormal monsoon leads to food price spike. It can happen in July, August, so you don't know about that. So that risk element is there. And when food prices go up, it can take a few months before it starts coming down. So the upside risk to inflation is there because of monsoon, number one. The second is the fuel price hike that has happened in May. We have to see whether the government decides to reverse those fuel price hike or not. It may happen that they might hike the excise duty and take, the money in revenues, which they would be losing when they cut the excise duty, in March. So that can happen, or they can allow oil marketing companies to, recoup some of the losses they have made. So it is not necessary that the fuel price that has been increased in the, domestic pump would be reduced. So if you are not getting a reversal of, say, petrol, diesel anytime soon, and you have inflation risks, you could very well still see inflation around 5%. So we have kept our inflation forecast unchanged at 4.9. I don't think there is immediate risk of any rate hike, even before this fuel price, decline, oil price decline. We were not looking for an August rate hike. But October, December, I think still there is a case for rate hike. If your inflation is at 5% and your policy rate is 5.25, then you need to do the adjustment. And RBI is always forward-looking. So when they come to October, December, they'll look at 2027.
So you're penciling in 2 hikes and that doesn't change, right?
That doesn't change, yeah, right.
Dheeraj, would you agree?
Completely. I think as far as the inflation picture is concerned, we were at 5% and upside risks. I think that upside risk phraseology now goes away where the oil price currently is. But I would still be very cautious. We've had 3 very bad months of significant agricultural input price inflation, which tends to feed through food prices with a lag of about 12 to 13 months. So it may very well be in 27 we see the impact on food prices, and especially also from El Nino as well. So I will hold my horses in terms of revising down inflation forecast, but of course the guidance in terms of risk changes. Now, as far as the policy rates is concerned, we currently have penciled in 2 hikes, August and October. And I think hiking now makes more sense because while, the steps to ease the pressure on the rupee, of course, would work well. But from a forward-looking perspective, the real policy rate, the ex-ante policy rate, to me, it looks very, very low for the kind of macroeconomic backdrop we're thinking of the next 1 year. So I think the RBI will have to make that adjustment, so better sooner rather than later.
Okay. Indranil Pan, what is your guess? The yields have actually moved down significantly to 6.87 from a high of 7.17 before the policy. Are you expecting rate hikes this year? And by the way, I just wanted to add a wee bit on this El Nino thing. We had Ramesh Chand immediately after the war had started, and at that time we were at the height of the urea shortage and the sulfur shortage. And he said, we have enough grains for 1 year. Grains. There will be, of course, problems with other things, but food grains, he said, we have. So your take, Indranil Pan, on inflation, and more importantly, whether you are changing your interest rate expectation.
Well, in terms of your last question, yes, we have adequate food grains for 1 year. But the issue is if the monsoons fail and if the risks of the El Nino are increasing over the months with reservoir levels being on the lower side, we really don't have a clear handle in terms of how the Rabi also sort of reacts to the El Nino, which necessarily means that there could be some upside in terms of even cereal prices going forward, despite the comfortable buffers at this point in time. Second, in terms of the inflation expectations, obviously, given the oil prices having come down, there is a pressure on the economists to reduce inflation sort of numbers. If I look at the first quarter expectations of the Reserve Bank of India, they were at 4.2, and the inflation is already undershooting that expectations even before the oil price increases at the pump head had happened, which necessarily means that there is a downside bias to the inflation. Of course, we really don't know what is happening in terms of the final deal, because this will be an MOU and we have a 60-day cooling period after that before the final deal is signed. And there can be significant slip between the cup and the lip. So immediately we are not revising our inflation forecast, which is at 4.9%. But now, as Dheeraj rightly pointed out, the upside bias goes off and we replace it with a downside bias. In terms of the RBI policy actions, I think they have a much more better holding power. So we were initially penciling in an August hike. Given the pump head price changes that had happened and expectations of further changes on the pump head prices, that seems to have been going off. I am not sure whether they will reduce the prices once they have raised it and addressed some amount.
Rate hike, sir, rate hike.
Rate hike, I am not really sort of looking at even an October rate hike at this point in time, given the undershoot of inflation that we are expecting, even from an RBI's forecast perspective.
So you have a no hike. The other two gentlemen who have just voted have 2 hikes. Only Dheeraj is a little earlier. I'm preserving the best for the last. Upasana, your rate hike expectations, have you changed them because of the changed crude scenario?
So, Lata, again, like all others, I haven't revised down our inflation estimates of 5%. But I agree with others as well that there is a slight downside, but we'll have to hold our horses again because we don't know how the El Nino is going to play out. The other headwind is also that core inflation, how much of pass-through from the WPI is going to happen. So we need to keep both of this in mind, even though other tailwinds are there now, energy prices, urea prices, and rupee in check. But yet, I think the risks are evenly balanced, and hence we will keep our 5% intact for now. Having said that, on the RBI policy front, we were expecting a rate hike in October. For now, we still retain that, but there is a clear shift backwards towards the probability that the rate hike does not happen in October and it may happen in December. But having said that, I think a 50 basis of rate hike should happen if inflation is going to be around the 5% handle.
Okay, so 3:1, we have a vote of 2 rate hikes and no change from Indranil. Okay, the other big thing for the markets, I'll come to the growth questions later because the market is more worried about rates and rupee. So for rupee, let me start with you, Upasana. The crude oil fall is going to make a seminal difference to the current account deficit. Indeed, we have a current account surplus in April itself. And all-time high monthly exports for May, $45.2 billion. Now with crude falling, is rupee on a slightly firmer path?
Yes, absolutely. I think what happens is, we were looking at a 2 to 2 quarter CAD at, $95 crude. Yes. And now we are looking, if 85 is the new, let's say, norm, then at that range, and, we should remember that remittances flow is also increasing quite rapidly. Yes. It's robust. So I guess we could be somewhere close to the 1.5% handle on the current account deficit if crude oil prices settle to around 85. Just I want to mention one thing. While we are seeing sub-80 levels crude oil prices right now, I'm not sure whether it will really sustain at such low levels. because inventory buildup is important to keep in mind towards the latter part of the year. So that's the reason I think 80-85 is a fair base assumption to go with for the full year, even if we see corrections right now. So we are looking at a 1.5 to 1.7% current account deficit downside, basically, almost a 60-70 basis downside. And at the same time, balance of payment, obviously because of the RBI measures that have happened, is looking meaningfully like around a $20 to $30 billion surplus. When we were talking about a 50 plus kind of a deficit earlier. So with all the measures that have taken and the development that has happened on the energy prices, clearly rupee has room to appreciate towards maybe 93 and a half levels. Beyond that, any further appreciation is something which probably will be dependent on how RBI is looking at.
Fair enough.
Buffering their FX reserves.
Okay. Fair enough. There are some people who also believe too much of a rally will spoil their swap arithmetic as well. But anyway, Dheeraj, your take. If y'all can be a little brief, I'll try and get others before that.
I broadly agree with Upasana's points here. I think current account deficit could fall very well below 1.5% of GDP if you consider all other gold curves, etc., to play out as well. For the rupee, I'm sort of thinking that 93.5, 94 becomes an important support level, both technically and even for the RBI. I see there is a significant need to replenish FX reserves. Now that one shock seems to be somewhat passing, we need to prepare for the next one. So I think these organic flows that will come in will have to be absorbed. So I would be sort of keen to see rupee around 94 in my forecast on the better side of things. But in the baseline, we think it would be more or less stable around the current levels.
Okay. Can we quickly get Indranil and Kaushik on this and get your arguments later? Indranil, where are you seeing the currency?
So I would see the best case at around 94 because as Dheeraj rightly pointed out, the RBI needs to build its reserves. And most of the flows, FCNR and ECB, they are on swap basis, which means that the dollar doesn't come to the market. It directly goes to the Reserve Bank of India and replenishes its FX reserves. So that I think is a very important point to note. And let's not forget that the easing of risks globally is also leading to some amount of dollar depreciation. So that will also lead to some pressure for the rupee to appreciate.
Okay. Kaushik, your number, and then I'll come for the arguments.
Yeah, so we had 93 for some time and we are holding on to that. But I think rupee can breach even 93 or lower in the short term. But by the year end, as RBI will also be buying, you'll go to 93 probably to end this year. And I think, the FCNRB and all these things that have been announced, people are underestimating how much money can come in. If you just go by the size of the banking system, NDTL, or percentage of FX reserves or percentage of GDP, I just did a report and, you could get something like 72 to 77 billion. If that same size of the economy were to be maintained or percentage of NDTL. So if you get something like 75 billion and current account deficit is going down, then you'll have a BOP surplus which will be much more than what people are thinking currently. So can rupee breach 93 in the short term? Very easily. And then obviously at some point RBI will buy. But then you should be still at 93 by the end of the year is what we are forecasting at this.
Fair point. I think we have to drum it into our minds that Jan, Feb, March, April, we have had a current account surplus. And many of these have been troubled months. And therefore, there's something going right in the trade arithmetic. Maybe the remittances have been advanced. That could be a negative argument. But still, rupee at 93 is about 94 or perhaps 93 is the consensus from our experts. We have to get from them what they think about growth as well and, where the market yields are headed. All those questions after the break.
Coforge opens higher following bullish commentary from its investor day, where the management sets a target of $5 billion in revenue by FY30. A host of brokerages issue bullish notes on the stock, though it's marginally off highs.
As the onset of the monsoon is further delayed, the BMC cuts water supply for commercial users in Mumbai. Stocks of real estate players, they dip. Knight Frank tells CNBC TV that the affordable housing segment will be most impacted by these water cuts.
Dixon Technologies up nearly 5% as there is a bullish note coming in from JP Morgan. They've issued a buy rating with a target price of 12,700 rupees a piece, which is lower than its current market price actually. It sees a potential 24 to 39% revenue upgrade if the planned JV with Vivo is approved.
7% equity changes hands in DOMS Industries for a total consideration of 980 crore rupees as FIRA sells stake. The stock opens with deep cuts but has recovered from the lows.
Another block deal in Corona Remedies sees nearly 45 lakh shares traded for about 800 crore rupees. The stock higher by 3%.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and we have a green start yet again, Mangalam, and the Nifty Bank as well that took a bit of a pause yesterday. It seems to be getting its mojo back. That stock, in fact, that index itself is now participating on the upside.
That is, in fact, the two charts that will tell you the story of the day. You pull up the Nifty IT index and you pull up the Nifty Bank. The Nifty IT index comes up for you, and you would see that it opened fairly strong, and now it's at the lower end of today's trading range so far. And then the converse would be the Nifty Bank. That comes up for you right now, and you'd see that it opened slightly flattish. In fact, briefly moved into the red as well, but now has moved fairly well. So the baton of the market has been passed from one big sector to the other without there being a big change. And the other one, the third part of the puzzle, Reliance, opened about 0.6% lower. From there, it has seen purchase. It's now marginally in the green, but by its sheer weight, the fact that it's holding in the green and not falling has supported the frontline index, even as the Nifty Bank now comes back as the IT index is seeing some sell-off. So all things working in our favor, closer to 24,060.
Well, Mangalam, the stock that we were discussing in Bazaar itself was Vedanta Aluminium. And I was telling you, right, that, when it listed at 537 rupees, it appeared like a bit of euphoria out there. Today, the stock was at 447 odd. In the last few minutes, there's close to around 3.5 crore shares that's traded only on the NSE. So there is some bottom fishing out there. And it came to more realistic levels. So supply can continue. But from the lows of the day, we've seen a big pop out there. We'll try to explain that piece in better detail to you, but it listed 537. It appeared like it was much higher than what the street was working with. It's corrected, and now we're seeing some kind of bottom fishing on this particular name.
All right, so that's about Vedanta Aluminium. Has seen a sharp recovery from today's low of closer to 447 odd rupees. Meanwhile, just monitor IDBI Bank. We've been talking about this all through open as well. Now, as we speak, the gains have been extended into double digits right now, and a fair amount of volumes backing that stock as well. Typically, we see, such sort of moves precede some news come in on IDBI Bank. So we'll monitor what is up with IDBI Bank. And, as we go along, we will track this space. And alongside that, we are seeing some traction in a couple of these other, summer-related plays as well. Varun Beverages, for one, has hit a fresh 52-week high. We've been talking about Blue Star and Voltas, both of them doing well too. And a company that sells some of these products includes the likes of Electronics Mart, which sells all these electricals under Bajaj Electricals, the brand. And that stock too is higher by about 5.5%. This week's gains on that stock at about 12%. Good time to then welcome Ajit Mishra for a quick technical check on the market. Ajit, last 2 days we've been finding some resistance at 24,000. Today, fairly above that 24,000 mark as well. Do you think we go higher from here on, 24,250, 24,300 on the cards?
Yeah, good morning, Mangalam. So, Mangalam, yes, we are seeing markets gradually inching higher, though the pace of decline in crude is definitely promising. But the way we are seeing that, apart from banking, now the other sectors on the rotational basis have started participating. Means from the rate-sensitive pack, auto reality has started, witnessing fresh traction after this breather. Now today, after immediate pause, we are seeing that metal counters are also participating. So largely, we anticipate this recovery to further continue. But at the same time, Mangalam, we are still below the major averages. So means the 200 days is placed around 24,500 mark, and then we have 100 days close to around 24,200. So it's going to be a gradual up move. But yes, the tone is likely to remain positive, is what charts are indicating.
Got it. Okay, what about individual stocks? What's on your radar?
Nigel, auto, I believe that after this breather looks set for the next leg of the up move. iShares is leading from the front. After this range breakout, we are seeing a marginal pause. So it's basically offering a buying opportunity in case somebody missed the chance earlier. So with stop at 74.30, one can look to accumulate iShares at current levels, with 78.20 being the immediate target. And then we have Trent, which almost like ended 1.5 year of corrective phase. Consolidation phase rather after this long corrective phase. So here also we are anticipating this recovery to further strengthen, and 32.20 is what we are eyeing as the immediate target, with stop at 2900 mark.
Got it. Okay. All right. Thanks a lot for that, Ajit. Well, time to slip into a short break, though. On the other side, we'll get an exclusive interview with the management of Finolex Cables. Stay tuned to that. Welcome back. Well, the markets are holding with strong gains in today's trading session, and we're up close to around 100 points now on the Nifty. But let's turn the spotlight actually on Vedanta Aluminium. You know, the stock has actually moved up in the last few minutes, and there's massive volume that's taking place. So between the two exchanges, that's BSE and NSE, you have close to around 5.5 crore shares that were sitting at lower circuit that have actually moved up. So just keep an eye out there. It's close to around actually 4 crore shares is what has got traded on both the exchanges put it together. And on the NSE, just take a look at that. That's around 3.8 crore shares that have got traded. Let's explain what's happened out here. The stock, remember, it listed. That's the demerged entity, Vedanta Aluminium. It listed on the 15th of June. That's a few sessions ago at 537. So that appeared like a bit of a euphoric number. I'll tell you why. Because if you're assuming the debt at around 33,250 crores, which is roughly around $3.5 billion, and FY28 EBITDA of around 32,000 crores, well, then at that price of around 537 rupees meant that the stock listed at around 7.5 times, which is a little bit expensive for a metal company on the whole. At some point of time, it could demand that kind of valuation, but on listing itself, when it listed 537, that's why we did see some people who were playing it purely for the event. They wanted to take money off the table. And that's why from 537, it's come down to around 447, which means the valuations from euphoric levels of 7.5 times, it's coming closer to around 6.5 times. And if it went even lower, then it would be 6 to 6.5 times, which is actually an ideal level where investors would want to go in. Remember, the aluminium business is something that the street wants in comparison to the other businesses of Vedanta, because it has much of the value. It has volume growth, it has backward integration, and cost of production as well has been kept under a close tab, which has declined by close to $200, $250 on a per ton basis. And when I chatted with Mr. Anil Agarwal earlier this week, he was very bullish on the aluminium business. Few points that he made, I asked him on the pricing. He said pricing can be volatile, but on the cost of production, we are fully integrated, and that's why we'll make sure that we are one of the lowest cost producers. In terms of aluminium capacity, I said that you're already at 3 million tons. What's the outlook? He said that in the next 3.5 years, he expects it to go to around 6 million tons. And also he went on to say that in the next 5 years, it could be 10 million tons. We'll have to see how they move from 3 million tons all the way to around 10 million tons. But he also said that that aluminium business with the current capacity, it could also do close to around $5 billion odd, which is a bit ambitious. But this was the stock that the street was most interested at. It went all the way to 537. It did see some profit taking, maybe because of the euphoric valuations at 7.5 times, and maybe some that were just playing it purely for this particular demerged, value unlocking exercise. Currently, still very, very high volumes, though it's come off the low point of the day. So we just thought we'll explain that to you. Well, moving on then. I had a rare exclusive interview with the management of Finolex Cables, Mr. Mahesh Vishwanathan, who recently took charge as the CEO of the company. I began by asking him about the growth targets on their largest revenue contributor, which is the electrical cables business. Let's listen in to what he had to say.
So it depends a little bit on where copper is going to be. With the kind of volatility that we have seen, last year there was quite a bit of volatility. Copper prices went up close to 25% or so. And we had to keep pace with that change in the commodity prices. What then the market will bear is not something that I want to predict at this point in time. But yeah, provided things are normal, double-digit growth is not impossible.
Okay, let's focus on your next segment then, which is the communication cables business. That's, I understand, part play on optical fiber cable as well. I think you're backward integrated, so you'll benefit from the rising fiber prices with a bit of a lag. Tell us, what kind of scale can you look at in this business? I'm looking at a revenue number. It's been around 500 crores. With margins as well have been in low single digits at times to mid single digits. Can you scale this business? For this year, what kind of revenue growth are you looking at and margin profile?
Well, we, like you mentioned, we are backward integrated, and our glass factory is now fully operational. We should get the benefit of making our own glass from the next quarter onwards once the factory stabilizes. So I think for half the year, we should be operating on expanded capacities. We have currently a glass capacity of about 100 tons, which translates to 4 million fiber kilometers. We have a current draw capacity of about 4 million kilometers of fiber, which we are increasing to 8 million kilometers, and that should be ready in a month or two's time. So from the second half, we should be having enhanced capacities. And if the price level continues the way it is today, I think the growth on this side can reach about 750 crores.
750 crores by when?
By one year of full operations.
Okay, so that should be in FY28. We could look at 750 crores from this vertical. Would be fair?
Yeah, that would be fair.
All right. Now, in terms of price increases, since input costs have gone up, what is the blended price increase you've taken, and what should be the consolidated margin trajectory from here on?
Well, I assume you're talking about the electrical side. So last year, the metal prices went up by almost 25%. And our policy has been that we treat metal prices as a pass-through. Whether there is a price increase on the commodity side or a decrease on the commodity side, we pass it on to the customer. There might be a small lag. In terms of margins, you would have seen that prior to last year, we had averaged on the segment somewhere around 12.5-13%. Last year, there was a dip, partially because of the sequences of price increases that kept coming. And there was some lags in between. And also because of a change in the overall product mix, more went towards projects than to the retail side.
Okay.
And that kind of brings your margins down. I think in the long run, what one can expect is a blended average of somewhere around 12%. That should be something that is sustainable.
Got that. So 12% margins, we'll work with that. Could you help us out with what is your analysis? Now, you're mostly into wires, and we have a big new player that's going to be coming in at the end of this year. How do you see it from an industry perspective? Do you view it as a threat? Do you think there'll be a big disruption, maybe on prices, maybe on volumes as well? What is your comment on that?
Well, we know that they are coming, so we are preparing ourselves to handle that challenge. But I think what strategy they would follow, to us, it's not fully transparent as yet. And I'm not sure if they will do a repeat of the paint business or they would try something else. Regardless, I think we are ready to face the challenge that would come in. Long term, I think there would be some consolidation in the sense you today have quite a few smaller players, and those probably would get consolidated one way or the other. I think there is enough space and market for 5-6 of the larger players to continue to operate with reasonable market share among themselves.
So you don't see it as a big threat? You don't see it as a big threat?
No, we are prepared for it. Yeah, it would be a challenge, but then we are prepared. We are ready for it.
Okay, let's talk about a smaller part of your business then, which is the FMEG business. It's only 5% of your sales. What's the outlook on this front? Will you look to add capacity? What is the targeted contribution you're looking from the FMEG business?
Well, a few years ago, we put out a statement saying that we would like to see this first reach a level of 500 crores, and then we would like to scale it up from there. Our faith in that segment still continues, although the performance over the last 1-2 years has not been up to our expectations. So we realize that there are things that we need to work on. It could be on the distribution side, it could be on the product mix, it could be also on the overall strength of the team that is handling this.
So, Mr. Vishwanathan,
all three are areas for us to work on, and we should be able to do that.
If I put a number to it, for this year, what should the FMEG business clock in terms of revenues? For the next year, what should it be? A rough number with regard to a trajectory for this one.
So last year we closed at about 270.
Yeah.
So I would like to see it at least at 400, but we'll have to work towards it.
All right, 400 crores odd is the target for this fiscal, but we'll have to see how things progress. Got that. You're sitting on a good amount of cash, more than 2,500 crores. What do you plan on doing with this, if you could break it up in terms of capex? And also, are you looking at any kind of inorganic growth? There's a Crompton asset that the street is reporting is on the block. Are you all interested?
We are looking at inorganic growth. We have been for quite some time. That's one reason the cash is there on the books. And what we have not been able to successfully do so far is to finalize on a target. We've looked at a few, but the ask has been fairly high, I am okay with multiples of bottom line, but I'm not so sure about multiples on the top line. And that seems to be the trend that the iBankers are working towards nowadays. So we'll have to see how that goes. But yes, we are definitely interested in acquisitions and inorganic growth.
Even Crompton you're looked at?
Where else can the money go? The money can go back in the form of dividends, or it can go into investment back into the business, which is what we've been doing. So this year, the capex we estimate is around 300 crores. So that will come through our internal accruals. There will be no borrowings.
Okay.
In the past 2 years, we've spent another 450 odd crores. So about by end of this year, close to 700, 750 crores would have been spent from the accruals that have been generated over the past.
Okay. And what about Crompton? Have you looked at that asset?
We will.
Y'all are interested. Y'all have put in a bid?
No, not yet. We will.
But you're interested in that particular asset. Got that. By when can we know about the outcome, whether or not you'll get that asset?
I know. So let's study that. We've not done that due diligence yet. So let's get to that.
But you're interested in that asset. Got that. Final question then. What about the promoter entity? There was that bit of a feud that was going on. As of now, where do things stand? Who is the promoter entity of the business? Who's in charge? Who's taking the calls? Or is it a pure professionally run business?
Well, that dispute still is continuing. It is in various fora, and I don't think I should be commenting on that. But beyond that, as far as the company is concerned, it's run by a board. And matters that can be handled at the board level are being handled at the board level. If there is a requirement of the shareholder involvement in some of these decisions, I am sure they will take the right decision.
Welcome back. The market's continuing to pull on, some of its weight, and that's a large part of that coming in from the Nifty Bank. But the stock of the moment definitely has to be Trent. It's a big surge that we're seeing on this counter. In fact, this week it's up 10%, up around 4.5% as we speak. But completely out of time on this edition of Chartbusters. You stay tuned to CNBC TV 18. On the other side, we have the team of Trading Hour taking all the market action forward. 101 points on the Nifty, 250 points on the Nifty Bank. We leave it to the team of Trading Hour.
Hello and welcome to Trading Hour, live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra and with me is Ritu Singh. Well, it's turning out to be a session where we've managed to capture that 24,000 mark as we speak. So up around 0.4% currently for the Nifty and the mid-cap index, which is up around 0.5%. Just want to point out that the Nifty, which is now at 24,000, the next level to watch out for definitely would be the 100-day moving average on the Nifty, which stands at around 24,246. So that would be a key level to watch out for. Separately, if you're looking at the markets on a month-to-date basis, considering that we're halfway through June, the Nifty has risen around 2.3% at this point in time. On a month-to-date basis, the Nifty Bank as well as the PSU banks have done better. So there is an outperformance which is seeping in from the financials. Nifty Bank up around 6% in the same period, and the PSU Bank index, which is up around 5.15%. Let's see whether that continues or not. But as of now, we have the Bank Nifty up around 0.4% and the Nifty, which is up around 0.3% in today's trading session. Ritu, Hi.
Hi, good morning, Ekta. Third day of gains, we'll take it. And above 24,000, markets are managing to hold on to that. In fact, both the frontline indices are trading with gains of, 0.3% or so as we speak. The big mover, of course, has been on the macro front as well. Oil prices, they're now below $79 a barrel. That is a big positive. And of course, there are other triggers coming in as well. So Bank Nifty, it is pulling its weight in the market today as well. The IT pack is doing exceptionally well, up about 1.3% as we speak. Apart from that, you also have, now up about 1% as we speak. The metal index, banking pack, of course, media, PSU, FMCG, all of them doing well. Bit of a weakness, though, seen in the realty pack, and especially the Mumbai-based realty developers on the back of that, water shortage issues that BMC has, as a result, cut some of the water supply on the construction side. So apart from that, markets looking good for the setup today. Some of the heavyweights also pulling their weight. HDFC Bank, Infosys, ICICI Bank, some of the top contributors to the frontline index. But as always, let's put the spotlight on the key movers and shakers in the market today to keep our eye out on. And Hormaz is joining us now with that list as always. Hormaz, good morning to you.
Morning, Ritu. And, the good part is that even though we are up for the fourth day running, the bulls will be happier because of the fact that we are above the mark of 24,000. We were mentioning this earlier in the day as well, that it would not be a surprise that there is the move towards the upside, because Wednesdays are generally trending days between the two expiries. And leading this move today has been the Nifty Bank. It was sluggish yesterday. It was sluggish in the initial bits of trade today as well. But now after 10 o'clock, it has seen a vertical up move, now up over 250 points, and more importantly at that 57,500 mark, which the bulls will need to defend if they need to move further higher towards that 58,000 level for the Nifty Bank. So that has been one rank outperformer ever since Friday's trading session, and that's ensuring that the index too holds on to its gains. You mentioned some of the Mumbai real estate names. They are the ones under a bit of pressure in today's session. Losses of anywhere between 1 to 3% for Lodha, Oberoi, Godrej Properties as well, although the Godrej Properties is recovering from the lows of the day. The consumer durables names are the ones that are doing well. PG Electroplast was one name that did very well yesterday, but with Blue Star and Voltas now stepping up in today's session, and Whirlpool too, it was up around 3% has given up some of those gains as we speak. A lot of the demerged entities of Vedanta have continued to be in the spotlight. Vedanta Aluminum, the circuit has been broken now, and it's seeing some very choppy moves as of now. At one point it had even moved into positive territory. It's still down around about 2%. Vedanta Power is up close to 5%. The oil and gas entity is down in the lower circuit, while the iron and steel unit is in an upper circuit in today's session. Of course, all of these names are still trading in the trade for trade segment after their listing. You look at the newsmakers today. Dixon Technologies is now up 12% in the last 4 trading sessions. A positive note coming in on this potential Vivo JV from JP Morgan today. And incidentally, the stock has already crossed JP Morgan's price target. It was 12,700. We are now close to 12,900 on Dixon. Brigade Enterprises, ex-bonus, Cyient, of course, the record date for its buyback, and Schneider Electric seeing a positive initiation note from Ambit earlier in the day. 2 blocks took place earlier in the morning, both in Corona Remedies and in Domes Industries. Corona Remedies has given up some of those gains, and Domes Industries was down around 3-4%, has recovered most of those losses by the time we have come into this show. And lastly, stocks at 52-week highs in today's session. You look at the wire and cables names, KEI and Polycab both doing well after their investor day. Yes Bank, of course, is at a 52-week high today, is the top gainer on the Nifty Bank today, and Varun Beverages too having a good day today at a 52-week high.
Okay, all right. Thanks very much for bringing us all of those stocks. So as we can see, it's a 52-week high for a couple of those counters, such as Polycab as well as KEI Industries. Thanks very much, Hormuz, for joining in and giving us all of those stocks. But let's stick with it. In fact, the new age stocks, or as UBS calls it, internet stocks, are buzzing in trade. Let's bring in Mangalam to understand UBS's rationale on the same.
Well, if you look at a lot of these internet companies, we've been pointing out in the past, when the market sentiment goes south, these stocks have it a lot worse. And when the market sentiment improves, these stocks are doing a lot better. So these are the new high beta names, the platform companies or the internet companies that, UBS is calling them, as it's saying that they've seen a difficulty here with stocks down anywhere between 10 to 30% in 2026 so far. And that's largely because of the weakness that we've seen around macros, rising competition, and potential AI disruption. But now with these declines coming by in a lot of these stocks, most of them are actually looking a lot stronger because their gross merchandise value, the net order value, billings growth across segments have seen stabilization. And, amidst a slowing down, slowdown that we saw in the second half of FY26, they believe that now the start of FY27 is fairly strong. Even in quick commerce, there are signs of moderating competition as per their channel checks. And remember, it makes intuitive sense as well. If Zepto has to list and become profitable, then maybe it has to moderate its competition with, say, Blinkit. And, Instamart is also guided for profitability in the first quarter of FY27 when it comes to their quick commerce EBITDA business. So all these factors have made them positive on these stocks. So Eternal is a buy rating for them. Target price of 305 across the board. They have buy, barring Nykaa, which is a neutral. But if you look at Info Edge as well, 1,280 rupees is their target price, or something like a Swiggy, 335 rupees on Swiggy is their target price too.
Mangalam, thank you very much for bringing us that update. It's a buy across these new age internet companies, barring Nykaa, like Nigel pointed out. But let's move on to some other buzzers in trade today. We had shares of Prime Focus that were locked in upper circuit after the market watchdog SEBI dropped proceedings against the company when it came to their accounting discrepancies. Devani is here to put the spotlight into what's perspired and, what's the way ahead.
Well, SEBI has dropped all its charges against Prime Focus as well as its directors and management regarding a case that was lodged for the wrong accounting treatment done for certain business transfer transactions. Now, SEBI had launched an investigation into PFL's financial statements from FY20 till FY22. Now, this was regarding two major slump sales. The VFX business division in FY20, which was sold to an indirect subsidiary for 273 crores, recording a net gain of around 200 crores for the company, and a post-production services company in FY22, which was sold to another subsidiary for 365 crores, recording an exceptional gain for the company worth roughly around 250 crores. Now, SEBI had initially argued that these intra-group slump sales had artificially inflated the company's net worth as well as the standalone or consolidated profits. But as it stands, Ind AS 103 applies to the buyer and not the seller. And in this particular case, since Prime Focus was a seller, it was permissible to do so, and hence all charges were dropped with no misstatements found and no penalties levied. Now, this comes as a major relief for the company, and hence it's buzzing in trade today.
Okay, all right. Thanks very much, Devyani, for bringing us all of that stock in particular, which is in focus, Prime Focus. Just watch out for a couple of these banks because Yes Bank, Canara Bank, Bank of Baroda, all of these stocks are doing well in today's trading session. Yes Bank, for example, is up around 5% odd. So good momentum coming into these counters. We'll take a short break, but up next, we'll focus on the bond market with Manisha Gupta on the other side. Stay tuned.
Welcome back. The frontline index holding on to those gains. 24,073 is where we're at. But pull up some of these names like Electra Green. In the last hour or so, the stock has moved up quite sharply, up about 5.3% for today. PVCL Chemical is another such stock. IDBI Bank, which we've been telling you about, that's up almost 16.5% or so. As we speak, a lot of that gain coming in the last 1 hour or so. Bank of Maharashtra, JK Cement, all of them doing pretty well. But on the flip side, of course, you have names like Emcure Pharma, for instance, in the last hour. That's moving down quite sharply. But as promised, let's shift focus to the bond market action. Manisha Gupta is joining in with all the latest from that front. Manisha.
Well, thank you for that. We've seen the government bond markets continue to hold quite on the firmer side there. Pardon me. There, of course, is some profit taking at those higher levels. It's a 2-month mark that we've been witnessing for the last couple of days now. And this is as the crude oil prices slip and stay below $80 a barrel. The crude oil prices, by the way, have declined by 15% in last 5 or 6 trading sessions itself. And the markets will now also watch out for the US Fed decision announcement and, of course, a press meet for the first one for Kevin Walsh. And that is where we would get cues from, especially in the global markets, also reacting to the Indian markets there. But quickly, straight away, let me go to the private issuances in sense of bonds. And there's plenty in sense of company names today and tomorrow as well. The top on my list is Tata Capital Limited. The board has approved raising up to nearly $360 billion. This is via the issuances of NCDs. Tata Capital Housing Finance should also come in on your screen because they are also planning to raise $20 billion. They are doing it via issuances of bond maturing in June 2030. And then you also have Cholamandalam Investment and Finance. They are looking to raise nearly $1 billion. They are doing it via issuances of bonds that mature in 2029. There also is Vistar Financial Services. They are planning to raise nearly $1.25 billion, again via issuances of 7-year bonds maturing in 2033. There also is on my list Rack Ceramics, which is looking to raise nearly $2 billion. They are doing it via issuances of 3-year bonds maturing in 2029. Bajaj Finance is into the markets. They are looking to raise nearly $15 billion via reissue of bonds maturing in September 2028. And then there is Aadhar Housing Finance. They are looking to raise $2.5 billion by issuing of floating rate bonds. This is maturing in 2029 August. Nuvama Wealth is into markets as well. They're looking to raise nearly 2 billion rupees. They're doing it via issuances of bonds maturing in 2028 in the month of November. And finally, Mahindra & Mahindra Financial Services should come in on your screens. They're also into the market looking to raise 10 billion. They're doing it via 3-year bonds maturing in 2029 as well.
Okay, all right, Manisha, thanks very much for bringing us that bond update. Well, for the markets, it's holding steady at this point in time. We'll do one thing, we'll take a short break, but a lot more news, a lot more stocks on the other side. Stay tuned for that. Welcome back. Well, for the markets, like we've mentioned, the Nifty trades above 24,000. What is heartening is definitely the advanced decline ratio, which continues to be in the positive terrain. So remember that in the second half of yesterday's trading session, there was an improvement which took place in the advanced decline ratio. So it ended in positive terrain, and that seems to be continuing today. So there has been no real crisscross, which has in fact taken place, or narrowing in terms of the advanced decline ratio. As you can see, it has been a steady gap between the green line and the red line, indicating the kind of sentiment that is there in the broader markets in today's trading session. In fact, we were talking about a couple of banks, so just also want to point out IDBI Bank. Obviously, that stock is up around 16% odd. But separately, moving away from that, we do have a couple of stocks such as Sudeep Pharma, which is doing well in today's trading session. So up around 5.5% odd for that particular counter. And giving it company is Wockhardt, which is up 3.5% odd. RR Cable is also seeing follow-up buying in today's trade. But let's talk about an issue which has emerged. BMC has announced a series of water conservation measures in view of the delayed monsoon and depleting water levels. Earlier today, we did speak to Niranjan Hiranandani, who's the chairman of Hiranandani Group, and Knight Frank's Dibin Moza on the impact of on the construction activity in the city on account of this. Listen in to what they had to say.
The water table is already down to 10%, and with the El Nino effect having taken place, and that is being broadcast by the meteorology department, I think the time was there. I think it should have come up maybe a couple of weeks, days before. So I think it is important to actually take up this action very quickly, because you can't have a zero supply of drinking water in the city of Mumbai. Of course, it affects my construction. Of course, it affects the metro and the other projects. Of course, it affects all the sites which are working on and require water, especially drinking water for the construction labor and other things over there. And of course, there'll be a postponement of the construction buildings, which will be there for various people that we are constructing. What we need to use this crisis as an opportunity to relook at what Mumbai water supply. What are we talking about? We always talk about putting more dams to create more water supply. While 100% of my water, sewage water, goes partially untreated into the sea outside, we are now going to provide recycling of water. But what we need actually is to use recycled water for our own purposes. Golf courses, they are using pure water. Your race course uses water from our regular system of water supply. All these aspects of it we do. Second, flushing. Flushing doesn't require to have fresh water. We can use recycled water for that. Industrial processes. Nagpur has a system by which recycled water is sold to industry, and the Municipal Corporation of Nagpur makes a profit on these things.
The most impact would be on affordable housing, because the margins are very thin for the developers. So they have to source the water from either the private tankers or the recycling facilities, and spend a lot of money on transportation. The water shortage would lead to delays, and if it prolongs further, there would be impact on the construction cost for the projects which are ongoing, especially the large ones, affordable housing, infrastructure projects. So it's high time we realize that we need to conserve water, use recycled water. We don't need potable water to be used in all the activities we do.
All right, the other big story we're breaking here on CNBC TV 18, that the National Stock Exchange, the NSE, is all set to file its IPO papers as early as this evening. Yash Jain broke that story for us and joins in now with a deep dive into the metrics and, what to expect, the stakeholders, and how, it stacks up against some of the competitors. Yash, take it away.
Well, it's taken years of putting the right compliance, of putting the right systems, of putting the right operations, and then moving towards seeking regulatory approvals to see that headline today. of the National Stock Exchange ready with its IPO papers to be filed, and that is expected to happen today itself. Post markets is what we've been given to understand. The filing of the IPO DRHP is likely to happen with market regulator SEBI. As far as the size of the IPO is concerned, the market was anticipating first it could be about 4.5 or a little over than that. Then, of course, there was this sense that it could be closer to 5%, but it's way beyond that as well. What we are given to understand from our sources is that IPO size could be closer to 6% as far as NSE's IPO is concerned. And what makes this interesting is that the largest shareholder in the National Stock Exchange, that is Life Insurance Corporation of India, is unlikely to sell any stake in this offer for sale as far as NSE's IPO is concerned. How much does LIC hold? About 10.72% stake in the National Stock Exchange. Now let's also look at which are the other shareholders as far as NSE is concerned. LIC, as I said, holds about 10.7% stake. Stock Holding Corporation, that entity holds about 4.4% stake. SBI Capital with 4.3% stake. State Bank of India with about 3.2% stake. There are other PSU entities as well, like GICRE holding about 1.6%, Oriental Bank holding about 1.4%, New India holding about 1.4% stake as far as the National Stock Exchange is concerned. Important to look at the valuation scenarios also in terms of the fundraising and the price that will be decided later on at a size of about 30,000 crore, which could be about 6%. That could give a valuation of about 5 lakh crore to National Stock Exchange. At 32,000 crore size for a 6% stake, that could give a valuation of about 5.33 lakh crore. About 35,000 crore at 6% stake, that would give a valuation of about 5.83 lakh crore to the National Stock Exchange. Now, in terms of multiples, as far as 9 months FY26 EPS is concerned, at 29.5 rupees, the FY27 estimated EPS could be 39 times for the National Stock Exchange. Compare this to BSE, which trades at 50.5 times, and MCX, which trades at about 41.1 times. Importantly, if not LIC, then which are the selling shareholders that are expected to be seen in the DRHP today evening? State Bank of India, New India Assurance, Bank of Baroda, United India Insurance, Stock Holding Corporation, National Insurance, Indian Bank, and Oriental Bank, as well as GICRE on the PSU side, are expected to be the selling shareholders. On the private side, who's expected to be the selling shareholder? Well, Morgan Stanley, Chris Capital, ICICI Lombard, TA Associates, Soch Global, Crown Capital, Temasek, and Omar's CPPIB are expected to be the selling shareholders as far as the private side of investors are concerned.
Okay, all right, Yash, thanks very much for that. So we're going to keenly await the DRHP filing for NSE this evening. And as Yash said, the valuations currently stand around 39 times on a one-year forward basis. Pritesh Mehta now joins in to discuss the technicals of the market. Pritesh, hi, welcome to the show. Well, for the Nifty, we've recouped back above 24,000. What would be the next level that you'd watch out for in terms of a target? As well as where do you think the resistance will probably be formed now?
Yes, good morning. Now, see, last time when I came on this network, I was of the opinion that it would make more sense to look at the FIFA World Cup rather than betting on direction of the index. And I still back my statement. Since the Nifty has gone up by 500 odd points. But the point is that when we look at index, we will miss out on the bigger opportunities, that is on the broader markets, that is on the Nifty next 50. Because this basket, this index are making bigger moves. And in fact, we are not witnessing large caps participate in the market. Recently, we saw HDFC Bank coming off a base, but that action, the momentum is still lacking in the Nifty. So I still believe that we won't see much upside, at least for next few weeks, as far as Nifty is concerned. But it's a stock picker market, and I think there are plenty of opportunity lying outside index.
So, Pritesh, what are those stocks then in the stock pickers market? If you train your eyes away from FIFA, what's looking good on the Lal Street?
So, as I mentioned, we need to bet on stocks other than index levels. So, when we talk about stocks, Indian Hotel is one stock that we like. Now, again, this stock has a beautiful rally in the month of April. Thereafter, went to a bit of sideways consolidation. Now we have seen a bullish Tata breakout coming in. So buy for a target of 770. The second stock that we like from the list is Trent. Again, went through a horrible correction last couple of months now. Created a base. We have seen a bullish anchor call up. Now follow through moves coming in. So buy for a target of 3500.
All right, Pratesh, thanks very much for joining in with that. Appreciate your time. And on that note, we'll slip into a short break. But when we return, we'll get you more on the markets and market fundamentals with Rakesh Vyas from Quest Investment Advisors. Welcome back. We have the markets near the high point of the day. 24,100 odd is where the Nifty is trading at, helped along by Bank Nifty, which is seeing gains of almost 320 points. Let's bring in Rakesh Vyas from Quest Investment Advisors, who joins us now to discuss market fundamentals and his top sectoral picks. Rakesh, thank you so much for your time here, and welcome to CNBC TV 18. Just looking at your note, consumer discretionary is your top holding. You have allocated almost 33% to that sector. Given the biggest concern in the market moving away from the high oil prices to, these weak monsoons and the delayed rainfall, near term, do you see some hiccups? How would you play this theme?
Yeah, hi, good morning, and thanks for having me on the show. Yes, I think from the consumer side, we have been fairly more positive on the discretionary as a space. And therein, just to highlight, our exposure largely is to spaces which are more focused on the urban consumption, not so much of rural, and therefore our exposure to staples as a segment is actually very, very low, almost not there. So I think in that space, largely, given that we are seeing very strong retail credit growth and the benefits of tax reductions that have come through both in direct and indirect, is also helping consumers in terms of higher disposable income, and that's a play that we continue to have. On account of the monsoon concerns, I just want to highlight, of course, it remains a big macro worry in a sense, but incrementally over the last few years, the proportion of the irrigated land is actually increased meaningfully. And when I look at the reservoir stock that exists today in India, it's fairly comfortable for this season, and therefore I'm not too much concerned around the overall monsoon having a major impact on the agri side. It will have some impact, but not a catastrophic one, and therefore I remain fairly more positively biased towards this. Also, the fact that given the energy prices are now likely to come down, it provides some leeway with the government also to focus now back on the agri and the consumption side to boost some of the activity out there, and also give some leeway for government to think about increased spending on infrastructure, which will mitigate some of the risk on the agri side.
Okay. Rakesh, hi. Thanks very much for joining in. Just wanted your perspective in terms of where you see the small caps go this year. You have around a 39% allocation in the small cap space. What is the alpha that you're expecting from that space for the rest of the year?
Yeah, so if you look at small cap as a space, I think in last almost 2 years of consolidation of the market, that space has seen meaningful decline in at least 6 to 7 out of 10 stocks in that time frame, wherein some of it is on account of earning disappointment, but some of it is also related to significant derating. Our bets today, honestly speaking, are pegged around the names where we see very strong earning trajectory going forward, and therefore these are the names where we expect at least 2x the rate of the overall BSE 500 or Nifty earnings that we see in next 12 to 18 months. So without accounting for any major re-rating in those space, I think we should expect at least 6 to 7% alpha over the benchmark number in that particular space is what our view is.
Rakesh, let's also talk about the new age internet companies. Eternal is one of your top holdings. You have more than a 5% weightage there. We had a note from UBS come out which said, it's been a difficult year, but the second half is starting to look better. Competition is sort of stabilizing, showing some signs of moderation there in the quick commerce space as well. What are your views there?
So we've been fairly positive on that space for more than 2 years now, to be honest. I think in that space, the two listed plays essentially are placed both on the food delivery ecosystem as well as on the quick commerce space. Of course, at quick commerce, we are seeing increased competitive intensity, at least in last 12 months or so, which is much higher. But if you look at Eternal largely, I mean, they have very strong balance sheet. They continue to grow their quick commerce business very rapidly through expansion, as well as same store sales, if I may classify it like that. And then they also have the best unit economics on quick commerce, right? So effectively on the EBITDA level, they are break even. Whereas if I look at the competition in general, you have a tiered level of profitability. Some of them are approaching, let's say, the contribution break even and still far away from EBITDA break even. And many of them are actually now significantly below the contribution margin level. So significant negative number out there. So in that space, I think Eternal continues to be the one where execution remains fairly strong. The overall TAM opportunity is fairly large. Their unit economics remains fairly robust. And as the competitive intensity starts to taper off meaningfully over next couple of years, this is a name where we feel that the profitability in quick commerce will start to reflect very meaningfully in that time frame, therefore driving the overall earning growth for the company as well. And that's why it remains our top pick. Again, as I was indicating, I mean, this is also a largely a urban play in our view, and therefore the overall impact of the monsoon, if any, will be meaningfully lower in this line.
Okay, fair enough. That is on the internet, new age internet companies. But what about IT, where you have an allocation of around 12.5%, 13 odd %? Are you looking to maybe reduce your allocation there?
On the contrary, actually, we just increased our allocation actually in last 3 odd months. Historically, we have been fairly positive on especially the product companies. For example, Oracle Financial Services, even the mid-size IT companies, we have been positive on the likes of Persistent earlier. But given the fall that we saw in last 6 month odd period, we found a lot of opportunities to add these mid-sized companies where the growth prospects remains very high. So it's not a recommendation, but just I'm trying to highlight what we have in our portfolio. We added Coforge, for example, in this time frame, where we thought that the company has very strong traction going forward for next 3 to 5 years. And I think last night or yesterday, actually, the management did highlight a ambitious plan of 20% kind of growth trajectory from here on for next 5 years. Their focus on improving margins, improving cash flows is something that we continue to like. And given the sharp correction that we saw in that name, we found it adequate for us to increase our exposure in that name. And that's how you are seeing our IT exposure actually increasing in last 6 months. We still remain fairly confident on our exposure there as well.
Yes, Coforge, talking about doubling revenue by 2030, names like, in the mid-tier space, NIIT Tech, etc., also doing exceptionally well. But out of time here, Rakesh, thank you very much for joining in with those views. It's time for us to take a short break. When we return, we'll get you more on the market, so stay tuned.
Welcome back. It's now time for a special segment, a CNBC TV 18 Unpacked. This week, Mangalam has taken a deep dive into the math behind Delivery, India's largest fully integrated logistics provider. Take a look.
This is CNBC TV 18 Unpacked, where we tell you the business and the story behind the numbers and the stock price ticker. Now, as you can see, to most people, traffic, logistics, delivery, all these things are a nightmare. But for Delivery, it's a math problem. Over a decade, the company has built a massive presence. 19,000 PIN codes across the country is where they have expanded to. And in FY26, something shifted in their numbers as well. Not only did they cross 10,000 crores in revenue, they also turned free cash flow positive for the first time. But the question still remained. What is it that the company does? You've seen their trucks, you've interacted with their delivery personnel, but how is it that the company makes these trains, or rather trucks, run on time? Let's unpack. It is India's largest fully integrated logistics service provider. In fact, it transports e-commerce packages and provides logistics solutions for businesses in the country. And to do so, it has an asset-light network with over 99% of its fleet and warehousing remained leased to remain flexible and scalable. And understandably, because the logistics industry in India is 90% unorganized, with even the largest players commanding just single-digit market shares in the overall market. So what is it that Delivery does? Like I told you, 10,500 crores worth revenue in FY26, nearly two-thirds of them, 64%, came in from the express parcel or e-commerce business, where they delivered over 1 billion shipments last year by some of the largest e-commerce players which outsource their shipments to Delivery. And it's not just delivery, they also do reverse logistics. Don't like a product, want to return it, Delivery will pick it up for the e-commerce player. Or else, if you have a cash on delivery order, they do payment collections too. All these are value-added services. To consolidate their market share, strengthen their moat, they acquired a competitor, Ecom Express, in April 2025 as well for this part of the business. The other part is part truckload, which has about 21.5% of their revenue. What is part truckload? You want to ship a lot of product, but not enough to fill a truck? They'll do it for you, because many such orders come in from many such clients. They bring it together to a central location, fill those trucks, and depending on what needs to go where, conduct their business. And then you have 15% of their revenue coming in from others, which include the likes of full truckload, international shipping services, supply chain services, end-to-end warehousing, and transport integration for enterprise clients as well. For all of this that the company does, what is their market share? Well, for e-commerce logistics, it's about 24 to 25% of the overall market. But importantly, remember, a large part of e-commerce logistics is done by companies themselves. The likes of Flipkart have e-cart, or increasingly Meesho, which has moved their logistics inwards. So what does that mean? Ex-captive logistics, if you look at it, nearly 1 in 2 parcels, or 45 to 50% of the market share, belongs to Delivery. So chances are, if I order something online, 1 in 2 times, Delivery will send that product to my house. And for other parts of their business, for part truckload, they have a market share target of 8 to 10% of the overall market. And for full truckload, it is about 3% of the market. The question is, how does the company scale, benefit their clients, and reduce their delivery cost? Well, if you look at it, last year, they did about 1 billion shipments, 1,054 million. And this was a jump from 752 million in FY25. But the realizations came down. That's not necessarily a bad thing, because this means that the company has gotten a lot more efficient and passed on those efficiencies to the clients, which makes your and my deliveries from e-commerce cheaper, increases volumes, and the acquisition of Ecom Express helped as well. But here's the meaty part that you don't see. It's also a vertically integrated company. They use robots, which they don't buy. They own the company that builds them. That's Falcon Autotech. Additionally, they've moved into physical AI as well. Their Naksha LLM suite uses 7 proprietary AI models to turn a messy handwritten Indian address into a precise rooftop coordinate. And even in their warehouses, autonomous mobile robots move pallets without a single human hand touching them. And all of that has meant that their payment cycle has been crunched from 28 days all the way down to just 11 days. What does this mean in terms of their overall business? As it scales, CapEx as a percentage of revenue has come down from 7.4% to 4.7%, and that's reflected in their better margins, improved cash flow from operations picture as well. If you look at the EBITDA, FY22, they were loss-making to the tune of 500 crores. Cash flow, operating cash flow was negative as well. Last year, the EBITDA actually jumped to 640 crores, with operating cash flow going to about 911 crores. And that's not all. On a free cash flow basis, they turned positive to the tune of 90 crores. What is it that takes the company forward from here on? The bull case, they built the operating system for commerce. They have a large clientele, built efficiencies around that as well. And even in their transport business, they have a 16% return on invested capital, and they're branching into more value-added services and margin-accretive businesses. A large part of their business also has been exited. The subscale contracts in part truckload and SCS businesses have been exited, and 90% of their current contracts have automated fuel surcharge mechanisms which shield margins from any volatility in fuel prices. If you look at the risks, they're still tethered to the volatility of Indian e-commerce business, which shifts from e-commerce to quick commerce, where delivery is actually not the leader. Shadowfax is the leader. The risk of large customers going captive always looms. We saw that in the case of Flipkart, Meesho, and now increasingly Amazon too has decided to increase their share of revenue coming in from their own supply chain network, and their international expansion could be delayed due to the Middle East crisis. But more importantly, the big problem for Delhivery is nearly 80% of their stock is held by institutions. And as you can see, institutions are prone to selling their stock periodically. SoftBank's stake in the company in March 2023 was about 15%. That's come down to 8% as they've periodically sold their stake. So that could be a bit of a liquidity overhang for the stock going forward. But now you know the business. Next time someone asks you, what is it that Delhivery does? You can easily unpack it for them by saying that you watched CNBC TV 18 Unpacked.
Okay, all right, Mangalam. Thanks very much for bringing us that detailed analysis on our segment Unpacked on Delhivery. We'll take a short break now, but we'll put the focus on India's macros in our macro signal segment on the other side. Stay tuned.
Welcome back. Before we close, let's get you all the macro signals for the day. For the markets, they've come off the highs, but still holding on above that 24,000 mark. 24,070 is where the Nifty is at. The Brent crude trading near 3-month lows after the sharp sell-off we saw earlier this week when prices dropped more than 5% in a single session. Brent crude falling below the $80 per barrel mark for the very first time since early March. The primary catalyst, as we've been telling you, is this optimism surrounding the anticipated peace agreement between US and Iran, expected to be signed later this week. Traders are betting that the deal is going to immediately ease sanctions on Iranian oil. Now you have the Brent at about $79.12 a barrel, and that's having a ripple effect across asset classes. The rupee, for instance, is trading firmer against the US dollar today. It's benefiting from that sharp fall in oil prices, and that's because we import most of our crude requirements. So lower oil helps reduce our import bill, and that improves the current account balance and eases pressure on the currency. But gains are capped because investors are awaiting the US Federal Reserve's policy decision later today, the first under the new Fed Chair Kevin Warsh, and any hawkish signal on rates or inflation can support the dollar and limit emerging market currency gains. The rupee currently trading at 94.43 against the dollar. Meanwhile, our 10-year benchmark GSEC yields are hovering around that 6.86, 6.88% mark. They've softened, though, considerably in the past few weeks, down from, the 7.1% kind of levels that we saw in mid-May. The decline, of course, is because of expectations that, these lower oil prices will feed into softer inflation going forward. But for the bond markets, cheaper crude is generally good news as well, because it reduces our imported inflation risk. So that's it, for the macro markets today. The oil is down, rupee stronger, bond yields lower, all of it driven by expectations of easing geopolitical risks. And on that note, Ekta and I will take your leave on this edition of Trading Hour. Thanks very much for tuning in, but the team of Halftime Report will take all the action forward.
Stocks push higher but cautiously ahead of the first US Fed meet under its new chair, Kevin Warsh. Consumer durables and IT are the prominent gainers, while realty and healthcare stocks drag.
NSE is likely to file the draft offer document for its over 30,000 crore IPO with a SEBI today, and several of its existing shareholders other than LIC are expected to participate in the share sale for its listing. NSE's IPO will be the largest in India till date.
Stocks of Mumbai-based real estate developers slip after the city cuts water supply for construction on a delayed monsoon. Experts back recycling and mandatory rainwater harvesting with Singapore and Nagpur as models to emulate.
Brent crude slides up below $80 per barrel on reports saying that Iran is free to sell oil under the US deal. Qatar's indicating early resumption of gas supplies also boosts Indian city gas distributor players who eye a shift back to contracted supplies from spot purchases. Hello, good afternoon. You're tuned into CNBC TV 18. You're watching Halftime Report coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vidhi Motiwala. With me is my colleague Hormaz Patakia as well. Hormaz, good afternoon. And it's been a day where we were talking about 24,000, above that mark. As of now, at least we are above that level. And who put their hand up is what you've been saying in the last few trading sessions. Seems like, again, IT is there. Banks may not be that excited and cheering on the street right now, but IT is the one putting their hand up. We have media, autos, FMCG today also doing well. So as of now, 24,000, a lot of individual broader end of the market names are doing well, holding on to gains, whether you talk about car trade, Apollo Tyre, Brigade Enterprises, all of that are managing to hold on to gains. And when you talk about specifically other individual names in IT, we have Coforge that's buzzing, TechM, Infosys, so that's leading the way as well. Obviously, we have the Fed meeting that we'll be keeping an eye out on. A lot of exciting events that will be happening on Friday. Also, we have the signing of the US-Iran MOU on that war side. More certainty there is something we're keeping an eye out on. And Brent crude that trades below $80, so that's positive as well. But Hormaz has moved on to the big wall to take us through the stocks that are moving around and those individual names. Hormaz, over to you.
Now, the bulls will be happy for the fact that we are above 24,000. The question now remains is whether we sustain that by the time we close out today's trading session. We've been closing higher for 3 straight days. The fact that we have made a higher high already is something that the bulls will be happy with, but the sustaining of this is the key. Now, of course, there are plenty of stocks that are moving around in today's session. Look at Yes Bank. At one point was up around 6% as well. The stock is at 52-week highs. It is the 4th straight day of gains as well for the stock, so that's doing well. AC makers are having a very good day today. It was PG Electroplast yesterday, but Blue Star and Havells have joined that party today. So Blue Star is up 4.5, Voltas is up 4, and PG Electroplast, after that 7% move yesterday, is up another 3.5% in today's trading session. The top gainer on the Nifty 500 today is IDBI Bank, and the stock has seen a very, very sharp surge, 17.5% higher on very strong volumes, and is the biggest single day gain that the stock has seen since October of 2021. Now, the underperforming stocks have been ones that have outperformed in this 4-day recovery that we have seen in the market, and Trent is of course one such name, now above the mark of 3,000, 5.5% higher on the stock, among the top gainers on the Nifty, but the stock has not closed above that 3,000 mark since the 7th of November of last year. So it will be a big positive if it does manage to close above that 3,000 level. A few positive brokerage notes that have come in on Dixon Technologies, one of them after a CLSA downgrade yesterday. JP Morgan maintained its overweight stance. The 12,700 was the target. It is well above that. Eternal had a positive note from UBS, and Schneider Electric too had a positive initiation coming in from Ambit earlier in the day, 4% higher on that stock. And lastly, a couple of corporate actions that took place earlier in the day. Brigade Enterprises is now trading X bonus, the 1:3 bonus that it announced earlier, so 6% higher after the adjustment. And Cyient, the record date today for the buyback, so adjustments taking place there as well, 4.5% lower on that stock, Winnie.
Okay, Hormaz, thank you so much for taking us through those individual names that are moving around in the trading session, and specifically to keep an eye out on some of the names that are at a 52-week high that Hormaz also highlighted. Also was Yes Bank, AEI. We have Polycab that's also managing to hold on to very strong gains. But on that note, we're going to slip into a very short break. But after the break, we're going to be connecting with Vinod Karki, Head Strategy, ICICI Securities, to decode India Inc.'s capex trend. What are we keeping an eye out on in FY27 and what should your strategy be? All of that after the break.
Welcome back. Well, 70 points higher on the index. There's some supply emerging at that 24,100 mark, but of course, no complaints whatsoever. Some flashes at the bottom of your screens. The Fortis Healthcare flash saying that the income tax department has reduced its tax demand to 61.5 crore from 117 crore. So it's been halved for annual year of 2025. The stock's still down around about 2%. What's also seeing some bit of profit booking today is BSE. The stock is down around 3.5%, among the top losers on the Nifty 500. If you exclude Cyient, it is the top loser. The lowest point of the day is BSE, still holding on to levels of around 4,000. But of course, we need to be mindful of the fact that the stock has seen a very significant run up as well. From lows of around 2,500 odd, the stock has now moved to 4,500 was the record high that it made. And then it's seeing a bit of a cool off from those levels. So some profit booking setting in for BSE. Some other stocks that are not doing well today. Sonata Software, of course, after that 18% up move yesterday, in fact a 20% circuit the stock was in, down around 2.5%. Fund House was a buyer in a block deal that took place yesterday. But yes, as Vinny highlighted, Cartrade Tech 12% higher on that stock as well. And Apollo Tyres has moved towards the list of the top gainers, 6% on that stock as well. So good going for Apollo Tyres in today's trading session. But here's some top market opinion on where we are headed market-wise. We caught up with Ramdev Agrawal of Motilal Oswal Group. Ramdev Agrawal, who has always believed that credit growth is a big determinant for earnings growth for corporate India, and he tells us that he likes what he's seeing.
Domestic economy is doing, it's on full fire.
We were just talking about credit growth
the
numbers.
Headlines are completely focused on to negative things, and the real economy is doing very well. If you look at the credit growth of 17%, if you look at the automobile numbers, whatever high frequency data which is coming, they're looking very good. So I keep meeting a lot of people. Everybody says that demand is very good. Maybe the margins are a little concerned because of raw material changes. So I think a lot has happened in last 3-4 months, and yet market has been very resilient. So I would not be that much worried, but I mean, whatever incremental happens, we have to keep watching the show. So what do? I mean, FIs can sell what they have. So all the big banks they have IT companies, so that they're relentlessly selling. So, and that's why large cap or it is becoming very difficult to get any performance there. And mid and small and micro, they don't have their stocks. So in fact, they are also buyers in them because the performance out there is very good. So I think there is a party in the mid and small, and even earnings growth is supporting that side. So I think broadly it's a two-speed market. But eventually, I think once the dust settles, the large caps are looking very good for whatever their legacy, the size, stability, liquidity. I would think as the economy is doing well, large caps will become new mid caps.
Large caps will pick up the new mid caps, performance-wise.
This is performance-wise, yeah.
Beginning of the year, before this Iran thing all broke out, you told me that auto perhaps is the sector of the year. What's your assessment?
Yeah, that continues. See, if you are 50% of manufacturing is auto, and in the household, after your roti kapda and makan, it is about the gaddi. So the demand for the transport is, very low penetrated in India. For the first time, you might have seen the statement of Maruti. They're saying that there's a massive demand for the entry-level cars because of GST cut. So the combination of GST cut from 28 to 18 and what I would say liberal credit flow by the monetary authorities, because inflation was very low. So at a 3.5%, 4% tolerance of inflation, which allows the monetary authorities to keep the floodgates open for the credit, and there is a kind of enough borrowers. So the lower GST, so that brings affordability, and of course there is a credit to buy. So combination of these two, and the best place that is happening is in automotive, because for the house, yes, I will borrow and build house, but that is a long cycle. In automotive, you can go and just buy it from the showroom.
That's the word coming in from Ramdev Agarwal. Autos is something he's positive on, and large caps, he expects them to start doing well and perform as good as mid caps are doing. So that's the trend there. But let's focus on India Inc.'s capex trends for FY27. We have ICICI Security, who believes that new 8 sectors are expected to see a good capex cycle. Maybe what the story that we were missing out on, is it time we pick up pace? That's what we'll discuss all of that with Vinod Karki, Head Strategy, ICICI Securities. Vinod, good afternoon. Thank you so much for joining us on the show. Let's just start by talking about the overall capex cycle. West Asia seems like, that started easing off as well. But in terms of a story now, do you think people are going to be more aware, or corporates are going to be more aware on the non-oil capex versus oil capex, maybe power capex? That's what will maybe lead the story in the capex cycle for India now.
Yeah, absolutely. I mean, if you look at the latest GDP number itself, the gross fixed capital formation was what was leading the growth. And when we looked at the FY26 listed space corporate capex, that has reached almost closer to 13 trillion. Now that is almost on a like-to-like basis, 14% growth, which effectively means that it is growing faster than nominal GDP. And I mean, apart from, as you said, oil versus non-oil, what is heartening to see is that the broader market, or these mid caps and small caps across sectors, which are not just capital intensive, for example, the utilities, industrials, metal, these are expected to have higher capex because they are capital intensive sectors. But even discretionary consumption and healthcare, some of the auto ancillaries, which are not considered very high capex intensive sectors, are also kind of participating in this revival.
Vinod, good afternoon. Thank you for joining in. One of the points in your note mentions that the AI-linked capex is largely absent from the listed space. But the other major emerging trend, as Vinny highlighted, power, but the other one is data centers, right? Every other company that we speak to is intending to go into, or has already ventured into, some form of data center capex or the other, whether it be building a data center or building it for supplying of equipment for the data centers and so on. Is that now going to be the next major focus area, especially considering the fact that we may be lagging in the AI race, but the fact that we do not wish to lag behind in the AI or the data center equipment supply race? That's the one that we want to lead.
Yeah, so if you look at the US GDP data, I mean, the investment is being led by the AI infrastructure capex big time. Now, India is missing out on the AI infrastructure capex build out, and that's why one of the reasons why the foreign investors were not very excited about the India growth story is that it is missing the AI infrastructure. But that doesn't mean that the new age sectors, so there are several of them, which includes the AI application. So AI infrastructure may not be there, but the AI application in terms of yesterday we heard an IT company take some investment in a large language model company. Then we had investments across the board by even some of the listed IT services company into data centers, as you rightly mentioned. Then there is the electric vehicle, the green energy, the GCCs. So these are all new age, sectors. But obviously the heavy AI infrastructure is missing. And that's actually resulting in some of the excitement around India capex not being there, because these are largely the older economy and some of the new age economy, but not the AI, which is getting into some kind of a massive bull run. So anything related to AI investment is getting huge valuations. That's not there here.
That's not there here, but do you think that is something that now could pick up, Vinod? And, we're talking about targets for FY30, data center targets for FY30 from the government side as well. So all of this, does this lead to some improvement in terms of the AI infra side and data center side of capex? And do you think it could go maybe beyond FY30?
Yes. So I think from the AI application perspective, so all these foundational models and all have been built in the Silicon Valley. And when it comes to applications of these AI models and running these data centers, I think India will be a big beneficiary. We are already seeing that. So I think we have seen some of these investments by some of these companies lately. Cutting across telecom companies, even the capital goods companies talking about data centers and all that. So I think there's the clear sign that it's going to pick up from here on, these new age sectors.
Vinod, the other bit is the fact that the government capex has been, well, fairly subdued, if you can say that. But considering the West Asia disruptions, as you're expecting it to be soft, but now with the tensions easing and the oil prices cooling off, does the government capex also return back on track? Because over the last few years, that is the one that has been doing the heavy lifting. Private capex has been more or less absent. Or negligible, to say the least. So now with the tensions easing, does government capex return? And if at all private capex also steps up, would that also act as a tailwind?
Yes, so I think what I meant by the government capex being soft was that it has been growing very fast, as you rightly said, over the last several years doing the heavy lifting. So the growth will be softer in the sense that even after this West Asia crisis showing signs of abating, you will still have to tackle with higher fertilizer subsidy, higher food subsidy, because we are going into a year where they're talking about a super El Nino actually. So that brings up the risks to in the sense that government will have to put more resources towards the agriculture sector. So from that perspective, I think what we have been seeing a significant ramp up in government capex spending over the last 4-5 years. I think that pace of growth would be softer. That's what I meant. Nevertheless, the focus on investing in the country for self-reliance across sectors which are critical in the sense energy, power, defense, all that will continue in my view.
Okay. Vinod, thank you so much for joining us this afternoon, talking to us about India's capex cycle, new age sectors. Maybe that's what we should keep an eye on, and hoping that AI, where we were missing in terms of infra, that's where we start seeing that capex cycle coming in. That's the word there, coming in from Vinod Karki. Thanks so much for joining in. But on that note, we're going to slip into a very short break, and after the break, we'll have Jay Thakkar joining us from ICICI Securities to talk to us about the trading strategies. So stay tuned in. Welcome back to Halftime Report on CNBC TV 18. Today, the high was about the 24,100 mark, right, for the Nifty. We touched that, we came back down. As of now, we're still holding on to 24,000, though come off significantly from the day's highest point, but still holding on to 24,000. But what's happening in the world of F&O? Let's go across to Mangalam, who's at the F&O desk to take us through all of that. Mangalam, afternoon, and as of now, we're holding on to 24,000, hoping for a close above that.
Well, we'll continue to hold on to 24,000. That's what the bulls are hoping for as well. The good part is that, the transition between the IT pack as well as the Nifty Bank has been fairly smooth in today's trading session so far. So if you look at the Nifty holding above that 24,000 mark, but, through the course of the day, the Nifty IT index started with a bang and thereafter saw a bit of cool off. Nifty Bank started flattish after pausing for breath yesterday and now has gone up in a flourish, up around 0.4% for that index as well. And amidst all of this, the market breadth is firmly in favor of advances. So all these things are making one's portfolios feel a lot better and making bulls feel a lot better in general. Now, if you look at, what is taking place in both the Nifty Bank as well as the Nifty IT index, the Nifty Bank, after, pausing for breath, found some support at the 57,000 mark, which is the 200-day moving average. And very close to that is where today's low was on the Nifty Bank. And from there, we've seen a recovery. On the other hand, for the Nifty IT, which did well in yesterday's trading session, ran into some resistance at the 20-day moving average. So 20-day moving average is 28,937. Today's high is 29,000. So it failed to, hold on to the 20-day moving average. All of this means that the Nifty has struggled to stay past the, the 24,100 mark and now will aim for that 24,250 mark, which is the 100-day moving average. How does the Nifty go there? I'll tell you in just a bit. But the fact that we are holding above that 24,000 mark makes bulls a lot happier about writing the 24,000 put and the 23,900 put. Both of them are fairly active. 24,000 put has a premium of 140 rupees, 150 rupees, telling you that around 23,850 there is strong support. In fact, 23,800 to 23,850 is the most important support zone for the frontline index. However, we saw some 24,100 call writers fairly active even before the Nifty touched that 24,100 mark. Told you that most of the bears were hoping for some resistance or supply to come past that 24,100 mark, and their premium of 150 rupees tells you that it ties in perfectly with more resistance at the 100-day moving average of 24,257. What can topple this apple cart or cause a bit of a dent in this equation of the option writers? On either side, Reliance, that stock is flat ahead of its annual general meeting on Friday. Yesterday did well. Today opened with a cut, but then saw some purchase. But those purchases didn't stay at higher levels. So it's important for Reliance to make a big move on either side for the overall market to move. Now that the transition between Nifty and Nifty IT, Nifty Bank and Nifty IT is supporting the cause of the frontline index. Amidst all of this, a lot of stocks are on our radar. The top Nifty gainer, which is surging right now, is Trent. For the last two trading sessions, has been doing well. Shorts are caught on the wrong side out there. So you've seen a massive open interest unwinding out there. So short covering has led Trent higher. But as we're looking at, the skies, the eyes on the skies, a lot of people are also going ahead and buying ACs and cooling products because it's been an extended summer. So to that extent, a lot of long positions added on Blue Star. Blue Star and Voltas, along with the others, have been doing well for the last few trading sessions.
Indeed. And Mangalam, thank you for setting that up for us on the F&O desk. Jay Thakkar from ICICI Securities is joining in for a quick chart check and some trading ideas as well. Jay, good afternoon. Thank you for joining in. Well, as Mangalam highlighted, right, at the 100-day moving average, yes, at 24,250. Is that the first line of resistance now for the index? So, and a break of that, does it take it past the recent swing highs that we have seen of 24,600? Your call on the index and your trading ideas for the afternoon as well.
Very good afternoon to you, and Vinny. I would say that yes, in today's trading session, if you see then 24,000 levels for Nifty is definitely very important because we have seen good additions on the put side for this weekly expiry, and on the upside 24,100 we have seen some supply coming in because if you see then the recent previous high was around the levels of 24,089, so close about 24,100 definitely would pave the way for 24,500. I have any which ways target of 24,500 to 600 for the June series. I think eventually that is where Nifty is likely to inch towards, and probably in July we will be seeing the levels of 25,000 levels as well. The kind of the correction or a dip which we have seen or that has been indicated by the India mix, which has actually fallen quite a lot below the levels of 16 as well now. Although it has bounced back from 12.5 to 13 levels now on an intraday perspective. But then overall signs or indication from India VIX, from international crude oil prices, the way the FII index short positions have been reducing from the extreme levels of 2.8 lakh contracts now again back to 2.3 lakh contracts. All of this is signaling that positionally index seems to have bottomed out again, forming a higher bottom of around say 23,000, 23,100 range, and now slowly and gradually it's inching towards the previous swing highs of 24,600. On an immediate basis, from a 1 or 2 day perspective, yes, 24,000 levels will be important over us. But I think from the positional perspective now, 23,500 levels. Till those levels are not broken, till we don't see Nifty closing below those levels, the overall outlook should be bullish. Hence, any dip should be utilized as a buying opportunity. And in fact, the Bank Nifty, which had seen some profit booking since past couple of trading sessions, I think that that is likely to revive again and inch towards the levels of 58,500 to 59,000. I don't see Bank Nifty now falling below the levels of 56,000 levels on an immediate basis. So I have 3 buy recommendations. One is from the banking back, and that is from the PSU bank, and that's Bank of Baroda, trading around the levels of 280. I think it's inching towards 295 in coming few trading sessions. One can buy this, placing a stop loss below 273.
Okay.
The second buy recommendation will be from the defense pack, and we have seen that defense stocks have been seeing some good short covering. There was massive short that I had got build up in most of the defense names. They are quite oversold now, and most of those stocks are now clearly showing that price action of short covering as well. There's much more room from these levels as well. So Cochin Shipyard is my pick out here, trading in the levels of 1470-75 range, placing a stop loss below 1430. One can go long on Cochin Shipyard, targeting around 1600 levels. And I think Siemens stocks, particularly the Bharat.
Okay. I think we snapped the line, but Jay was making a point on the defense names, Cochin Shipyard, Dalmia Bharat in the cement space, Bank of Baroda and the banking side. He spoke about an important level to keep an eye on for the Nifty in the near term is going to be 24,000 in the next couple of days. So let's watch out for that. But Jay, thank you so much for joining us. On that note, we are actually going to slip into a very short break. After the break, we'll have Manisha Gupta, who will be in conversation with former Agriculture Secretary Siraj Hussain as Kharif sowing of 2026 gets off on a slow start. El Nino coming in. What does this mean? Stay tuned in.
Welcome back, and joining us now on the show is Siraj Hussaini. He's former Agricultural Secretary and joins in with his sense on monsoon, or the lack of it rather. Mr. Hussain, that's exactly what we are talking about. No monsoon, it's an El Nino year, and the street doesn't seem very concerned right now, but they do say that they're going to be very concerned if it doesn't rain in July, and then of course in September again, because that is the flowering or the time that you see yields getting better. How are you looking at from where we stand?
I think we do not know enough about what will happen in July and August. So I think let us talk more about what is happening right now. As I see the progress of monsoon, Kerala, normal rainfall by this time is 320 millimeters. We are just 10% short. So which means that Kerala farmers would generally be okay with the normal cropping pattern. However, Konkan and Goa, which receives about 270 millimeters of rain so far, by now it should receive, it is 80% deficient. And there is a lot of deficiency in South Interior, Karnataka, etc. So my suggestion to the government, of course, the government knows it very well. Ministry of Agriculture has a lot of expertise of dealing with droughts, that farmers should be guided so that they do not have to sow the crop twice. What has happened in the past is that they have sown a crop or transplanted paddy, and then that does not grow, and then they have to go for another repeat of that. And the central government does not provide funds for that, and many a times it is the state government which have to bear that burden. So go for pulses crops, go for ragi, intercropping, moong, arhar, lobia, kulthi, etc., and conserve whatever rain comes your way.
I get your point, Mr. Hussain, when you say we need to look at what we have in hand right now, and June definitely is delayed. We are 29% below normal. And with the kind of conversations that we have been having with IMD and SkyMet, we understand that it is going to be a low progress going ahead. Even Maharashtra hasn't been covered yet. And as you mentioned about Goa and Konkan, not much rain at all there as well. And if any rain is going to pick up, that's going to happen after 20th or 25th June. That also if there is a depression in Bay of Bengal. So there's a lot of ifs and buts happening there. If we are closing June below normal, which we perhaps are, and July is expected to be below normal, it also is going to get, the El Nino is expected to get from weak in June to moderate in July. Do you think this is the time that contingency plans are put in place?
Yes, actually, CREDA, that is an ICAR institute in Hyderabad, has prepared district-wise contingency plan. Ministry of Agriculture would already be discussing these plans with the state government. But that is the easier part, organizing meetings, discussing. The more difficult and more necessary part is to get seeds which are drought resilient, which can withstand drought, which require less water, new varieties which have been released. Hundreds of new varieties were released by the Prime Minister 2 years back. So whether those seeds are available with seed companies, both in the government and in the private sector, and whether those seeds are being made available to farmers in these regions. So this is important. And it is not only agriculture, but annual husbandry also needs to be taken care of, because the animals require water. We have seen in the past that animals have died of water scarcity and then drinking water.
Oh, absolutely. I can tell you that Mumbaikars themselves are facing a lot of issues right now. 10% of a water cut in residential, 20% water cut in commercial, industrial, no pools, no construction, no water to be given to them. So that's where we stand right now. Water reservoirs is yet another issue here. And it's not just about Kharif, because if we are looking at a severe El Nino in the month of September, would you say that the Rabi farmers also need to be perhaps looking at this?
Actually, Rabi is too far, as I said, and I do not think we should be looking at a very high deficiency. IMD and SkyMet have both projected a deficiency of about 10%. So if it is well distributed, if we do not see a very high deficiency in July and August, our Rabi crop should not suffer much. But in any case, we should prepare. Fortunately, we have good, very high stock of wheat and rice, and the government had earlier allocated 5.2 million tons, as far as I know, of rice for ethanol. I think that policy needs an immediate reconsideration. We should conserve rice for our public distribution program and maybe under GRAMG, etc.
Looking at all of the Kharif crops, then you already spoke about pulses, which you think are better to be sown right now. But we also have cane and Rice is one, cotton is another one, a lot of edible oils in the fray as well, groundnut, soybean, etc. Where do you see concerns rising? Because till time, Maharashtra, almost no rains. Gujarat, again, is big deficiency. Monsoon hasn't even progressed to those areas. MP, Chhattisgarh, all of those areas also looking at huge deficiencies right now.
Actually, by now, that is 16th of June, the progress of monsoon towards north is not very high. So even though in percentage terms, the deficit may be high, but the quantum of rainfall which we get by this time is not very high. So I'm not too much worried about that. Maharashtra and Karnataka, the good news is that in most of the sugar cane growing areas, there is rain harvest, there is micro irrigation. So those regions, I suppose, would be better protected. Cotton will be badly affected, no doubt about that. So that is what we were discussing, that the cotton farmers have to be advised to go for short duration pulses crops, etc., which these crops require less water. They also fix nitrogen, so they reduce the requirement of urea.
All right, Mr. Hussain, that point is well taken. So clearly can't see too far from here, from where we stand. But from where we stand right now in the month of June, well, yes, some contingency plans are being discussed and hope that something is being done on ground as well. Some crops could be looking at some concerns going forward. Maharashtra, Karnataka, of course, a bit of a point of an issue there. What is not irrigated is going to, and is rain-fed, will perhaps look at some concerns going on. Thank you so much, Mr. Hussain, for joining in. We'll, of course, keep touching base with you yet again as we go through and go deeper into monsoon as a season there. But with that, let's go for a short break. When we come back, we'll talk about the developments in the cryptocurrencies in our Crypto Corner segment after this break.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Well, we have seen various asset classes actually turn around in the last 1 week or so, since the peace deal does seem imminent right now. So the crude oil prices have declined quite sharply. Gold and silver is back. And same is the case with many of the precious metals and metals as well, which have seen some gain. And that goes exactly for cryptocurrencies as well. In the last 1 week as well, we have seen gains come in for some of these. I'll start with Bitcoin. It's up by nearly 7%. But the support also comes in from the fact that the BlackRock Income Fund is offering boost to demand, and that has been supportive for Bitcoin. And then you have Ethereum up 11% in matter of last 1 week. Ethereum actually is in the final stages of biggest protocol overhaul in years, and is the reason you have seen that interest continuing there. Solana is another one, 17% up in last week, and Solana clearly leads retail trading, spot volumes, and the meme coin hype as well. The other coin that I'm looking at is Binance, up 4% in the previous week, and this is on the back of steady utility. The BNB chain now powers nearly 290 million users. Look at Hedera, 5% up in previous week. It's an enterprise infrastructure in play, focus on RWA, which is real-world asset tokenization, and AI. Stellar has gained up by 23% in the past week. Its payments, stablecoin focus, and the fees is as low as $0.0005 a transaction. So clearly, more people flocking to this one. And then you have Polygon, which is also gained up by 6%. The payment push has been very strong here. The app is crossed nearly 1 billion monthly transactions, looking to cross 2.5 to 3 billion per month as well in the months to come. Chainlink has gained up by 10%. It's leading DeFi Oracle space in the market, and is the reason you have seen buying interest come in for this one as well.
All right, Manisha, thank you for putting that update out for us. Well, the markets are still, off the highs of the day, still holding on to that level of 24,050. Around about 60 points higher for the index, but significantly off the day's high of 24,108. Take a short break. Back with more on the markets on the other side. Stay tuned.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Welcome back. Well, now we are at the lowest point of the day, at least of the session, from the highs that we have come off. So, well, 24,034 now, continuing to come off from the day's high. What's not coming off the day's high is IDBI Bank, still holding on to gains of 17%, still the top gainer on the Nifty 500. And what is also not coming off the highs is Car Trade Tech. 13.5% higher now, also at the highest point of the day. We started off the show when the stock was around 12% higher. So it has extended its gains from those levels as well. So now from levels of around 1700 odd, Car Trade Tech has moved to 2700 in a matter of just a few sessions. So that's the kind of move that you have seen on Car Trade Tech. Trent continues to gain 5% higher on that one as well. And a lot of these small PSU banks are seeing some buying in today's session. UCO Bank, Central Bank, both of them seeing gains of around about 5%. Among the underperformers, well, Bharat Industries is one name, 3% lower on that one. The Mumbai-based real estate developers continue to see some pressure, and Samvardhana Motherson is at the lows of the day as well. It recently announced a small acquisition just a few minutes ago. The stock is down around about 3% in today's session. Take your leave on this edition of Halftime Report from Vinny and me. Thank you for watching. Business Lunch on the other side. Stocks push higher, but cautiously ahead of the first US Fed meet under its new chair, Kevin Warsh. Consumer durables and IT are prominent gainers, while realty and healthcare stocks drag.
NSE is likely to file the draft offer document for its over 30,000 crore rupee IPO with SEBI today. Several of its existing shareholders other than LIC are expected to participate in the share sale for its listing. NSE's IPO will be the largest in India till date.
Shares of Mumbai-based realty operator slip after the city cuts water supply for construction on a delayed monsoon. Experts back recycling and mandatory rainwater harvesting with Singapore and Nagpur as models to emulate.
Brent slides to under $78 a barrel on reports saying Iran is free to sell oil under the US deal. Qatar is indicating early resumption of gas supplies also boosts Indian city gas players who eye a shift back to contracted supplies from spot purchases.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormuz Fatakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormaz. Hi, guys. You know, the Nifty holding above 24,000, which is good news for the markets. But off the highs of the day, Brent below that $78 a barrel, at that point is also positive for the markets, though.
Yes, the macros are starting to fall into place, at least on the lines of the crude prices falling. 72.68 odd is that level for Brent, where it was on February the 27th, and now it's trading at around 78-ish, and therefore the crude oil prices have given up almost all the gains that they have seen during the Iran war. So that's a positive, yes, but the market has already run up almost 800, 900 points now from the lows of last week. So there is some bit of exhaustion that is setting in at higher levels at around 24,100. So we are around about 70 points, 80 points off the highs of the day for the index. The trading range continues to remain the way it was in yesterday's session as well. So there is not much change there. The Nifty Bank is seeing equally choppy moves. It continued to remain sluggish earlier in the day, then saw some buying interest. They're still holding on to gains of around 200 points. So the bulls would not be complaining for sure. We are heading into another expiry tomorrow, but they would at least be hoping that even if we close off the highs of the day, 24,000 is held on.
Absolutely. We have to watch that it ends above that 24,000 mark, and that's what the bulls will look out for. And if you take a look at the sectors, the defense pack is the top gaining index, up over 2% in trade today. We've got Hindustan Aeronautics, MTAR Tech, which is up 7% in trade. We've got Bharat Dynamics up near 3.5%, and Hindustan Aeronautics up nearly 3% in trade. And if you look at the IT names, those names are batting for the bulls today. We've got Infosys, TCS, and Wipro, all of them up nearly 1%, a little bit above that mark. We've also got those PSU banks, which are doing very well, IOB, Central Bank, UCO Bank, all of them between 3 and 6% higher in trade. But after 2 days of gains, the realty pack is back in the red. We've got Lodha, DLF, and Godrej between 1 and 3% lower in trade as we speak.
And of course, the big news of the day is the fact that sources are telling CNBC TV 18 that the National Stock Exchange, or the NSE, is all set to file its IPO papers today. Let's take a deep dive into all the metrics and go across to Yash for all those details. Yash.
Well, it's taken years of putting the right compliance, of putting the right processes, of putting the right efficiencies before this headline could come on the screen. The National Stock Exchange likely to file its IPO DRHP with market regulator SEBI today itself. It's expected to happen post-markets today. And as far as the size of the IPO itself is concerned, NSE is likely to dilute about 6% of the total equity in this IPO, and the fundraising could be about 30,000 crore rupees. This will be the largest in India so far. And what makes this more interesting is that the largest shareholder in the National Stock Exchange, that is Life Insurance Corporation of India, is unlikely to sell a single share as far as NSE's IPO is concerned. How much does it own? It owns about 10.7% stake, when it comes to the National Stock Exchange. As far as other shareholders of the National Stock Exchange are concerned, as I said, LIC with about 10.7% stake, Stock Holding Corporation with about 4.4%, SBI Capital with about 4.3%, and the State Bank of India holds about 3.2% stake. There are more shareholders on the institution side, GICRE owning about 1.6%, and Oriental Bank and New India Assurance with about 1.4% each is the stake which they hold as far as the National Stock Exchange is concerned. Now let's look at some of the valuation scenarios. Of course, the final number will be derived after roadshows and investor feedback, but for that near 6% stake, if 30,000 crore is the fundraise which NSE does, then that values the company, the stock exchange, at about 5 lakh crore rupees. If it's 32,000 crore at about near 6%, then it values NSE at about 5.33 lakh crore rupees. And at 35,000 crore for near 6% stake, the valuation could go as high as 5.83 lakh crore rupees. As I said, irrespective, because of the sheer fund size itself, it will be the largest IPO in Indian history. As far as the market cap and the valuation multiple is concerned, the 9-month FY26 EPS was 29.56 rupees, and at that valuation for a forward multiple FY27 estimated EPS, it trades at 39 times. Compare this to the two other listed exchanges. BSE trades at 50.5 times, MCX at about 41.1 times. That's the valuation multiple that we see for NSE. Now, which are the selling shareholders? On the public sector side, we have State Bank of India, Bank of Baroda, Stock Holding Corporation, Indian Bank, GICRE, New India Assurance, United India Insurance, National Insurance and Oriental Insurance, who would come forward and sell their stake as far as that OFS portion of NSE is concerned. On the private side, we have institutions like Morgan Stanley, CPPIB, Temasek, Crown Capital, there's Chris Capital, ICICI Lombard, TA Associates, Soch Global and Omars, who would also look to sell their stake as far as this very, very anticipated IPO for the National Stock Exchange is concerned.
Absolutely, and one of the biggest that the Indian market will see. Thank you so much for taking us through those details, Yash. But shifting focus as Kevin Walsh kicks off his first meeting as the Federal Reserve Chair, the probability of recession and the outlook for unemployment remain front and center. A group of respondents to a CNBC Fed survey see the U.S. economy maintaining resilience and expect no rate change at any meeting through 2027. CNBC's Steve Leisman brings us the highlights.
Respondents to the CNBC Fed survey see the U.S. economy remaining, the words you just used, remarkably resilient to the oil price shock, revising up their growth outlooks. Take a look at GDP. Was 193 in the April survey, now up to 220, a little bit more for 227. Think of these as growth a bit above potential. And the downgrade that we had from the war has now been largely, but not entirely, restored. Recession probability also sinking back down to 25%, a little bit elevated, but not too bad. You can see it was higher right in the wake of the beginning of hostilities. The unemployment rate, meanwhile, seen remaining mostly unchanged, 4.3%, an improvement from the prior forecast in April, but really no progress at a good rate. Now, Guy Labat, chief fixed income strategist for Janney Montgomery Scott, writing in with a survey, the period of short-term labor market fragility has passed, leaving the central bank's mandate more clearly short on one side than the other. Well, what is that side? That would be the inflation side. Take a look at what's happened here to these numbers. Up a pretty good chunk there for the CPI outlook for this year, but seen coming back down, maybe towards target, maybe a little bit above target in 2027 to 267. The expected response from the Walsh Fed as of now, nothing. The average respondent sees the Fed leaving rates virtually unchanged through 2027, right around the current level of 363. That 352 reflects a couple folks in there looking for the potential for a cut, but largely unchanged. The recent potential, though, for an Iran deal and the chance that it keeps bringing down oil prices and core inflation along with it, that could offer Walsh some flexibility to move. But for now, the collective thinking is that the Fed removes the easing bias in the statement and coasts in neutral for at least the first several months of Walsh's new tenure.
Steve Leisman there with the setup ahead of the big Fed rate decision later tonight. Take a short break. Back with more on the other side. Stay tuned.
Welcome back. You're still with us on Business Lunch. The BMC has announced a series of water conservation measures in view of the delayed monsoon and depleting water levels. Earlier, we spoke to Niranjan Hiranandani, chairman of Hiranandani Group, and Knight Frank's Debin Moza on the impact on construction activity in the city. And here's what they had to say.
The water table is already down to 10%, and with the El Nino effect having taken place, and that is being broadcast by the meteorology department, I think the time was there. I think it should have come up maybe a couple of weeks, days before. So I think it is important to actually take up this action very quickly, because you can't have a zero supply of drinking water in the city of Mumbai. Of course, it affects my construction. Of course, it affects the metro and the other projects. Of course, it affects all the sites which are working on and require water, especially drinking water for the construction labor and other things over there. And of course, there'll be a postponement of the construction buildings, which will be there for various people that we are constructing. What we need to use this crisis as an opportunity to relook at what Mumbai water supply. What are we talking about? We always talk about putting more dams to create more water supply. While 100% of my water, sewage water, goes partially untreated into the sea outside, we are now going to provide recycling of water. But what we need actually is to use recycled water for our own purposes. Golf courses, they are using pure water. Your race course uses water from our regular system of water supply. All these aspects of it we do. Second, flushing. Flushing doesn't require to have fresh water. We can use recycled water for that. Industrial processes. Nagpur has a system by which recycled water is sold to industry, and the Municipal Corporation of Nagpur makes a profit on these things.
The most impact would be on affordable housing, because the margins are very thin for the developers. So they have to source the water from either the private tankers or the recycling facilities, and spend a lot of money on transportation. The water shortage would lead to delays, and if it prolongs further, there would be impact on the construction cost for the projects which are ongoing, especially the large ones, affordable housing, infrastructure projects. So it's high time we realize that we need to conserve water, use recycled water. We don't need potable water to be used in all the activities we do.
The big decision there taken by the BMC. Take a short break. Back with more on the other side. Stay tuned. Welcome back. Now, the G7 summit is currently underway with the spotlight on the US-Iran deal. Details of the landmark deal that is expected to be signed on Friday are emerging, revealing a framework that would rapidly unlock Iranian oil exports and channel funds into its economy. CNBC's Charlotte Reed gets us the latest updates.
President Trump, wanted to get some support on this MOU that was signed over the weekend, and Iran kind of grabbing the headlines. And we know that, the other G7 leaders wanted to hear from President Trump on more details on this MOU, and, kind of a mix of cautious optimism, but also skepticism, because the message, was quite mixed throughout the day from what we heard from President Trump. The question of this potential billions of US investment into Iran, saying this is a ridiculous rumor, despite these multiple reports that you were quoting a little bit earlier. They said that the US has the right to do so if they want. The question of the Strait of Hormuz, President Trump said the strait will remain toll-free beyond the 60-day window of the MOU, kind of contradicting what we heard from other US officials previously. So, not so much of the clarity that maybe some of the leaders were hoping for. The question of sanctions relief as well is still hanging on the front. And there's, more and more the feeling of the concessions that Tehran would have to make are not enough, and potentially that this deal, the terms of this deal, are less strong than the terms of the deal that was signed back in 2015 under President Obama. And this concern is kind of growing amongst Republicans themselves. And we hear from Republicans both in Senate and in the Congress that they want to see the details and review this potential peace deal and be able to agree on it because of, a lot of these details have not been made public just yet. So we have to wait and see there. But what we know from, the connection between the Iran war and the Ukraine war, because of course at the G7, President Macron was also very, very keen to keep a lot of the attention on Ukraine. And President Zelensky himself attending the very first session of the G7. Here again, a potential cautious optimism on that front. We know that up until now, President Trump has been kind of playing a more neutral role rather than an ally between the Ukraine and Russia. And what we hear from the communique that was published yesterday is that they stand united in their unwavering support of Ukraine, including new extra sanctions on the energy and oil sector of Russia. And they say particularly because the Strait of Hormuz is potentially reopening, then, a lot of sanctions have been removed on some seaborne Russian oil, doesn't need to be there anymore. So it is the moment potentially to put these extra sanctions on Russia. So we have to wait and see whether this happens. But it was interesting to see the connection between these two aspects. And today, as we were saying earlier, the attention switching to tech and AI for the next day, guys.
So that's the latest from the G7 summit. But moving on, Prime Minister Narendra Modi and US President Donald Trump are all set to hold their bilateral talks today on the sidelines of the G7 summit. Abhimanyu joins us now with what's on the agenda. Abhimanyu?
Well, the formal agenda is yet to be known for the meeting between Prime Minister Narendra Modi and the US President Donald Trump on the sidelines of the G7 summit. However, the meeting will come a week after the killing of 3 Indian sailors who lost their lives in US strikes off the coast of Oman. And several issues, of course, remain, even as West Asia continues to be tense and restive. Now, thousands of Indian sailors are currently stranded across different ships in the West Asian region, which continues to be restive. Also, the uncertainty around tariffs, the uncertainty around H-1B visas continues to impact all countries, and more importantly India, given the fact that Indians are one of the biggest beneficiaries as far as the largest cohort is concerned for H-1B visas, and the 10% tariffs which were imposed by the US administration, they are set to lapse in July. So the uncertainty continues around several areas, and it's likely that many of these issues may be discussed as part of the meeting between both the leaders of India and the United States. Now, yesterday, PM Modi addressed the G7 outreach session in France, and several world leaders were present when he indicated that maritime security is a global concern rather than a bilateral dispute. So he clearly made an indication without naming any country, without naming any particular region. As far as batting for maritime security is concerned, he said that the world must ensure that maritime routes remain secure and seafarers can carry out their responsibilities without any fear. Also, interestingly, he referred to a 39-year-old statement which was earlier made by the former US President Ronald Reagan, who Trump is also a supporter of, and he made a statement which was initially made by Reagan, trust but verify. So clearly that indicates the kind of remarks which have been made by Prime Minister Modi till now, who is indicating for dialogue, for peace, instead of wars, what has been India's stand ever since the beginning of the West Asia conflict, and also Also, he has called for protection of maritime sea routes. For India has what India has stood for as far as openness of sea routes, openness of maritime routes is concerned. Even as thousands of Indian sailors currently too are sailing in different commercial vessels which are flagged across different countries. However, several vessels continue to remain around the West Asia region, which continues to be tense and restive for now.
All right, Abhimanyu, thank you so much for those updates there. Getting you the latest from the FIFA World Cup. We saw some high goal-scoring action today after yesterday's string of draws. France overcame Senegal 3-1 with Kylian Mbappe scoring twice to become France's highest World Cup scorer. Argentina also cruised past Algeria 3-0, led by a Lionel Messi hat-trick. Well, also, Erling Haaland announced his arrival on the World Cup stage with 2 goals as Norway thrashed Iraq 4-1, while Austria rounded off the day with a 3-1 win over Jordan.
Well, with that, it is a wrap on this edition of Business Lunch. Mid-Cap Radar will take all the market action forward. Good afternoon. Welcome to Mid-Cap Radar, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. Joining me on the show today is Vinny Motiwala. Vinny, good afternoon. Well, we continue to be in the green. We've come off from the highs, though. It is 60 points, I would say 75 points fall from the highs of the day. But again, continue to be above that 24,000 mark. Bank Nifty is the one which is outperforming the benchmarks, up 0.3%. Some action in the mid-caps, too.
Absolutely, some action in the mid-caps, and as of now, holding on to 24,000, so not much of a complaining coming in from the bulls front. But let's talk about the top headlines for today, and starting with the markets, right? Nifty trades around the 24,000 mark, coming off the day's highest point. Mid-caps trade in line with small caps, outperforming IT, consumers, durables, as well as PSU banks lead the gains, while realty and auto and FMCG are the drags.
Dixon Technologies rallies 5% as JP Morgan issues a buy rating on the stock with a target of 12,700 rupees a share, citing a potential 24 to 39% revenue upgrade if the planned JV with Vivo is approved.
Shares of AC makers gain up to 5% amid concerns over delay in the progress of southwest monsoon, which is expected to keep cooling appliances demand strong.
Schneider Electric rises nearly 5% in trade as Ambit initiates coverage with a buy rating and a target price of 1,400 rupees a share. The broker believes the company will benefit from Schneider Global strategy to establish India as a global manufacturing hub.
And shares of Prime Focus gain in trade as SEBI disposes proceedings with respect to false and misleading financial statements, citing allegations are not established.
Okay, those are the top headlines and some stocks that we'll discuss in greater details as well. But as I said, mid-caps, they continue to do well. Some updates on Tata Motors PV as well from the JLR Investor Day. They are targeting medium-term double-digit revenue growth. So that stock, of course, is in focus. Some recovery in the mid-caps from the lows of the day. So that index is up around 0.2%, and something that we'll discuss in greater detail.
Absolutely, and a lot of those individual names that are moving around in the trading session as well. And in our mid-cap mover segment, now we have Upasna joining us to take us through those names which are moving in trade. Upasna, afternoon.
Well, certainly. Good afternoon. If I look at the Nifty Mid-Cap Index, it's up to 0.1% as we speak right now. So let us first focus on the top gainers in today's trading session. First up is the IDBI Bank, which is up nearly about 19%, which is one of the key volume buzzers. And volumes are as high as 20 times the weekly average. Next up is Car Trade Tech, up nearly about 15%. And if I look at the 1 month move of the stock, it's up nearly 56%. Astra Microwave is up nearly about 7.5%. And mind you, defense stocks also see some kind of a buying today. And the stock has hit a 52-week high today as well. Next up is Kirloskar Industries, is the another volume buzzer today, 13 times higher than the weekly average. And lastly, coming to Dixon Tech, the stock has been buzzing over the speculations of the Vivo JV approval, and also JP Morgan has given an overweight rating with a target price of 12,700. Now let us put the focus on the consumer durable sector. Even that sector is seeing some kind of a buying. The index is up nearly about 2%. Now AC stock surge on the back of the delayed monsoon. Blue Star, Voltas and Focus up nearly about 2 to 4%, and even cables and wire stocks are seeing a good amount of buying with a surge of nearly 2 to 4%. And now on the flip side, let us look at some of the top losers in today's trading session. Topping the list is the BSE on the back of the NSE IPO DRHP filed with SEBI today. On the back of that, Cyient is also in focus, down nearly about 4%, and Neogen Chemical is seeing a sharp downtick there, down nearly about 6%. So all in all, these are the movers in today's trading session.
Okay, thank you so much for that, Upasna. It's a good time to get a technical check on the markets. Dharmesh Shah from ICICI Securities is joining us now for just that. Dharmesh, good afternoon. We have seen some recovery from the lows again on the markets. What are the next important levels we'll be watching out for?
Good afternoon, Sunil. Absolutely, I think so the market seems to be more on the positive side. The way that things are panning out right now for the market in terms of news flow, I think so. The crude, I think, is more important to look out for. I think so. Trading below 80 and dollar also getting stable around 94.30 levels. It looks like I think the things looks more positive on the Nifty. Yes, Nifty has witnessed a breakout from the 4 months of falling trend line, indicating I think the end of the corrective phase for the Nifty. Look at the levels again, we below, I think so 23,800, 23,700, which was the previous breakout level, which was acting as a resistance, should act as a very strong support for the Nifty from the here on. And overall, we expect Nifty to head towards 24,500 in the days to come. So overall, I think so buy the dip should be the strategy. Any dip towards 24,700, 800 should be the buying opportunity towards the target of 24,500.
Okay, buy on dips should be the strategy. Dharmesh, which are your top bets that you're looking at then?
As far as stocks are concerned, we believe I think the defense as a sector has been back in the limelight. I think so after the couple of weeks of consolidation, we expect Vidhani Mishra Dhatu Nigam to be remain to be our top in the current market price. Again, the stock has been moved into the consolidation after good sets of numbers in the range of 420 to 435. Finally, seems to be on the verge of a breakout about 450. We expect Mishra Dhatu Nigam to head towards 472, keeping a stoppers of 415. So Nidhana remains to be a topic inside the defense space. Apart from that, PSU banks again are back in limelight. Banking as a sector, I think, will be outperforming even in this current corrective phase. So we believe inside the banking again, PSU banks remains to be our topic. Again, the fall in the bond yield price from 7.15 to 6.8 will be the big positive for rural, I think, so PSU banks. So again, the PSU banks, Indian banks remains to be a top pick. Again, Indian bank following a strong base at the 52-week EMA. Stock has seen a good correction from 1,000 to 800. It looks like I think the stock is on the verge of a replacement on the higher side towards 932, keeping a stoppers of 822. So Mishra Dhatu Nigam and Indian bank remains to be a top pick at the time.
Okay. Medani as well as Indian Bank are topics. Dharmesh, thank you so much for joining us in the show as always and helping us understand the levels we should keep an eye out on in terms of markets as well as the individual stock bets. But on that note, we're going to slip into a very short break. We'll get you more on the markets, more stock-specific action on the other side. Stay tuned in. Welcome back. You're still tuned into Midcap Radar. Let's now focus on the writing and paper industry. CareEdge notes that realizations are under pressure due to a sharp rise in low-priced imports and elevated raw material costs. To take a closer look at the industry trends, we are now joined by Preeti Agrawal, Senior Director at CareEdge Ratings. Preeti, good afternoon. Thank you so much for joining us. Give us a sense of what the industry trends are looking like right now when it comes to realizations, raw material prices, and is it a specific segment of the paper industry that is being impacted, or is it happening across the space?
Yeah, thanks. So what we see that writing and printing paper segment is more affected and the realizations have been under sustained margin pressure because of low cost imports, GST distortions which happened in September 2025 and elevated input cost. With this, the realization is unlikely to see a meaningful recovery in near term. The ongoing West Asia crisis is further exacerbating the freight volatility and supply chain risks, adding to cost pressures, even as demand remains resilient because of the education demand being there. And as a result, while volumes may grow modestly, say about 3 to 4%, profitability of industry players, especially non-integrated ones, is likely to remain constrained. And the resilience actually hinge majorly on cost efficiencies and policy support.
Hi, Preeti. Good afternoon. You know, while you said demand may still be resilient given it's coming in from the education side as well. But apart from West Asia, now a concern that's coming in on the domestic front is the El Nino conditions, the water shortages as well. And that's what is required in manufacturing, or more water content is required at least for the paper manufacturing. Do you think this will be a bigger challenge? And maybe we could see supply issues that could come in from the company point of view as well.
No, see, El Nino issue will not affect paper manufacturers, is my understanding, especially the writing and printing paper segment will not be affected. Reason being the diversion may happen from other segments, which is, craft paper or other segments where demand may not that much be there, because education being an important segment, writing and printing paper will always be taken kind of precedence by the manufacturers, paper manufacturers, is my understanding.
Okay, so Preeti, how much lower are the realizations right now? And when you say it could sustain, even for coming, not at least in the near term, you couldn't see any recovery. When do we start seeing a recovery? Because West Asia crisis seems to maybe get abated in a bit. Would that be enough? How much higher are the costs? Give us some numbers.
Yeah, so costs have actually elevated. If we see the writing and printing segment in India largely relies on wood-based fiber mix with integrated mills typically using 75 to 85% of hardwood, 10 to 15% of bamboo, and limited 5 to 10% waste paper. And what we see that hardwood pulp prices have remained above USD 600 metric ton. And domestic wood prices have also risen materially due to tight fiber availability and competition from allied wood-based industries such as MDF and all. Waste paper prices have also spiked from about 13,000 metric ton in FY21 to say 18,800 in FY26. Bamboo prices, after declining for few years, have also firmed up, recovering to about 82,700 per metric ton in FY26. So that's what we are seeing, that cost on one side is remaining elevated, and on the other side realizations are under continuous pressure because of imports, especially from China. We are seeing significant imports happening because of the excess capacity being there. So, which is...
What is the realization amount? Preeti, if you could help us with that, like versus last year, what is the realization if I compare last year, June?
Realization of writing and printing paper?
Yes, right now, what would be the figure there?
Realization, basically...
If you can just give us a sense of... No problem. If you could help us with that maybe a percent in terms of decline? How much has it fallen versus it? Is it significant, you mentioned? So how much would that fall also be?
It has been 6 to 7% decline is what we are seeing as of now, and that is going to remain under pressure.
Okay, 6 to 7% lower are the realizations. Are companies not able to pass it on to customers? Is that an issue? If that happens, do you think it could cause further demand issues? Is that the sense that you're getting from the industry?
So the major issue is because of the imports which is coming in from China and other Asian countries. So the domestic manufacturers are forced to maintain import parity prices. Otherwise, they'll lose in terms of demand and volumes.
Okay, Preeti, thank you so much for joining us this afternoon, helping us understand in terms of the paper industry, what are the trends happening there as well. So thanks so much for joining in and helping us understand the recent trends. Realizations still continue to be under pressure. We have imports that come in from China at a cheaper rate, so that's also something that's a bit of a worry. But on that note, we're going to step into a very short break. We'll get you more on the markets, more stock-specific action on the other side. Stay tuned in. Welcome back to Midcap Radar on CNBC TV 18. While markets and Nifty continues to be about the 24,000 level, 24,050, around that market, what's it's trading at some bit of a recovery it's tried to make from when we started the show. Just a few points here and there, but yes, that's what we'll keep an eye out on. IT continues to do well. But let's just focus and talk about one of the capital good players, right? Today, all these capital good names are also doing well. And now specifically, Schneider Electric Infra, that's the one that's buzzing in trade, holding on to gains of almost 4 to 5% in the trading session. Now, what's come in here is Ambit has initiated coverage on Schneider Electric Infra with a target price of 1,400 and a buy rating. What is the story behind this? They said that obviously this is a strong proxy play to that multi-year data center theme that we talk about, with over 10% of the revenues as of now, 10 to 12% of the revenue comes in from the data center story. Previously, until FY20, the data center revenue was around 3 to 4%. So we've seen doubling in terms of revenue over the last 5-6 years. What Ambit is expecting, they estimate a 50% CAGR growth in terms of data centers over FY26 to FY29, and that will drive the overall group sales for the company as well. Schneider Group overall will benefit from the global strategy. Global strategy is let's focus more on India. So that means Schneider India will also see those benefits coming in and making it more on that manufacturing hub front. So that is the benefit we'll see. And Schneider global strategy should, maybe drive and ramp up the exports for India to 15% by FY29. Currently, it's at around 12%, so 3-4% uptick from the current levels. Short term, yes, we could see some bit of a margin risk because of this commodity inflation that we're seeing. But Ambit believes that the Q4 FY26 EBIT margin that one is seeing, that's the bottom level for them. And now we'll start seeing an upside. Data centers will be something that will provide the benefit in the coming years as well. And they forecast an order book growth of 19%, revenue growth of 24%, and EBIT CAGR growth of around 40% over the next 3 years. So, Sonal, that's why we're seeing Schneider Electric is buzzing in trade, and main reasons coming in from the global strategy point of view as well.
Okay, so before we go to that bite where Schneider Electric's global CEO spoke to CNBC, just pull up the Tata Motors PV stock, because there's a sharp fall from the highs on that one. It is at the day's low. Important to mark that, because look at that slide. It is the FY27 outlook which has come in from the JLR business, and they speak about EBIT margin at 4% versus more than 0% that they had spoken of in FY26. They're also talking about breaking even as far as cash flows are concerned, versus the negative cash flows that they had seen in FY26. Maybe the expectations from analysts was much higher, and it has come in as a disappointment. We'll get in Sudarshan to analyze it more for us, but a sharp fall on Tata Motors PV on the back of this outlook that has been released by the JLR segment. But let's get back to Schneider, because that's buzzing on the upside. We did have Schneider Electric's global CEO telling CNBC that 60 to 70% of future data centers will be for AI. They also added AI will give huge benefits for the company. Listen in.
We have not even built the AI data center that you need to support AI. We are just at the beginning of the journey, We believe that 60 to 70% of data center in the next 5 years will be for AI. The next wave will be in space. Nobody knows, but I can tell you we have not even started to build what AI needs on Earth. The more I'm using AI to amplify our own product, and the more I use AI for Schneider Electric, I truly believe that there are huge benefits for our own company. As a consumer, as a customer of AI, we can make your home 10% more efficient from an energy consumption thanks to AI. I can make Schneider Electric more efficient from a forecast planning standpoint, from a pricing standpoint with AI. So I strongly believe that there is a benefit for company. What it means, I'm going as a CEO to spend much more on token. I need to free up some cash in my company to spend on token. And of course, where will go this money? That will go to all those companies. So at one point of time, they will turn to a profitable business model. So I believe that the loop is closed, and I think it's a pretty healthy business for the coming year.
Okay, that's the global CEO of Schneider. But let's talk about another stock that's been buzzing in trade, and that's Phenolics Cables. That's holding on to gains of around 4%. And in an exclusive conversation, our colleague Nigel actually caught up with Phenolics Cables CEO Mahesh Vishwanathan, and he expects the industry to consolidate around 5 to 6 large players. And he also says that the company will deploy cash towards inorganic growth opportunities and selective capex. Listen in.
We know that they are coming, so we are preparing ourselves to handle that challenge. But I think what strategy they would follow, to us, it's not fully transparent as yet. And I'm not sure if they will do a repeat of the paint business, or they would try something else. Regardless, I think we are ready to face the challenge that would come in. Long term, I think there would be some consolidation in the sense you today have quite a few smaller players, and those probably would get consolidated one way or the other. I think there is enough space and market for 5-6 of the larger players to continue to operate with reasonable market share among themselves.
Okay, that's the word coming in from Finonix Cables. But with that, we're completely out of time on this edition of Midcap Radar. Your stocks when we return.
Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC TV 18 Motilal Oswal Studios. I'm Vinny Motiwala, and with me is my colleague Arundhati. Arundhati, good afternoon. And as of now, it's a good afternoon. I would not complain because we're holding on to 24,000. 24,050. Yes, we've come off that day's high, but nonetheless, still holding on to that. Nifty Bank, that's seen a recovery coming in as well. IT is holding on to gains as well in the trading session. Not as much as when we started for the day, but both of them are holding on to gains, and 24,000 is what we're managing.
Absolutely. As you pointed out, the IT stocks are batting for the bulls. We've got Infosys, Wipro, all of them higher in trade. We've also got that defense pack that's doing really well today. It's one of the top gaining indices. PSU banks also supporting the Nifty's up move. But on the downside, we have that realty pack. That pack was doing well. It saw gains for 2 days, but now it's back in the red, right? So that's how the markets are shaping up for the day. But let's go across to our guests to answer all of your stock queries. Joining us today are Astha Jain, research analyst at Haim Securities, and Richard Jain, equity technical research wealth management at Motilal Oswal Financial Services, to answer all of your stock queries. So the first query that's coming up for you is MVS Rao, who's writing to us from New Delhi. He asked if he can take fresh entry into E2E networks for the long term. So the query coming in there for E2E networks, that stock is currently trading at 387 rupees a share. So Astha, let me come to you first. Why don't you give us the long-term view on the stock? Is it a good stock to enter currently?
Hi, good afternoon to everyone. First of all, talking about this company, we all know that it is a pure play AI cloud infrastructure company. And now I think this company is well suited for a long-term investment point of view. There are certain points which I would really like to highlight upon this point. First of all, it is a strong play. If I talk about the AI adoption in India, then it is one of the very strong play. Secondly, I think that the AI infrastructure which this company is having definitely has an edge over the other peers, and there is a massive AI opportunity. Now, this company is also in a very, very strong growth phase, because we all know what the results they have posted. It has shown 50% rise in their top line. The margins have also jumped. So I think the strong margin this company is enjoying. And most important point which I feel about this company is the large capacity expansion of around, I think, 1185 crore of the GPU infrastructure this company is creating right now. So I think all these points are signaling towards a strong upside in the stock prices. And my idea here is it is a good long-term play. Hence, we are positive on this counter, recommending a hold as well as buy on dips with a price target of 450 at the initial levels.
Okay, but Ruchit, on the technical front, does it merit entering at these levels, right? I'm looking at it since December. It's up 90+%, almost doubling just since December, Jan. Is this a level maybe to look at entering, or maybe wait for some bit of a correction for the long-term story?
Yeah, hi, very good afternoon. Well, the overall trend seems to be positive, but the only thing I think the problem is the volatility in the stock. We have seen certain instances where when the stock moves up, it goes circuit to circuit, and even on corrections, it corrects from circuit to circuit. For example, just the recent past, if you see after it went split from 10:1, around that 450 mark, it has corrected towards 380 with 3 or 4 consecutive lower circuits. So I think that's a bit risk in the stock. In the similar sector, I think NetWeb has overall much positive chart structure where the volumes are also good and liquidity is much better than E2E network. So I would prefer buying NetWeb tech if you want to go in the same sector over E2E. In terms of support, the 50-day support for the stock is coming around 340, 345. So in case if you have to go long in E2E only, then any correction towards 342, 345 will make the risk reward ratio favorable.
Okay. 340 around that mark, maybe that correction, at least wait for it, and otherwise you prefer NetWeb. Richard, NetWeb has also run up so much, but okay, that's the word. NetWeb Technologies over E2E, that's the word on the technical front. Let's move on and talk about the next query. We have Sekhar, who's writing to us from Coimbatore. He holds few shares of Samvardhana Motherson, not mentioned exactly how many shares, but few shares of Samvardhana Motherson. Price is 125 rupees. So they're making some bit of a profit on this one. He's looking to add some more shares. Does it make sense on the fundamental front to add more shares? When you look at it, Astha, the numbers for Q4 were good. They were expecting more modules, polymer in all segments, and that was expected to see strong growth going forward as well. What's your view on this one?
So view is positive, because what we are seeing that this company is now entering into the businesses where there is a long-term growth story. Like if I say they are into the consumer electronics. So now they have started scaling up those businesses also. And one more point, we always know that there are two types of growth, organic or inorganic. So in organic growth also, that is inorganic growth, I'm seeing that this company has a strong pipelines. And I think that is one of the major factor which can really shape its future. So my idea here is both from the organic and inorganic growth wise, this company is well placed to cater the business and future potential which is present right now. But as the stock has already shown a very strong run up, so idea here is to enter into this counter at some dips. So maybe at around the level of 130 to 135 are the right zone where one can make a fresh entry. Otherwise, those who have the stock in their portfolio can remain invested in for the price target of 180 at the initial levels.
All right, so positive on the stock. You've given levels at which he can enter. Ruchit, do you agree with Asta? Is this a good bet? Can you give him certain levels at which he can enter the stock if you think that he could add more of Samvardhanam, Motherson Sumi?
Yes, overall trend seems positive. We have seen that price up moves have been supported by good volumes in last 3 or 4 months. So 140, 135 is a good support zone for the stock. So any dip towards 140, 135 range can be used to add more.
Okay. All right. The next query is coming in from Manjunath, who's writing to us from Hyderabad. He holds 2,000 shares of SBI, which he bought at 1,100 rupees. He is making a loss on the stock. The stock is currently at 1,023. He wants to know if he should continue to hold or average out at this point. Asta, what's your view on the stock? Should he continue to hold or should he average at this point?
I think one should hold this counter because maybe he can get the chance of averaging at a lower level also. So I think why I'm seeing some sort of lower level, maybe not right now, maybe some days, right from here. So the problem is that now the asset quality, I think that is started showing some sort of, signs that it can hamper or it can affect the provisioning which the bank is doing. So that I see as a major risk for this counter. Although we have seen that there were certain issues with the NIM because the NIM compression was there. But going ahead, I don't feel that NIM compression can be the issue. So right now, my idea here is that this stock can witness some more downside from here. Maybe not right now, some few days ahead of the line. So at that time, one can make a fresh entry into this counter. Right now, just remain invested in with a price target of 1,100. And maybe when I'm saying that dips can be witnessed, so one can enter into the dips at around the level of 1,000 or 980 to 990.
Okay, we'll keep an eye out on that. But, Ruchit, should the viewer hold or average currently? Obviously, they've also bought it at that 1,100 level, which is closer to that 52-week high that the company has seen. What is your suggestion?
I would also recommend to just hold the positions. Overall, the stock has traded within a range of 1,100 to 950 in last 3 months. So it seems to be more of a time-wise correction. So the higher end of the range is around 1,100, which is around the cost price. So wait for a pullback at least towards the cost price and then take a review again around 1,100.
Okay, point taken there. That's a word there. As of now, just hold SBI. That's the word. Let's move on to the next query then. We have Subramanian, who's writing to us from Bangalore. He's holding shares of SBI card now, and this is at a price of 755 rupees. Currently, the stock is trading at 624. He wants to know the long-term view on the stock. Also wants to know if he should look to sell, average, or maybe switch to another name. Astha, your view on the fundamentals?
Fundamental seems to be positive for this counter because what we have seen that the company is continuously acquiring the customer through the digital route. So that is looking very positive. And when we hear the management commentary, in fact, they are also pointing out now their certain ratios are manageable, especially on the cost side. So I think that this counter is showing some sort of improvement in the stock prices, and in the future also we are expecting it to show improvement in the financial performance. So overall, this counter is a hold from our side with a price target of 660 to 675.
Right, so it's a hold on your side. Ruchit, SBI cards, what should the viewer do? Sell, average, or do you think there's a better bet out there?
I think wait for a pullback move at least. The stock has already seen a price-wise corrective phase. On the weekly charts, the momentum readings are oversold. So a pullback towards 670 technically cannot be ruled out. So maybe around 670, you can take a decision whether to exit or not. But at current levels, I would just suggest to keep holding the positions.
Keep holding the positions. Asta, Ruchit, we have to take a quick break, but don't go anywhere. We'll answer all of your stock queries on the other side. Stay tuned. Welcome back to Your Stocks on CNBC TV 18. We still have with us Astha Jain of Haim Securities and Ruchit Jain of Motilal Oswal Financial Services to answer all of your stock queries. The next query is coming in from Sahani, who writes to us from New Delhi. He holds 500 shares of One MobiKwik Systems at 201 rupees and wants to know if he should continue to hold or sell. He is making a loss on that stock. Astha, if I could come to you on the fundamental view, the stock hasn't been doing well in the last year. It's down quite a bit. So what's your view? Should he continue to hold or sell the shares that he has?
So I think the reason was that it was showing losses in the last year. Now, what has changed from Q3 of FY26? They have started posting profit. So it is a turnaround story. Secondly, their payment segment, which is the major segment and the core segment of the company, is showing strong growth. And third, the most important point which I like about this company is that they got the NBFC license approval from the RBI. So now what is major focus of this? That now management has started saying that they are targeting 5,000 crore loan book. So from the loan distributor, they will start now lending. So I think there is a big change in that way. And I believe that this company is well poised to show a strong future potential on the basis of all the points which we have discussed right now. My idea here is stay invested in this counter for the price target of 240 at present. So hold is a recommendation from my side.
Hold is a recommendation on the fundamental front. On the technicals, what would you suggest as well, Ruchit? Would you say continue to hold, book out your loss, or even average at some level is an option here?
This will be a consolidation phase. So I think the stock would remain sideways from this range of 180 to 220. So as of now, we don't see any directional trend over here, but yes, can wait for a pullback towards 220. But I won't suggest to average, just hold existing positions what you have and keep a stop loss below 180 of those positions.
Okay, that's a view there on One MobiKwik. Let's move on to the next query. We have Ram here, who's writing to us from Mumbai, holding 1,000 shares of Grow. This is at a price of 188 rupees per share. He's asking if he should continue to hold or sell this one. Fundamentally, how is it looking, Astha? Recent listing as well. So what should you watch out for now?
Yes, so we all know that now it is a leader in the India's retail investing space. So, and they have started showing strong growth in the revenue. So from a loss-making startup, it has now started turning, showing very strong growth in the financial as well as a good return ratio they have started posting. In fact, management is also speaking about the diversification. So from the pure broking, they are now diversifying into the various other wealth broking, etc. So and commodity trading, etc. So my idea here is that they are, whatever they are saying on the management front, we are very much optimistic about those things. And hence we recommend a hold on this counter, although we know the valuations are quite high. So that can be a one of the, I should say, dampener for the stock prices, but more or less the kind of expansion plan this company is having, one should remain invested in this counter for the price target of around 225 to 235 at the initial levels.
All right. Ruchit, if I can come to you, it is a new listing, so there's not much on the charts, but what are your thoughts on the stock? Any levels that he can watch?
So limited data, but no, we have a positive outlook on the sector as a whole. The capital market segment, especially the broking and the AMC stocks, if you see, have seen good price volume action recently and have been showing a relative outperformance in this market submove. So I think since the sectoral trend is positive, it's better to hold on the long positions. Whatever data is there, the recent low of 185 is the immediate support for this.
All right. The next query is coming in from Sunil Kumar, who writes to us from Visakhapatnam. He holds 100 shares of Anant Raj at 650 rupees, and he wants to know the outlook on the stock. He is making a loss on it. It's currently trading at 529. Should he continue to hold or should he sell at this point? Astha, how are the fundamentals looking?
Fundamental looking to be very positive because it was a traditional NCR focused real estate developer. Now it has, transitioned or evolved into a data center, real estate, cloud infrastructure story. So there are a lot of things which are now started working for this company. And we know that data center business is a major trigger for this company. And that is why I think that is this is a counter. If anyone wants to play on the data center story, then one should look upon Anant Raj for all those reasons. So idea here is stay invested with the price target of 580 to 600.
Absolutely, the data center play, the data center proxy play that comes in here is Anant Raj. But on the technical front, Anant Raj, what's your view? Currently, it's at 529, right? And the viewers bought at 650. They're making a loss on this one. So does it merit averaging maybe, or continue to just hold the stock?
The stock has support around 500 to 520 zones. It's quite close to that support. So the downside seems to be limited from here on. So I would suggest to hold existing positions with a stop loss below 500.
Okay, that's a view there on Anantraj on the technical front as well. Keep an eye out on the stop loss that Richard mentioned as well. Next query for today, we have Sriram, who's writing to us from Chennai. He's holding shares of Bharat Rasayan. Price is 2,600 rupees per share, making a big loss on this one. It's at 1,460. Concern is that should you just continue to hold this one, or maybe just book out your losses and maybe look at another name, another sector in itself as well? What's your suggestion here, Asta?
Suggestion here is to stay invested in this counter, because what we know about this company is that they have got a very, very strong play in the technical agrochemical. So, and this space is having a strong entry barriers. So this is one of the major points. Secondly, balance sheet is in a good shape because it is almost a debt-free balance sheet. And thirdly, I think that China plus one trend is always working for this company. So these are the few fundamental reasons I believe that one should remain invested in this counter. So idea is just hold this counter with a price target of around 1800 to 1850.
All right, so you are positive on that stock. Ruchit, coming to you, Bharat Rasayan has done well in FY26. You know, profits have risen. What's your technical view on the stock? Should he stay invested?
In terms of stock price performance, I think it has been an underperformer. After that split and bonus, which we saw in December 2025, the stock has consistently corrected from that 2,700 to 1,460. So the trend does not seem to be positive technically. So any pullback moves, I would suggest should be taken as opportunity to exit.
All right. The next query is coming in from Kunal, who's writing to us from Noida. He holds 260 shares of Belries Industries at 218 rupees, and he is making a profit on the stock. It's currently at 237, and he wants to know the short-term outlook on the stock. So, how are the fundamentals looking, Asta, and what's your view on the stock?
So it is one of the automotive component manufacturer which supplies safety critical and engineering intensive components to the major OEMs. And these OEMs, they work across two-wheeler, passenger vehicles, commercial vehicles, etc. So now I think, first of all, if anyone wants to play on the story of an automotive component manufacturer, then Wellrise is among one of those counters. Secondly, they have got a very strong, client base like Bajaj Auto, Hero, TVS, Royal Enfield, etc. Thirdly, what I believe is that they have got a diversified product portfolio, and I think the EV transition is one of the major opportunity for this company going ahead. So on the basis of all these factors, Wellrise is looking good to us. Maybe in the short term, we might see some sort of a correction, but I think one should take them as an opportunity to enter into the counter. So yes, a hold as well as buy on dips is recommended for this counter at the level of around 220. One can enter into this counter as well with a price target of 250 to 260 in the short term, because here viewer has asked for the short term targets.
Absolutely short term, and short term targets. Ruchit, what should they keep an eye out on? They bought it at 218. Would you tell them to continue to hold this one?
Yes, because it has been forming that high top, high bottom structure, which is a good structure for the short term. And on any corrections, the 50 DMA is acting as a support, and the stock is not breaking that. That average is around 214, just below the cost price. So the risk reward ratio is still favorable, given the buy price. So I would suggest to keep stop loss below 214 and continue to hold on for now. Since it's an all-time high, as the stock moves higher, you can just keep revising a stop loss on the positive side.
Okay, that's on Wellrise Industries. Let's move on to the next query. We have Avija, who's writing to us from Mumbai, holding 200 shares of Reliance Industries. Price is 1,472 rupees. We have the AGM that's coming up as well this week and Friday. That's what we're keeping an eye out on. But long-term outlook on the stock. Over to you, Asta.
Long-term outlook is still positive, although we have seen the stock has seen a massive correction from its high. But still, I believe that if anyone wants to play on the long term, then definitely Reliance is a counter where one should remain invested in. There are a few points about it. First of all, we all know that Reliance Jio, it has created a good value for the investors. So it is a good value creator for the company. Secondly, I think the retail business has strong opportunities to scale up more. So that is also, and it is one of the company which is a diversified company, whether we talk about retail, we talk about telecommunications, irrigation, we talk about oil to chemical business. Although oil to chemical business, being a cyclical business, has not shown very strong numbers in the quarter gone by. So that is one of the dampener. But I think if anyone wants to play on the diversification story, then definitely Reliance is one of them. And yes, one should remain invested in this counter for the long term. And idea here is buy on dips is also recommended. Not at the present level, I'm recommending buy, but at the lower level, one can buy this counter at around the level of 1280 or so, with a price target of 1450.
All right, so buy on at lower dips, and that's what you're saying about Reliance, and you are positive in the long term on that stock. But Ruchit and Asta, we're completely out of time on the show, but thank you so much for joining us and answering all of our viewer queries.
Thank you.
And with that, it is a wrap on this edition of Your Stocks. But do remember to email us all of your queries and we will address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
The Taiwan index fund, that's down 0.6%.
Oil, of course, is down. As I said, a big move lower, 4.5% is Wipro and Indigo, Tech Mahindra, etc. on one side. It's Aisha, Axis, and Tata Consumer on the other side.
So I think it is important to actually take up this action very quickly.
So I think for half the year, we should be operating on expanded capacities.
Turning out to be a session where we've managed to capture that 24,000 mark as we speak.
The National Stock Exchange ready with its IPO.
On a free cash flow basis, they turned positive to the tune of 90 crores.
The real economy is doing very well.
The uncertainty around tariffs, the uncertainty around H-1B visas continues to impact all countries.
Well, we continue to be in the green. We've come up from the highs, though. It is 60 points, I would say 75 points fall from the highs of the day.
Well, that was the day so far, and you're watching us here on Closing Bell. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu, with me, Hormaz Fatakia. It's been an interesting day of trade. It's a positive day. For the last 3 trading sessions, we've been seeing supply as the market moved higher. Today was no different, but the only thing that bulls will hold very dear to their heart is the fact that we're holding above 24,000. And we're holding above those levels for most part of today's trading session. The smooth transition that took place between the Nifty Bank as well as the Nifty IT, both those indices come up for you on the screen. And that tells you that maybe, there is this shifting of the baton which is taking place between 2 index heavies. The Nifty IT index currently holding with a gain of 0.2% is the Nifty Bank, which paused for breath, is now moved higher. The only third element that we'll be tracking as we move to the course of the next week will obviously be Reliance. That's the third index heavyweight. Opened lower, thereafter saw some purchase, and now as we speak is marginally in the red as well. So let's see where that goes from here on. Does it see a bit of a spike from current levels or not? The broader markets, no real problems. We have a few more number of stocks advancing than the number of stocks which are declining. And in some of these defense names, big moves that we're seeing, something like an MTAR Tech, which is up 8.5%. Big volumes on that stock. Paras Defense is at a fresh high. That stock's doing well too. And from the front line, we have Trent, which has spiked. And a lot of shorts caught on the wrong side. That stock continues to do well.
Cannot keep MTAR Tech out of the headlines for sure. We are back at those 84.49 levels, which were its record highs for the stock. So continuing to be in the spotlight is MTAR Tech. But the index, though, has cooled off around about 90 points from the highs. You can say it's par for the course simply because of the fact that we are up almost 800-900 points from last week's lows. So there is only fair that there is some exhaustion that is emerging at higher levels. And as Mangalam was highlighting, right, Reliance remains that very important point. It led the index higher yesterday, but for now the stock trades absolutely flat, and the 24,000 level is something that the bulls would want to hold on to before they head into another expiry session tomorrow. But how should you be positioning yourself in the last hour of trade? Bonanza Portfolio's Mitesh Thakkar is here with his closing strategies. Mitesh, good afternoon. Thank you for joining in. Well, you hold on to 24,000 today for the index. What is the data indicating to you, and what is the next level of resistance that you see on the upside?
Good afternoon, Hormaz. I think,
Right. Seems like you've lost. Okay, it's a little scratchy. Yeah, go ahead. Go ahead. You'll have to start again.
Yeah. What I'm trying to say is that the Nifty, is difficult to.
All right. Seems like it's a bit of a scratchy line. We're unfortunate, to not get clearly what Mitesh is trying to say right now. Though, watch out for a couple of these electronics store sellers. So we have Electronics Mart India, which is up around 8%. Over the last few weeks, we've been saying how demand for ACs has increased. There have been a lot of sales for induction cooktops, etc. as well. And now it's slowly beginning to show in the names of all these retailers as well. So Electronics Mart is up around 8%. And the other peer for them is something like an Aditya Vision. Not necessarily apples to apples, but that stock is up around 4% right now as well at the high point of trade. But the one which is seeing a sharp sell-off is Tata Motors.
Oh yes, 9% lower on the stock, and that's possibly being the accident of the day. The top loser on the index now. Why is that so? Sudarshan is here to tell us just that. Sudarshan.
So JLR, which forms almost 70% of total revenue for Tata Motors Passenger Vehicle, is holding its Investor Day of 2026, and that is still underway. But ahead of that investor meet, company has released a presentation giving the outlook for FY27. So on three metrics: first, revenue growth. Company is looking at 13% revenue growth. EBIT margin, company has given the estimate or outlook of 4%. This is what concerned the market because analyst expectations somewhere were in the range of 5 to 6%. And about the operating cash flow in FY26, it was minus 2.3 billion pounds. Company is saying that it will achieve break-even in FY27. So apart from margin, other outlook is looking promising, but on the margin front, it's disappointed the street, and that's the reason you are seeing this knee-jerk reaction. Apart from the outlook, company is saying that the main focus going forward would be on one market, that is North America. And their aspiration is to increase the size of North America to the size of what the JLR's total size at this point is. Apart from North America, there are two major markets, future markets they have called it. One is West Asia and second is India. And apart from that, they had made certain commitment regarding the investment till FY29. They are saying that it's on track and they will be making investment of 18 billion pounds by FY29. But this sharp fall you are seeing mainly because of the margin outlook that company has given of 4% for FY27.
9% lower now on Tata Motors Passenger Vehicles, 357 and 3/4. Mitesh, if you're back with us, first your view on the index that you are trying to highlight, and then of course your trading ideas, and if you can share a view on Tata Motors PV as well.
Yeah, so I think on the index now, my view is that the market is positively biased and therefore there's a higher chance of us heading beyond 24,100, possibly to the next support, the next supply levels of 24,350, 400 zones, maybe even cross that. So I think overall view on the index is positive. On Tata Motors, I think that's... just a minute. Can you just give me a minute? I think the chart is not loading properly.
But you can give us the picks that you've, already prepared for us, and thereafter we'll ask you to, look at the charts of Tata Motors, Mitesh.
Yeah. On the stock side, Mangalam, I have two buy calls right now. Eternal is a buy. I think that's the stock which is just trying to break above the previous levels of 254 to 55. So buy with a stop below day's low. 253.2 is a day's low. So keep a 253 as a stop. And buy for targets of 270 to about 272. And Union Bank is a buy with a stop at about 168.5 and a target of 180 can be looked at.
Right. We'll let you, load the Tata Motors chart and we'll come back to you in just a bit. Meanwhile, we'll just get a fundamental view as well. Sid Khemka, Head of Research at Motilal Oswal, joins us now. Sid, Motilal Oswal Wealth, that is. Thanks a lot for joining in on Tata Motors PV. I mean, one would say that given the sort of commodity cost inflation pressure that all these auto companies are facing, it is only imminent that their margins at some point would come undone or guidance would be, lowered. Now that has happened, the stock is down 9%. Would you attribute it to a knee-jerk reaction, or maybe there's something more that the street is fearing?
Yeah, good afternoon, Mangalam. I think if you look at Q4 numbers, we're pretty strong, and that gave some confidence to the street that things would improve from here on even on a consolidated basis, as well as we are seeing the strong, healthy momentum in the domestic PV business, which was supported by new launches. The growth outlook for exports was pretty strong, as well as the product mix was improving. However, our view remained a bit negative. We believe that there is persistent headwinds at JLR. There is a rising input cost, which would have impacted the margins, which the management has now come out and kind of given out in black and white. Plus the geopolitical uncertainties that continues to kind of be a biggest kind of headwinds for Tata Motors. And if you look at the global market, JLR, the EV business deceleration that is happening globally, that is also a cause of worry. I think there are some news reports that I was reading today that BMW has also cut down its growth guidance, mainly in some of the regions like China. And I think in the analyst meet, Tata Motors has been focusing on North America, but that is again a market where inflation, cost input, that is likely to continue. So overall, we maintain a sell rating on Tata Motors Passenger Vehicle. We have a target price of 303, and we believe that the near-term challenges at JLR plus the elevated cost pressure that would continue to weigh on the stock price.
That's another 16% downside from current levels. Siddharth, stay on. Mitesh, on to you for the charts. If you have the chart for Tata Motors PV loaded for you.
Finally. So I think there is very clearly a negative breakdown trend. As long as the stock is below 372, 374 in the short term, expect a test of 335. And I would, not be surprised in case the stock further declines to 320. So in the short term, I think the chart is negatively biased.
Right. We'll ask you to hang in once more and perhaps try and load the Dixon Technologies chart as well. That's the stock which is buzzing on the back of a bullish note coming in from JP Morgan. Upasna joins in with more. Upasna, there is hope of that Vivo JV coming in. The company has also informed the exchanges that they are awaiting clarification from the government, but brokerages are now starting to build in the positives from this.
Well, certainly there is an expectation of receiving the Vivo JV approval very soon since the past 2 days. Now, JP Morgan on the back of this has given an overweight rating with a target price of 12,700 per share. It has put focus on the company's Vivo JV approval scenario. Well, it has stated that the Vivo has 35 million annual volumes in India, of which 67% will come to Dixon if this JV comes through. As per management, JV could lead to a revenue uplift of nearly about 30,000 crores with higher average selling price compared to its existing mobile phone portfolio. If the JV approval comes in June, then operations are likely to start after 60 to 90 days. That's in Q3 FY27. And with this assumption, it expects the mobile revenue of nearly about 11 million contribution in FY27 and 22 million in FY28. Now, brokerage believes that this could drive a 24 to 39% upgrade to revenue estimates of the brokerage from FY27 to FY28, but a lower EPS upgrade that is nearly about 13 to 18% is what they have highlighted. So certainly the stock remains in focus on the back of this.
JP Morgan's target was 12,700, so it's above that target. Upasna, thank you for that. Siddharth, you also came out with a note on the entire EMS space yesterday, and you also reiterated your positive stance on Dixon Technologies. For a low-margin business like Dixon, how important is that one JV for the company? And more importantly, so because of the fact that the memory price headwinds and so on and so forth, they continue to persist. There is no change there.
Definitely, I think some of those commodities, the price deflation is definitely impacting. But to their credit, you have to say that some of these companies, especially in the entire EMS, Indian EMS companies, they are trying to add value-added products. So the product mix is shifting. There is increasing localization, which is also helping in better cost dynamics. Plus, if you look at a company like Dixon, they have also entered into a JV with Taiwanese Gemtech, which is into the telecom space. So that will also deepen Dixon's telecom vertical integration, moving into higher value-added components, plus margin accretive to its overall portfolio. So I think the JV with Vivo is pretty important because 67% of Vivo's India volumes would come to this JV, which is almost 30,000 crore kind of a revenue opportunity, and at a higher margin compared to Dixon's existing mobile portfolio. So I think that's also a welcome step. Overall, we see that margins should kind of improve with the product mix, and we are seeing a steady growth. Order book is pretty healthy. So about 33% CAGR is what we are expecting in the revenue, and about 36% in net profit over the next few years, based on which we believe that the company, the target price that we have set is 14,600. We believe there is still room for 10 to 15% upside even from current levels.
All right, 10 to 15 upside from current levels as well. Sid, I wanted your thoughts on Trent as well. It's a stock which is surging right now, up 6%. In fact, this week it's up 12%. So it's been gaining some traction. It's a high beta name, right? Every time the sentiment in the market is bad, this one falls more than the other parts of the market. And now that the sentiment in the market looks like it is improving, this one's investors are flocking to this one. What's your view here? The board has an enabling provision of 2,500 crore rupees fundraise via rights issue. Do you think this move is in anticipation of something like this?
So yeah, Mangalam, I think there are multiple factors at play here. A, post the bonus, I think the liquidity has improved. B, the stock, if you look at fundamentally, last year's on a low base, Q4, they started reporting better numbers. Footfalls, I think that is a key factor for the retail business where we are seeing improved traction. And again, as I said, Q4 numbers were pretty strong. Now with the fundraise, I think the growth that the market is sensing is that the management is now looking for the next leg of growth for which the fundraise is there. I think valuations after the sharp fall compared to what it was earlier now looks attractive, and hence we believe a mix of all these factors. Plus, I think the overall numbers that we are expecting, that there is a higher margin which is being built in. We are expecting a steady about 22-23% kind of net profit growth over the next 2 years. And hence we believe that at current valuations, things look interesting, and we have a buy rating with a target price of 3,500. So we are constructive on Trent given the improved business dynamics.
Mitesh, just before we let you go and before you join us for our closing trades, both Dixon and Trent from sub 10,000, Dixon is now back towards 13 and Trent too is 2,000, 2,100 now, a very firm base for the stock.
Disclaimer that Dixon, I've been trading, so vested interest, but there's clearly a breakout about this levels of 11,800. If you look at the chart, in February, we got about 6 or 7 highs around that level, and then again back in May 26. And I'm talking about February 26, and then May 26, we again got 3 or 4 highs, intraday highs around this 11,800. And now, day before yesterday, there was a breakout. I think the stock is heading towards at least 13,800, 900 zones to begin with, maybe even higher, but that's the first target. Which was the other one?
Trent.
Trent, yes, that's given some kind of a breakout from consolidation. Since April, I think the stock was contracting between 29.30 to about 26.90, and now it's broken out. Again, positive setup. The first target should be around 32.50 over here, and in a good case scenario, even 34.
All right, 32.50 and 3,400. These are stocks which are surging right now, and among them, we also have Schneider Electric. Look at that chart. It's up 4% for most part of today's trading session. Just the last half an hour or so, it's got another fresh set of legs for its rally. It's now up at the high point with a gain of 8%. Vinny, Ambit is bullish on this.
Absolutely. We have that note that's coming from Ambit. They're initiating coverage on Schneider Electric, buy rating and target price of 1,400 rupees per share. Do not forget, all the capital good players today are buzzing in trades. So those T&D, grid players, all of them are managing and holding on to strong gains. Now, Schneider Electric, what's the reason behind this positive coverage coming in from Ambit? Do not forget, it's a strong play and proxy play that comes in for that multi-year data center theme. Around 10 to 12% of the revenue currently comes in from data centers. In FY20, that revenue just stood at around 3 to 4%. And that's the play that they believe will grow forward and lead better growth for the company as well. Now, Ambit is estimating around a 50% CAGR growth for data centers over FY26 to FY29 and will drive an overall group sales growth, CAGR growth of around 24%. Schneider Electric Infrastructure, that's the Indian listed company, right? That will also benefit from Schneider Global's strategy that is there to focus on India, to make it a manufacturing hub for them as well. And that is a benefit that will come in for the Indian listed entity. Now, Schneider Global's strategy would also lead and drive a ramp up in terms of exports for the company as well. To 15% is the expectation is what Ambit has over in FY29 versus currently a 12% export is what they have. In the short term, yes, maybe some bit of a concern that comes in on the margin front because of the commodity inflation. But overall Q4 EBIT margin that came in at around 6%. Ambit believes this is the bottom, and now from here on we'll start seeing the improvement coming in. Companies focusing on that service plus data centers plus transactional products, so the mix on that front will also support the growth in terms of the margin improvement for the company as well. Ambit is forecasting a revenue CAGR growth of around 24% over FY26 to 29. Positive note, and today that's why the stock is passing.
Indeed, doing well for itself as Schneider. In fact, 4 out of the last 5 sessions, the stock has done very well for itself. Siddharth, any coverage on Schneider Electric? And if not, this entire data center theme, the component suppliers and so on and so forth have had a very good year, Schneider included. The stock is up 75% this year.
Yeah, I think so. Schneider, while we don't have coverage, but as you rightly highlighted, I think this entire space after what has happened globally, the pace of growth in AI as well as what happened in West Asia crisis. So a lot of investments are expected to come into India, which has already been committed towards data centers, AI centers that have been set up. And we are seeing a huge demand for companies in this space. So you have something like a Siemens Energy, you have CG Power, you have some of the other companies which are kind of seeing that kind of growth. I think that's a space which structurally looks good. There's a huge order book inflows, and what we are expecting some of these companies to report almost 25-30% kind of earnings growth. The only challenge is that some of these stocks have run up sharply and may be closer to their fair valuation, and hence while we continue to remain positive, for example, we are some of our preferred picks in the space, Siemens Energy, Siemens India, these are some of our top picks within this space that we like. And we believe that there can be a steady 15-20% growth of share price appreciation over the next 2 years.
Right, that's the word coming in on the energy capital goods space. Hold on to that thought, Sid. In fact, what we'll do is we'll thank you on that note. And as we take that short break, pull up a couple of these other names as well. The top contributor on the Nifty today has to be Bharat Airtel, up at the high point of trade with a gain of almost 1%, has a decent weight on the index, the third largest company in the country when it comes to market cap. And we're also seeing continued traction on the defense name, in which BEL really stands out from the frontline end. It's moved higher as well to the high point. Take a short break, come back, tell you more on the markets. Our alpha manager, Jitendra Shriram, who's a senior fund manager, Baroda BNP Paribas Mutual Fund, joins us.
Welcome back. We're still holding on to gains of around about 50 points on the index, but the broader market names are the ones that are doing the talking here. IDBI Bank continues to hold on to gains of around 18 odd percent. The one that's seeing profit booking though is BSE, is down around 4% today and is also the most traded stock in the broader markets as of now. But sources are telling CNBC TV 18 that the NSE is all set to file its IPO papers today. Let's take a deep dive into all the matrix and go across to Yash for all of those details. Yash.
Well, we've been reporting since morning that NSE is likely to file its IPO DRHP with market regulator SEBI today itself. That is expected to happen sometime in the evening today. As far as the size is concerned, it is higher than what market was anticipating till yesterday. Market was anticipating about 4.5% to about 5%. NSE is likely to have a size of about 6% when it comes to IPO, and the size of this fundraising is expected to be around 30,000 crore rupees, which makes this IPO the largest ever IPO fundraise in the history of Indian markets. As far as the selling shareholders in the IPO itself are concerned, these include State Bank of India, Bank of Baroda, Stock Holding Corporation, Indian Bank, GIC, New India Assurance, United India Insurance, National Insurance, Oriental Insurance, whole host of public institutions as far as the country is concerned. What we've tried to do this time around is to understand the sensitivity of the value unlocking or benchmarking the value which these institutions will get to see as far as the IPO itself is concerned. Taking the reference point of a valuation of nearly about 5 lakh crore for NSE's IPO, what we derive from that is that IFCI, its holding is about 2.33% stake as far as NSE is concerned, and that at a valuation of 5 lakh crore for NSE becomes 51% of its market cap. For State Bank of India, the value is about 3.2%, and at 5 lakh crore of NSE's valuation, its value becomes 2% of State Bank of India's market capitalization. For GIC, the stake is about 1.64%, which it holds in NSE, and the value at the valuation of 5 lakh crore for NSE becomes 13% of its market cap. Finally, New India Assurance with about 1.42% stake, which it holds in the National Stock Exchange, the value at 5 lakh crore of NSE's market cap becomes about 34% of its market cap. So the most sensitive one, IFCI, next one, New India Assurance, followed by GIC, followed by State Bank of India. A very quick look at the valuation matrix on a forward basis, FY27 estimated EPS, NSE trades or is expected to trade at about 39 times, whereas BSE as well as MCX, both listed exchanges, BSE trades at 50.5 times and MCX at 41.1 times.
Right, Yash, thanks a lot for that comprehensive analysis on the NSE value unlock and the players that are there, the sensitivity to their market cap as well. Good time to now welcome our Alpha Manager of the Day, Jitendra Sriram, who's the Senior Fund Manager, Baroda BNP Paribas Mutual Fund. Before we speak about the exchanges space and the outlook on the financial space at large, I wanted your thoughts on a lot of these power ancillaries or power-related plays. Schneider Electric, for one, is up around 7%. We're also seeing some traction in names like Hitachi. There is CG Power, which is higher as well, and a bunch of these other names too. I've seen your fact sheet, and Hitachi is something that you hold prominently in your portfolio. So what's your thought on this space right now? Do you continue to hold it despite people believing that this is a little expensive? And why Hitachi over the others?
So broadly, good evening to all your viewers. So broadly, if I look at the entire space, see the macro triggers are fairly strong. So even if I look at the power T&D spend, the fact that, the government is contemplating a number of HVDC projects, all these are actually very potent drivers for a multi-year growth trajectory for all these power equipment names. So, and even if you look at some of the names that we own, for example, Hitachi, etc., if you look at the global TAM and some of their parents had global investor meets of late, and if you see the global TAM that is being being put out up till the turn of the decade, what you're seeing is a very, very strong momentum which is there. It's evident even in the local arms that their export revenues are consistently growing. So you have truly a kind of a double engine where both the domestic business is growing as well as the export footprint is expanding over time. So I think, you are right in the point that, maybe the last leg of the rally since March or so has been quite brisk. So you may see the stocks consolidate for some time, but I think it's something where the multi-year story is quite robust as such.
Jitendra, good afternoon. Thank you for joining in. The NSE is all set to file papers for the IPO, but the entire capital markets theme in general, with the kind of re-rating that BSE has seen from levels of around about 1,000 rupees, now well over 4,000. Where do you position yourself within this space? Do you want to play it through the exchanges, say the BSEs and the MCXs, or the wealth managers, or even the broking firms for that matter?
So the entire capital market segment of financials is probably the best placed at this point of time in terms of the growth trajectory that is there. So when you look at the BFSI space and you look at traditional banks, you look at NBFCs, then you look at a lot of these kind of capital marketplace, I would say capital market space is one which is showing them the strongest growth. And also a lot of these platform names, especially the exchanges, there is a very big element of non-linearity in a sense that once the tech spend is in and once you have the entire setup in place, incremental revenue largely flows to the bottom line. So to an extent, the non-linearity in margins versus revenues is fairly strong. And which is something that will work even for certain other things like, online brokers or, even stuff like some of these wealth management firms, etc. So there is a good element of non-linearity compared to, say, the traditional models of financing like banks and NBFC, which are always having to rely on their core level of tier 1 capital to the extent that they can grow forward from that.
Right. Of some of your holdings, we also see some telecom exposure out there. So while the clean play out there right now is Bharat Airtel, word is that maybe there'll be another listed player as well, which is the leader. Would you be backing that? Is there any, thought around the telecom space? And would you also take a punt on the third player, which now seems to be getting its act together?
Well, when I look at the telecom space, so obviously it's a very consolidated space. So I don't think if we are positive on the spectrum on the entire area that is there, I would say that all the players should do well. So at least, that kind of vicious competitive intensity that was there, say a decade back, and you can actually see it that, a dozen players have compressed down to a bare 3+1 state-owned player. So to an extent, it has become a very, very consolidated market. The fact is that, as any new large player wants to also come to the markets at some point of time, there may be certain expectations building in that, they may be a little easy on the pricing as well as, they may allow some more pricing growth. See, when you have players with 40-45% market shares in this space, if they don't raise prices, then the entire spectrum is not going to be able to raise prices, because when you have a large player not raising prices, then obviously market share losses will be there. So that is the hope which is there, that whenever these events come close for the market, you might see more than volume, you might see the price action starting to filter through, which could be a very positive trigger, because again, these are something that will just flow straight down to the PBT. The only loss is tax after that.
Just as we move into the final 30 minutes of the trading session, the index has started to take a leg higher yet again from back towards levels of 24,000. We are headed back towards the 24,100 mark now. 100 points higher on the Nifty. A sharp up move seen over the last couple of minutes. The day's high, of course, 24,108. Remains to be seen whether a supply emerges yet again. at that 24,100 level. And of course, the bulls will be the ones to watch out for on the 24,000 mark on the downside. You know, Jitendra, the one segment that has been in the headlines all through and through have been the metal stocks, and particularly so the aluminum related plays, be it Hindalco, the newly listed Vedanta Aluminum, Nalco, all of them were smashed in yesterday's trading session as well. With the risk premiums coming off, there are bear case scenarios being projected that global aluminum prices may fall as much as 30 to 40% as the risk premium wears off. Where are you positioned within this metals theme, ferrous, non-ferrous, or do you just see it as a tactical play every single time?
So we like the metal space. So I would say I have an issue that, both the ferrous and the non-ferrous is areas that we like, but we are slightly more pro non-ferrous over ferrous. So in terms of relative weights, we are probably a little bit more exposed to non-ferrous, which includes both zinc and aluminium, which are the large metals in India as such. And on the and ferrous, of course, is there. But having said that, the comment that you made about yesterday's smash, I would say that, I think some of these numbers that are floating around seem a little too excessive. So just to give you an example, the kind of inventory that rests in the Middle East is probably 2% of annual global demand, which is what is the supply that can come in, because now the big expectation is with the war off, you may probably see the straits open up, and as a result, that inventory can come into the market. But that is a 2% thing. See, capacity may be 9%, but what the inventory being held is what is causing some stress in the market. But having said that, even if I look at aluminium forward prices, say for the year end or so, the backwardation levels are about $200. It's not like a very material number. So if the spot is around 3,400, you're probably seeing the forward prices hover at around 3,200 odd. So it's not that the Indian players who actually are at a very good part of the cost curve are going to have a big stress at that point of time. They'll make money. They'll make probably a little bit lower money than what was anticipated earlier. But it's not that these are very frightfully expensive sectors that they'll start looking very expensive on a $200 knockdown.
What have the new additions to your portfolio been?
So if I were to take a look at the last 2-3 months ever since this war, I would say that one area that we have gone a little bit higher has been the tech space. So you saw 2 rounds of correction. February was obviously the AI-related carnage that happened in tech. In April, then there was a growth scare given carnage, which happened again in tech. We started seeing values turning a lot more favorable for that. And obviously, there was a tailwind of rupee for domestic earnings as well. So to an extent, that's an area where we used to be underweight. We are more closer to neutral now. So that's one area that we have raised exposure to. The second area where we have taken up a little bit of an exposure is consumer staples. Again, it's a little bit of a offbeat one in a sense that typically what happens in a scenario where primary articles are on an uptick, and there's a very high chance of that, especially with the weak monsoon that we're currently witnessing and the prognosis that the IMD has laid out. I would say that, the difference between branded and the local competition tends to narrow down. So there are market share gains for organized industry which starts kicking in. So that's something that we are playing. So to an extent, that's an area that we have added exposures to.
Pleasure having you as always, Jitendra. Thank you for sparing time and joining us this afternoon on the show. Take a short break. On the other side, as always, we'll get you a check of what dealing rooms are saying in D Street Chatter and also get you some BTST ideas from our experts.
You run the show, but if and when you decide to step away, the show must go on. Ambit First, Family Office, for India's first families.
The best investment one can make in life is finding the right life partner. That's why we created VIPshadi.com. Register now.
मेरा रुतबा है मेरा सिग्नेचर, मेरा जज्बा है मेरा सिग्नेचर, बेबाक है मेरा सिग्नेचर,
Signature Finest Silver Ilaichi, a premium product from Dilbar Group.
There are some shades within us that only these walls see. To let you safely live all your colors, we have added advanced defense to all of ours.
Minutes or so with not a big move in either the Nifty Bank or the Nifty IT index. And that brings us to what we had spoken at the start of the show itself, Reliance. That's the stock which has moved strongly. And if you just look at it, it's found its place and the contribution right now. It wasn't present about 15-20 minutes ago. But look at the intraday chart of Reliance, and that is what will tell you the story of the day. The top contributor obviously is Bharti Airtel right now, which has moved to the high point of trade as well. But that vertical spike in Reliance has led to a 70-80 point move on the Nifty itself, which means that, if the market sustains at current levels and if the Nifty Bank moves higher as well, there is a chance of a further up move as we move towards the closing. But is that the sentiment on D Street as well? Let's, as always, go across to Nimesh Shah, who's joining in with an insight into what those dealing rooms are saying right now.
Hi, Mangalam. So another strong day for the markets. I guess there is a sign of short covering as well in today's rally. For the last couple of days, the feedback was if the Nifty decisively closes above 23,950, you will see some short covering rally. So that's playing out to some extent in today's market. From a flow perspective, again, a mixed day. There are signs of buying now. Today, the sector clearly seems to be the PSUs, the PSU Defense Index, the PSU Bank Index, all the buzzing. And big move on those names. A bit of buying interest as well, my sense is in the defense stocks today. So not only PSU defense, but even private defense names are buzzing in trade today. The defense index is up almost 300%. And broadly, the breadth seems to be quite strong in the broader markets as well. So a big momentum, PSU banks, PSU stocks, all are buzzing in trade. But looks like, at least in the large cap names, there are some signs of short covering as well after the recent up move.
You mentioned defense, Nimesh. Take a look at Paras Defense, 18% higher now on the stock at the highest point of the day, 1287 actually on Paras Defense. Some very, very strong moves there on the stock. But what about specific stocks, Mitesh? What are you hearing from dealing rooms there?
So the first stock on my list is Lloyd's Engineering Works. We normally don't talk about this name, but it's a small company, part of the Lloyd Group. That's been buzzing in trade today, up 8-9% on large volumes as well. There is going to be a corporate development in this company very soon. So there is a board meet tomorrow for fundraising. My sense is the fundraising is largely for an acquisition. So that's something to watch out for in Lloyd Engineering Works. So that's the first name in my list. The second is Tenneco Clean Air. Well, the stock has been consolidating off late. Expect a very large block deal in Tenneco Clean very soon. Most likely the promoter entity could be a seller in that particular block. So whether it's a block or a OFS, but watch out for a large transaction there in Tenneco. The third name is Reddington. Even that's been consolidating in a narrow range of late, but seems like some bit of interest is back in this particular name. And there is a buzz of a large order bin as well for the company very soon. So watch out for that in Reddington. And the last is Borosil Renewables. In the last 1 week, the stock has moved up and on good volumes as well. The volumes have picked up at HNI Desk. Some large HNI seems to be actively buying as well. And there is a bit of interest back for sure in Borosil Renewables at current levels.
Right, we take that point. Thanks a lot, Nimesh, for that. Just look at Trent once again. It's up 7% now. Like we pointed out earlier in the show as well, when the market typically moves higher, Trent is a stock that moves a step ahead of the market. When the market's lower, the stock is an underperformer. In fact, from its peak, despite this up move that we've seen, still down about 26%. And from its all-time high of a little around 8,000 rupees, the stock has seen a big gash as well. So some improvement in sentiment. The bonus shares now hitting the street, and at the same time, if you look at the fact that the company has an enabling resolution of taking 2,500 crores as a rights, by way of rights issue, raising that sort of money is keeping the stock excited in trade today. Let's go across to Mitesh once again for the tomorrow trade. Mitesh, what should one buy or sell today for a reverse trade tomorrow?
Well, I think defense names you mentioned, Mazgaon Dock is on my radar. That's a BTS due to stop at 25.35, and a target of 25.70 can be looked at, and the 25.75 can be looked at. And the other one is TCS. I think from the IT pack that's showing first signs of reversals. TCS is a BTS due to stop at 22.05 for targets of 22.50.
All right, take that point, Mitesh. Thanks a lot for that. Let's look at the market once again. The F&O space. We have the Nifty Bank, the Nifty IT, all of them doing well today. The market's moved to the high point of trade. And, while all the engines are firing, the last up move has been led by Reliance, even as Bharti Airtel is the top contributor to the frontline index, as we've been pointing out through the course of the show so far. Interestingly, the range that the market's made for itself is between this 24,000 and 24,100 right now. 24,000 put comes up for you, premium of 140 rupees, telling you that 23,850 thereabouts is strong support. But the 24,100 call writers, they aren't letting go yet. 24,100 has about 1 crore shares in open interest, and it's about 130 rupees in premium there as well. So 24,100, 24,250 thereabouts, where the 100-day moving average is a bit of a resistance zone for the frontline index. But a lot of stocks seeing short covering. Trent, we pointed out earlier, but look at Bharat Dynamics. There too, the open interest is lower and the stock is higher. There is indicative of short covering. A lot of longs added on this power T&D space. So GE Vernova T&D, another stock which is up 6%, long positions there. And BSE is one that stands out on the way down about 4% right now at the low point, with a lot of shorts piling on that stock.
Shorts positions seen on BSC, so interesting levels Mangalam highlighted there from the F&O side of things. And just as he was mentioning Trent, you look at the volumes as well. Over 50 lakh shares have been traded now on Trent, in fact 51.5. And the last time Trent saw such volumes was all the way back on the 6th of January of this year. So the highest volumes in well over 5 months for Trent. Now BMC has announced a series of water conservation measures in view of the delayed monsoons and depleting water reserves. Earlier we spoke to Niranjan Hiranandani, the chairman of the Hiranandani Group, and Knight Frank's Deben Moza on the impact on construction activity in the city. Here's what they had to say.
The water table is already down to 10%, and with the El Nino effect having taken place, and that is being broadcast by the meteorology department, I think the time was there. I think it should have come up maybe a couple of weeks, days before. So I think it is important to actually take up this action very quickly, because you can't have a zero supply of drinking water in the city of Mumbai. Of course, it affects my construction. Of course, it affects the metro and the other projects. Of course, it affects all the sites which are working on and require water, especially drinking water for the construction labor and other things over there. And of course, there'll be a postponement of the construction buildings, which will be there for various people that we are constructing.
The most impact would be on affordable housing, because the margins are very thin for the developers. So they have to source the water from either the private tankers or the recycling facilities, and spend a lot of money on transportation. The water shortage would lead to delays, and if it prolongs further, there would be impact on the construction cost for the projects which are ongoing, especially the large ones, affordable housing, infrastructure projects. So it's high time we realize that we need to conserve water, use recycled water. We don't need potable water to be used in all the activities we do.
Mayuresh Joshi, Director Research at MarketSmith India, is now joining in. Mayuresh, good afternoon. Two Tata Group stocks are seeing contrasting fortunes today. Trent is one that is doing very well in today's session, but not so good for Tata Motors Passenger Vehicles. Which one among the two? Of course, not a direct comparison, but Trent or Tata Motors Passenger Vehicles? Your thoughts?
Afternoon, Hormas. I think two things. One, I think in terms of expectations of consumer spending, specifically in metro cities and tier 1 cities, expected to come back and bounce back very, very smartly in the second half. And the expansion of the Zudio stores that is happening in tier 1, tier 2 cities as well. I think it is an obvious indication in terms of expectations of the growth dynamics that the management has probably put forth. However, the disclaimer for Trent might be, with the El Nino effect expected to play out, does that have some element of effect in terms of end user demand when it specifically comes to tier 2 and tier 3 cities? And is there some element of a pullback that is probably seen in these areas over the next few quarters? They're managing the raw material volatility quite well as we speak. And therefore, I think the entire thesis in terms of expected volume growth translating into double-digit revenue growth and better margins is something that the street is working with. For Tata Motors, Hormas, I think the expectations in terms of a significant amount of growth expected to come through in terms of the key markets, specifically North America, is something to be watched out for. But I think it's only the forward-looking numbers which will probably now play effect in terms of how the stock will probably move. And again, I think the end user demand, inflation is probably expected to also play some element of a demand slackening effect, at least over the next couple of quarters. And therefore, how does that play out ultimately in terms of volumes, numbers, margins is all to be seen. So I think Trent, a relatively better story, if I have to put it that way, compared to that.
Okay, what about the jewelers? You know, they had taken a bit of a knock when a lot of these measures were taken on making gold imports a little more expensive. There's still the customs duty, which is underway. But over the last few days, you know, with a return in the hopes of peace and at the same time increase in gold prices, gold financiers have done well. But look at some of these jewelers. You know, Kalyan Jewelers this week has done extremely well, up in double digits. We have Thangamahal Jewelry, which has done extremely well as well. That's also up in double digits. And Titan right now is currently at the high point of trade. So all these jewelry companies back in focus.
Absolutely. And again, I think the expectation here is the government going to claw back in terms of the regulatory measures that they have probably put on in terms of gold, specifically with the West Asian crisis now probably coming close to a closure. The impact in terms of the rupee also expected to come down. And therefore, I think, A, regulatory measures, B, I think the wedding season will be well and truly on as we speak over the next few weeks. And therefore, I think there will be some appetite in terms of wedding jewelry, gold jewelry, studded jewelry, as that remains probably one of the biggest markets as we speak. The third element, obviously, is that the unorganized market, Mangalam, specifically for jewelry manufacturing companies, still remains relatively large. And with all the compliance checks probably being put in terms of the tab, in terms of the spend of 2 lakhs, the carriage that probably comes into play, the certification that probably comes into play, the GST, e-way bills that comes into play. I think a tectonic shift is expected over the next few years. And therefore, I think from a gold standpoint, I think jewelers is something that a couple of stocks we continue holding in our global portfolios, because the belief is that over a longer period of time, all these elements will play out in terms of the ratings and rankings of these stocks. So I think Titan and Thangamahal is something that we continue holding on to our global.
Mayuresh, stay on, lots more to ask you, but Kevin Walsh kicks off his first meet as the Federal Reserve Chair, and the probability of recession and the outlook for unemployment remain front and center. CNBC's Fed survey sees the US economy maintaining resilience and expects no change to interest rates at any meeting all through 2027 as well. CNBC's Steve Leisman brings us the highlights.
Respondents to the CNBC Fed survey see the U.S. economy remaining, the words you just used, remarkably resilient to the oil price shock, revising up their growth outlooks. Take a look at GDP. Was 193 in the April survey, now up to 220, a little bit more for 227. Think of these as growth a bit above potential. And the downgrade that we had from the war has now been largely, but not entirely, restored. Recession probability also sinking back down to 25%. A little bit elevated, but not too bad. You can see it was higher right in the wake of the beginning of hostilities. The unemployment rate, meanwhile, seen remaining mostly unchanged, 4.3%, an improvement from the prior forecast in April, but really no progress at a good rate. Now, Guy Labat, chief fixed income strategist for Janney Montgomery Scott, writing in with a survey, the period of short-term labor market fragility has passed, leaving the central bank's mandate more clearly short on one side than the other. Well, what is that side? That would be the inflation side. Take a look at what's happened here to these numbers. Up a pretty good chunk there for the CPI outlook for this year, but seen coming back down maybe towards target, maybe a little bit above target in 2027 to 267. The expected response from the Warsh Fed as of now, nothing. The average respondent sees the Fed leaving rates virtually unchanged through 2027, right around the current level of 363. That 352 reflects a couple folks in there looking for the potential for a cut, but largely unchanged. The recent potential, though, for an Iran deal and the chance that it keeps bringing down oil prices and core inflation along with it, that could offer Warsh some flexibility to move. But for now, the collective thinking is that the Fed removes the easing bias in the statement and coasts in neutral for at least the first several months of Warsh's new tenure.
All right, with that, we'll take a short break. But remember, you will have to watch Kevin Warsh's first decision as the Fed chair on CNBC TV 18. You can get the CNBC Edge by watching it 11 p.m. onwards on this channel.
Counting down to the close of trade, and the index continues to remain around that 24,100 mark. So there is a healthy up move that it has seen from lower levels just a few minutes ago, led by Reliance Industries. There is still some resistance around the 24,100 mark, but of course it's a 1,000-point recovery now from last week's low of 23,070. So good going for the market's fourth straight day of gains. Mayuresh, one segment that has done very well in today's trade has been the defense defense names, and they've seen some very, very sharp buying interest. There were some reports also of a UAV order from the Indian Air Force. Where within the defense space are you bullish on?
So, Arvind, I think the underlying for the sector as a whole is that the sector already has a very decent order books of the stocks that are largely comprising the sector, and therefore revenue visibility over the next 3 to 4 years is a given. The only challenge that probably remains is that in a particular financial year on an annualized basis, you'll obviously get a quarter where execution will probably be a tad bit below par, and where the numbers might just start coming off. But structurally, I think over the next 4 to 5 years, the story probably remains intact in terms of the revenue visibility, in terms of the margins at which these orders have been tendered, and the execution, which structurally will remain very, very positive, both in terms of providing to the domestic customers and the huge export opportunities that probably exist as we speak. So I think stocks like BEL as an example, stocks like HAL as an example, in my opinion, have a long way to go in terms of all these parameters put together. And the ratings and rankings, as we see it, markets will absolutely look fine. So anybody holding these stocks should continue.
Right, we take that point. Just, a bunch of stocks which are doing well right now. We have the internet companies as well. There was a UBS note this morning. The sum and substance of that note was pretty simple, that all of this year, these stocks have corrected anywhere between 10 to 30%. But looking at the ordering activity in all these, parameters and the current market sentiment, things are looking up. So maybe this correction is a buying opportunity, which is why they are, doing well in today's trading session. And that's been the hallmark of a lot of these platform companies as well. When the market was not doing well, Eternal for one, from the peak, it's seen a big cash. But as the market sentiment improves, we see buying return to these names. So look at Nykaa. Nykaa is up 4% right now as we speak. Is there any one internet company that you like in particular, Mayuresh? There is obviously from beauty to urban services to, quick commerce to food delivery, so many.
Absolutely, Mangal. So I think we don't have anything in the portfolio right now, but a couple of stocks that are on our watch list as far as this entire space is concerned. One that you're flashing on your screen, Nykaa, a very decent set of numbers in Q4. And the expectations in terms of how volumes will probably play out in terms of not just the own brands that they're probably introducing, but the kind of product mix that they probably got and serving the right customers. I think what really matters is that in an El Nino year, the expectation largely is that if rural consumption comes off in tier 2, tier 3, the urban or the premium urban consumption might still remain intact. And therefore, I think Nykaa is one story that probably can be something where numbers might actually hold up. And the other one is urban company. I think, obviously, I think the numbers have been reasonable as we speak. The only service element which probably lags is their instant service element, which probably will also at some point of time start performing well. So I think these two companies probably on our analysis.
Mayuresh, thank you for sparing time and joining us this afternoon. Counting down to the close of today's trading session. It's been a good day for the Nifty yet again. Fourth straight day of gains, now nearing the mark of 24,100. So another 90 points added to the tally in today's session. Undoubtedly led by the banking names and, of course, Reliance Industries that continued to contribute to the upside. On the top gainers, of course, Trent leading the charge by a distance, 7% higher, closing above the mark of 3,000 for the first time after November of 2025. So it's a big level that the stock has managed to conquer in today's session. And along with that, some defense names as well doing well. Bharat Electronics 3.5% higher in today's session. And of course, the platform companies, as we were just highlighting, Eternal ending the session with gains of around close to 1.75%. And of course, PSU banks like SBI and the rest doing well for themselves as well. On the downside, well, not much to talk about, barring the fact that Tata Motors Passenger Vehicles had a very forgettable final 90 minutes of today's trading session, ending the day 8% lower. For projecting further downside are analysts on the charts. And BSE, of course, among the top losers on the Nifty 500 in today's trading session, 4% lower on that one as well. We take your leave on this edition of Closing Bell from Mangalam and me. Thank you for watching. Markets forward on the other side.
Markets extend their winning streak for the fourth straight session, with the benchmark indices closing near the day's high, near the 24,100 mark for the Nifty, while the Nifty Defence Index emerged as the top performing sector of the day.
NSE is all set to file papers to go public today. Our sources say the fundraise could exceed 30,000 crore rupees, with a 6% stake sale making it the largest IPO in India so far. Largest shareholder LIC is unlikely to sell shares. SBI, Bank of Baroda, Morgan Stanley, Temasek and several others likely to sell stake. That's an exclusive.
Tata Motors PV cracks 8% after the company releases FY27 outlook for Jaguar Land Rover. While the revenue growth guidance of 13% and cash flow were largely in line, the margin forecast of 4% fell short of estimates.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Sonal Bhutra. With me is my colleague Manglam Malu. Manglam, good afternoon. Well, we crossed the 24,100 mark today. Closed slightly lower than that mark, but fourth consecutive day of gains for the Nifty. Bulls will not complain about that. It was a 0.4% gain for the Nifty. Mid-caps outperformed with gain of 0.5%. PSU Banking Index, metals, which actually lost quite a bit of ground yesterday, recovered, so that index was up around 1%. A lot of contribution from a lot of stocks in the Nifty pack, and small cap index too, up around 0.9%.
Yeah, it's a good day of trade indeed. A lot of stocks doing very well in today's trading session. The toast of the session, however, was the defense pack. A big gain is what we saw on the defense index. That comes up for you. But even if you look at individual stocks, names like Paras Defense or BEL from the front line and doing extremely well. That index up nearly 4%. And then you had a bunch of these retail stocks doing extremely well too. So we had Trent, which moved about 7% in trade today. Avenue Supermarts not too far behind either, up around 3.5–4%. And then we saw some traction on Nykaa as well. FSN is the one that should come up for you on the screen. All in all, a good day of trade. But let's tell you what we've lined up for you on the show. All the movers and shakers. Sudarshan Kumar joins in with those list of buzzing stocks. We decode the Dixon Tech and Schneider Electric's sharp rally as well, among other key stocks. And last but not the least, as always, we tell you the events that you should be watching out for tomorrow's trading session. With that, let's go across to Sud, who has on the big wall all the top movers and shakers of the day.
So another day of trade, we have seen a huge surge in the market. Nifty closed near 24,100, and amongst notable Nifty gainers, Trent was top Nifty gainer, closed with a gain of more than 7% at the highest level since November of 2025. But if you talk about the losers, Tata Motors PV has seen a fall of 8% after JLR has given the outlook for FY27, and on margin front, it has given the guidance of 4%. That was slightly below expectations, and that's the reason the stock has seen a fall of 8%. Hindalco recovered half of yesterday's losses, closed with a gain of almost 3% as aluminum prices have increased. All the defense names were buzzing in trade. BEL from the Nifty pack was amongst top gainers, closed with a gain of 3%. And IT stocks over the last few days have been moving higher. Infosys today was amongst top Nifty gainers, closed with a gain of 1%. Coming to mid-cap space, all the defense names I have told you that have been buzzing in the trade. BDL was amongst top gainers, 6% higher. Kia Industries too has seen an up move of almost 5%. Yes Bank has moved higher with healthy volumes, closed with a gain of 5%. All the AC names have been buzzing in the trade as monsoon has delayed further, and Blue Star was top gainer, up 5%. Dixon Technologies has extended yesterday's gains. Today also moved higher, almost 5%. Now coming to mid-cap losers, BSE was amongst top losers, closed with a cut of almost 4% ahead of NSE IPO. Colgate too has fallen almost 3%, and BMC has curtailed water supply to construction company, and because of that, Lodha was down almost 3%, and Fortis and Supreme Industries too have seen a fall of almost 1 to 2%. Some of the other volume-led gainers, IDBI Bank, on an expectation of divestment update, this stock has surged almost 17%. Car Trade, MTR have been moving higher over the last few days. Today also up almost 8 to 9%. And Schneider Electric has seen a surge of almost 7%. Prime Focus has got a relief from SEBI, and because of that, up almost 5% at upper circuit.
Right, Darshan, thanks a lot for that. So those are a bunch of stocks that were moving around in today's trading session. To take our conversation forward, we do have Mayuresh Joshi from MarketSmith India and Shrikant Chavan from Kotak Securities joining in. Thanks a lot, gentlemen, for joining in. Mayuresh, the kind of stocks that moved, the relief rally that we're seeing, do you see this extending from here on as well? And what's your outlook on, earnings coming in from the next quarter onwards? Because while the sentiment has improved, commodity prices have improved, a lot of companies will still face raw material issues. They will still face margin pressures.
Absolutely, no two ways about it. And I think Q1 is expected to be an absolute washout when it probably comes to a lot of stocks and a lot of sectors as well. Supply chain disruptions, the inflation that you've probably seen in input cost inflation will definitely play out. And again, I think not all of this will get passed through ultimately to the consumer. And therefore, I think a bit of a margin hit will also take place across sectors and companies as well. But since the West Asian crisis might come to a closure, Mangalam, I think the markets might actually tend to believe that Q1 might actually be the worst quarter on an annualized basis. How El Nino plays out might actually play a little bit drawn for a few consumer-facing sectors in the first half. But a large portion and a proportion of stocks and sectors, if one has to believe, might consider the second half probably to come through as a better quarter for most sectors as we speak. And therefore, on an annualized basis, the earnings might come off. Q1 expected to be a washout, but the markets will look beyond that, which seems to be an obvious case in point as we speak. So I think sectors and stocks which will do well will actually stand out post Q1 as the earnings season unfolds.
Okay, Mayuresh, take that point. But let's talk about the big exclusive. The National Stock Exchange is likely to file its draft offer documents with SEBI today for its proposed IPO, according to sources. Several existing shareholders, excluding LIC, are expected to participate in the share sale. The issue is set to become India's largest ever IPO. Yash joins us with the details.
Well, it's taken years of putting the right compliance, of putting the right processes, of putting the right efficiencies before this headline could come on the screen. The National Stock Exchange likely to file its IPO DRHP with market regulator SEBI today itself. It's expected to happen post-markets today. And as far as the size of the IPO itself is concerned, NSE is likely to dilute about 6% of the total equity in this IPO, and the fundraising could be about 30,000 crore rupees. This will be the largest in India so far. And what makes this more interesting is that the largest shareholder in the National Stock Exchange, that is Life Insurance Corporation of India, is unlikely to sell a single share as far as NSE's IPO is concerned. How much does it own? It owns about 10.7% stake when it comes to the National Stock Exchange. As far as other shareholders of the National Stock Exchange are concerned, as I said, LIC with about 10.7% stake, Stock Holding Corporation with about 4.4%, SBI Capital with about 4.3%, and the State Bank of India holds about 3.2% stake. There are more shareholders on the institution side, GICRE owning about 1.6%, and Oriental Bank and New India Assurance with about 1.4% each is the stake which they hold as far as the National Stock Exchange is concerned. Now let's look at some of the valuation scenarios. Of course, the final number will be derived after roadshows and investor feedback, but for that near 6% stake, if 30,000 crore is the fundraise which NSE does, then that values the company, the stock exchange, at about 5 lakh crore rupees. If it's 32,000 crore at about near 6%, then it values NSE at about 5.33 lakh crore rupees. And at 35,000 crore for near 6% stake, the valuation could go as high as 5.83 lakh crore rupees. As I said, irrespective, because of the sheer fund size itself, it will be the largest IPO in Indian history. As far as the market cap and the valuation multiple is concerned, the 9-month FY26 EPS was 29.56 rupees, and at that valuation for a forward multiple FY27 estimated EPS, it trades at 39 times. Compare this to the two other listed exchanges. BSE trades at 50.5 times, MCX at about 41.1 times. That's the valuation multiple that we see for NSE. Now, which are the selling shareholders? On the public sector side, we have State Bank of India, Bank of Baroda, Stock Holding Corporation, Indian Bank, GICRE, New India Assurance, United India Insurance, National Insurance, and Oriental Insurance, who would come forward and sell their stake as far as that OFS portion of NSE is concerned. On the private side, we have institutions like Morgan Stanley, CPPIB, Temasek, Crown Capital, there's Chris Capital, ICICI Lombard, TA Associates, Soj Global, and Omars, who would also look to sell their stake as far as this very, very anticipated IPO for the National Stock Exchange is concerned.
Anticipated indeed. Thanks a lot for that, Yash. But a stock that rallied 5% in today's trading session was Dixon Technologies. JP Morgan issued a buy rating with a target of nearly 13,000 on the stock. And the JV with Vivo, that's what's got the street excited. Upasna joins in with the details. Upasna.
Well, certainly this stock continues to remain in focus on that expectation of receiving the Vivo JV approval soon. Now, JP Morgan has given an overweight rating with a target price of 12,700 per share on putting the primary focus on the company's JV Vivo approval scenario. Now, it has highlighted that the Vivo has 35 million annual volumes in India, of which 67% will come to Dixon. As per management, JV could lead to a revenue uplift of nearly 30,000 crores with a higher ASP as compared to its current mobile portfolio. It says that if the JV approval comes in June, then the operations are likely to start after 60 to 90 days, that is in Q3 FY27. Going by this assumption, it expects the mobile volumes to contribute nearly 11 million in FY27 and 22 million in FY28. This could drive a 24 to 39% upgrade to the brokerage's revenue estimates from FY27 to FY28, but a lower EPS upgrade, that is nearly 13 to 18% is what the brokerage has highlighted. So all in all, the stock remains in focus on the back of this bullish note from JP Morgan.
Okay, all right. That's about Dixon, the much-awaited Vivo JV, and the impact that it could have once the approval comes in. Let's get back to our guests, Mayuresh Joshi and Shrikant Chauhan. They are still with us. Shrikant, what about the market levels now? 4th day consecutive, the gains that we saw crossed the 24,100 mark. Would we build on to that rally now?
Yeah, absolutely. The way there is a recovery in the market and news flow is turning positive, even if we consider crude prices, then they have fallen to the levels of 80 or sub 80 levels, which has happened after a period of almost 3 months. So based on that, I am of the view that the market is on the verge of crossing its previous swing high, because see, overall news flow is clearly suggesting us that we can expect further more activity. If that doesn't happen, then it's okay. But while looking at the broad-based participation in the market, I am of the view that the market is on the verge of crossing 24,600, and any correction from current levels, let's say close to 23,800 or 700, there again the market will form a buying area for participants. So at this level, it's a buy. And on dips also close to 23,800, we should look for taking some long bets. For Bank Nifty, there also we are expecting it is heading for the levels of 58,500 or 59,000. So broadly, it's a market where we should look for taking some long bets.
Okay, long bets it is. Thank you, Shrikant, for that view. But the other stock that was on our radar today was Schneider Electric, gained up to 6% after brokerage firm Ambit initiated coverage on the stock, calling it a strong proxy to the multi-year data center theme. Vinny Motiwala is joining us with more details. Vinny, tell us more.
Absolutely. We have that note that's coming from Ambit. They are initiating coverage on Schneider Electric, buy rating and target price of 1,400 rupees per share. Do not forget, all the capital good players today are buzzing in trades. So those T&D, grid players, all of them are managing and holding on to strong gains. Now, Schneider Electric, what's the reason behind this positive coverage coming in from Ambit? Do not forget, it's a strong play and proxy play that comes in for that multi-year data center theme. Around 10 to 12% of the revenue currently comes in from data centers. In FY20, that revenue just stood at around 3 to 4%. And that's the play that they believe will grow forward and lead better growth for the company as well. Now, Ambit is estimating around a 50% CAGR growth for data centers over FY26 to FY29 and will drive an overall group sales growth, CAGR growth of around 24%. Schneider Electric Infrastructure, that's the Indian listed company, right? That will also benefit from Schneider Global's strategy that is there to focus on India, to make it a manufacturing hub for them as well. And that is a benefit that will come in for the Indian listed entity. Now, Schneider Global's strategy would also lead and drive a ramp up in terms of exports for the company as well. To 15% is the expectation is what Ambit has over in FY29 versus currently a 12% export is what they have. In the short term, yes, maybe some bit of a concern that comes in on the margin front because of the commodity inflation. But overall Q4 EBIT margin that came in at around 6%. Ambit believes this is the bottom, and now from here on we'll start seeing the improvement coming in. Companies focusing on that service plus data centers plus transactional products, so the mix on that front will also support the growth in terms of the margin improvement for the company as well. Ambit is forecasting a revenue CAGR growth of around 24% over FY26 to 29. Positive note, and today that's why the stock is buzzing.
All right, Vinny, thanks a lot for that. Schneider Electric higher in today's trading session. Also, a couple of these other peers, GE, Vernova, among others, were higher on the back of that as well. The positive news for the industry, but not so much for real estate developers. Significant exposure, the ones who have to the Mumbai metropolitan region, have been lower as the BMC suspended water supply to construction sites. And this comes amid an acute shortage caused by delayed monsoon rains. And the water level in the 7 lakes supplying water to Mumbai as of this morning stood at just 10%. Let's listen in to what the stakeholders. We spoke with Niranjan Hiranandani on the channel, and this is what he had to say about the crisis.
What we need to use this crisis as an opportunity to relook at what Mumbai water supply. What are we talking about? We always talk about putting more dams to create more water supply. While 100% of my water, sewage water, goes partially untreated into the sea outside, we are now going to provide recycling of water. But what we need actually is to use recycled water for our own purposes. Golf courses, they are using pure water. Your race course uses water from our regular system of water supply. All these aspects of it we do. Second, flushing. Flushing doesn't require to have fresh water. We can use recycled water for that. Industrial processes. Nagpur has a system by which recycled water is sold to industry, and the Municipal Corporation of Nagpur makes a profit on these things.
The most impact would be on affordable housing because the margins are very thin for the developers. So they have to source the water from either the private tankers or the recycling facilities and spend a lot of money on transportation. The water shortage would lead to delays, and if it prolongs further, there would be impact on the construction cost for the projects which are ongoing, especially the large ones, affordable housing, infrastructure projects. So it's high time we realize that we need to conserve water, use recycled water. We don't need potable water to be used in all the activities we do.
Okay, with that, let's move on. Tata Motors Passenger Vehicles is the accident of the day. Top loser on the Nifty, saw cuts of around 8%. Sudarshan is here with what happened. Sudarshan, a big cut here.
So the outperformer from four-wheeler space in 2026 has turned kind of underperformer, was top Nifty loser, slipped more than 7% to trade. And the reason? JLR's outlook for FY27. On three important metrics, JLR has given the outlook. On revenue front, it expects the growth of 13%. On free cash flow, which was at minus 2.3 billion pounds in FY26, company expects to turn break-even in FY27. But what has led to this sharp fall was the margin guidance that company has given of 4%, versus analyst expectations of in the range of 5 to 6%, and that was the main reason. Apart from the outlook, company has talked about important markets. The most important market is going to be North America, where company believes that its size going forward over the next few years is going to be of the same size what JLR's existing size is. And apart from North America, two important markets that's going to be for the company. First one, India, and second one is going to be West Asia. But on the outlook front, it's kind of a bit disappointing. That's the reason, sharp fall.
Okay, all right. Thank you, Sudarshan, for joining us. And we'd also like to thank our guests, Mayuresh Joshi and Shrikant Chauhan, for joining us today. Some more questions, but you're completely out of time, gentlemen. So thank you so much for joining us with your thoughts. And with that, we'll slip into a short break and get to the key market events to watch out for on the other side.
Welcome back. You're watching us here on Markets Forward. Let's get you a key look into all the events that you need to watch out for ahead of trade tomorrow. Ananya Singh standing by with all of that.
So let me first start with global events. So the biggest global event will be the US Federal Reserve's interest rate decision, followed by Fed Chair Kevin Warsh's press conference. Now with Warsh among the first Fed meetings since being appointed by President Trump, markets will closely watch his comments for clues on interest rate, inflation and the timing of future rate cuts. Now, also on the global calendar are the Bank of England's policy decision, US jobless claim data, the Philadelphia Manufacturing Survey, OPEC's latest oil market outlook, and comments from the head of UN nuclear watchdog on a possible US-Iran agreement, all of which could influence global sentiment and crude oil prices. On the domestic front, Prime Minister Narendra Modi's visit to Paris will remain in focus. In the corporate space, SBI's board will discuss fundraising plans, while HDFC board will review findings related to concern raised by its former chairman. Now, investors will also watch the Emirates NBD RBL Bank event. Apart from this, markets will keep an eye on earnings from Accenture, Volkswagen, while developments from the NATO and the European Union summit, along with broader energy and geopolitical updates, so will also remain in focus.
Okay. All right, Ananya, thank you so much for joining us. So that's the update as far as all the events are concerned. And with that, we'll take your leave on this edition of Markets Forward. We'll be back with more news and updates on the other side, so stay tuned.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Crude oil prices slide as the 14-point draft memorandum between Iran and the US gets leaked. Under the purported deal, Tehran agrees to abandon nuclear weapons and leave the fate of enriched uranium to a follow-up agreement. In return, Washington would lift oil sanctions and offer a $300 billion rehab package. Prime Minister Modi and US President Trump set to hold bilateral talks on the sidelines of the G7 summit in France. This will be the first meeting between the two leaders in 16 months. The relationship has been strained due to Trump's tariffs and the recent killing of 3 Indian seafarers in the Gulf by US troops. Sensex and Nifty gain for the 4th straight session. Nifty moves back above 24,000 mark. Defense stocks lead the rally. Rupee regains more lost ground against the dollar. The US Federal Reserve is set to announce its first decision under new chairperson Kevin Warsh later tonight. CNBC survey expects a status quo on rates. 88% of those polled also expect the Fed to remove the easing bias in the statement, which signaled the next move could be a rate cut. NSE all set to file papers to go public today. Sources say the fundraise could exceed 30,000 crore rupees with a 6% stake sale, making it the largest IPO in India so far. Largest shareholder LIC is unlikely to sell shares. SBI, Bank of Baroda, Morgan Stanley, Temasek and several others likely to sell stake. That's an exclusive. Jay Parikh, who leads the core AI team at Microsoft, tells CNBC TV 18 ecosystems need to be open and flexible to change, but reiterates moving fast is not about being reckless. Adds the next big challenge is not building AI models, but deploying them at scale. AI is rewriting the compute game and demand visibility remains strong, says Vamsi Bopanna, a senior executive at semiconductor maker AMD, wants India to focus on holistic approach to AI beyond data centers and the physical infrastructure. That's another exclusive. Shares of real estate companies in Mumbai decline after civic body cuts water supply to construction projects. The city is facing an acute water shortage and other industries will also see a 20% cut in supply. A hat-trick by Messi gives the defending champions a dream start to the World Cup. Messi becomes the joint highest scorer at a World Cup as Argentina beat Algeria. Mbappe strikes twice to part France to a win in their opening campaign against Senegal. Cristiano Ronaldo and Luka Modric eye glory. The two icons begin what could be their final campaign for football's biggest prize. Portugal faces Congo and Croatia takes on England in a blockbuster clash. All right, the top story this evening, crude oil prices slid as the leaked 14-point draft memorandum between Iran and the US reveals details of the deal. Here are the latest developments. The Wall Street Journal has reported that Iran will pledge not to develop a nuclear weapon as part of the preliminary deal. Moreover, 2 months of final negotiations will begin immediately after the initial deal is signed on Friday. AFP reported that the nations will discuss a plan to lift economic sanctions and the fate of Iran's enriched uranium in these 60 days. In return, Washington will reportedly lift oil sanctions and offer a $300 billion rehab package. Reuters has reported that the private fund will be designed to trigger investment. More than half that sum has already been committed. The fund is designed to give both sides an economic incentive to conclude a final deal to end the war. However, Lebanon, which is supposed to be included in the truce, continues to be a flashpoint. Iran accused Israel of violating the truce in Lebanon 84 times since the agreement was digitally signed. This after Israeli forces killed 4 people in southern Lebanon. Meanwhile, crude oil prices are below $80 per barrel. This as several tankers carrying Iranian oil have crossed the US blockade line in the Strait of Hormuz. According to a tracking website, CNBC's Megan Casella gets us the details from the draft memorandum of agreement between US and Iran.
This 14-point memorandum of understanding. That's the latest that we know, according to a draft version of it published overnight by Bloomberg. And a few of the highlights of that deal that I want to flag here. The first is that, of course, it calls for the ending of the war on all fronts, including in Lebanon. That's spelled out within it. And that has been a sticking point with Israel, which so far has said it will not be removing its troops from Lebanon. It also calls for the lifting of the blockade, the reopening of the strait. And there's a line in there saying the U.S. and its regional partners will create a plan for rehabilitation and economic development of of Iran, and that they will ensure financing of at least $300 billion. Now, U.S. officials have emphasized no government money will be part of that, but that is a big part of this plan. There's also a line in the document saying the fate of enriched material and Iran's nuclear needs will be adequately addressed in a final agreement. That gets what has been one of the key criticisms here, is that there's nothing more specific on what exactly Iran will have to do. All of that to be negotiated over the next 60 days. And they say the final deal will be negotiated within 60 days, but that it would be extendable by mutual consent. That's another criticism here, or an expectation by some skeptics who think that there's, yes, a 60-day negotiating period now, but that could be extended over and over again, that we could be caught in this sort of ongoing negotiation. Now, just to pivot real quick to the other big news at the G7 today is that there's also a lot of AI leaders sitting down with the full G7 for a working lunch later today. OpenAI's Sam Altman is in town. Meta's Alexander Wang. Dario Amodei of Anthropic is here. Salesforce, Mark Benioff. You can see a number of the leaders there. And it just goes to show you guys really where the power sits on AI, and the fact that political leaders feel that they have to have business leaders at the table to be having some of these discussions. We expect them to be talking about online regulation globally of AI, as well as online safety, especially the protection of kids. OpenAI had previously told CNBC earlier this week that they expect some voluntary set of commitments might be agreed to at that working lunch. So that's the other big piece that we're watching today. But of course, Iran remaining top of mind.
Now, G7 leaders also reaffirmed their unwavering support for Ukraine on the final day of the summit in France. The leaders pledged more air defense systems and support for Kyiv's military production. They also vowed to tighten sanctions on Russia, particularly in the oil and gas sectors. This followed what Trump called a very good meeting with Ukrainian President Zelensky and other G7 leaders. Zelensky said he could meet Trump again today. Prime Minister Modi and US President Trump are set to hold bilateral talks on the sidelines of the G7 summit in France. This will be the first meeting between the two leaders in 16 months. The relationship has been strained due to Trump's tariffs and the recent killing of 3 Indian seafarers in the Gulf by US troops. Both Trump and Modi shook hands and interacted briefly yesterday. Abhimanyu Sharma is here with what we can expect at the bilateral meeting later today.
Prime Minister Narendra Modi is expected to meet the US President Donald Trump on the sidelines of the G7 summit in France. Now, this meeting will come a week after 3 Indian sailors lost their lives aboard a commercial vessel due to US strikes off the coast of Oman. Now, several issues are likely to be discussed between both the sides. The uncertainty around H-1B visas has been impacting people from all nationalities, including Indians, who continue to be one of the largest cohort amongst the H-1B beneficiaries. India and the US are also negotiating a trade deal, a larger trade deal, and the interim trade deal, of course, had a joint statement which was released by both the sides on the 7th of February. Any further progress is expected in the trade deal after the visit of the USTR to India next week. Also, thousands of Indians continue to remain aboard several commercial vessels which are sailing in West Asia, in and around the Strait of Hormuz, which continues to be restive, and the US obviously is a part of the peace deal which is currently being negotiated. Now, it remains to be seen what all is going to be discussed on the sidelines of the G7 meet. Yesterday, Prime Minister Narendra Modi had addressed the G7 outreach session in France, and he had said that maritime security is a global concern rather than a bilateral dispute, and had urged all world leaders to ensure that maritime routes, trade routes, remain open for the benefit of all countries and for the benefit of free trade.
All right, thank you, Abhimanyu, for that. Now to the day's market action. Sensex and Nifty gained for the 4th straight session. Nifty has reclaimed the 24,100 mark. Mid-caps and banks also rallied in tandem. Hormas Fatakia is here with the market wrap.
Another good day for the markets today. 4th straight day of gains for the index, nearing the mark of 24,100 now on the upside. And from last week's lows, which were 23,070, the index has recovered more than 1,000 points in just a matter of 4 trading sessions. What led the charge in today's trading session? Similar to yesterday, it was the IT names, along with the fact that there was equal contribution from the banks as well. And the last leg of the up move over the last 30 minutes of the trading session was led by Reliance Industries. So most of the index heavyweights playing their part in ensuring that the market continues to move higher. Now, of course, 2 Tata Group names had very contrasting fortunes in today's trading session. Trent had a very strong up move today, up almost 7% on very strong volumes as well, among the top gainers on the index. But in contrast, Tata Motors Passenger Vehicles, after the JLR Investor Day, did not have a very good day, down almost 9%, and that was the top loser on the Nifty in today's trading session. But of course, course, the action lies in the broader markets, and it was the power T&D space that continues to dominate headlines. Another positive brokerage that came in for Schneider Electric today. The stock is up 75% already this year, and some positive up moves seen in GE Vernova, Hitachi Energy, CG Power, all of them seeing very healthy gains in today's trading session. And not just them, there were plenty of other volume-led movers as well in the broader markets. IDBI Bank was up 18%, and that was among the most traded names on the Nifty 500 in today's trading session. Car Trade Tech has had a wild ride already from levels of 1700. It has moved up to 2800 in a matter of just a few trading sessions. Another 12% added in today's trade. And along with that, there were some smaller PSU banks which saw buying interest like UCO Bank, Central Bank, and the likes. Where do we go next now from here? The Nifty is now nearing that 24,100 mark, but the next level to watch on the upside is the 100-day moving average, which comes close to the 24,250 level. Of course, along with that, it is Reliance Industries, the stock that holds the key ahead of its AGM on Friday. We keep an eye out on that. Of course, we move into the Sensex weekly expiry in tomorrow's session, and the most important trigger for tonight is going to be the Fed rate decision, and if there is any further commentary on that, we'll react to that in tomorrow's trading session as well.
All right, thank you, Hormaz. All eyes are now on the U.S. Federal Reserve as it is set to deliver its first policy decision under new chair Kevin Warsh later tonight. A CNBC survey expects benchmark rates to be left unchanged. However, markets will be closely watching the Fed's guidance. Nearly 88% of respondents expect the central bank to drop its easing bias from the policy statement, which has signaled the Fed's next move would likely be a cut. We'll be bringing you special coverage from Wall Street and Washington, D.C. as Kevin Warsh announces his first rate decision. Tune into CNBC TV 18 later tonight. All right, on to a CNBC TV 18 exclusive. NSE is set to file its draft papers to go public today. Sources say the fundraise could exceed 30,000 crore rupees with a 6% stake sale, making it the largest IPO in India so far. Yash Jain is here with the details. Yash, a mega IPO in the making. Please give us the details.
Well, it's taken years of putting the right compliance, putting the right processes, putting the right efficiencies, and then, going to the regulator and being able to see this headline that you see on your screen. The National Stock Exchange of India, NSE, likely to file its IPO DRHP, its IPO papers with market regulator SEBI today. As far as the size of the IPO is concerned, sources tell us that it's expected to be about 6% of the IPO size, for which the company could look to garner about 30,000 crore rupees. What's interesting about this large size and the large IPO is that the largest shareholder in NSE, that is the Life Insurance Corporation of India or LIC, is unlikely to sell a single share as far as the IPO is concerned. As I said, it's a large shareholder, the largest one, holding about 10.7% stake. But who are the other shareholders in the National Stock Exchange? LIC, as I said, with 10.7% stake. There's Stock Holding Corporation with 4.4%, SBI Capital with 4.3%, SBI with about 3% stake. Not just that, we have more shareholders. GICRE with 1.64% stake, Oriental Bank and New India Assurance both with about 1.4% stake as far as NSE is concerned. A couple of scenarios with respect to how the valuations could really turn up, but that will only be provided once the roadshows happen and the feedback is received. But if NSE goes ahead and does that fundraising of 30,000 crore with about 6% of the IPO size, then that would value NSE at about 5 lakh crore rupees. At about 32,000 crore of fundraising with 6%, that would value NSE at 5.33 lakh crore rupees. Similarly, about 35,000 crore fundraising with 6% IPO size, that could value NSE at about 5.83 lakh crore rupees. Irrespective of the valuation, the fundraising of about 30,000 crore or upwards would be the largest in the history of Indian capital markets. Now, in terms of valuation multiples, 9 months FY26 EPS was at about 29.5 rupees. That values LIC on a forward basis, FY27 estimated EPS at 39 times. Look at some of the listed peers which NSE has. BSE as well as MCX. BSE trades at 50.5 times, MCX trades at 41.1 times forward multiple. Finally, coming to which shareholders would be selling their stake, SBI Bank of Baroda, Stock Holding Corporation, Indian Bank of India, GICRE, as you can see on your screen. There's more on the PSU side in terms of the likely shareholders. Also, we'll have players on the private side who would be selling, like Morgan Stanley, Chris Capital, ICICI Lombard, CPPIB, all of them coming together to dilute a part of their holding towards NSE's IPO.
All right. Thank you, Yash, for that comprehensive update. What we'll do is we'll take a short break. On the other side, we'll tell you about this important piece of news coming in from Mumbai, with the shares of real estate companies in Mumbai see red after civic body cuts water supply to construction projects. The city is facing an acute water shortage, and other industries will also see a 20% cut in supply. Welcome back. Shares of major real estate developers with significant exposure to the Mumbai metropolitan region traded lower after BMC suspended water supply to construction sites. This comes amid an acute shortage caused by delayed monsoon rains. The water level in the 7 lakes supplying water to Mumbai as of this morning stood at just 10%. Santya Gora has more. Santya.
The stalled monsoon on the western front and its sluggish progress on the eastern front is posing serious concerns when it comes to water availability and kharif crops. The Indian Met Department and various other private weather forecasters have already announced El Nino onset, and as per NOAA, an American agency, there is a 63% chance that this could be a very strong El Nino year, with its impact most effective during June to September, the core monsoon months in India. To manage the fallout, the central government and various state governments are preparing contingency plans. Yesterday, the Union Agriculture Ministry instructed its officials, state governments and local administration to prepare crop-wise, district-wise and state-wise contingency plans for farmers. Traditionally, El Nino impacts core monsoon zone states, those that largely depend on rainfall for agriculture. The central government has identified 197 districts likely to be worst hit by the rainfall deficit triggered by El Nino and other factors. Local administration across 326 districts in 12 states has also been instructed to draw up contingency plans for farmers, including and not limited to asking farmers to delay Kharif sowing. Water storage is the other pressing challenge here. In Mumbai, lake levels stood at just 10% as of 6 a.m. on 17 June. BMC, which had already implemented a 10% water cut for residential areas last month, has now announced a 20% water cut for industrial and commercial purposes and discontinued water supply temporarily to all construction activity and swimming pools in the city. At the state level, Maharashtra's water storage today stands at around 24%. Water rationing across various areas reflects the intensity of the situation, and the current state of the monsoon is making matters worse.
All right, thank you, Santhya, for that concerning developments in Mumbai. Moving on, semiconductor maker AMD's senior VP says artificial intelligence is rewriting the compute game. Speaking with CNBC TV 18's Shireen Bhan, Vamsi Bopanna said that demand visibility remains strong. He also wants India to focus on holistic approach to AI beyond data centers.
2026, we're pretty much in the middle of the year now. If I were to ask you about the top 5 trends that will define the rest of this year and perhaps 2027, what would those be from an AI point of view?
Yeah, I mean, let me pause and think. Actually, you know, someone taught me this thing, which is it's sometimes easier to predict the long future than the super near future.
Yeah, correct.
But, you know, having said that, I think, you know, some are going to happen. I think number one is AI is still absolutely in its infancy. So the pace of AI adoption is going to be faster than what we have seen before. So I think that's absolutely true. Inference will continue to explode. There's so much demand for people wanting to use inference. Within inference, you know, there probably is going to be even more segmentation for markets, you know, more real-time inference, more, you know, lower latency inference, other sorts of things are going to start to emerge as subsegments. Agentic, you called that out rightly, a lot more activity around, you know, agentic. And then, you know, to support all this growth, then you need the ability of the infrastructure, right? The infrastructure, you know, starting with compute, you know, will be in a lot of demand. But also demand on physical infrastructure, right? There's going to be a demand on power and data centers. You know, that will continue to be, you know, quite a premium.
The data center story, and I just want to ask you your thoughts on how India plays in the data center side. We've just seen the government announce a 20-year tax holiday. Yeah. We've seen some big ticket investments coming into India on the back of that. What do you make of the data center opportunity for a country like India?
I would view that as part of the overall AI opportunity. I certainly believe that more overall capabilities for delivering AI would be important for India. I think the government recognizes that, the local authorities recognize that, and a piece of that is physical infrastructure, and physical infrastructure being data centers and the associated ecosystem elements. But I wouldn't necessarily say we, you know, the Indian authorities or Indian policy should be only focused on that. That is one element of it. But, you know, what do you think of other elements like, you know, solutions beyond that, compute beyond that, right? So thinking about AI holistically beyond just physical infrastructure is something that I think would serve the economy well.
From one newsmaker to another, Microsoft's Executive Vice President Jay Parikh says that moving fast is super important for the company because it translates to the speed of learning. Speaking with Shireen Bhan in San Francisco, Parikh said he is moving fast but has no desire to break things when it comes to deployment.
Doing deployment, but deployment at scale, and you're no stranger to that. You did it at Facebook, you're doing it now at Microsoft. And this mentality of, you know, move fast and break things, but you're not into the breaking things.
I'm not into the breaking things, yeah.
Why not?
But moving fast is super important for us because to me it's the speed of learning, right? And it's not just, hey, we're being reckless or that quality doesn't matter. That's not anything in my vocabulary about moving fast. Moving fast is about that learning loop, that ability to learn faster and faster. Because as we talked about, you know, the world is changing, the technology is changing, the geopolitical landscape is changing all the time. So our ability to learn faster and keep iterating is really the fun part. It's the energizing part. Sometimes, you know, it is the confusing part because you can have a plan, an idea, and then realize you have to reset, you know, a couple of days later. But that's what keeps us moving and energized. And, you know, frankly, with Microsoft's, I'd say just the talent, the depth of just expertise and just incredible experience and connection and understanding of these companies, you know, small companies and all the big companies around the world, that knowledge, those relationships. And we are a platform company. We've built a lot of platforms, you know, in the 51 years here. So that understanding of these end-to-end systems, the platform, the tools that serve our end users is something this company has a lot of history, a lot of knowledge, a lot of learnings, and a lot of experience on.
And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18.
Let's talk money.
Hello and welcome. You're with us on a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, we always talk about our investments via diversified mutual funds, and a large part of that conversation has been equity. Over the last, of course, couple of weeks, months and years, we've been speaking about diversifying away and looking at multi-asset, looking at hybrids as well. Today, we're taking one step forward in that whole conversation on diversification. How can investors diversify their portfolios beyond the plain vanilla mutual funds that we're all very used to? Or are they actually the best port of call? Sometimes the simplest things, the most plain things are the best when it comes to our wealth creation journey. Well, we have Mrin Agrawal of FinSafe India joining in to discuss some of the options available and the way forward, considering that markets have been very challenging, very volatile, and they've been demanding a lot of patience from us over the last 2 years. Mrin, thank you so much for joining in, and I'm so glad that you're here with us in person today in the Let's Talk Money studios. Welcome.
Thank you, Surabhi.
So I must say that Mrin usually joins us from Bengaluru, and Mrin is, you describe yourself as a financial educator, right?
Yeah.
Tell us a little more about, what you do and what brings you to Bombay today.
So I actually run a company which works on financial well-being at workplace, and I was an advisor for 20 years, but I found my calling in trying to promote financial literacy among the educated. So I've started this company 10 years back, and we work with a lot of companies across India trying to make their employees better at managing their money.
So I'm going to ask you the tough question first. Given that you're a financial educator, you work with so many people across different corporate offices, different salary structures, different ages of life. What is the biggest mistake that we are still making when it comes to our wealth creation focus?
I think the biggest mistake is still chasing trends. It's still chasing that best performing investment, the best mutual fund, the trending investments. It's really, I think it's still that. And really not having a financial plan, right? Too much of product focus.
Yeah?
Yeah.
And is that increasing now, you feel? Because we have so many fintech platforms, everything can be purchased on this one device. So the propensity to try different things is increasing, which can be both good and bad, I'm guessing.
Yes, there's a lot of interest in trying new things and, of course, trying to, make some good, quick returns as well at the same time. So certainly that propensity is there, but I think, the lack of financial planning is something which is quite bothersome, especially, with the changing macroeconomic environment that we're seeing around us.
Yeah, absolutely. So, well, here we are, and today the idea, Mrin, is not to talk about, the usual mutual fund investing that we discuss, but I think what the last 2 years and this phase of the market has taught us that we cannot have all our eggs in one basket, for sure. It can't be only small cap funds all the way or mid cap funds or, something like that. So therefore, we want your help now to look at a very well-diversified portfolio, even in terms of different instruments. The market has given, now there are SIFs coming, there are REITs, there's so many options, right? Even for middle-class India to invest in. So today, over the next 20 minutes, we want your help in creating one such large bucket, well-diversified, medium-risk bucket for, any investor who's out there. So where do we begin?
Sure. So I think, from the non-mutual fund perspective, the products where I see a lot of interest coming in is, of course, corporate bonds and REITs. A lot of queries coming in there. A lot of queries coming in also on GIFT City investments, considering that it is a way to keep money in foreign currency, especially for those who have foreign currency commitments. And a fair bit of interest in PMS as well for people who feel that, okay, I've done this mutual funds, now I'm looking at something else, so should I look at PMS? So I would say these 4 products, there's a lot of interest that's basically coming in.
Okay. So we need to sort of analyze all of them, and then we need to see if they really fit into the investment framework. The heart of any investment framework is going to be asset allocation, right? So we first need to decide how much equity, how much fixed income, how much global investing. Now, again, I know that this cannot be generalized. It's going to be very specific to every individual. But again, for the sake of just illustration, if you're taking someone who's a medium risk investor who doesn't need that money for at least the next 3 years, in today's market environment and setup, if you were advising me or a friend, what is the basic asset allocation framework that you'll start with?
So again, if you tell me 3 years, then I think it's a very short allocation. Then I would just say put the money in a short duration debt fund. Really, I wouldn't really look at anything more than that because equities, of course, can be really volatile. But if the duration is longer term, so for example,
let's say at least 5 years, 5 years plus, minimum 5 years.
5 years plus, 7 years plus, then of course I would always say have about 15-20% in gold, have at least 30% in equities, and the balance in debt. So it'll still be more debt heavy, I'll say that, but at least 30% in equities. And the reason I say this is because when you look at the household level data, right, you see that the average allocation to equities is somewhere, 10% and below. So I really think that number needs to actually go up for people to be able to meet their goals.
But I think you're one of the rare voices I'm hearing who's saying, okay, 30% equity, but still primarily debt oriented, because here we're in an era where everyone is putting money in mutual funds for 1 year and expecting 20% returns. So, somewhere I guess there's a mismatch.
Actually, Surabhi, the problem that I see, with the wider range of investors is that people don't tend to look at their portfolio as a whole. It's always looked in silos. So, you're putting that 10% in equity and feeling very good about it, expecting it to give you some great returns. But 90% of the money is invested in traditional investments, which actually may not be beating inflation. And I think that's where the disconnect is. Like, people are really not looking at their portfolio as a whole.
That's true. Which is why I'm surprised that you're still saying that the bulk of the portfolio you would keep with fixed income or debt, because the challenge is beating inflation then, isn't it?
Yes, but I think, for people to get from the 10% to 30% of equity, it'll take a lot.
Okay.
Right.
Okay.
And, and again, that's what I'm saying. People talk about it a lot, but their actual investment in it would not be really substantial. So I'm just saying minimum 30%.
Okay. Now, so let's start with the portfolio construction. So I'm guessing even today, you'll say the bulk of the portfolio should be built via diversified mutual funds?
Yes, absolutely.
Okay. And right now, do you have a preference for mid cap, small cap, large cap, flexi cap? Or
no, I always believe it's up to the individual to decide that based on their risk profile. I mean, certainly if the holding is longer term, above 10 years, I would still say mid-cap is a good, actively managed mid-cap funds is a good choice.
Okay. All right. So now that is the usual part of the portfolio, which is built through diversified funds. Now let's come to the these newer instruments. I mean, they've come up in the last couple of years and go over them one by one. So you started by talking about corporate bonds. There are a lot of queries now coming in on corporate bonds. And I guess that's because they're offering a better rate of interest than usual fixed deposits, right?
Yes, absolutely. I mean, you have corporate bonds in the range of 7 to 11%, I'm sorry, based upon their rating, obviously. So, but I think what's attracting most investors are the bonds which are like 10% plus returns, because getting double digit is not easy, right? Double digit returns,
Yeah. So, okay, so then, how to think about this? Because obviously 10% return sounds great, but then we have to look at the underlying issuer, the quality of the credit itself, etc., so on and so forth. So what are the do's and don'ts? And personally, are you in favor of some of these high-yielding corporate bonds?
No, I'm not in favor of corporate bonds at all, because see, first of all, there's a concentration risk that you're concentrating your money in one particular company, for example, right? The second thing is exactly what you said, that, the risk in the corporate bond is not linear with the rating, right? The risk goes up quite exponentially, right? So I think that's the point that people are not missing out, that to get that 10-11% return, the sort of risk that you're taking is very high. And what is happening is that mentally people actually believe that this is a safe instrument, because it's a fixed return, everything has been disclosed. So the way the product is being packaged today, it feels like a very safe investment that one could do. But disclosures alone do not talk about risk, right? I mean, just because something is disclosed, it doesn't mean that the product does not have a risk. So I think that's the point that people are missing out. Also, Surabhi, we have seen that every 5 to 7 years, you do have some sort of defaults. And at a time like that, what typically happens is that even if you have a collateral, the collateral value can fall. Also, it's very difficult in most cases to really, get the money from that collateral immediately. There's going to be a delay. Then you have seniority of debt. So, it's not as easy as it sounds that you have 10,000 rupees for 1 year and you're just going to go and buy this bond that's going to give you 11%.
10% return or 11% return
It's
on that.
too good to be true.
Yeah.
It's too
and
good
you
to be
spoke
true.
about default cycles. I remember, correct me if I'm wrong, the last cycle of defaults was around 2018. We saw how a lot of not just corporate bonds, but credit funds themselves, they really blew up. And, and now we're in 2026. So, it's coming close to a 10-year cycle, not suggesting anything.
Yeah.
So basically, you're saying corporate bonds are no-go for you.
Look, I'm saying that be aware of that, what could go wrong. Like if you see a lot of companies that are there on the bond platforms also, right? Many of them are really not known. Most of them are NBFCs. They're really not known. And people don't understand what is a collateral. It's not like everybody has provided you fixed assets. Many of the collaterals are actually receivables. So I don't think that people really understand the nuances in all of this, and which is why I'm saying that if you want to do it, please read up, please understand it, and then get into it.
Okay, fair enough.
Yeah,
that's on corporate bonds. Now let's move to the other instrument, which is like a quasi debt or fixed income instrument. And now I'm talking about REITs and InvITs. These are instruments which are supposed to give you steady income. That's why I said quasi debt, not exactly full debt, but somewhat mirroring. Better than debt returns. I've heard a lot of people say very good things about REITs in terms of the yields they can give, the IRR, etc. Just explain how this works and whether you're convinced with it.
So I would say that it's a product that I certainly would keep a watch on. So the way REITs invest, of course, work is that they basically buy properties which have regular distributions coming out, and 90% of the money, like the rentals, have to be distributed out to the investor. So in that sense, it gives you like a regular payout, and also you have to buy it like a stock through your brokerage account, and then it qualifies for capital gains like equities. Now, one of the things that I noticed was that the returns are pretty good from the capital gains perspective, from the growth of the unit perspective. If you look at the sort of payouts that are there, so typically the payout is in the range of about 6%.
Okay.
And in most cases, the interest on the dividend is fully taxable. Now,
and taxable at what rate?
At slab.
Income tax rate?
Yes.
Your slab rate?
Yeah, slab rate. There was this very interesting article that I read the other day on Value Research, where they pointed out that out of the 6% payout that's there, there is about 50-60% that's actually going towards capital repayment, right? So the actual interest and dividend component is then working out to only 2 to 3%. Right? So I still think that it's not a bad instrument to put money in REITs. But I think right now you have only 3 or 4 of them, and I just wait for a little bit more time to really see how it plays out. That's one. On INVIT, if you see, the returns have been really high. The payouts have been, the payouts have been really high. But again, Surabhi, I think it's a very complex thing, because remember that they invest in road assets, electricity assets, and just by the nature of the investment, it's a very complex investment, which is also which is very cyclical as well, right? So you remember during COVID, right? Nobody was on the road, so the tolls were down. And so I think there are a lot of factors that come into play there. So in which I would be actually a little bit more cautious, even though the payouts are very good. But just because of the nature of where the investment is, I would actually be a little bit more cautious.
Okay, that's REITs and InvITs. Again, important to read the fine print and see how exactly these instruments are being structured and what are the kind of payouts that are being spoken about. We have to take a very quick break. We'll come back on the other side, and then we talk about 2 more interesting options. One is PMS, Portfolio Management Services, where the promise is better than mutual, or at least the expectation is better than mutual fund returns. Now, are those expectations being met or not? We will discuss that after the break.
Let's talk money. Let's Talk Money.
Welcome back. You're with us on Let's Talk Money, and we're in conversation with Mrin Agarwal. This week we're discussing whether it makes sense to look at investment options beyond mutual funds, options like REITs, InvITs, corporate bonds. And now we're quickly going to discuss some of the offerings that we have from the PMS world, portfolio management services. Now, Mrin here, first of all, the ticket size is, 50 lakhs. So you need to have that kind of corpus to invest, which maybe a lot of people now in affluent India do. But the question is that given the huge number of PMS schemes out there and, everyone has their own strategy, should you do it? If yes, how do you pick the right PMS scheme?
Yeah, so you can do it if you're getting something really different from what you have in the mutual funds. So if you're already having a mutual fund portfolio, and then you go and you already have, let's say, small caps in the portfolio, and then you go and buy another small cap PMS, probably that doesn't make sense. So you have to look at what you already have, and then are you getting something different? So basically, is it giving you a diversification from what you already have? Sure. I think that's point number one. Of course, you have to keep in mind that the costs are going to be higher, because while you have 2% fixed fees, if you're on the performance fees model, then it's 1% plus the performance fees. And you need to remember that there is a fair bit of churning that happens during the year. So, the tax is also going to add up to the costs, basically. So, you need to keep all of those factors in mind.
And this performance fee, I mean, industry-wide, what would the range be? If I'm investing in a PMS, I should have some threshold, some benchmarks to keep in mind,
so
right?
they do. I think typically it's like above a return of 8%. I think there's a 10 or 20% performance fees, and there's high watermark in most cases. So, I mean, but again, the point for doing the PMS is because you're expecting that this will be typically a more concentrated portfolio. So then hence you would be willing to take a higher risk for a higher return. But I think you need to keep in mind the costs, and you need to keep in mind that are you doing something that you already don't have?
Right.
And basis that you need to choose. A lot of people do end up comparing with mutual funds. And I don't think that it's a like-to-like comparison, because, the holdings could be completely different. Also, if you see the benchmarks that are being used, and there was again a very interesting study on the usage of the benchmarks that are being used by PMS, very different from the typical benchmarks, and how there's a lot of variance in performance. Especially when you're trying to show alpha, how there's the huge variance based on the benchmark that you're using. Right. And if you look at within the PMS schemes also, there's a huge difference in performance between minimum and maximum. So I think the way I would approach is that I would do it because I don't have this in my portfolio and I want to take this exposure. But I would kind of put a number saying that, okay, this is the sort of return that I would expect from this, but I wouldn't try to compare it to a mutual fund.
Okay, all right. So it has to be looked at with discretion, with a lot of analysis in terms of what is the cost structure and whether you can generate the kind of alpha then which justifies that sort of cost. Finally, Imran, we want to talk about global investing. I think everybody's understood we can't just be having our investments here in India. A lot of mutual funds are not taking money. The standard global funds are not taking money because of the regulatory limits. Now, I think mutual funds are also setting up newer structures in Gift City. So just explain how that works. Which are these funds that we can perhaps go and study further?
Yeah, so now if you want to invest abroad and you want to keep the money in foreign currency, you can open an account in the Gift City, and through the LRS, you're allowed to remit $250,000 a year. So see, already right now through the Indian brokerages, you could still invest abroad, but that would be stocks and ETFs that you're buying directly. But that money, at the end of the day, when you redeem it, it has to come into rupees. But now in the Gift City, you can keep this, you can open an account, and then the Gift City investments are first of all tagged as foreign assets, right? They're subject to a set of tax laws and everything, but the main thing is that you can keep it in foreign currency. Now, what is there? You have mutual funds, you have the brokerages that are there, and you have PMS as well. So brokerages, of course, the amount to invest is very less. In mutual funds, typical amount to invest is $5,000 minimum.
$5,000.
And in PMS, it's much higher, I think about $150,000, right? So from an investor perspective, again, they need to decide, can I choose stocks and ETFs on my own, or do I want professional management, a fund to do it? So if you look at the funds that are there, currently I think you have DSP, Mirae and Parag Parikh. And DSP, for example, has actively managed funds, and I think Parag Parikh has passively managed funds. So you do have, and I think many more funds are going to be coming up soon. So I think two things that you need to think about. One is, do you want a managed investment or do you want to do things on your own? I mean, depending on the amount of money that you have. And second thing, you have to look at the taxation very clear, very importantly, you need to study it because this is classified as a foreign asset. So there's that additional reporting like Schedule FA and all of those additional reporting that is there. And in case if you're buying US assets, then I think for the mutual funds, it will not be applicable. But for if you're buying stocks, for example, then the US estate tax laws will apply. So, you have to keep in mind all of these things and then take a decision. I would say it's a very interesting space that's developing. And certainly, I would keep a watch out for the funds that are coming because I've always believed that managed investments are better for individuals. So I would really keep a watch out and see what are the other funds coming up and maybe try it out with some investment as well.
So this is interesting. Among all the options that we discussed, beyond plain vanilla mutual funds, I think the GIFT City funds are the ones that Mrin is at least a little interested in and willing to kind of, experiment with them. So to sum it all up, Mrin, going back to our starting point, that if someone is looking to go beyond mutual funds, what is the checklist? What are the things they should keep in mind before deciding on taking on a new product or a new investment?
First, of course, regulation. You only want to get into regulated products, right? Second, always look at what is the risk, like what can go wrong in this investment over the return. Of course, you want to look at post-tax returns, does it beat inflation or not? What is the cost in the product? And what are the inbuilt costs, of course? And more importantly, how liquid is the investment? Like how easily is it, how easily can you pull out the investment, right? So I would actually say that always analyze a product on basis of what can actually go wrong and will I be able to pull out the money? And finally, the returns that I make on a post-tax basis, do they beat inflation?
Absolutely. The returns have to justify all the extra hard work and the legwork that you're doing to go into a slightly more complex investment. Got that. Very sensible advice, Mrin. Thank you so much for being with us in person today this time around and giving us some thoughts into newer investment avenues that are out there beyond the standard mutual funds. Well, with that, we're coming to the end of this conversation. So thank you for watching. But as we wrap up, do listen in to this explainer on ultra short-term duration funds.
Let's talk money.
Hello and welcome to News Center. I am Ashmit Kumar. Now to the big story that we're tracking today. In the next hour or so, Prime Minister Narendra Modi and US President Donald Trump are set to hold their bilateral talks amidst several key issues in the India-US relationship. Just yesterday, the two leaders exchanged greetings on the sidelines of the G7 summit ahead of what could be a closely watched meeting between New Delhi and Washington. Notably, this will be the first formal engagement between the two leaders in nearly 16 months following their last meeting after President Trump's return to office. The meeting comes just days ago after an incident involving commercial shipping in the region that claimed the lives of 3 Indian sailors. New Delhi subsequently summoned the US envoy. Meanwhile, at the G7, Prime Minister Modi also underscored the need to protect global shipping and seafarers. India-US ties have also seen both cooperation and friction in recent months, yet engagement has continued, particularly on trade, where both sides suggest only a small portion of the deal remains unresolved. The talks also come ahead of the US Trade Representative Jameson Greer's expected visit to India, with the current tariff regime set to run until July 24th. Now, differences have also surfaced between the two sides over President Trump's remarks regarding his role in easing India-Pakistan tensions, claims that New Delhi has publicly disputed. Even so, both leaders have continued to speak warmly of each other, with President Trump often describing Prime Minister Modi as a close friend. Another area being closely watched is US immigration policy, with tighter visa and immigration measures raising concerns among sections of India's skilled workforce and business community. Yet, despite these challenges, both nations have continued to deepen cooperation in several critical areas, from artificial intelligence and quantum technologies to semiconductors and critical minerals. Washington has increasingly described India as a trusted strategic partner. The momentum was further underscored by India joining the US-led Pax Silica initiative, highlighting the growing convergence between the two countries in the next generation technologies and supply chain resilience. Now, to discuss what today's talks could mean for the future of this important partnership, we are joined by Ambassador KP Fabian as well as Ambassador Ashok Sajjanhar. Also with us is Sanjeev P. Yadav, a former diplomat and founder of Banyan Tree Global. To all of our guests, thank you so much for joining us. Ambassador Fabian, let me come to you first. There have been a lot of points of friction as far as recent US-India ties are concerned, whether it's the death of seafarers, whether it's trade, whether it's immigration. All of these counts, there's been various flashpoints between the two sides. Is this time now to rebuild, to damage control, especially on part of Washington?
Yes, you are absolutely right. You mentioned the death. Let me say the killing, because it is not death. As you know, there is a protocol about giving instructions to a ship whose direction you want to change. The protocol is that you give repeated warnings, oral warnings, then you shoot, starting with the air, and then in the waters near the ship, and if necessary, on the ship, by the side of the ship, never into the engine room. You never send the Hellfire missiles into the engine room. So what the Central Command did was absolutely wrong, morally, legally. And let me also make it, in the 250th anniversary of the American Revolution, it's against American values. So it is very good that Prime Minister Modi made that point in public, and we take it that he will make that also in private. Now, how President Trump will react to it, I do not want to predict. Now comes the trade deal. Obviously, at that level, they cannot conclude it, but they can share with each other their main concerns. And also, remember that Prime Minister Modi told the G7, quoting President Reagan, trust but verify. Now, if you dig deeper, it is an old Russian proverb which Reagan was advised that he should repeat it again and again with Gorbachev. And in terms of documents, it was, as I'm finished, it was in the INF Treaty, which provided, 87, I think, which provided for mutual inspection. Now, what we want to tell President Trump is that you may trust Pakistan, also the field marshal, but verify a little.
Sure. Let me also bring you in, Ambassador Fabian, as far as the upcoming Jameson Greer visit is concerned. Even as the trade talks are underway, here's another flashpoint, Section 301 tariffs. India is looking at additional tariffs, which could perhaps throw a spanner in the works as far as the final 1% of the talks is concerned. So tell us, from an India perspective, is it better to have some kind of deal rather than no deal at all?
Let me put it this way. Not having a deal has hurt us badly. The rupee has gone down. And also, if any country is not having good economic relations with America, then American investment doesn't come there. Of course, Europeans have been investing. They don't get deterred. But American investment also is important. So a deal is important for us. But I will not say that any deal is better than no deal. I think Indian diplomacy at all levels, at the level of the Prime Minister, at the level of the External Affairs Minister, and at the level of the Foreign Secretary and our ambassador in Washington, is capable of standing firm and getting what we want. Well, not all that we want, but what is important in what we want.
But tell us, Ambassador, that in the situation that we find ourselves in, where there is uncertainty with respect to Section 301 tariffs, will there be need for some kind of perhaps mediation on part of Donald Trump and Prime Minister Modi at that level to ensure that India at least feels secure? Because that appears to be the biggest concern. What if we sign for an 18% deal only to be met with a 301 investigation, an additional 15-20% of tariffs on top of what was agreed as a part of the trade deal?
Yeah, let's get into the substance. What they have said, and I read that report of the USTR, it's about 70 odd pages. And it says that India has not done any legislation to impose restrictions on import of goods from countries where forced labor might have a part in producing such goods. Well, my view is that we should start that legislation, and we can give that undertaking to the United States. But apart from that, I do not think that we should, for example, agree to their sending dairy products here. Because one of the economists was saying, it's only one company, Amul, that is standing in the way. Well, sorry, Mr. Economist, you don't understand that Amul is not a company. You can calculate how many millions of farmers are there. It's not a company. It's a cooperative agency, and meaning so many families. So I think there are areas where we should be firm, and we can be firm. And the art of negotiation is to give in certain areas, but be firm in other areas.
Sure. Ambassador, I also want to get your perspective on the dynamic that exists between the two leaders. Now, at different occasions, we've heard very strong language being used by Donald Trump when it comes to India. He's referred to India as a hellhole. He's referred to India as tariff king. But in the same breath, during the recent Marco Rubio visit, there was a phone call. Sergio Gore, the US ambassador, dialed him, put him on speaker, and where he Donald Trump referred to the Indian Prime Minister as a very close friend, had gone on to say that India can count on the United States. Tell us about the dynamic between the two leaders. Is this something that will pave the way towards greater ties, or perhaps could cause greater friction?
Let me put it this way. We have to understand Trump. And I have been always advocating that we should invest in Trumpology, understanding the psychology of the man. And Trump is like that. I personally do not take his words seriously, because words should be followed by deeds. So till the deeds are there, in other words, I will trust the words but I will wait to verify. But I won't always react to his words. For example, when he said he had mediated, I would have contradicted once at the level of the spokesperson of the External Affairs and then left it at that.
Right. Right. In fact, speaking of this dynamic, let's also bring in Mr. Sanjeev P. Yadav, former diplomat. He's joining us with a Washington perspective. Mr. Yadav, coming to you again, we were just discussing the dynamic that exists between the two leaders. At different points in time, Donald Trump has referred to India as a hellhole tariff king, but also referred to the Indian Prime Minister as a close friend. How do you see this relationship in light of two very different set of remarks coming in from Donald Trump?
Well, I think a lot of that is what's coming off of Truth Social or Twitter, but I think fundamentally President Trump respects very few leaders in terms of how he uses his rhetoric to describe them, and Prime Minister Modi is one of those few leaders who is always recognized with effusive praise and compliments and remarks heightening the strength of the relationship always. I think that is where the president sees Prime Minister Modi. He respects his strength. He respects his ability to really be a strong and dynamic leader. And that those are the characteristics that the president respects. So I think we should focus on the direct quotes and rhetoric that is coming from President Trump consistently, both in Trump 1 and Trump 2, and use that as a basis to kind of harness and go forward in this relationship.
Well, a strong dynamic between the two leaders. They'll be meeting shortly in France. But let's also get Ambassador Sajjan Har in on this conversation. Ambassador, I just want to get a sense. Clearly, the words that are shared by the two leaders for each other, they're very polite. They speak very highly of each other. These are words, of course, from one leader to another. But the actions by Washington seem to tell us something else, whether it's the killing of sailors, whether it's Section 301 tariffs, whether it's immigration norms. All of those actions are solidly something that impacts India. Again, how do you see this dynamic? Close on a personal front, but at least on a sovereign-to-sovereign basis, a lot of frictions, a lot of flashpoints between the two countries.
Yeah, thank you very much, Ashmit. You're very right. You know, even as far as Mr. Trump is concerned, he's been known to make, some rather patronizing comments about Prime Minister Modi. He's also known to sort of, at times mimic him and speak about him very, very casually. So these are these are few and far in between instances. By and large, he's been speaking very positively about Prime Minister Modi, but possibly the same thing cannot be said about India as such, because he's spoken about, India as the king of tariffs and dead economy and, hellhole and other things. So, while we try to focus on the positives, because both India and the United States need to work together and to see what are their strengths and to pool their strengths. But we need to recognize also that there is, and possibly when, the leader of the country makes comments of this nature, his very dedicated MAGA base, they will take some cue from that and they will sort of, tend to magnify it and amplify it in that sense. And that is what you saw the commentary and the statements coming from people like Howard Lutnick and Scott Bessent and, some of the others. So I think that needs to be also taken cognizance of. That having been said, I think the elements that bring the two countries together are far, far greater than any of the issues that draw the two countries apart. So we really need to focus on that. I think we were really able to do that during the first tenure of Mr. Trump. And I would say that those 4 years, meaning we've seen the relations between India and the United States really go on an upward trajectory from 2000 onwards. There were some hiccups. It's not that, the relationship was free of hiccups. There were some hiccups, but they were very minor. And the general trajectory was a rapid ascent in the upward direction. And during Trump 1.0, it was, I would call it the golden period of the bilateral partnership. But that has been shaken up very vigorously and not in a positive way as far as the last 1.5 years are concerned. So I would sincerely hope that in this meeting that takes place in another...
One was kinder than Trump 2.0. Trump 1.0 was kinder to India than Trump 2.0. Mr. Yadav, let me get your thoughts on that. India and the United States culturally have been very close. There have been close ties between the two countries at a strategic level as well. But increasingly, in the last 18 months, there's a seething amount of anger as far as the Indian population is concerned on account of some of these comments, on account of some of these steps, whether it's immigration, whether it's 301, the fear of tariffs. Is there a need, perhaps, on part of Washington to do some damage control here to at least assuage the Indian sentiment?
No, I think, Ashmeet, you are spot on. There has been a momentum of both negative, sentiment and social media sentiment, and then obviously a feeling that the people-to-people ties, which have been the consistent strength and stay and bridge for this relationship throughout the decades, has kind of been at its weakest point, if one might say, right now. But I think the Marco Rubio visit was really an effort by Washington to really put forward an effort to bridge that gap that had kind of begun in the relationship, one, and two, and show India and show the intelligentsia in India that this is something that's a priority for this administration. It was a 4-day visit, an expansive visit. And number two, the appointment of Sergio Gore as ambassador was a sign how seriously the president took this relationship because of Sergio Gore's close relationship with the president, with the broader White House staff and administration, and with the Secretary of State and other cabinet secretaries. So I think both of those should be seen as signals about how critical and important the relationship is to the White House, to the broader strategic goals of the United States and of this administration. Going back to Trump 1 and into Trump 2, India has been put at the center of American Asian foreign policy and the architecture that America is seeking to drive forward in the Asian theater. So I think long term we need to take the strengths, we need to look at the alignment, and we need to move beyond some of the disagreements that are related to domestic policy here in the United States.
Sure, Mr. Yadav. On that note, let's slip into a very short break. We'll come back in just a couple of minutes. I'll request all of our panelists to continue. There's a lot more to discuss as far as this Trump Prime Minister Modi bilateral is concerned. It's only a few moments away now. We'll be right back. Welcome back. We're, of course, following the Trump-Modi bilateral meeting that is due in just a few minutes from now. And to, in fact, discuss more on that, we have with us Mr. Sanjeev P. Yadav, former diplomat. We also have with us Ambassador Fabian as well as Ambassador Ashok Sajjanhar. Gentlemen, thank you again for staying on with us. Mr. Yadav, let me come to you first. Again, as a part of the two-track, the direction that the tires seem to be heading in, while we're seeing two very divergent, sometimes views coming in from Washington. Here's another one for you. India joined the Pax Silica Alliance, which is led by the United States. US has spoken very highly of India as a trusted partner, which in fact brings a lot of confidence into India as a supply chain partner. The concern is that recently, when it comes to AI technologies, there were export restrictions essentially placed on Anthropic's latest models. They were released and then subsequently pulled back, saying that only Americans can access. This divergent view coming in from Washington, is it likely to cause trouble as India and the United States look to build a partnership as trusted partners on technologies like AI and semiconductor?
So I think the key here for both Washington and Delhi is to continue to push forward where there is alignment and not get bogged down in some of these small and minor disagreements on the nuances of trade and tariff policy, because the broader strategic relationship is humming along, and the alternative supply chains that are being developed in partnership with India by the United States are key drivers that can really push forward this relationship and transform not only trade, but really the economic security of the broader Eurasian trade networks. And that's critical both to the United States and to India. We've seen that with the Iran conflict, the Straits of Hormuz, and in a post-Iran world order, it's going to be critical for the US and India to be working together to move forward on creating free and open sea lanes, enhancing security, and moving forward on these areas like Pax Silica, critical minerals, and other areas, including the future of AI, because these are countries with shared values, shared democratic beliefs, and shared beliefs in how AI needs to be leveraged for the future. So these really need to be the critical focus areas that push the relationship forward instead of getting bogged down in some of the other areas that are holding us back in terms of the trade negotiations that are ongoing.
Well, Jameson Greer will be here next week. July 23rd is when he's likely to again begin negotiations. Greer will also be, of course, calling on Piyush Goyal, the Indian Commerce Minister. Final 1% is what both the sides are calling it as far as the interim trade deal is concerned. But let me bring in some legacy issues. Ambassador Fabian, let me get your thoughts on the role that Pakistan is likely to play as far as defining the ties between the two countries are concerned. We've seen post-Operation Sindoor, there were dramatically different views taken by Washington and New Delhi. Washington said, I brokered this deal. New Delhi said, nothing of that sort has happened. And since then, we've seen greater proximity between Islamabad and Washington. Is that something that may perhaps define the ties between the two countries?
Not exactly, but let us dig into what you said about Sindoor. About 3:30 on an afternoon, the Pakistan DGMO tells his Indian counterpart that Pakistan wanted ceasefire. Well, let me ask you a simple question. What prevented India from telling the whole world, Pakistan has asked for ceasefire, we are considering it? India failed to do that, and Trump was probably sleeping. And don't forget that Pakistan was constantly, every minute, trying to keep him informed. So when he got up, the ceasefire had already been accepted, and Trump sort of announced it and claimed credit. So it was Indian diplomacy that failed by giving Trump an opportunity to make that claim. But after he made that claim, as I said earlier, and I repeat, India should have once gently contradicted him, saying that there was no mediation because only when A and B both ask C to mediate, then only there can be mediation. Now, India did not ask, but then leave it at that. Don't go on repeating it. That is why I will conclude by saying that go back to Trumpology.
Sure. Ambassador Sajjanhar, same question to you again. in many respects, Pakistan is a bit of a red line when it comes to India. That is one area where an Indian leader cannot be seen relenting or negotiating. When it comes to the ties that exist between New Delhi and Washington as compared to Washington and Islamabad, do you see that perhaps coming in the way of closer proximity between the two leaders? That's Prime Minister Modi and Donald Trump, given the fact that the two countries have very dramatically different views on how to engage Pakistan.
Yeah, no, I think as far as India and the United States are concerned, we have our own strengths. We have to build on those strengths. So, I don't think Pakistan should come in as a factor between this bilateral relationship. It's not a trilateral relationship in that sense. And the other is what the United States is doing to Pakistan. That might tend to embolden it. That might tend to make it more adventurous. Because we have a psychopath in Asim Munir at the head of the dispensation in Pakistan, who thinks, he lost the war, but he has made himself into a field marshal, basically. And he might think that he has the backing of the United States. And of course, he has the backing of China. So he can be very adventurous. He can, again, because the domestic problems are increasing. The domestic problems are growing. They are not, whether it is in Pakistan-occupied Kashmir, whether it is economy, or it is, incarcerating their most popular leader, keeping him behind bars for more than 3 years. So the problems are not going away anywhere. Problems will continue to increase, and that is why Pahalgam was, executed last year. And there could be another Pahalgam also. So we have to be ready for that. We have to be ready for any adventurism from Pakistan per se. Now, the support from the United States to Pakistan could embolden it, definitely. And I think the sort of statements, meaning what Asim Munir made this comment on the US territory, saying that, if we are facing an existential threat or something of that sort, we will make sure that the half the world goes down with us. And there was not a murmur, there was not even a rap on the knuckle, meaning such sort of nuclear threats that are being issued by Asim Munir from the territory of the United States.
Right.
And there is no reprimand from the United States. So I think these are the sort of things that will tend to embolden Pakistan. But we need to be prepared. We have to strengthen ourselves, which I think we are in the process of doing.
Right. Clearly a lot of factors at play. We'll, of course, be keeping an eye. The two leaders expected to meet at 6:30 p.m. and only minutes away from now. We'll, of course, continue to keep our ears close to the ground. I'd like to thank all of our panelists, Ambassador Fabian, Ambassador Sajjanhar, as well as Mr. Sanjeev P. Yadav, for joining us with their insight. And with that, it's a wrap on this edition of News Center. More news and updates will continue right here.
Hello and welcome to a very special edition of Indianomics, occasioned by the changed geopolitics. Crude price this morning are back to their March 1st level of $78 per barrel after remaining over $100 for over 60 days, 2 months. Now, how does this price fall impact the Indian economy and policy making? The Reserve Bank had brought down the GDP forecast for the current year from 6.9 to 6.6% on the assumption of $95 for crude average for the year. For the same reason, it had raised its inflation forecast from 4.6 to 5.1, 50 basis points higher for the current year. Now the crude has cooled and a $1.95 average looks extremely unlikely. Should we upgrade our GDP forecast and lower our inflation fears? And therefore, how will this impact RBI policies and policy expectations? How will it impact yields and, above all, the rupee? Joining me are 4 top-notch economists, Kaushik Das of Deutsche Bank, Upasana Bharadwaj of Kotak Mahindra Bank, Indranil Pan of Yes Bank, and in the studio, thank you very much, Dheeraj Nim of ANZ Research. Gentlemen and Upasana, thank you very much indeed for your time. Let me start with the policy question first, because that's more impacting yields. Kaushik, your inflation forecast because of the likely lower average crude and therefore your RBI expectation.
Lata, good morning. We always had inflation at 4.9%, even when RBI was at 4.6%. So RBI, as you said, increased it to 5.1. There is this couple of things which I want to highlight. One is obviously the El Nino risk and, whether all this abnormal monsoon or subnormal monsoon leads to food price spike. It can happen in, July, August. So you don't know about that. So that risk element is there. And when food prices go up, it can take a few months before it starts coming down. So the upside risk to inflation is there because of monsoon, number one. The second is the fuel price hike that has happened in May. We have to see whether the government decides to reverse those fuel price hike or not. It may happen that they might hike the excise duty and take, the money in revenues, which they would be losing when they cut the excise duty, in March. So that can happen, or they can allow oil marketing companies to, recoup some of the losses they've made. So it is not necessary that the fuel price that has been increased in the, domestic pump would be reduced. So if you are not getting a reversal of, say, petrol, diesel anytime soon, and you have inflation risks, you could very well still see inflation around 5%. So we have kept our inflation forecast unchanged at 4.9. I don't think there is immediate risk of any rate hike. Even before this fuel price, decline, oil price decline, we were not looking for an August rate hike. But October, December, I think still there is a case for rate hike. If your inflation is at 5% and your policy rate is 5.25, then you need to do the adjustment. And RBI is always forward-looking. So when they come to October, December, they'll look at 2027.
So you're penciling in 2 hikes and that doesn't change, right?
That doesn't change, yeah, right.
Dheeraj, would you agree?
Completely. I think as far as the inflation picture is concerned, we were at 5% and upside risks. I think that upside risk phraseology now goes away where the oil price currently is. But I would still be very cautious. We've had 3 very bad months of significant agricultural input price inflation, which tends to feed through food prices with a lag of about 12 to 13 months. So it may very well be in 27 we see the impact on food prices, and especially also from El Nino as well. So I will hold my horses in terms of revising down inflation forecast, but of course the guidance in terms of risk changes. Now, as far as the policy rates is concerned, we currently have penciled in 2 hikes, August and October. And I think hiking now makes more sense because while, the steps to ease the pressure on the rupee, of course, would work well. But from a forward-looking perspective, the real policy rate, the ex-ante policy rate, to me, it looks very, very low for the kind of macroeconomic backdrop we're thinking of the next 1 year. So I think the RBI will have to make that adjustment, so better sooner rather than later.
Okay. Indranil Pan, what is your guess? The yields have actually moved down significantly to 6.87 from a high of 7.17 before the policy. Are you expecting rate hikes this year? And by the way, I just wanted to add a wee bit on this El Nino thing. We had Ramesh Chand immediately after the war had started, and at that time we were at the height of the urea shortage and the sulfur shortage. And he said, we have enough grains for 1 year. Grains. There will be, of course, problems with other things, but food grains, he said, we have. So your take, Indranil Pan, on inflation, and more importantly, whether you are changing your interest rate expectation.
In terms of your last question, yes, we have adequate food grains for 1 year. But the issue is if the monsoons fail and if the risks of the El Nino are increasing over the months, with reservoir levels being on the lower side, we really don't have a clear handle in terms of how the Rabi also sort of reacts to the El Nino, which necessarily means that there could be some upside in terms of even cereal prices going forward, despite the comfortable buffers at this point in time. Second, in terms of the inflation expectations, obviously, given the oil prices having come down, there is a pressure on the economists to reduce inflation sort of numbers. If I look at the first quarter expectations of the Reserve Bank of India, they were at 4.2, and the inflation is already undershooting that expectations even before the oil price increases at the pump head had happened, which necessarily means that there is a downside bias to the inflation. Of course, we really don't know what is happening in terms of the final deal, because this will be an MOU and we have a 60-day cooling period after that before the final deal is signed. And there can be significant slip between the cup and the lip. So immediately we are not revising our inflation forecast, which is at 4.9%. But now, as Dheeraj rightly pointed out, the upside bias goes off and we replace it with a downside bias. In terms of the RBI policy actions, I think they have a much more better holding power. So we were initially penciling in an August hike, given the pump head price changes that had happened and expectations of further changes on the pump head prices. That seems to have been going off. I am not sure whether they will reduce the prices once they have raised it and addressed some amount.
Rate hike, sir, rate hike.
Rate hike, I am not really sort of looking at even an October rate hike at this point in time, given the undershoot of inflation that we are expecting, even from an RBI's forecast perspective.
So you have a no hike. The other two gentlemen who have just voted have 2 hikes. Only Dheeraj is a little earlier. I'm preserving the best for the last. Upasana, your rate hike expectations, have you changed them because of the changed crude scenario?
So, Lata, again, like all others, I haven't revised down our inflation estimates of 5%. But I agree with others as well that there is a slight downside, but we'll have to hold our horses again because we don't know how the El Nino is going to play out. The other headwind is also that core inflation, how much of pass-through from the WPI is going to happen. So we need to keep both of this in mind, even though other tailwinds are there now, energy prices, urea prices, and rupee in check. But yet, I think the risks are evenly balanced, and hence we will keep our 5% intact for now. Having said that, on the RBI policy front, we were expecting a rate hike in October. For now, we still retain that, but there is a clear shift backwards towards the probability that the rate hike does not happen in October and it may happen in December. But having said that, I think a 50 basis of rate hike should happen if inflation is going to be around the 5% handle.
Okay, so 3:1, we have a vote of 2 rate hikes and no change from Indranil. Okay, the other big thing for the markets, I'll come to the growth questions later because the market is more worried about rates and rupee. So for rupee, let me start with you, Upasana. The crude oil fall is going to make a seminal difference to the current account deficit. Indeed, we have a current account surplus in April itself. And all-time high monthly exports for May, $45.2 billion. Now with crude falling, is rupee on a slightly firmer path?
Yes, absolutely. I think what happens is, we were looking at a 2 to 2 quarter CAD at, $95 crude.
Yes.
And now we are looking, if 85 is the new, let's say, norm, then at that range, and, we should remember that remittances flow is also increasing quite rapidly.
Yes.
It's robust. So I guess we could be somewhere close to the 1.5% handle on the current account deficit if crude oil prices settle to around 85. Just I want to mention one thing. While we are seeing sub 80 levels crude oil prices right now, I'm not sure whether it will really sustain at such low levels because inventory buildup is important to keep in mind towards the latter part of the year. So that's the reason I think 80-85 is a fair base assumption to go with for the full year, even if we see corrections right now. So we are looking at a 1.5 to 1.7% current account deficit, downside basically, almost a 60-70 basis downside. And at the same time, balance of payment, obviously because of the RBI measures that have happened, is looking meaningfully like around a $20 to $30 billion surplus. When we were talking about a 50 plus kind of a deficit earlier. So with all the measures that have taken and the development that has happened on the energy prices, clearly rupee has room to appreciate towards maybe 93 and a half levels. Beyond that, any further appreciation is something which probably will be dependent on how RBI is looking at.
Fair enough.
Buffering their FX reserves.
Okay. Fair enough. There are some people who also believe too much of a rally will spoil their swap arithmetic as well. But anyway, Dheeraj, your take. If y'all can be a little brief, I'll try and get others before that.
I broadly agree with Upasana's points. I think current account deficit could fall very well below 1.5% of GDP if you consider all other gold curves, etc., to play out as well. For the rupee, I'm sort of thinking that 93.5, 94 becomes an important support level, both technically and even for the RBI. I see there is a significant need to replenish FX reserves. Now that one shock seems to be somewhat passing, we need to prepare for the next one. So I think these organic flows that will come in will have to be absorbed. So I would be sort of keen to see rupee around 94 in my forecast on the better side of things. But in the baseline, we think it would be more or less stable around the current levels.
Okay. Can we quickly get Indranil and Kaushik on this and get your arguments later? Indranil, where are you seeing the currency?
So I would see the best case at around 94 because as Dheeraj rightly pointed out, the RBI needs to build its reserves. And most of the flows, FCNR and ECB, they are on swap basis, which means that the dollar doesn't come to the market. It directly goes to the Reserve Bank of India and replenishes its FX reserves. So that I think is a very important point to note. And let's not forget that the easing of risks globally is also leading to some amount of dollar depreciation. So that will also lead to some pressure for the rupee to appreciate.
Okay. Kaushik, your number, and then I'll come for the arguments.
Yeah, so we had 93 for some time and we are holding on to that. But I think rupee can breach even 93 or lower in the short term. But by the year end, as RBI will also be buying, you'll go to 93 probably to end this year. And I think, the FCNRB and all these things that have been announced, people are underestimating how much money can come in. If you just go by the size of the banking system, NDTL, or percentage of FX reserves or percentage of GDP, I just did a report and, you could get something like 72 to 77 billion if that same size of the economy were to be maintained or percentage of NDTL. So if you get something like 75 billion and current account deficit is going down, then you'll have a BOP surplus which will be much more than what people are thinking currently. So can rupee breach 93 in the short term? Very easily. And then obviously at some point RBI will buy. But then you should be still at 93 by the end of the year is what we are forecasting at this.
Fair point. I think we have to drum it into our minds that Jan, Feb, March, April, we have had a current account surplus. And many of these have been troubled months. And therefore, there's something going right in the trade arithmetic. Maybe the remittances have been advanced. That could be a negative argument. But still, rupee at 93 is about 94 or perhaps 93 is the consensus from our experts. We have to get from them what they think about growth as well and, where the market yields are headed. All those questions after the break. Welcome back to this very special edition of Indianomics, a reset of India's macro mathematics because of the change in geopolitics and the fall in prices. I've been speaking with Dheeraj Nim of ANZ, Upasana Bharadwaj of Kotak, Kaushik Das of Deutsche Bank, and Indranil Pan of Yes Bank. Gentlemen and Upasana, thank you very much for waiting by. Let me now come to the growth question. Kaushik, is there a need for upping our growth forecast? The Reserve Bank had brought it down to 6.6, but 7.8 was the last quarterly number. Really, 1.3 percentage points do we have to come down?
Yeah, so last year, the full year number was 7.7.
Yes.
We have 6.7 for this year, which also bakes into, the forecast, this whole expectation that you could have a subnormal monsoon. So agricultural growth could take a hit, and rural consumption then can spill over into urban consumption with a lag. So we have taken that into consideration. So we have given 6.7. We were not as low as some people who had gone down after this Iran war. And people were discussing even sub 6.5% numbers. So that risk has gone. But my guess is, whatever I've been forecasting last 24 months, GDP growth has always surprised to the upside each and every quarter. So my guess is we might end up getting more than 7% this year again. And that is why I'm saying that April, June GDP data, when it comes out in end August, if you get a GDP number higher than 7%, whereas inflation is heading towards 5%, RBI has given a forecast of 5.9 for October, December, because the base is very low. Plus, by that time, you should have some, kind of pass through. So if your growth is above 7%, inflation is above 5.5 by October, December, then RBI possibly could think of hiking rates, because the fear about growth being much lower will go, whereas the inflation part will stay, and inflation expectation will also start picking up, which has already started picking up. And you see RBI probably reacting to that.
No, absolutely. Dheeraj, actually, I wanted to add to what Kaushik is saying about higher than expected real numbers. If you looked at the WPI and the PPI release that the economic advisor put out, they are looking at very low services inflation, the 7 sectors, banking, insurance, transportation. And services is 60% of our GDP or even more. If it is going to be deflated by such a small number, do you think we are going to be at a 7% ballpark GDP even this year?
I would not rule it out. It's very much within the error band of forecast right now. But the broader point here is that I don't think any of us were very pessimistic about growth to begin.
No, I got sub 6.5 numbers.
I was at 6.4, but I think 6.5 and thereabouts is still a very strong number for the scale of oil price shock we were facing. I think now with the oil prices falling so much, and let's say even if they average $85 to $90 a barrel, there is a clear mathematical case to up it by at least 20 basis points, in my opinion. So 6.6. And from that, 7% is not very far, considering it's a new GDP data. Hardly any of us have experience in forecasting it. It's surprise on the upside. And the point you make about deflator is actually very important, because at least for me, the past few quarters, the surprise actually has been on the deflator side. And you think about it, the growth has been so stupendous the last few quarters, but yet inflation has not really shown up in a big way in most numbers. So I think that could very well be the case.
Yeah, and even the CPI, which is only 40% of the deflator, is also been surprising on the downside for the past 2 months. Upasana, your growth number, are you upping it at all?
Yes, Lata, because we were on the lower side, actually. We were around 6.1 to 6.3 range. That's what we were looking at. So clearly there is about a 30 to 40 basis upside here. So we'll probably be anchoring around 6.5 to 6.6 yet. But having said that, depending on the deflator, etc., we will have to relook at it. For now, we are expecting around 6.5 to 6.6. That's higher than what we were expecting earlier.
Okay, fair point. Mr. Indranil Pan, growth expectation, but more importantly, the point that Kaushik made, that if growth is going to be stronger, then Reserve Bank will have less qualms about hiking as well. So the composite picture of both growth and rates.
Well, I hear Kaushik out, but very honestly, I don't know how we economists actually project growth. Because you talked about the deflator, but I'm sure none of us actually project the nominal and then come down to the real. We do the real and then go up to the nominal. So there's a difference in terms of how we project growth. Now, having said that, I think we were at a 6.7% even before the RBI got it down, and now we are at a 6.6%. We had taken into consideration some of the factors that we thought were otherwise likely to play out, which means the higher relatively higher inflation for the current year impacting negatively the real wage growth of both the urban and the rural sector, going off of the GST rationalization pull on the growth, and probably an eventual hike of the Reserve Bank of India. So we will still maintain at 6.6%. Now, between the growth and the inflation, I think the more important picture for the RBI, in my opinion, at this point in time is inflation. And through inflation, they will allow a bit of a sacrifice on the growth if stability is another priority. And I think, therefore, my belief is that even if growth is at 7%, but inflation is at 5.5%, they will probably be hiking rates.
Okay. Very quickly, I was trying to squeeze time for this. The extraordinary fears of fiscal slippage and higher borrowing is out of the window, you think, Dheeraj?
I don't think so. I think we will hold on to our 4.5, 4.6% of GDP.
But extra borrowing is unlikely.
Perhaps.
So where do you see the yield? At 6.87, does the second half shoot above 7?
We have it at 7 in our baseline forecast. Of course, the risks are to the downside now.
Are to the downside now. Okay. Well, there was a theory that all the FCNR money will get parked in G6, and that's why it's lower now, and it will rise as inflation rises to over 5% in the third quarter. Indranil Pan, what's your sense about the yield? Does it stay below 7 first half, second half? Where do you see it?
I think I am more or less confident, if the oil holds at these levels, more or less confident that the fiscal will be not in a very aggravated negative. And there will be more borrowings in the T-bills to meet any shortages and rather than the G6. So even before the war, we had a 685 to a 725 range. We are at the lower end of the range. But I think, very honestly, I'm not being able to see less than a 680, given that there are elements of surprises that can happen both on the inflation and the fiscal.
Fair enough. Kaushik, your range for the 10-year?
So, Lata, it's all relative to where you expect the terminal repo rate to be. So if you have 525 now and you expect repo rate to go up to 6.25, then your 10-year bond yield should be at 675 to 685. But remember that in this month, probably we're going to get an announcement about bond index inclusion. And if that happens, which obviously the money will come in from next year, but people will get much more bullish about the Indian bond. And given that oil prices are coming down, RBI is not going to hike anytime soon, at least in August. I think bond yields can rally.
Upasana, very quickly, your expectation of both fiscal deficit and, more importantly, yield range.
Yeah, so fiscal deficit, I agree. I don't think there's too much risk of an extra borrowing here. If at all, T-bills is the solution from there. So I guess 10, 15 basis here and there, I don't really rule that out. But having said that, on the yields front, clearly, as others have pointed out too, I think there is room for the yield curve to further go down by 10 basis or 50 maybe. I don't rule that out, but again, we will normalize higher.
Thank you very much, Kaushik, Indranil, Upasana and Dheeraj, for this very erudite and very insightful conversation, laying a lot of fears to rest and very positive on the currency, 93 to 94. I think that's a very big takeaway from me from this special edition of Ingenomics. Thank you for watching.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Crude oil prices slide as the 14-point draft memorandum between Iran and the US gets leaked. Under the purported deal, Tehran agrees to abandon nuclear weapons and leave the fate of enriched uranium to a follow-up agreement. In return, Washington would lift oil sanctions and offer a $300 billion rehab package. Prime Minister Modi and US President Trump set to hold bilateral talks on the sidelines of the G7 summit in France. This will be the first meeting between the two leaders in 16 months. The relationship has been strained due to Trump's tariffs and the recent killing of 3 Indian seafarers in the Gulf by US troops. Sensex and Nifty gain for the 4th straight session. Nifty moves back above 24,000 mark. Defense stocks lead the rally. Rupee regains more lost ground against the dollar. NSE all set to file papers to go public today. Sources say the fundraise could exceed 30,000 crore rupees with a 6% stake sale, making it the largest IPO in India so far. Largest shareholder LIC is unlikely to sell shares. SBI, Bank of Baroda, Morgan Stanley, Temasek and several others likely to sell stake. That's an exclusive. Jay Parikh, who leads the core AI team at Microsoft, tells CNBC TV 18 ecosystems need to be open and flexible to change, but reiterates moving fast is not about being reckless. Adds the next big challenge is not building AI models, but deploying them at scale. AI is rewriting the compute game and demand visibility remains strong, says Vamsi Bopanna, a senior executive at semiconductor maker AMD, wants India to focus on holistic approach to AI beyond data centers and the physical infrastructure. That's another exclusive. Shares of real estate companies in Mumbai decline after civic body cuts water supply to construction projects. The city is facing an acute water shortage and other industries will also see a 20% cut in supply. A hat-trick by Messi gives the defending champions a dream start to the World Cup. Messi becomes the joint highest scorer at a World Cup as Argentina beat Algeria. Mbappe strikes twice to part France to a win in their opening campaign against Senegal. Cristiano Ronaldo and Luka Modric eye glory. The two icons begin what could be their final campaign for football's biggest prize. Portugal faces Congo and Croatia takes on England in a blockbuster clash. All right, the top story this evening, crude oil prices slid as the leaked 14-point draft memorandum between Iran and the US reveals details of the deal. Here are the latest developments. The Wall Street Journal has reported that Iran will pledge not to develop a nuclear weapon as part of the preliminary deal. Moreover, 2 months of final negotiations will begin immediately after the initial deal is signed on Friday. AFP reported that the nations will discuss a plan to lift economic sanctions and the fate of Iran's enriched uranium in these 60 days. In return, Washington will reportedly lift oil sanctions and offer a $300 billion rehab package. Reuters has reported that the private fund will be designed to trigger investment. More than half that sum has already been committed. The fund is designed to give both sides an economic incentive to conclude a final deal to end the war. However, Lebanon, which is supposed to be included in the truce, continues to be a flashpoint. Iran accused Israel of violating the truce in Lebanon 84 times since the agreement was digitally signed. This after Israeli forces killed 4 people in southern Lebanon. Meanwhile, crude oil prices are below $80 per barrel. This as several tankers carrying Iranian oil have crossed the US blockade line in the Strait of Hormuz. According to a tracking website, CNBC's Megan Casella gets us the details from the draft memorandum of agreement between US and Iran.
This 14-point memorandum of understanding. That's the latest that we know, according to a draft version of it published overnight by Bloomberg. And a few of the highlights of that deal that I want to flag here. The first is that, of course, it calls for the ending of the war on all fronts, including in Lebanon. That's spelled out within it. And that has been a sticking point with Israel, which so far has said it will not be removing its troops from Lebanon. It also calls for the lifting of the blockade, the reopening of the strait. And there's a line in there saying the U.S. and its regional partners will create a plan for rehabilitation and economic development of Iran, and that they will ensure financing of at least $300 billion. Now, U.S. officials have emphasized no government money will be part of that, but that is a big part of this plan. There's also a line in the document saying the fate of enriched material and Iran's nuclear needs will be adequately addressed in a final agreement. That gets what has been one of the key criticisms here, is that there's nothing more specific on what exactly Iran will have to do. All of that to be negotiated over the next 60 days. And they say the final deal will be negotiated within 60 days, but that it would be extendable by mutual consent. That's another criticism here, or an expectation by some skeptics who think that there's, yes, a 60-day negotiating period now, but that could be extended over and over again, that we could be caught in this sort of ongoing negotiation. Now, just to pivot real quick to the other big news at the G7 today is that there's also a lot of AI leaders sitting down with the full G7 for a working lunch later today. OpenAI's Sam Altman is in town. Meta's Alexander Wang. Dario Amodei of Anthropic is here. Salesforce, Mark Benioff. You can see a number of the leaders there. And it just goes to show you guys really where the power sits on AI and the fact that political leaders feel that they have to have business leaders at the table to be having some of these discussions. We expect them to be talking about online regulation globally of AI as well as online safety, especially the protection of kids. OpenAI had previously told CNBC earlier this week that they expect some voluntary set of commitments might be agreed to at that working lunch. So that's the other big piece that we're watching today. But of course, Iran remaining top of mind.
Now, G7 leaders also reaffirmed their unwavering support for Ukraine on the final day of the summit in France. The leaders pledged more air defense systems and support for Kyiv's military production. They also vowed to tighten sanctions on Russia, particularly in the oil and gas sectors. This followed what Trump called a very good meeting with Ukrainian President Zelensky and other G7 leaders. Zelensky said he could meet Trump again today. Prime Minister Modi and US President Trump are set to hold bilateral talks on the sidelines of the G7 summit in France. This will be the first meeting between the two leaders in 16 months. The relationship has been strained due to Trump's tariffs and the recent killing of 3 Indian seafarers in the Gulf by US troops. Both Trump and Modi shook hands and interacted briefly yesterday. Abhimanyu Sharma is here with what we can expect at the bilateral meeting later today.
Prime Minister Narendra Modi is expected to meet the US President Donald Trump on the sidelines of the G7 summit in France. Now, this meeting will come a week after 3 Indian sailors lost their lives aboard a commercial vessel due to US strikes off the coast of Oman. Now, several issues are likely to be discussed between both the sides. The uncertainty around H-1B visas has been impacting people from all nationalities, including Indians who continue to be one of the largest cohort amongst the H-1B beneficiaries. India and the US are also negotiating a trade deal, a larger trade deal, and the interim trade deal, of course, had a joint statement which was released by both the sides on the 7th of February. Any further progress is expected in the trade deal after the visit of the USTR to India next week. Also, thousands of Indians continue to remain aboard several commercial vessels which are sailing in West Asia in and around the Strait of Hormuz, which continues to be restive, and the US obviously is a part of the peace deal which is currently being negotiated. Now, it remains to be seen what all is going to be discussed on the sidelines of the G7 meet. Yesterday, Prime Minister Narendra Modi had addressed the G7 outreach session in France, and he had said that maritime security is a global concern rather than a bilateral dispute, and had urged all world leaders to ensure that maritime routes, trade routes remain open for the benefit of all countries and for the benefit of free trade.
All right, thank you, Abhimanyu, for that. Now to the day's market action. Sensex and Nifty gained for the 4th straight session. Nifty has reclaimed the 24,100 mark. Mid-caps and banks also rallied in tandem. Hormas Patakia is here with the market wrap.
Another good day for the markets today. 4th straight day of gains for the index, nearing the mark of 24,100 now on the upside. And from last week's lows, which were 23,070, the index has recovered more than 1,000 points in just a matter of 4 trading sessions. What led the charge in today's trading session? Similar to yesterday, it was the IT names, along with the fact that there was equal contribution from the banks as well. And the last leg of the up move over the last 30 minutes of the trading session was led by Reliance Industries. So most of the index heavyweights playing their part in ensuring that the market continues to move higher. Now, of course, 2 Tata Group names had very contrasting fortunes in today's trading session. Trent had a very strong up move today, up almost 7% on very strong volumes as well, among the top gainers on the index. But in contrast, Tata Motors Passenger Vehicles, after the JLR Investor Day, did not have a very good day, down almost 9%, and that was the top loser on the Nifty in today's trading session. But of course, the action lies in the broader markets, and it was the power T&D space that continues to dominate headlines. Another positive brokerage that came in for Schneider Electric today. The stock is up 75% already this year, and some positive up moves seen in GE Vernova, Hitachi Energy, CG Power, all of them seeing very healthy gains in today's trading session. And not just them, there were plenty of other volume-led movers as well in the broader markets. IDBI Bank was up 18%, and that was among the most traded names on the Nifty 500 in today's trading session. Car trade tech has had a wild ride already from levels of 1700. It has moved up to 2800 in a matter of just a few trading sessions. Another 12% added in today's trade. And along with that, there were some smaller PSU banks which saw buying interest like UCO Bank, Central Bank, and the likes. Where do we go next now from here? The Nifty is now nearing that 24,100 mark, but the next level to watch on the upside is the 100-day moving average, which comes close to the 24,250 level. Of course, along with that, it is Reliance Industries, the stock that holds the key ahead of its AGM on Friday. We keep an eye out on that. Of course, we move into the Sensex weekly expiry in tomorrow's session, and the most important trigger for tonight is going to be the Fed rate decision. And if there is any further commentary on that, we'll react to that in tomorrow's trading session as well.
All right, thank you, Hormaz. All eyes are now on the US Federal Reserve as it is set to deliver its first policy decision under new chair Kevin Warsh later tonight. A CNBC survey expects benchmark rates to be left unchanged. However, markets will be closely watching the Fed's guidance. Nearly 88% of respondents expect the central bank to drop its easing bias from the policy statement, which has signaled the Fed's next move would likely be a cut. We'll be bringing you special coverage from Wall Street and Washington, D.C. as Kevin Warsh announces his first rate decision. Tune into CNBC TV 18 later tonight. All right, on to a CNBC TV 18 exclusive. NSE is set to file its draft papers to go public today. Sources say the fundraise could exceed 30,000 crore rupees with a 6% stake sale, making it the largest IPO in India so far. Yash Jain is here with the details. Yash, a mega IPO in the making. Please give us the details.
Well, it's taken years of putting the right compliance, putting the right processes, putting the right efficiencies, and then, going to the regulator and being able to see this headline that you see on your screen. The National Stock Exchange of India, NSE, likely to file its IPO, DRHP, its IPO papers with market regulator SEBI today. As far as the size of the IPO is concerned, sources tell us that it's expected to be about 6% of the IPO size, for which the company could look to garner about 30,000 crore rupees. What's interesting about this large size and the large IPO is that the largest shareholder in NSE, that is the Life Insurance Corporation of India or LIC, is unlikely to sell a single share as far as the IPO is concerned. As I said, it's a large shareholder, the largest one, holding about 10.7% stake. But who are the other shareholders in the National Stock Exchange? LIC, as I said, with 10.7% stake. There's Stock Holding Corporation with 4.4%, SBI Capital with 4.3%, SBI with about 3% stake. Not just that, we have more shareholders. GICRE with 1.64% stake, Oriental Bank and New India Assurance both with about 1.4% stake as far as NSE is concerned. A couple of scenarios with respect to how the valuations could really turn up, but that will only be provided once the roadshows happen and the feedback is received. But if NSE goes ahead and does that fundraising of 30,000 crore with about 6% of the IPO size, then that would value NSE at about 5 lakh crore rupees. At about 32,000 crore of fundraising with 6%, that would value NSE at 5.33 lakh crore rupees. Similarly, about 35,000 crore fundraising with 6% IPO size, that could value NSE at about 5.83 lakh crore rupees. Irrespective of the valuation, the fundraising of about 30,000 crore or upwards would be the largest in the history of Indian capital markets. Now, in terms of valuation multiples, 9 months FY26 EPS was at about 29.5 rupees. That values LIC on a forward basis, FY27 estimated EPS at 39 times. Look at some of the listed peers which NSE has. BSE as well as MCX. BSE trades at 50.5 times, MCX trades at 41.1 times forward multiple. Finally coming to which shareholders would be selling their stake, SBI Bank of Baroda, Stock Holding Corporation, Indian Bank of India, GICRE, as you can see on your screen. There's more on the PSU side in terms of the likely shareholders. We'll have players on the private side who would be selling, like Morgan Stanley, Chris Capital, ICICI Lombard, CPPIB, all of them coming together to dilute a part of their holding towards NSE's IPO.
All right. Thank you, Yash, for that comprehensive update. What we'll do is we'll take a short break. On the other side, we'll tell you about This important piece of news coming in from Mumbai, with the shares of real estate companies in Mumbai see red after civic body cuts water supply to construction projects. The city is facing an acute water shortage, and other industries will also see a 20% cut in supply. Welcome back. Shares of major real estate developers with significant exposure to the Mumbai metropolitan region traded lower after BMC suspended water supply to construction sites. This comes amid an acute shortage caused by delayed monsoon rains. The water level in the 7 lakes supplying water to Mumbai as of this morning stood at just 10%. Santya Gora has more. Santya.
The stalled monsoon on the western front and its sluggish progress on the eastern front is posing serious concerns when it comes to water availability and kharif crops. The Indian Met Department and various other private weather forecasters have already announced El Nino onset, and as per NOAA, an American agency, there is a 63% chance that this could be a very strong El Nino year, with its impact most effective during June to September, the core monsoon months in India. To manage the fallout, the central government and various state governments are preparing contingency plans. Yesterday, the Union Agriculture Ministry instructed its officials, state governments and local administration to prepare crop-wise, district-wise and state-wise contingency plans for farmers. Traditionally, El Nino impacts core monsoon zone states, those that largely depend on rainfall for agriculture. The central government has identified 197 districts likely to be worst hit by the rainfall deficit triggered by El Nino and other factors. Local administration across 326 districts in 12 states has also been instructed to draw up contingency plans for farmers, including and not limited to asking farmers to delay Kharif sowing. Water storage is the other pressing challenge here. In Mumbai, lake levels stood at just 10% as of 6 a.m. on 17 June. BMC, which had already implemented a 10% water cut for residential areas last month, has now announced a 20% water cut for industrial and commercial purposes and discontinued water supply temporarily to all construction activity and swimming pools in the city. At the state level, Maharashtra's water storage today stands at around 24%. Water rationing across various areas reflects the intensity of the situation, and the current state of the monsoon is making matters worse.
All right. Thank you, Santhya, for that concerning developments in Mumbai. Moving on, semiconductor maker AMD's senior VP says artificial intelligence is rewriting the compute game. Speaking with CNBC TV 18's Shireen Bhan, Vamsi Bopanna said that demand visibility remains strong. He also wants India to focus on holistic approach to AI beyond data centers.
2026, we're pretty much in the middle of the year now. If I were to ask you about the top 5 trends that will define the rest of this year and perhaps 2027, what would those be from an AI point of view?
Yeah, I mean, let me pause and think. Actually, you know, someone taught me this thing, which is it's sometimes easier to predict the long future than the super near future.
Yeah, correct.
But, you know, having said that, I think, you know, some are going to happen. I think number one is AI is still absolutely in its infancy. So the pace of AI adoption is going to be faster than what we have seen before. So I think that's absolutely true. Inference will continue to explode. There's so much demand for people wanting to use inference. Within inference, you know, there probably is going to be even more segmentation for markets, you know, more real-time inference, more, you know, lower latency inference, other sorts of things are going to start to emerge as subsegments. Agentic, you called that out rightly, a lot more activity around, you know, agentic. And then, you know, to support all this growth, then you need the ability of the infrastructure, right? The infrastructure, you know, starting with compute, you know, will be in a lot of demand. But also demand on physical infrastructure, right? There's going to be a demand on power and data centers. You know, that will continue to be, you know, quite a premium.
The data center story, and I just want to ask you your thoughts on how India plays in the data center side. We've just seen the government announce a 20-year tax holiday. Yeah. We've seen some big ticket investments coming into India on the back of that. What do you make of the data center opportunity for a country like India?
I would view that as part of the overall AI opportunity. I certainly believe that more overall capabilities for delivering AI would be important for India. I think the government recognizes that, the local authorities recognize that, and a piece of that is physical infrastructure, and physical infrastructure being data centers and the associated ecosystem elements. But I wouldn't necessarily say the Indian authorities or Indian policy should be only focused on that. That is one element of it. But, you know, what do you think of other elements like, you know, solutions beyond that, compute beyond that, right? So thinking about AI holistically beyond just physical infrastructure is something that I think would serve the economy well.
From one newsmaker to another, Microsoft's Executive Vice President Jay Parikh says that moving fast is super important for the company because it translates to the speed of learning. Speaking with Shireen Bhan in San Francisco, Parikh said he is moving fast but has no desire to break things when it comes to deployment.
Doing deployment, but deployment at scale, and you're no stranger to that. You did it at Facebook, you're doing it now at Microsoft. and this mentality of, move fast and break things, but you're not into the breaking things.
I'm not into the breaking things, yeah.
Why not?
But moving fast is super important for us because to me it's the speed of learning, right? And it's not just, hey, we're being reckless or that quality doesn't matter. That's not anything in my vocabulary about moving fast. Moving fast is about that learning loop, that ability to learn faster and faster. Because as we talked about, the world is changing, the technology is changing, the geopolitical landscape is changing all the time. So our ability to learn faster and keep iterating is really the fun part. It's the energizing part. Sometimes, it is the confusing part because you can have a plan, an idea, and then realize you have to reset, a couple of days later. But that's what keeps us moving and energized. And, frankly, with Microsoft's, I'd say just the talent, the depth of just expertise and just incredible experience and connection and understanding of these companies, small companies and all of the big companies around the world, that knowledge, those relationships. And we are a platform company. We've built a lot of platforms, in the 51 years here. So that understanding of these end-to-end systems, the platform, the tools that serve our end users is something this company has a lot of history, a lot of knowledge, a lot of learnings, and a lot of experience on.
And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18.
A computer science engineer from IIT India Kharagpur, Vamsi Bopanna is the Senior Vice President of the Artificial Intelligence Group at AMD. Bopanna is looking at all things AI in this role, from the data center AI GPU business to cross-company AI strategy. He is driving AMD's AI roadmap across client, edge, and cloud. A big believer in open source, Bopanna says he has lived through the browser era. The current pace of change is nothing like he's seen before. A tech optimist with half a dozen patents to his credit, we talk about how the compute game is being rewritten, why every product generation will see a significant improvement in cost, and why he believes in an open source future, and how India is contributing to AMD innovation and IP.
Hey, Vamsi, thanks so much.
Hi, Shireen.
Appreciate it. Good to see you. Good to see you here at AMD.
Yeah.
So, what a journey it's been for you, Vamsi. I mean, you know, from IIT Kharagpur to the University of Illinois, then your own startup, and of course, 2022, courtesy of merger at AMD.
Yeah, it's been incredible. You know, I feel like I've had one of the greatest privileges having the career here. And, you know, just even within AMD, I keep joking, right? You know, I have one of the best jobs there is in the industry. One of the real privileges of my career also here is to be at the tip of the spear of innovation, as they say.
The engine of growth.
And you know, every week I have the privilege of meeting people doing incredible things, people that are you know, creating new medicine, you know, solving, you know, new math that hasn't been solved before, and just, you know, tackling, you know, really difficult real world problems. And it's just been so exciting to be in the middle of all this innovation here in the Valley. And, you know, even more exciting is that more and more of this innovation is actually happening on AMD platforms. So it's been amazing.
You know, and I want to talk about the AMD platform and, of course, everything that you're doing, which is exciting and interesting here at AMD.
Yeah.
And we've got a sampler of everything that you're doing in the AMD Technology Showroom. That's right. But, you know, you talked about transformation. You talked about the real-world complex challenges that are hopefully being addressed courtesy AI. How confident do you feel at this point in time of real breakthroughs in healthcare, in medicine? You know, what are you hearing from people that you work with and that you talk to?
Well, I mean, like I said, right, given the interactions that I have with people that are absolutely at the bleeding edge of innovation, I feel like there are a few things going on. Number one is the future of computing is being rewritten as we speak. And it's just such a wonderful time for us to be in the space right at this moment. And because such innovation is happening in computing, there's just incredible gains across disciplines, right? Whether it's healthcare or producing new materials or solving new math, it's just across the fields. It's a Cambrian explosion, so to say. I can quote one of my good friends who was the creator of, you know, one of the largest AI capabilities existing today. He said, in the next few decades, there'll be more medicines that will be produced because of AI advances than we were ever been able to produce.
Wow.
Right. And that's exciting, right? It's just, you know, the capabilities of AI are advancing to a space where explosive gains are being had right today.
Well, you know, speaking of the fact that, you know, as you said, computing is being rewritten. From the AMD vantage point, you know, you're the challenger. You're up against the giant, but it's been a David or Goliath story that's been playing out over the last few years. You know, how do you address this market where you're with the challenger mentality? What has that been about for you in the last few years as you kind of create your own playing field, as you build on your niche? And, you know, you've got the numbers to speak of today, but let's walk people through that journey of the last few years.
First of all, I think, you know, it's the sort of thing that AMD is proven before, right? If you look at where we have come from our CPU journey, you know, when Lisa first took over as CEO, we didn't have much market share in the CPU space, and we had a massive competitor that we were faced with. But systematically, we put together a strategy, and over a few generations of product, we got to a place where we have absolute leadership in that space. So we feel like we know how that movie has played out, and we can play this movie over here. Let me tell you a little bit about sort of how we've approached the problem, where did we start, and our strategy that has led us to this point. I started actually my AI group about 10 years ago, right? Even though a lot of gains seem like recent, we actually started a long time back. It's actually when we were trying to solve 5G communications that was coming at us pretty fast. We were looking at our current devices and said, oh my God, right, how do I solve this level of compute problem with our roadmap? And we felt like we had to do something quite different. And we built at that time what we called as a math engine, which was a very dense way of doing math operations. And later on, we realized that this is a fantastic AI machine. So we called it AI engines, and we went to production, and the first communication calls with 5G actually happened on that platform. We used that same base technology to then implement it in various things, like front cameras in cars. We also did the first x86-based PCs. So if you had a laptop and you were on a Zoom call or a Teams call, and you did background blur or your eye gaze is getting fixed, those sort of experiences, we were the first in the industry to actually take it to market. So this was all happening, right? This was well before ChatGPT, right? And then completely in parallel, AMD has had fantastic GPU heritage, right? Over multiple decades. And we focused on a different segment of the market at the time. We were building the biggest machines. If you look at, for example, the fastest supercomputers, the top few supercomputers are all AMD machines built on AMD GPUs. But then when about 4 years ago, by the way, this is the Xilinx, former Xilinx campus, right? When we brought Xilinx and AMD together, we felt like, hey, let's look at what we could go after as the joint company. And by far, the biggest opportunity was AI. And we said, we needed to put a lot more muscle behind this focus and trust that we want to have. And we created what is now my group, the AI group. We pulled together the CPU, GPU, FPGA resources.
Data center, everything.
All of the resources and said, let's go after this AI opportunity. And we created our new strategy at the time, which was based on 3 pillars. The first pillar was we needed a leadership roadmap that we need to produce reliably. Every year, we need to produce products that lead in the market. We also knew that AI would have to be pervasively infused into all our roadmap. Not just CPUs, not just GPUs, but across all our portfolio, AI is going to be infused. And then we said, we need to create a world-class software experience where everybody should be able to just get things to work easily on AMD platforms. And we knew that we had to partner with the open source community.
Correct.
Because that community moves fast. And if there's one thing that characterizes AI more than anything else, it's speed. And we knew we had to go fast. And the speed that we were going after with is using the open source community as our collaboration partner. And the third pillar is we needed to establish the deep partnerships with the at-scale leaders that deploying AI at literally planetary scale. And the reason we need to do that is because we need to be in sync with where their roadmaps were. We need to be sitting at their tables and saying, okay, what product makes sense to be at the forefront of AI? So as we systematically executed this strategy, the first few generations of product came along, and they were starting to get used by customers. As the open source community embraced AMD, we've had more and more people use AMD, and customers started trusting us with our workloads, more and more workloads coming onto AMD platforms. That's what has been resulting in where we are today. And we feel we are incredibly well positioned based off of the progress that we have made. Of course, we respect all competition, but we'll take our chances.
Well, the bets are paying off. You've had a record quarter, but let's talk, Bamsi, a little bit about the opportunities. You know, you said that the codes are being rewritten at this point in time as far as the business is concerned. Everyone's talking about what this opportunity could look like. Since you are steering the engines of innovation as well as the engines of growth here at AMD, what are we talking about? What is the size of the opportunity? And link that back to the kind of investments that industry is making on CapEx. And the question is of ROI. How do you address that?
Well, first I'll start with the, not numbers type of opportunity, right? The opportunity is truly, transformational. It's a once in multi-generational opportunity, right? Foundationally, it's the future of computing that is changing, right? The way you can think about it is for about 5-7 decades, right? Computing used to happen in a certain way. Used to do some processing, used to store some things, and used to bring data back, process it, right? It's the classic way of computing. And here, in the past few years, it's a completely different paradigm for processing. It's neural processing. And because it's so different and so much more capable at solving certain classes of problems, you're seeing this explosive set of possibilities. And these possibilities are absolutely going to transform virtually all industries, right? We are seeing things happen, for example, in the software space with coding, right? That's, top of people's minds right now. But it's actually coming to virtually all industries, whether it's healthcare, whether it's manufacturing, whether it is, automotive, like across the board, all industries are going to transform. So it's truly, I don't believe we have seen any technology like this in the recent past. I certainly haven't seen it in my lifetime. By the way, I was at the University of Illinois when the first browser came. So, I've been around.
Seen it.
I've been around some technologies, right? And so I've lived through some of these.
So this is a very different party.
This is, you can think about sort of the scale being maybe even similar, but the pace is nothing like it. It's so much faster than anything we have seen. So that's why it's super exciting. Now, in terms of just the overall business possibilities, to get to market opportunities like $1 trillion TAM, there aren't any other opportunities like this on this planet. And that's what makes it super exciting for us. And because the gains are so transformative, the market is actually valuing these opportunities as such.
Well, it certainly is giving top dollar valuation to companies with anything linked to AI. And if they've been able to show a credible path forward, the story is completely different. But, I want to unpack some of those things that you spoke about. And let's talk about partnerships. And I'll bring this up in the context of what we just heard Satya Nadella talk about yesterday. And he believes that we need to have an ecosystem approach, or we are going to see dislocations, which will neither be good for industry or for customers. You're a big believer in open source, as you were just talking about. But the need to have a robust ecosystem, because as they say, you're only as strong as your weakest link. So how do you look at this problem where the concentration is so dense at this point in time with big tech? And what do you think should happen going forward?
So we are absolutely a believer in the open ecosystem philosophy. By the way, that permeates all things we do at AMD, not just in AI. If you look at our approach in other markets in the past as well, our approach is very open. The openness is in how we do things internally, how we approach our customers, how we work with our partners as well. But specifically within AI, one of the strong pillars that we laid out that is an underpinning for our overall strategy is that we are going to be open in terms of all things we do, whether it's in our hardware platforms or in our software platforms or in the work we do with our customers.
Let's talk a little bit about India as well, Vamsi. I mean, it's a big part of the AMD strategy. You've got a big capability center in India, 400 million committed till 2028. You're going through that budget at this point in time. How do you see India fitting in the AI story? There are concerns on whether we've fallen behind. There is optimism that no, we're still in the heart of the conversations, in the heart of the transactions. How do you see India?
Well, there's two aspects. Let me address both of them. First, on our own sort of capabilities and what we are doing in terms of our engineering and investments there. And again, you mentioned briefly at the beginning, right? I have a very personal connection as well, having grown up there, went to IIT. And in fact, I actually did go back in the early 2010s to build out the Xilinx Design Center. So I actually worked in India, and it's just exceptional talent in India, right? The engineering talent is amazing. There was, when I first went there, this notion that, virtually every single tape-out silicon chip that we produced at Xilinx here came out of the building one in that campus. And, a few years later, by the time I returned back after setting up the center there, every other chip was getting done out of India. So it's just phenomenal talent that we have, and AMD is, committed to building that out. We have, I think, over 10,000 employees there in India right now. So virtually every portion of our portfolio has capabilities of our engineering that actually come out in some portion from India. Now, if you shift to India as, from an AI overall market and what's happening in India, nations are seeking more self-sufficiency with respect to AI infrastructure. India is no exception. And so I think, some of the policies that the government there is pursuing are absolutely supportive of trying to do more. You could argue that, hey, could you go even faster? But the thing I would say to that is we are still in the early innings, and with all the things that are being done by policy, but also because the tremendous amount of talent there is, and because of all the things that are happening in the open source and the ecosystem there, I think the ingredients are all there to be able to go even faster.
Partnerships with companies like TCS, and you announced that earlier this year. Are you looking at doing many more of those kinds of deals in India?
We certainly hope, and we certainly will be doing more in India. I think it's definitely going to be possible to actually have AMD platforms that people will be able to access within the Indian ecosystem, and as commensurate with our overall growth in the marketplace, and with the market opportunities that are coming up in the Indian ecosystem, I certainly believe that will be so.
I also want to draw parallels with what you're doing in Taiwan, for instance, in a significant investment you've made of $10 billion in Taiwan to build out the ecosystem, and link that to what you believe could be the way forward, the path forward as far as India is concerned, in really building out this ecosystem, which everybody's talking about.
Yeah. Each of these ecosystems has some unique aspects, right? I mean, Taiwan has a tremendous manufacturing ecosystem, right? Our partners in wafer manufacturing or packaging or other sorts of things. Within India, it could be a different set of ecosystem partners that are there.
More on the design side?
Certainly design software elements, particularly with respect to open source contributions in that solution space would be, very likely. But also, I think, there are some stated objectives that the government has to promote even more things on the other end of the spectrum.
On the manufacturing side as well?
So we're not going to be necessarily limited to, this space or so on. And as these opportunities present themselves, we're going to have a deliberate way of looking at it and making the right decisions.
The data center story, and I just want to ask you your thoughts on how India plays in the data center side. We've just seen the government announce a 20-year tax holiday. We've seen some big ticket investments coming into India on the back of that. What do you make of the data center opportunity for a country like India?
I would view that as part of the overall AI opportunity. I certainly believe that more overall capabilities for delivering AI would be important for India. I think the government recognizes that, the local authorities recognize that. And a piece of that is physical infrastructure, and physical infrastructure being data centers and the associated ecosystem elements. But I wouldn't necessarily say the Indian authorities or Indian policy should be only focused on that. That is one element of it. But what do you think of other elements like solutions beyond that, compute beyond that, right? So thinking about AI holistically beyond just physical infrastructure is something that I think would serve the economy well.
The big worry at this point in time is that, we've got these large spends running into trillions of dollars at this point in time, and whether, we're at that point of something triggering and unraveling. Are you an optimist on this front, and you believe that there's no unraveling likely anytime soon, or do you believe that there are some concerns starting to build out?
Again, I would frame this in the, how do we think of it from a long-term perspective versus what might happen in any given quarter, right? I mean, from a long-term perspective, I think we are in an age where compute is going to be so important. And so, all the expectations of how much compute is needed, I am a believer that those trends are real. It's also actually, not some theoretical thing for us.
Yeah.
We had the privilege of sitting down with our customers saying, what are your use cases? How is your business going to be transformed? And then if you translate that into how much compute do you need, we can
so
then
there's
see.
clear demand visibility.
We have visibility for the near term, and then the long-term trends are also obvious. Will there be some changes in the middle? That's hard to predict, but this is unprecedented in terms of what we are going through.
Unprecedented, it certainly is. You have what, about 6 patents to your name? Or more?
Yeah. That's right.
Yeah, 6, right?
You're right.
So as a young graduate coming out of college today, what is it that you would tell them? What is it that they should expect? What should they be skilling themselves for? What is the kind of world that they should expect to come into?
Yeah, I have 2 college-going daughters.
So what are you telling them?
So it's a very pertinent question. So we have many dinner table conversations around this, right?
Are you the bad guy or the good guy currently on the table?
Mom is the good one. No, it's enlightening. I mean, and by the way, you learn so much when talking to the young people. They're so brilliant, right? Like I said, right? A lot of people may worry. But I actually don't think it's a time to worry at all. It's a time to really think positively about all the good that can happen with these new technologies that are coming. What you actually study and what skills you acquire will need to go through a change, right? For example, I think people used to remember syntax when you're writing a C program, or I learned a new language, right? That's going to be less important. But what you're trying to do and being able to really have clear-headed thinking and the ability to distill your thoughts, that is even more important than actually remembering whether I need a comma or a semicolon beside this sentence, right? So that's actually the fundamental shift. It frees us up from, if you use the technology, right, it can free us up from the quote-unquote mundane and allow us to do things that really make a difference. And so that's what I tell my kids, right? You need to educate yourself to be able to have these tools and capabilities, to be able to shift to a higher level of capability yourself.
Well, good luck to both of them as they navigate the jobs market and, of course, the education system as well. But let me end by asking you, from your vantage point of looking at all things AI for AMD today, and given the demand visibility that you just spoke to us about, how different could AMD look in the next 5 years on the back of the opportunity that you see?
Oh, that's a fantastic question. I mean, the overall opportunity for AMD is enormous and incredible. We've laid out our, financial plan, late last year at our financial analyst day. And, we just said we're going to be, a much larger, fantastic company. But for me, the numbers are one aspect of it. The fact that we are right in the middle of changing, how compute will be done and delivered to the world. And even more importantly, right, the types of transformative changes that it can bring to the world right, in fields that are incredibly meaningful, whether it's healthcare, whether it is solving problems that we could not, right, climate change, applying compute to it, space exploration. It's those possibilities that really are exciting, and to be right in the middle of it as a company that can shape this future is just a privilege.
So, as you work away at what you're going to be launching, how quickly you're going to be launching, when you look outside your window and you look at the Goliath sitting outside, I mean, what do you think, and how closely do you want to be synced to what they're doing to NVIDIA?
So, look, we take, them and all competition incredibly seriously. But we don't think of this as like, hey, here is a zero-sum game or anything like that, right? The possibilities are enormous in terms of what the world needs. And we have a very clear set of value propositions that we're bringing. We have a strategy that I outlined, that has the pillars of, as long as we deliver a leadership roadmap, we are open and, make it easy for people to use our products. And we have the deep relationships with the people that are building the future of AI. And we execute, right? We have to execute, which we have proven in the past, our ability to execute. I think, our path will be, quite good.
Ramji, thanks so much for joining us on Voices from the Valley. Appreciate your time, and we wish you the very best of luck. Look forward to seeing you in India.
Thank you so much, Shirin. It's been a pleasure, and hopefully I can make it to India as well.
Well, look forward to that. With that, it is time for us to wrap up this edition of Voices from the Valley. From all of us here on the team, thanks very much for watching. More conversations coming right up.
Welcome to an all-important Indianomics. The Reserve Bank has announced the foreign deposit and foreign borrowing schemes that it promised in the Friday policy. And there are two positive surprises. First, not just PSUs like PFC or NTPC, but all banks can raise foreign currency borrowings, and RBI will bear 1.5% swap cost. So the cost of the borrowing falls for all banks. Secondly, as promised, RBI will bear the hedging cost for foreign currency deposits taken by banks from non-residents. But the relief here is banks can offer loans to these depositors, and hence the inflows can be sizable. Finally, the additional thing, aside from the RBI, the fourth quarter balance of payments data shows that both current account and capital account were in surplus in the fourth quarter, despite all that huge FPI selling that we saw. Now, how will all these news benefit the economy and the banks? I have with me Neeraj Gambhir of Axis Bank, Mitul Kotecha of Barclays Bank, and Kaushik Das, the economist from Deutsche Bank. Gentlemen, good morning, and thank you very much indeed for your time. Neeraj, to you first, because this is the surprise. We were not told on Friday that banks will be allowed to raise foreign currency borrowings, and RBI will bear the cost, at least 1.5% of the swap. Will this mean that a lot of banks will line up, since as a sector, you all are lower on deposits than on loans in terms of rate of growth?
This is certainly a welcome addition to the list of options that Reserve Bank has given, right? So it was not earlier expected, and it was also not a part of the previous FCNRB the options that were there. The key considerations for the banks is that this is, of course, an option that is available. The hedging cost is lower, but the borrowings on the onshore balance sheet, which is being permitted, come with a withholding tax. And withholding tax actually adds to the cost of funding that you raise from the market. So you have to look at the economics from an overall perspective. What you can raise in the offshore markets, what is the withholding tax on it, and what is the hedging cost? All that put together, how does that compare with the rupee cost of funds today? But certainly this is an option, and it's possible that some banks may go for it.
Have you done the math? I mean, back of the envelope, does it look? I mean, 15% of the interest may not be such a big sum. I don't know. Does it look like, even if it is like a percentage point or 50 basis cheaper, how does it work now?
So I mean, just a very rough back of the envelope maths. If your offshore funding cost is 5% in dollar terms and you pay 20% withholding tax on it, that makes it 6%, right? And the hedging cost is then 1.5%. The hedging cost differential will depend upon what the prevailing forward rates are at that point in time. So let's say overall it could be somewhere close to 7.5%, and that is very close to what the domestic funding cost is. So yes, I mean, depending upon the way the market is at a given point in time, you could find this option to be somewhat cheaper than where the rupee funding cost is.
Okay. Would you say, therefore, that if on Friday you expected some 30-40 billion to come by FCNR deposits, now you may say it is 50 to 60 billion because you're adding the ECBs? Am I right in saying that at least a 10 billion more?
Well, I wouldn't put it that way. I think the maths on how much money actually comes in is still dependent upon a few things. One is that in the previous round of the scheme, banks were allowed to provide leverage to their own customers, right? So that clarity is still awaited. I mean, we are still checking on the fine print here as to whether that is permitted or not.
Okay.
If that is permitted, then the total amount of flows through FCNRB route could be still higher.
Okay.
And banks may prefer to use that route rather than using direct borrowing on the balance sheet and bringing it onshore. So
Neeraj,
both these options are available.
Neeraj, I checked.
Depending upon what is permitted, the banks may go for one or the other. But broadly, assuming all of these facilities are available, I think the market estimate of total money flow into the country over the next 3 months is of the order of $40 to $60 billion, right? That's across all these options.
Okay. Okay, Neeraj, 1 minute. I was trying to interrupt you because I checked with the Reserve Bank. You guys can offer that SBLC. You can offer the standby letter of credit. They're very clear about it. What banks cannot do is you go and borrow at maybe, SOFR plus 3%, SOFR plus 2% and lend it at SOFR per 3%. That they will not allow. I mean, they won't allow you to make that arbitrage money, but you can definitely leverage, is what I was told. You can give loans.
So on that point, Lata, it's a bit technical, but let me clarify. When you can issue an SBLC, you are dependent upon a third-party bank to provide the leverage to NRI customer, right? Then that goes back to how much of that liquidity is available in the offshore market. Mostly this leverage is provided by the private banks for wealth customers. And that pool of liquidity is a bit limited as compared to what the banks can borrow themselves and then in turn provide the leverage to their customers. So that's the key issue.
Okay.
Last time around, both were permitted, and that's what got us about $27 billion.
Okay, Mithul, now you heard.
And in fact, roughly 50% of that money that came through the self-leverage route rather than external leverage route.
Oh, okay. That's also good to hear. Well, Mithul, you heard this entire conversation and you understand the technicalities better. What is your sense? Do you think the FCNR deposits will take off better than last time? And the ECB route, do you see substantial capital flows?
I think the answer to that, I mean, there will be substantial capital inflows. It's clearly attractive. I think the clarification today has helped. And, I think the fact that the banks can hedge this is going to also make it much more attractive to be able to do so. The only concern, I guess, is that when I compare to 2013, we saw probably, around $34 billion of FCNR deposits coming in a very short period of time. I think there are clearly issues. I mean, at that time, rates in India were much higher, rates outside in the US were much lower, and that rate differential is not as attractive as it was. And so I think the global environment is somewhat different. But nonetheless, I think, look, this will give an attractive opportunity for offshore investors to come into India through the FCNR route. And I suspect we will see pretty significant inflows coming in. We'd estimated previously around at least from the FCNR route in the next few months, potentially $5 billion or so a month, if not more. That's not even including ECBs. And then we're not even talking about the inflow potential from far route, which I think most of that would probably come into next year. But already there are signs that bond investors have been jumping since Friday into India's bond market. So again, this is already resulting in some inflows. My only concern, I guess, is that the backdrop globally is still of a firm dollar, elevated oil prices. And so the rupee, after an initial rally that we saw at the end of last week, has kind of settled. It hasn't really extended that gain.
Okay, you know, there is a theory doing the round in the markets, I don't know whether it is technically correct, that the Reserve Bank may not allow too much appreciation right now till all this swapping is over. They know how much they're in for, and then it'll be a no holds barred appreciation because they're expecting a lot of money. Is that making sense to you, Mitul?
Well, I think the rupee is cheap. If you take a look at the real effective exchange rate, the nominal effective exchange rate, it is significantly cheap, those valuations. But at the same time, I still think the RBI would not want to have an appreciating currency. So I have some sympathy with that view. I don't know necessarily whether, once they, clearly the other issue is that the forward book could actually increase on the back of this swap facilities, and that may add further burden when we see these swaps or forwards mature. At the same time, there is still a lot of buying from importers because of the oil demand. So again, there is a natural demand for dollars that can, again, absorb some of these dollar inflows that are coming in. So we may see a bit more of a balance in the market. I think what it means is probably, that massive fast pace of depreciation that we saw in the rupee over past months is now going to disappear. We're probably in for a much more of a gradual pace of depreciation and a much more of an orderly move, and perhaps with volatility being somewhat lower.
Okay. I want to come back to you for that FAR deposits for the equity guys who are watching us. It is, the bond, the withholding tax and the capital gains tax was removed for bonds and for foreign investments in bonds, and what is called the fully accessible route. That is the meaning of FAR. Under that, many subcategories were also removed by RBI, and Mitul is saying that we may get, that there is a lot of interest from bond FPIs to come through that route. We'll come back to him for those numbers, but Kaushik put all this together. We had this current account surplus in the fourth quarter that surprised, current account and capital account surplus, which was a bit of a surprise for most economists. What is your calculation of balance of payments deficit in the current year, FY27? Does it get fully bridged by what you expect from these flows?
So, Lata, good morning. The January-March number is a backward-looking number, so it's not much of use for us, into this financial year. But as you said, it has been a surprise because, net invisibles have surprised to the upside, and that has led to current account turning surplus. Normally, January-March is the best quarter that you can get on BOP, and that's why, normally it used to be always a surplus. This time, people were expecting a mild deficit or small surplus, but this has been a bigger surplus, so that's the surprise. Going into, this year, which is more important at this stage, my calculation without, any kind of measures that were announced by the government of India and RBI, including the, hike in gold imports, current account deficit was working out something like close to 85 billion, which was 2% of GDP because of higher oil price and gold prices. Now, one thing which the government has done is, hike the import duties of gold. Now, last year, gold imports was 72 billion, so almost 6 billion per month on an average. So even if you assume, suppose, say 10 billion comes down out of those 72 billion gold import that happened last year, so 85 billion current account can come down to 75 billion. So that's the current account deficit best that you can get. Even with the pump price hike, in petrol and diesel, you not have oil imports coming down that much unless oil comes down. Now, what do you do on the capital account side? Capital account side, even without any of these measures that RBI has announced, you would have still got 25 billion. If you see, last year's number, you would have got 25 billion without any of these measures. So you had a whole of 50 billion, 75 minus this, 25 billion that you would have got anyway. So 50 billion BOP deficit, which you would have had. Now, these measures, the three things that have been announced, one is ECB, one is overseas foreign currency borrowings for banks, and the FCNRB, can easily give you 50 billion and bridge that gap. Oh. And one way to, kind of come to this number, just to give you a reference point, and then you can say whether it is, too much or upside, downside risk. In 2013, when you got this FCNRB and this overseas, bank, whatever borrowing, that was about 2.8% of NDTL, whatever the NDTL number. If you apply the same 2.8% NDTL, this time you should get to 75, 77 billion, Ooh. Just kind of, reference point. And then you can think individually, if it was 26 billion FCNRB last year, This year, can you go to 40 billion, 20 billion maybe for the ECBs, and 10 billion from the banks? You could come closer to 70 billion.
Yeah, that's one of the more optimistic numbers I've heard.
But
no, to be fair, Kaushik,
50 billion, even if you get 50 billion,
you are square.
Care of.
That I take your point entirely. Now, I have to take a break, but before that, I want the key question that our viewers are watching out for. Up to September, or if you are willing to take the bet, take the question up to December, what is the rupee range you are looking at? What is the best the rupee can rise to? Kaushik, give me only one number because I want a rapid fire.
So we have 93. I mean, rupee can easily fall 2 rupees from where we are.
Okay. Mithul?
Well, our current forecast stands at 96.8. So we've not revised that forecast, but clearly, obviously, these measures are substantial. So, I think we were at risk of being much weaker than that. At least now that's more likely to be met than before.
Okay. And Neeraj?
Well, I don't see it appreciating beyond 94, even if we get a lot of positive news, because I think Reserve Bank will be on the buying side to cover up their reserve fall.
Okay. My guess is that a shy at 93 or 92 is possible, and then it comes back. That's what happened last time. We went all the way from 68, 69 to 65, 64. This is the 2013 period. Anyway, have to take a break, but lots more questions on bond inclusion. Also, when all this money comes in, what does it mean for growth? Those questions as well to our bankers in a minute after the break. Welcome back to this very special Indianomics, where we are discussing the bunch of measures announced by the Reserve Bank, almost all of them to prop up the currency from falling from the rapid fall that it has seen over the last 2 years. The RBI is going to pick up the entire hedging cost for FCNR, foreign currency non-resident deposits, up until September 30th. It is also going to allow banks and PSUs to raise external commercial borrowings. 1.5% of the swap cost will be borne by RBI. And then, of course, the debt market also is getting some swaps given by the government. The withholding tax and the capital gains tax are off. I've been speaking with Neeraj Gambhir of Axis, Mithul Kotecha of Barclays, and Kaushik Das of Deutsche Bank. Gentlemen, thank you very much for your patience. Neeraj, the money is coming in. Okay. Both FCNR deposits as well as some bit of overseas foreign currency borrowing. What does this do to funding cost, margins of banks?
So I think in the short run, we will see the pressure on the domestic money market, for example, CDs and bulk deposits, go off a little bit. As you very well know, that these rates have been quite elevated. Usually in this part of the year, first quarter of the year, we see these rates cool off from where they were in March. This time around, actually, the rates are higher than where they were in March. So I do see that, as this money flows in over the next 3 months, it will cool off both the CD rates and the bulk deposit rates.
Okay.
I don't see this impacting the retail savings rate, because I think that's something that all banks are chasing, and that's an important component of banks' liabilities. At the margin, this will help banks lower their funding costs, but it's only at the margin. The overall book cost will not get impacted too much.
Yeah, at the margin. So NIMs can improve by a few basis points, right?
Well, I won't put a number on it, but as I said, at the margin,
directionally,
directionally it helps, in terms of lowering the funding costs.
Okay. You're not betting that most private banks will go for this. I mean, I'm expecting PSU banks to go, but private banks, some of them had adverse LDR. That's why I'm asking.
I do expect all banks to be involved in this. I think it's an important opportunity for banks to raise funding in a different way. These will still be the deposits, right? Because FCNRB is still accounted as a deposit. It is still subject to low runoff factors as far as LCR is concerned. It's quite optimal from a balance sheet perspective. So I think all banks will be interested and involved.
And more generally, do you think, therefore, credit offtake improves since quantum of funds available seems to be increasing?
That's right. But also there is a counter effect. To the extent that PSUs are borrowing abroad, their borrowing from the domestic banks will come down. So there is going to be a substitution effect there. So net, I think this could end up sort of bringing down a little bit on the credit growth side and improving on the deposit growth side. Effectively put together, I see both these measures actually helping in terms of bridging the gap between credit growth and deposit growth.
Okay, yeah, and that is a longer-term problem that the Reserve Bank was staring at, and they've very smartly solved it, at least for now. Kaushik, don't you think that this availability of funding changes the growth macro story to some extent, the multiplier? Do you think we should see this as positive for growth itself?
Yeah, Lata, so we did not reduce our growth forecast that much. I mean, we are at 6.7 and, RBI just has reduced it to 6.6. I know there are a lot of people who are below 6.5 and, there are legitimate concerns on agriculture, how it will play out. But I think, Indian growth, if you've seen through last year and several quarters, has always surprised to the upside, despite all the worries of tariff. We started off saying 6.5 last year, beginning of the last year, and we ended up getting 7.7. So as far as numbers go, I think we will still be close to 6.7, 6.8, or slightly close to 7%, not as high as 7.7 of last year. And that will be below potential to some extent, at least in the first half of the year. But I'm not that terribly concerned about growth. I think over a period of time, people will be concerned more on inflation. So we have rate hikes in October, December of this year itself, 50 basis points. But I think they will like to do this rate hike after the window, this concessional window ends in September. August, what can happen though is change of stance to withdrawal of accommodation. Yeah. And, you could see between now and September, liquidity being tightened slightly by doing VRRR, as well as, letting the forwards that are outstanding mature against the flows that are supposed to come in. So over a period of time, you might see the weighted average call rate gradually shifting slightly below the repo rate, and then RBI will change the stance in August and then hike in October.
Fair enough. Yeah, something like that seems to be the trajectory that economists are talking about. Mithul, the more important question is the fully accessible route bonds. You're saying that FPIs are already showing interest. Do you think there is a good chance we get into the any of the indexes, the Bloomberg index in particular? And therefore, what is the quantum that we can safely say over a 12-month period in this route?
Yeah, it's a good question. And I think the answer to your question is there's definitely, yes, there's more interest. I think the fact that we've seen the overall FAR limits being increased, the duration increased as well of FAR bonds for foreign investors. Plus, of course, and the big kicker here is the exemption on G-SECs of tax is very, very significant. That removes one of the key structural barriers for bond index inclusion that has been in place. It doesn't guarantee it, though, and it doesn't necessarily mean that we'll see WGBI or global ag inclusion, but I think it moves India substantially closer towards that inclusion. And if, clearly the settlement issues, Euro-equilibrability that may still need to be resolved, that I think investors will be looking for. But again, like I say, this is quite positive. So in terms of the quantum, it's hard to say. I think ultimately in the past, we've highlighted that the big major index inclusions, such as WGBI, Global Ag, could be in the region, if we add it all up, potentially anywhere between $20 to $30 billion of inflows, if not more. But